Yes, welcome. Hello, everyone. Welcome to ArivuPro Academy YouTube channel. My name is CA Akhilesh. Okay, what we are going to do is we are going to take up the CA Foundation Accounts Marathon. Okay, if you have not already done it, please subscribe to our YouTube channel, like, share, and click the bell icon for updates. Okay, at ArivuPro, we are dedicated to your success for both online as well as offline classes. So what we do, we have centers in Bangalore, Chennai, Coimbatore. So we are really focused on helping you for your exam preparation. Right now we are preparing this marathon series. This is the accounts marathon which we are going to take up from today. So what we are going to do over here is I'm trying to cover all the chapters from an exam oriented approach. So we will have our concepts. Obviously without concepts it's not possible to crack anything. So first we'll focus on concepts of each chapter. First we are going to discuss all the concepts. Then we have picked some questions which will cover most of the concepts and that will help you in your revision. Okay. I hope you like this marathon session. Please like the video if you like it. Okay, good afternoon everyone. We are here for accounts marathon. Now, first of all, marathon, you should have studied and come. That is the first condition. Did you study and come? Otherwise, there is actually no use of marathon. It's only revision, quick revision where we can boost your exam preparation. How many days are left for exam? Only 20 days. Correct? Is it possible? Yes, it is possible. Okay, 20 days are there. More than enough time is there. Okay, you just have to revise everything. Wait. Yes. Yeah, so we have 20 days left. Okay, is it enough? More than enough? I hope your preparation is going on good only. Okay, nothing to panic looking at last time's results. Okay, I think last time everyone saw the result and CA Foundation result was bad. CA Inter and CA final results were better than CA Foundation. Okay, it happens. It happens. A lot of reasons are there. First of all, it was new scheme. First time people are writing under new scheme, and students have to still get a grip of some new chapters which were there. Converting, and people who finished 11th and 12th, they don't have enough time to write the exam in June. So simply they go and write. So the volume has gone up. The number of students who are writing has gone up. Denominator is huge. Numerator will remain same only. So that is why the percentage has gone up to what? 14.99 something. 98, 96. Yes. We'll round it off to 15%. We'll make it 15%. Okay. So now we'll start with the revision. Today's target. Okay, day 1 is to finish rectification of errors. Roughly this rectification of errors can come for 5 to 10 marks. In the past, maximum they have asked from this chapter is 10 marks, minimum 5 marks, minimum 0 also. Sometimes they don't ask anything from rectification, so anything can happen. Okay, after we finish rectification, the next thing we'll go into is BRS. Here also potential is 5 to 10 marks. Okay, sometimes they ask 10 mark question, sometimes they ask 5 mark question. After BRS, we'll go into bills of exchange. Here also 4 to 15 marks. I'm not telling that they will ask for 15 marks, but in the past they have asked for 15 marks. Okay, minimum is 4, minimum is obviously 0 also, but up from 4 to 15 anything can be asked. Then finally we should try to finish depreciation. Depreciation, you see, always there is one question. Okay, sometimes it is part of the compulsory question also. Okay, again 4 to 10 marks is the maximum. They can't ask more than that in depreciation with so many new chapters. Now, one thing we have to understand, I hope you have seen the trend of the previous paper. Okay, previous paper, company accounts was asked for 15 plus 10, 25 marks, company accounts. Okay, partnership was asked for 10 plus 12, 22 marks. Totally just these two chapters had 47 marks in it. Correct? Okay. Now, does it mean that we will study only these two chapters and go to the exam this time? We know ICA very well. Suddenly they might ask only one 8-mark question from partnership and they ask from everywhere else. So, see, when the volume of the syllabus becomes big and big, you can't skip anything. If the volume is less, then you can play some gamble. But when volume is more, you cannot. If imagine there are only 6 chapters in the syllabus, then you know from all 6 chapters question will come. So if you skip one and study 5, then maybe it might work for you. But when we have 11 chapters, out of 11 in partnership, each unit is like one chapter only. Admission, retirement, death, dissolution. In company accounts, each unit is like one chapter. Shares issue and forfeiture, debentures, bonus issue, redemption of preferential, redemption of debenture. All those are chapters in itself. So what happens is when there are so many topics, if you skip 2, imagine you skip 2 chapters or two topics. Those 2 topics are there in the exam. And the 2 topics that you have studied, they are not there in the exam. So now what happens? What you have skipped, that you can't answer. What you have not skipped, that is not there. Can you see how much gap it creates in the exam? So do not skip anything. Just go and go and study everything. But tell me one thing, can we become master of everything? Is it possible that I will be champion of every chapter? It is not possible. Obviously, we are human beings. It's not possible. We will have our weak areas. Weak area does not mean that we skip it. What we have to do, every chapter we have to study. Some chapters, whatever they give, I can solve. Some chapters, I can solve easy questions. Tough questions, it might take some time. Okay. You should be able to solve everything. But some are not my strong areas. I don't like only some chapters. Possible. But that doesn't mean that you're skipping those chapters. Is it clear? Yes. This is day 1 today. Tomorrow, I think I have it planned. Day 2. After that, I have not thought about it. Day 2 is partnership. I think one full day, one day is required just for partnership only. So till day 2, we have decided partnership. From day 3 onwards, we'll see. Maybe company accounts we can do on day 3. Then we can proceed so on and so forth. Okay. Yes. So first thing that we are going to start is rectification. So the pattern that I'm going to follow is, as quickly as possible, we'll discuss the concepts, because solving 150 questions is not important. Even if you solve one question but you know the concept, that is important. Clear? So first we'll focus on concepts. Now, rectification of errors. To do this rectification of errors, before this there are some units, right? Those are very, very important. What are those units? Journal, ledger. Journal, ledger, most of you know it. Correct? Subsidiary books, cash book, trial balance. Any of that might not come in the exam directly, but indirectly it can be asked in rectification. Are you getting my point? Okay. Now, especially subsidiary book, something like subsidiary book, you should know how exactly it functions. Now, tell me, in rectification, what are the types of errors we have? We have error of principal, correct? Error of principal. Then we have error of omission, correct? We have error of error of principal, error of omission, error of commission. What is error of principal? What is error of principal? We have the wrong accounting principle. Wrong accounting principle. What does it mean? Instead of expense, I have taken it as asset. Or it can also be vice versa. Instead of asset, I have taken it as expense. Anything can be possible. Clear? Error of omission. Omitting the process. Journal entry only is missed. Posting from journal to ledger is missed. Subsidiary book total is missed. Subsidiary book line item posting is missed. Anything can be missed. Error of omission. When we are talking about omission, we have partial omission, and we also have complete omission. Partial omission and complete omission. What is partial omission? Debit and credit is there. Debit we have not written. Credit we have written. Debit and credit is there. Debit is posted. Credit is not posted. Clear? Partial omission. Now, what is error of commission? What is error of commission? Process is done. Correct? Accounting process is done, but wrong. Wrong can be what? Wrong posting, wrong amount, correct? Wrong ledger, anything can be wrong. That means process is done, but you have missed something. I mean, you have done something wrongly. Apart from this, can we have one more called as compensating errors? Compensating errors. What is compensating error? What is compensating error? I did one mistake, correct? This mistake. I did one more mistake. Two mistakes. They became friends. Because of that, there is no difference. Are you getting my point? Now tell me one thing. Okay. If trial balance does not tally, trial balance does not tally. What does it mean? That means there are errors. If trial balance tallies, is there any error? Still there can be errors. Are you getting my point? Trial balance tallying is not anything conclusive. Now, error of principle. Trial balance will tally. Error of partial omission. Partial omission. Trial balance will not tally. Error of complete omission. Trial balance will tally. Error of commission. Trial balance might tally or not tally. Error of compensating errors. Trial balance might tally. Clear? Are you getting my point? So, trial balance tallying is not a final judgment. Just because trial balance is tallying, that does not mean there are no errors. Is this clear? Now, our main thing, apart from that, I think if you are not able to finish writing, I'll give you time to click pictures. Maybe later you can click pictures of each screen. Okay. Now, when we go into rectification, very, very important. Obviously, your accounting process should be strong and you should be able to identify the error. In practical situation, rectification of error might be even more complicated. Why? You have to find the error and then rectify it. But examination, that problem is not there. Why? They will only tell you this is the error. You just have to rectify it. Clear? Now, when we are talking about rectification, it can be before preparation of trial balance. Can it be before preparation of trial balance? Yes. That means trial balance is not yet prepared. I already found the error. In that case, what I will do? Can we use suspense account? Suspense account cannot be used. Now, tell me, when will we use suspense account? After preparation of trial balance. But after preparation of trial balance also, do you think all the rectification entries you will have suspense account? Usually one-sided errors, when they are rectified, you will have suspense account. Simple. Okay. Imagine I am preparing a trial balance. One-sided error. I put debit of 50. I put credit of 20. Can you see it's a one-sided error? One side I have not recorded properly. Now when I total the trial balance, I will have 50 and I will have 20. Clear? So now the trial balance is not tallying. If trial balance is not tallying, what will I do? I will put 30 over here and I will write suspense. One-sided error will ensure that trial balance will not tally. And if trial balance does not tally, what you will do? To make the trial balance tally, you will put the difference into suspense account. Now when you rectify the error, if you find that error, suspense account will go. Is this clear? So only when you are rectifying one-sided errors, that time suspense account will be used. But if your rectification is before preparation of trial balance only is not prepared. So suspense account only is not born. Are you getting my point? If suspense account is born, then we will remove suspense account when we find the error. If suspense account only is not born, then we will not use suspense account in our rectification entries. Okay, so before preparation of trial balance, no suspense account. What about after preparation of trial balance? Can we use suspense account here? If required, we will use suspense account. One-sided errors, if we are rectifying, we will use suspense account. Clear? Now, what is the third situation? In the next accounting period. In the next accounting period. Okay, in the next accounting period means what? This year, error is already done. I could not find the error. I closed the trial balance. Next year, when I was doing something else, I got the error. Okay, now I will rectify this error. What you have to remember here, suspense account is 100% there. Why suspense account? Suspense account has no connection with anything. If it is one-sided, suspense account will be there. Clear? Along with this, we also have P&L adjustment account. When P&L adjustment account, in rectification entry, if there is expense or income, that time use P&L adjustment account. Clear? Why? Expense or income will alter the profit. Profit of which year? This year. Mistake is of which year? Previous year. So previous year mistake should not affect my profit this year. That is why we put it to a separate account called as P&L adjustment account. Is this clear? Okay. This is your concept of rectification. Now how to rectify? Now, how will we understand before preparation, after preparation, or next accounting period? How will we understand this? That will be given in the question itself. That will be given in the question. Either they will tell, do not use suspense account. That means before preparation of trial balance. Or they will tell, use suspense account. That means after preparation of trial balance. Or they will tell, in the next accounting period, the following errors were rectified or following errors were identified. That time what we will know? It is in the next accounting period. Is it clear? Okay. Now, how to rectify? Till now we saw when to rectify. Now we are going to discuss how to rectify. How to rectify? If you are very thorough, then you can directly pass the rectification entry. If you are very thorough. Otherwise, what you can do is correct entry, wrong entry, and rectification entry. Write the correct entry correctly. Ignore the error in the question, write the correct entry, identify the error and write what they have done, wrong entry, then you will be able to pass the rectification entry. Is it clear? Okay, this is the process of rectification. Now, obviously we don't have time to solve all the questions. Now, so what I have done is pick some errors. Some 31 errors are there only. So I thought we will do all this. Okay. Rectification, so that most of the points of rectification will be covered in this only. Now, but see this question, rectification of errors, rectify the following errors before preparation of trial balance, after preparation of trial balance, in the next accounting period. All three scenarios I want to cover in one place only. Clear? Now, how thorough are you with the rectification? Do you remember how to pass correct entry, wrong entry? Yes. Okay. So, what you can do, question number one, only one question is there from rectification. What we can do, we can have one column, okay, which is for correct entry. One column is for correct entry. One more column is for wrong entry. Then when we go to rectification entry, if it is situation number 1, rectification entry if it is situation number 2, and rectification entry if it is situation number 3. Did you understand? Okay. So if it is situation number 1, 2, 3, all the 3 situations we should be able to answer because we don't know which they are going to ask in the exam. Clear? Yes. First one. Look at the first one. Purchase returns day book had been correctly entered and totaled at 6160 but had not been posted to the ledger. Purchase returns day book. Okay. Now here we have to understand, whenever we have any subsidiary book, if I put the number as 20, then I put the number as 10, then the total will be 30. Correct? This total will go to, if the subsidiary book is purchase book, it will go to purchase account. If it is sales book, it will go to sales account. If it is purchase return book, it will go to purchase return account. This line item, where will it go? It will go to the respective debtor or creditor. If it is purchase book, this 20 will go to that creditor, this 10 will go to the other creditor. If it is sales book, this will go to the debtor, this will also go to the debtor. Clear? So here what did they tell you? You have to identify where the mistake is. Where is the mistake? Purchase return day book has been entered correctly and totaled as 6160, but had not been posted to the ledger. Entered correctly, but did not post to the ledger. So what should be the correct entry for purchase return? Purchase return, what is the correct entry? Creditor account debited 6160 to purchase return account 6160. Correct? What is the wrong entry? What have they missed? Total is not posted. Total will affect which account in this? Will it affect creditor or will it affect purchase return? Purchase return. So can I tell wrong entry is creditor account debited 6160. That means creditor account done, purchase return not done. So what will be the rectification entry if it is before preparation of trial balance? You will only credit the creditor account. So you will write to purchase return 6160. Clear? Now what will you do whenever you are rectifying before preparation of trial balance? You will just write one statement. Statement you will write under totaling or total less, under casting, whatever mistake has happened, that only you will write and you will credit the ledger. Clear? If it is rectification in the second stage, what will you do? One-sided error. Can you see one-sided error? What will happen that time? Suspense account debited 6160 to purchase return 6160. Clear? If it is in the next accounting period, then what will be the entry? Suspense account debited 6160. That will not change. To P&L adjustment 6160. Are you following this? So can you see how it is varying? This side, no using suspense account. Second, you have to use suspense account. Third, also you have to use suspense account. Now understand this very clearly. Suspense account and P&L adjustment has no connection. Suspense account, P&L adjustment, no connection. Suspense account is there because in your rectification entry, only debit, no credit, suspense account. Only credit, no debit, suspense account. P&L adjustment will come when you find something that is expense or income. Can you see purchase return related to P&L or trading item? So it will automatically be replaced by P&L adjustment. Clear? Yes. Second, discount received 1320 had been debited to discount allowed. Discount received 1320 had been debited to discount allowed. Tell me what is the correct entry for discount received. From whom will I get discount? From debtor or creditor? Creditor will give me discount. Debtor I will give discount. Correct. So the entry is creditor account debited 1320 to discount received 1320. Correct. What is the wrong entry here? And one more golden rule of rectification. Remember this golden rule of rectification. What is the golden rule? What is not told is correct. If they don't tell you anything about, if they don't tell you about something in the question, that is correct. Don't worry about that part. Clear? Now here what is they told? Discount received has been debited to discount allowed. So what did they do? They wrote discount allowed debited 1320. Did they talk anything about creditor? No, that means creditor is also debited 1320. Is this clear? Now the rectification. Creditor, no problem. Discount received, problem. So what should be the problem here? Discount received not done. So you should do it. What will you do? To discount received 1320. Discount allowed done wrongly. To remove and debit, what should we do? We should credit it. So to discount allowed 1320. Do we have any debit? Do we have any debit? No. So what should we do? Leave it like that only because we are in before preparation of trial balance. If the same thing is done after preparation, what we will do? Suspense account debited 1320 plus 1320 2640 to discount received 1320. 2. Discount allowed 1320. Clear? Same thing when we are doing rectification in the next accounting period. That time what will happen? Suspense account debited 2640. No change in that. Suspense account debited 2640. 2. Can we use discount received? No. Can we use discount allowed? No. So we will use P&L adjustment 2640. Is it clear? Are you able to follow? Last moment we cannot solve many questions, no? So in one question only we have to see all situations. Yes. Third. The sales account had been under added by 10,000. Under added means what? Less or more? They put less, correct? So what should be the entry for sales? Normal entry for sales. Cash or debtor debited 10,000 to sales 10,000. Now understand this. In this same question, instead of writing sales account, if they would tell sales book, that means it is 100% credit sales only. Because in sales book, you will have only credit sales. If they tell sales account, it can be credit sales as well as cash sales. Okay. Now, what is the mistake here? So, cash or debtor debited 10,000. Done. Sales not done. Are you getting my point? Under, no? So, sales 0. 10,000 they have not put. So, we have to put that 10,000. So, what will be the rectification entry now? To what? Sales 10,000. Next, second situation. Suspense account debited 10,000 to sales 10,000. What about the third situation? Suspense account debited 10,000 to P&L adjustment 10,000. Can you see this? Okay. Yes. Let's go further. Fourth one. A credit sale of 1470 had been debited to a customer's account as 1740. Error of commission. Credit sale is how much? 1470. Tell me quickly, what should be the entry? Credit sale. They are telling it is 1470. So entry will be debtor account debited 1470 to sales 1470. What is the mistake? Debited to customer as 1740. So can I tell the mistake is debtor account debited 1740 to sales. Anything did they tell about sales? No, that means sales is correct. 1470 only. So rectification entry, what we have to do? Sales, no problem. Debtor, did we put more or did we put less? More. If I put more, if I have debited more, to remove that debit, what should I do? Credited. So I will write over here to debtor. Okay. 270. Clear? If I am doing it in the next stage, then it will be suspense account debited 270 to debtor 270. If I am doing in the third stage, then what will happen? Same. Suspense account debited to debtor. Why? Suspense account will be there always. Debtor will be there because debtor is not a expense or income. It will remain like that only. No P&L adjustment every time. Only if it is required. Okay. Next. 5. A vehicle bought originally for 7,000 4 years ago and depreciated to 1,200 has been sold for 1,500 in the beginning of the year, but no entries other than the bank account has been passed through the books. They said error of omission, but bank you have entered. Everything else you have missed. Now, luckily they have told in this beginning of the year. Can this error be modified and told middle of the year? If it is middle of the year, then for half year you have to calculate depreciation also. All that also will be there. Here they told middle of the they told beginning of the year. Why? Because selling the asset in the middle of the year, already they are testing you in depreciation question. So again, they don't want to put it here also and eat your head. Okay. So now tell me what should be the entry? 1,200 asset is sold for 1,500. Can you tell me what should be the entry? Bank account debited 1,500 to asset account 1,200. Not sales, it is asset which is sold. To P&L account 300. Is that the correct entry? Correct. What did they do? Did they miss everything or did they miss only something? Bank is entered. So what is the correct entry here? Bank account debited 1,500. Did they do this much? Yes. Now what is that? What should be the rectification entry here? To asset 1,200 to P&L 300. Is that correct? Is it correct? Now next, when we are doing the rectification in the second stage, what will we do? Suspense account debited 1,500 to asset 1,200 to P&L 300. When we are doing the same thing in the next accounting period, that time what will happen? Suspense account debited 1,500 to asset 1,200 to P&L adjustment 300. Is this clear? Are you able to identify? Okay. Next. Six. An accrual of 560 for telephone charges had been completely omitted. Accrual means what? Paid or not paid? Not paid. Accrual of 560 for telephone charges means not paid, correct? What should be the entry? Telephone charges debited 560 to what? To outstanding telephone charges 560, correct? Accrual, no, did not pay, right? Now see over here, accrual of 560 for telephone charges completely omitted. Now what is the correct entry? I mean, what is the wrong entry here? Huh? No entry only, no? Completely omitted, no? Rectification entry will be what? Telephone charges debited 560 to outstanding telephone charges 560. What is the wrong? What is in the next period? Same. But what is it over here when we come over here? Now it is not same. It is P&L adjustment debited 560 to outstanding telephone charges 560. Here, why it is same in the second column? Because there is no suspense. Two-sided error it is. Clear? Next. Okay, we'll go to the next one. 7. A bad debt of 1560 had not been written off and provision for doubtful debt should have been maintained at 10% of trade receivable, which are shown in the trial balance at 23,390 with the credit provision for bad debt at 2320. What is this? Is it rectification of errors? Looks like final accounts adjustment. Correct? But these things are also there in rectification. Now, why rectification is so much important is because rectification in study material itself, we have seen it in final accounts chapter, we have seen it in partnership chapter, we have seen it in NPO also, we have seen in bills of exchange also. Any chapter except company accounts, they have asked rectification almost everywhere. Okay, so that is the importance. Now, understand this. Bad debt of 1560 had not been written off. Bad debt not written off. What is the entry for bad debt? Bad debt account debited 1560 to what? Debtor account 1560. Clear? Bad debt is not written off. Next, after that, what did they tell? Provision for doubtful debts to be maintained at 10% of the trade receivable. 10% we have to maintain, which is shown at 23,390. Now what we have to do? 23,390 is the debtor. Correct? Out of that, remove 1560. Just now we have removed the bad debt. So 23,390 minus 1560. 21,830. This is the debtor now. How much provision they want? 10%. 10% of that makes it 2183. 2183. Correct? How much is the provision already there right now? 23. This is the required provision. What is the existing provision? 2320. Do I have more or do I have less? I have more, right? Can you give me the difference between this? 137. 137 I don't want or 137 I want? I don't want. Okay. So tell me what is the correct entry for creating provision for doubtful debt? What is the correct entry for creating provision for doubtful debt? No. P&L account debited to provision for doubtful debt. Provision means what? Taking money and keeping it aside. Keeping money from where? Take it from profit, keep it aside. Now I don't want this. What I kept aside, I don't want. What will I do? I will put it back to profit. That time provision for doubtful debt back to P&L. Clear? Here, do I have to remove something? Do I have to put back something? Here I have to put back, no? I require 2183, but I have 2320. I have more, so I have to reverse the provision. Is it clear? Now, if you calculate this without removing this bad debt, then you will get a completely different answer in the exam. Are you getting my point? You have to remember always first bad debt, then you create provision. First who are not giving, send them. After that who are going to give, but you have little doubt, then you create provision. Is it clear? Yes. 137. Tell me what should be the entry for that. For creating provision, for reversing the provision, what is the entry? Provision for bad debts debited 137 to P&L 137. Is that correct? Yes. Now, next thing. Did I pass anything? Wrong entry. Did I pass anything? Completely omission, right? No entry. Rectification entry will be what? Same. Whatever is the correct entry, that only will be the rectification entry. What about in the second accounting period? That time also the rectification entry will be same. Why? There is no suspense account, two-sided errors, complete omission. What about in the next accounting period? Here you have to be careful. Here the entry will be P&L adjustment debited 1560 to debtor 1560. Then next one, provision for bad debt debited 137 to P&L adjustment 137. Is it clear? Are you able to follow? Yes. Did you get it? Yes. After this, 8th one. See, such complex errors also can be asked in the exam. Tools bought for 1200 had been inadvertently debited to purchase. Okay, these kind of errors are very simple. This is like instead of putting to one account, they have put it to another account. Nothing. Remove from one, put it to the other. Okay, tell me what is the entry for tools? Tools account debited 1000. What is that? 200. Tools account debited 1200 to cash 1200. What is the wrong entry? Purchase account debited 1200 to cash account 1200. Correct? What is the rectification entry? Tools account debited 1200 to purchase account 1200. Why tools is debited? Because it is not debited. Why purchase is credited? Because it is wrongly debited. To remove the debit, we are crediting. Clear? Now, what will happen over here? Same. Because there is no suspense, it will remain same. But when we go to the next accounting period, it will be tools account debited 1200 to P&L adjustment 1200. Is it clear? Are you able to follow? Okay. 1 second, okay. Little space. We will create more. It is becoming very congested. Yes. 9. Ninth one. The proprietor had withdrawn for personal use goods worth rupees 1960. No entry had been made in the books. When you see no entry, no, you should be very happy. Why? Correct entry only will be a rectification entry, but little you have to be careful. Proprietor has withdrawn goods. So what is the correct entry here? Drawings account debited to purchases. Sorry, I missed the amount. 1960. 1960. What is the wrong entry? No entry. So you don't have to worry about anything. This only will be the rectification entry. Same. Correct? In the second stage, what will happen? Here also it will be same. Correct? When we go to third stage, what will happen? Now it will not be same. It will be drawings account debited 1960 to P&L adjustment 1960. Is this clear? Yes. Okay, 10th one. The total of debit side of expense account has been casted in excess by 50. What does it mean? Expense they have put more or they have put less? They have put more, correct? So if I take correct entry as expense debited 50 to cash 50, then the wrong entry is expense debited 100 to cash 50. Clear? So rectification entry will be, I have put more. So to remove that, what I should do? To expenses 50. Clear? And now in the next period also, it will be suspense account debited 50 to expenses 50. Clear? Because one-sided error. Now to rectify it in the next accounting period, what I will do? Suspense account debited 50 to P&L adjustment 50. Is it clear? Yes. Now I'll go to the 11th one. The sales account has been totaled in short by 100. Sales account has been totaled in short. Did we have some error like this already? Once we have seen this sales account, not sales book. Okay. Short by how much? 100. So can I tell if at all my entry is cash account debited 100 to sales 100, then the wrong entry is cash account debited 100. Nothing is there in sales. Rectification entry is to sales 100. In the next accounting, in the second stage, what we will do? Suspense account debited 100 to sales 100. In the next accounting period, what we will do? Suspense account debited 100 to P&L adjustment 100. Is it clear? Yes. This we have seen before, so we'll go further. Supplier account has been overcasted by 225. Supplier means what? Creditor. So can I tell correct entry will be purchase account debited 225 to creditor 225. What did they put? Did they put more or did they put less? More. Can I take it as purchase account debited 225 to creditor 450? 225 more, no? So now, what should I do to remove that? Creditor account has to be debited for 225. In the next situation, creditor account has to be debited for 225 to suspense account 225. In the next thing, this will be same because we don't have any income or expense. Okay. Now we are in the 13th one. Yes, sales return of 100 from a party has not been posted to that account, so the party's account has been credited. Sales return from a party. Tell me what should be the correct entry for this? Sales return, what is the correct entry? Sales return account debited 150, right? Was it 150? Sorry, 100. Sales return 100. 2. Party means who? Debtor 100. What is the wrong entry here? See the wrong entry. Not posted to that account. So the party's account has been credited. That means one side we have done. So sales return not there. Sorry. Sales return is not there. But we have written to debtor 100. Clear? What should be the rectification entry now? Sales return has to be debited for 100. Clear? What should happen in the next second stage? Sales return debited 100 to suspense account 100. What should happen in the third stage? P&L adjustment account debited 100 to suspense account 100. Clear? Yes. Next. A check of 500 issued to the supplier's account shown under trade payables towards his dues has been wrongly debited to purchase account. Check given to supplier means creditor. Correct? What is the entry for this? Creditor account debited to bank account. creditor account debited to bank account, 500 rupees. Is that correct? Now, what should be the next stage? What is the wrong entry? Instead of putting creditor, what I have done? Purchase account debited 500 to bank account 500. What should be the rectification entry? Remove from the one and put it to the correct one. So the entry should be creditor account debited 500 to purchases 500. Is that right? So what should be the second stage of rectification? If it is in after preparation, it will be same because there is no one-sided errors. If it is in the third stage, that time the entry will be creditor account debited 500 to P&L adjustment 500. Is this clear? Yes. 15. A credit sale of 50 has been credited to the sales and also to the trade receivable account. What happened over here? Credit sale of 50. Tell me what is the correct entry. That time you will get the answer. Answer is debtor account debited 50 to sales account 50. What they told? Can you see what they told? Has been credited to sales and also to trade receivable. That means sales also credited, trade receivable also credited. So the answer over here is to sales 50 to debtor also 50. Trade receivable means debtor. Yes. Debtor also 50. Now tell me what should be the rectification over here? Debtor no problem. Trade receivable problem. Did we put or did we not put? Instead of debiting, what we have done? We have credited it. So what will happen over here? Here debtor account will be debited for 100. Why? You have to remove the wrong credit. To remove the wrong credit, what I should do? I should debit it. See, for example, if this is my debtor account, I want 50 over here, but 50 is not there. By mistake, I put 50 over here. Now what should I do? To remove this 50, I should put 150 over here. That time this became 0. To put the correct 50, I have to put one more 50. That means 2 50s I have to put. Okay, whenever instead of debiting, they have credited it. To remove the credit, I have to put the number once, and to put the debit, I have to put the number again. So it will be double. So debtor account debited 100. Is there anything in the credit? No. But if it is in the next second stage, what will happen? Debtor account debited 100 to suspense account 100. If it is in the third stage, what will happen? It will be same because we don't have any expense or income in the rectification entry. This is our halfway. Where are we? Halfway, 15. See the total, 31. Okay, but it will be a good revision of entire rectification of errors. Yes, 16. A sale of 2,300 to Mr. Lala has been posted to the credit of Mrs. Mala. Sale to whom? Lala. Like this, so many errors are there in the study material. Yes. What is the entry for sale to Lala? Lala account debited 2,300, right? To sales 2,300. What is the wrong entry? Has been posted to the? No. Not Mala account debited to sales. Posted to the credit of Mala. Are you getting my point? Wrong person, wrong side also. So the entry is to sales 2,300. To Mala also 2,300. Don't worry too much about their marital status and all. Mr., Mrs. you forget in the exam. Focus only on the name. Simply they have given Mr. Lala, Mrs. Mala. We'll not worry about that. We'll only write the name. Now rectification. Lala, did you debit? Is Lala debited? No. Lala debit 2,300. Mala, what did you do? Wrong credit required? No. Remove that. What will you do? Mala also debited 2,300. Over, finished. In the second stage, what will you do? Lala debited 2,300. Mala also debited 2,300 to suspense account 4,600. If we are in the next accounting period, the rectification entry will be same. Why? Because we don't have any expense or income. Next, 17. The total of the returns inward book for July 2021, 1,200, was not posted. Returns inward book means which book? Sales return. Sales return debited 1,240. Correct? No? Yes. Sales return to what? Who will give you sales return? Debtor 1240. The wrong entry is only debtor is done. 1240. What should be the rectification entry now? Sales return has to be debited. Sales return debit 1240. Job done. In the next situation, sales return debited 1240. To what? Suspense account 1240. In the third situation, we cannot use sales return. P&L adjustment debited 1240. To suspense account 1240. Clear? Yes. Let's go to the 18th one. Okay, even though it is marathon, if at all you are not understanding something in between, you can ask doubts, okay? Okay, feel free to ask doubts. Yes. The freight paid on a machine, rupees 5,600 was posted to the freight account as 6,500. 10% depreciation is charged on these machines. Tell me, freight paid on machine. Remember, one small unit is there in chapter number 1. Capital expenditure and revenue expenditure. Whenever we purchase one machine, if you pay any expense, along with that, it will be capitalized. Correct? Here what has happened? Freight paid on machine. It will not be taken as freight account debited. It will be taken as machine account debited. So 5,600 is posted to the freight account as 6,500. What did they do? They did error of principal also. They did error of commission also. So the entry should have been machinery account debited 5,600 to cash account 5,600. Why cash I am writing? Because they said freight paid. Already it is paid. Okay. On a machine of 5,600. What is the wrong entry here? Freight account debited 6,500 to cash. To cash. How much? 5,600. Nowhere they spoke about cash. What they don't tell you is always correct. Remember that. Okay, so what should be the rectification entry here? Machinery account debited 5,600 to what? To freight account 6,500. Clear? It will not match. It will not match. It's in the first stage only. It will not match. Now, remember one thing. Machinery you did not debit. Because you did not debit machinery, you did not put the depreciation entry also. See over here. Depreciation is charged on this machine. If you don't enter into machine, you will not enter depreciation. If you miss the machine only, how can you pass the depreciation entry? Are you getting my point? So depreciation account debited 560 to machine also. For this, no entry is passed. So rectification entry will be depreciation account debited 560 to machinery account 560. Is this clear? Now, when we are going into the second stage, after preparation of trial balance, then what will be the entry? Machinery account debited 5,600, suspense account debited 900 to freight account 6,500. This will be same. This will be same. What about the next one? Next accounting period, machinery account debited 5,600, suspense account debited 900 to P&L adjustment 6,500. Clear? What about this one? Will it be same? No, it will be P&L adjustment debited 560 to machinery account 560. I hope it is clear. Okay. If I don't put the machine, I will miss the depreciation. If I put extra to machine account, then I will put extra depreciation. Then the depreciation has to be reversed. Are you getting my point? If I put less amount to machinery account, less depreciation. When I correct it, put the depreciation. If I put more amount to machinery account, I have put more depreciation. When I correct it, remove the depreciation as well. Clear? If I don't put the machinery only, no depreciation. So when I correct it, you have to put the depreciation as well. Is this clear? Yes. That is your 18th one. Now we'll go into the 19th one. While carrying forward the total in the purchase account to the next page, 65,590 was written instead of 56,950. One-sided error. One-sided error, only purchase there is a mistake, that we know. So what should be the correct entry? Purchase account debited. How much? 65,000, sorry, 56,950. 56,950. What did they do? Purchase account debited 65,590. 65,590. Clear? Total, no, total. So now, did they put more or did they put less? What should I do? Two purchases. Can you find the difference? 8,640. I put more, I am removing it. Next, second stage, what should I do? Suspense account debited 8,640. Two purchases 8,640. Third stage, what are we going to do? Third stage, we are going to do suspense account debited 8,640 to P&L adjustment 8,640. I hope it's clear. One sided error, directly you can solve the one side only without worrying about the other side. Okay, 20. Sale of machine on credit to Mr. Mehta 9,000 on 30th September was not entered in the books at all. Book value of the machine was 6,750. What has happened here? Sale. Tell me, what should be the entry for sale? Sale. Bank account debited. Now see over here. Sale of machine on credit. Now I can't write bank because they have sold to Mehta on credit. So instead of writing bank, what I will write over here? I will write Mehta. Mehta account debited. How much? 9,000. To machinery. How much? 6,750. To P&L 2,250. Correct? Is there a mistake or no mistake? Not entered in the books at all. Not entered in the books at all. So what will happen? No entry. What will be the rectification entry? Same. This will be the rectification entry. What will be the rectification entry in second stage? Same. What will be the rectification entry in third stage? Mehta debited 9,000 to machinery 6,750 to P&L adjustment 2,250. Clear? Now, I have compiled many questions and made this question. So, depreciation rate is not there. In case depreciation rate 10% is given in the question, that time what you will do? Sold on 30th September, no. If they are following calendar year, 9 months depreciation we have to charge. If they are following financial year, then 6 months depreciation we have to charge. From April to September or from Jan to September. Clear? 21. The total of the purchase book of one page was carried forward to the next page as 4593. This I am not doing because just now we did a similar question. Okay. Sale of 573 was entered in the sale book as 753 and posted to the credit of the customer. This we will do. Okay. Wrong person, wrong amount. Instead of 21, I am doing directly 22nd. Tell me what is the correct amount of sale here? Sale of 573 entered in the sales book. Sales book means it is credit sale. So can I write debtor account debited 573 to sales 573. Correct? What about the wrong entry here? What about the wrong entry? See over here. As 753 and posted to the credit of the customer. Wrong amount and wrong side. To sales 753 because you have entered wrong amount, no. So sales also is affected. To debtor 753. Correct? Now you have to be a little careful when you are rectifying this. Debtor account has to be debited. How much? 573 plus 753. 1326. What about sales? What about sales? Sales also, did you put extra? Can you see 753 instead of 573? So what you will do? Sales also has to be debited. How much? 180. That is it. That is the rectification entry. When you go to the next period, what will happen? Debtor account debited 1326. Sales account debited 180 to suspense account. How much? 1506. Clear? Now when we go to the next accounting period, the rectification entry will be debtor account debited 1326, P&L adjustment account debited 180 to suspense account 1506. Is it clear? Yes. So can you see what's happening over here? What you have to be really careful about. Now what did they tell? How do we know sales also mistake? Because see over here, entered in the sales book as 753. So entering only wrong, both sides wrong. Plus they put it to the wrong side of the customer also. Yes. Next, 23rd. A return to a creditor 510 was entered in the returns inward book. Okay. However, the creditor was correctly posted. Returns to the creditor. What is the entry for this? Is it purchase return or sales return? Is it purchase return or sales return? Purchase return. Return to the creditor. See over here. A return to a creditor of 510. How can I return to the creditor? Only if it is purchase return. So the entry will be creditor account debited 510 to purchase returns 510. Clear? What has happened over here? They have entered it in the returns inward book. Returns inward means what? Sales return. Sales return debited 510. But can you see what has happened over here? However, the creditor's account was correctly posted. You put in the wrong book, but creditor is correctly posted. So what has happened over here? Creditor is also debited for 510. You didn't put it into purchase return, you put it into sales return, but creditor no problem. So what is the rectification entry now? Sales return debited 510. Purchase, sorry, not sales return. We have to credit purchase return. Yes, purchase return credited 510. Sales return wrongly debited. To remove wrong debit, what I should do? Credit that also to sales return 510. Purchase return is credited to do the correct thing. Sales return is credited to remove the wrong thing. Is it clear? So now what should be the rectification? Here, suspense account debited 1020 to purchase returns 510 to sales returns 510. Rectification entry in the next accounting period will be suspense account debited 1020 to P&L adjustment 1020. Full amount you can put into P&L adjustment only. Is it clear? Yes. 24. Cash received from C Das was posted to the debit of G Das. These type of errors you should be very happy if it is there in the exam. Okay, instead of putting into one account, you have put into the other account. Cash account debited. How much was the amount? 620. So cash account debited 620 to C Das 620. What is the wrong entry here? Cash account debited 620 to G Das 620. What is the rectification entry here? Remove it from one person, put it to the other person. So G Das debited 620 to C Das 620. It will be same in the second column also. It will be same in the third column also. Second column it will be same. Why? Because there is it's a two-sided error. Third column it will be same. Why? Because there is no expense or income. Okay, 25th one. Goods worth rupees 840 were dispatched to a customer before the close of the year, but no invoice was made. Should be the easiest question. Omission, complete omission. Goods dispatched to customer means what? Sales, right? Entry is debtor account debited to sales. What is the amount? Sorry, 840. So 840. What is the wrong entry? No entry. What should be the rectification entry? What is the rectification entry? Same. What is the rectification entry here? Same. What is the rectification entry here? Debtor account debited 840 to P&L adjustment 840. Clear? There we cannot write same because the last one will have P&L adjustment if at all there is income or expense. Next, that was your 25th. Sorry, yeah, 25th. 26th. Goods worth rupees 1000 goods worth rupees 1000 were sent on sale or return basis to a customer and entered in the sales book. At the close of the year, the customer still has the option to return the goods. Sales price was 25% above cost. Do you know sale or return basis? Many places it is impacting us. Even in inventory chapter, it will ask. They will ask sale or return basis. Quickly, in 1 minute, I will tell you what is sale or return basis. Sale or return basis is I am going to give the goods to you and tell you, take the goods. If you like it, keep it. If you don't like it, give it back. And I am giving you time. 2 months, 3 months, whatever, I am giving you time. When I give the goods to you, I will pass the sale entry. If you return the goods, I will reverse the sale entry. If you accept the goods, I will not do anything because I already passed the sale entry. But in case our year end comes in between, if year end comes, what happens? Even if you accept, when will you accept it? You will accept only in the next accounting period, no. So, because you will accept in the next accounting period, sale should go to the next year. So, what I will do this year, I will reverse the sale entry. I will reverse the sale entry. If I reverse sale entry, what will happen? I have to take the goods to closing stock. If I reverse the sale entry, what will happen? I have to take the goods to closing stock. So, here no entry has been passed. So, the entry will be what? Sales account debited 1000 to debtor account 1000. I am reversing the sale entry. Clear? Because I reversed sale. If sale does not happen, what will happen? Goods have to sit in your closing stock. Now, where is the goods? In my godown or in your godown? In your godown, right? But still, whose goods are they? My goods. Still, till you accept it, it will always be my goods only. Is it clear? So, what I will do? Closing stock on approval basis account debited to trading account. This is the normal entry for closing stock. No, closing stock account debited to trading account is the normal entry. But here we are adding one extra fitting here. Closing stock on approval basis debited to trading account. Clear? Can I take it as 1000? Can I take it as 1000? No. Sale price was 25% above cost. Closing stock should always be valued at cost. So what we are going to do? We cannot take 1000. What are we going to do? 1000 minus 20%, not even 25%. Why? Because it is 25% on cost, it will be 20% on sales, or 25% on cost will be 25 by 125 on sales. Both the ways you can see. So this will be 800 and 800. Did you pass any entry over here? Here it is completely no entry. So what will be the rectification entry? It will be same. What will be the rectification entry here? It will also be same. But what will be the rectification entry in the third situation? It will be P&L adjustment debited 1000 to debtor 1000. Closing stock debited 800 to P&L adjustment 800. Trading account also I cannot put. I have to put it to P&L adjustment only. Okay. See, consignment and sale of goods on approval or return basis both are removed from your syllabus. But still you have to know little of that, because even in inventory chapter they will ask you something of that only. Now, repair made during the year were wrongly debited to building account. Tell me what is the correct entry? Quickly, fast. Repair, what is the entry? Repair account debited 12,500 to cash 12,500. What is the wrong entry? Building account debited 12,500 to cash 12,500. Easiest form of error. Remove from the wrong account, put it to the correct account. Entry will be repair account debited 12,500 to building account 12,500. In the next next situation also it will be same. But when you go to third one, it will be P&L adjustment debited 12,500 to building account 12,500. Is this clear? This is 27. Now we move into 28. Okay, addition of the freight column in the purchase journal was short by 15,000. Now here you have to be very careful. Tell me what is the correct entry first, then I will tell you everything else. Freight account debited. Okay. Freight account debited. It is what is the amount? 12,000. Sorry, 15,000. To what? To what? Cash? Machinery. No, not machinery. Addition of the freight column in the purchase journal. Purchase journal means nothing but purchase book. Freight account debited to No, freight account debited to creditor. Freight account debited to creditor. What does it mean? If you are putting something in purchase book, that means it is credit item, no? Did not pay. So what has happened over here? You have purchased goods. That money also you did not pay. That person has paid the freight charges. That money also is pending. Are you getting my point? So what has happened over here? The addition of the freight column was short by 15,000. Which column is short? Freight column is short. So if freight column is short, what will get affected? What will get affected? Only the freight will get affected. No. Freight will get affected. Remember, purchase column is short. What will get affected? Purchase will get affected. Okay. Because freight will get affected. Freight will be 0. But creditor is correct. Creditor is 15,000. Only freight column is shortage. That means freight you did not put. So what will be the rectification entry? Freight account debited 15,000. What should be the rectification entry next time? Freight account debited 15,000 to suspense account 15,000. What is the rectification entry over here? P&L adjustment debited 15,000 to suspense account 15,000. I hope it's clear. Okay. Next, 29. Goods of the value of 4,500 returned by a customer, Shiv and Company, has been posted to the debit of Shiv and Company and also to sales return. Okay, goods returned by Shiv and Company. What should be the entry? 29th one. Sales return debited 4,500 to Shiv and Company 4,500. What have they done? What have they done? It has been posted to the debit of Shiv and Company and also to sales return. So can I tell that rectification entry is sales return debited 4,500. Shiv also is debited 4,500. Rectification entry will be what now? So what should I do? Credit Shiv 9,000. Remove the wrong debit, put the correct credit. Credit Shiv 9,000. Now next will be what? Suspense account debited 9,000 to Shiv 9,000. Why same? No expense or income is there, so it will be same. 30. Sundry items of furniture sold for 30,000 had been entered in the sales book, the total of which had been posted to the sales account. Furniture sold. What is the entry? Furniture sold. What should be the entry actually? Yeah, cash account debited. But can you see? Entered in the sales book. That means it is a credit sale. It is a credit sale. So what we will write? Debtor account debited 30,000 to furniture 30,000. But what has happened over here? Debtor account debited 30,000 to sales 30,000. What is the rectification entry now? Sales account you have to remove. So sales account debited 30,000 to furniture 30,000. Is it clear? So the entry will be same over here, but here it will be P&L adjustment debited 30,000 to furniture 30,000. I hope it's clear. Okay, next one. A bill of exchange received from Sapna for 75,000 had been returned by the bank as dishonored and had been credited to the bank and debited to the bills receivable. What and all they have done? But tell me, bill discounted dishonored. What is the entry? Bill discounted dishonored. We are doing bills of exchange today, but you should remember little at least. Okay, received from Sapna. So it is dishonored, right? Can I tell that the entry is Sapna account debited to bank account? Why bank account? Because it is already discounted. Bank has given me money that time. Now bank will take money from me and the amount is 75,000. 75,000. Now understand what have they done. See the entry. Has been credited to bank and debited to bills receivable account. Can you see? One side is correct. Credit to bank is correct. So they have passed the entry bills receivable debited 75,000 to bank account 75,000. So what will be the entry now? Sapna account debited 75,000 to bills receivable 75,000. Here also it will be same, and here also it will be same. This is your rectification of errors. 31 questions only. I think almost everything is covered. If at all one or two I have missed, you have to go through that. Okay. Now I will keep it open for the face-to-face students so that you can click pictures. Okay, one by one I'll just keep the solution of everything. 1, 2, 3, 4. I'm keeping it together. One person can click and send it to everyone. It's okay. Whatever is comfortable to you. Done. Yes. Next I'll keep 5 to 8. 5 to 5, 6, 7 is there. I can feel like all are press reporters and some big celebrities standing over there. Vijay or someone came and all are clicking. Which Vijay? Which Vijay? I know you are all Sethupathi fans, but Talapati fan. I am Sethupathi fan. I feel Sethupathi is the real ultimate actor. 8, 9, 10, 11 are there. 3, 2, 1. Done. Done, no? 12, 13, 14, 15. 3, 2, 1. Done. 16, 17, 18. 3, 2, 1. Done. I like those two guys. He's like, my friend is clicking. I will sit aram se. Now, 19, 20, 22. 21 is repetitive, so that we have not solved that. Done. 23, 24, 25, 26. Maybe 26 is not fully there. 23, 24, 25. 26, 27, 28. 29, 30, 31. Yeah. Question I can share the PDF only. Okay. Question you don't click the picture. I will share the PDF itself. Yes. This was your rectification of errors. I hope it helped you. Okay. Quick revision of rectification we did. Next we are going into BRS. And see what I have done for BRS. 20. Now see BRS is one chapter where the boundary is limited. Boundary is limited. If you see all the adjustments once, then it cannot go anything more than that. Okay, limited number of items are there. Okay, so what we have done with BRS, we'll quickly discuss the concept of BRS. We'll do one thing, we'll discuss the concept of BRS, then take a 10 minutes break, come back and then we will solve this question. Okay. I thought we will do it after 2 hours only, we'll take a break. But because we are going at such fast pace, I think the strain is also more on the brain. When you're doing slowly in regular class, 2 hours, 2.5 hours, nothing will happen. Yes. Quickly we'll discuss BRS. Okay, bank reconciliation statement. Now, I hope you know this is a statement which is showing difference between what? Difference between passbook and cash book. But cash book, which column we are worried about? Only the bank column. Cash book has cash column and discount column also. We don't worry about all that. We are only worried about difference between passbook and cash book. Passbook means what? Our records maintained by bank, correct? Cash book means what? Our records maintained by us in our books only. books of accounts. Clear? So for bank, I am creditor. For bank, I am creditor. Why? Whenever I put money, they have to give me money whenever I ask. That is why general language when we are talking, or if you see your mobile message, it will always tell 500 rupees credited to your account. That means whenever you put money, bank is telling you are creditor for me. Because if you go to ATM and stand, bank has to give the money. Obligation is there to give. Correct? So for bank, I am always creditor. And in our books, bank is asset. Bank is asset. That means, did you understand now why when we put money, bank balance in the bank increases? That means credited. But in our books, bank balance is always debited to increase. Clear? Now, one more thing you have to understand over here. If I have normal balance means what? Favorable balance. Normal balance means favorable balance. Clear? If I am having passbook and if I am having cash book, then I also can have which is a OD balance, not favorable, it is unfavorable balance to me. It is called as OD balance, overdraft. Passbook, cash book. Now tell me one thing. What is OD? Full form I know. Tell me, what is OD? OD means I don't have money, but bank is still allowing me to take money. I have 500 rupees in my account, but bank is allowing me to take 6,000 rupees. Deducting beyond the limit. Okay, this is called as OD. Can everybody do that? Imagine I have 500 rupees in my account. I will go to ATM and put 1 lakh. Will I get 1 lakh? Nothing. I will not even get that 500. It will show insufficient balance. Are you getting my point? So OD balance, OD facility is there only for those customers where bank is giving that facility. Now, in bank reconciliation statement, you have to understand one thing, very important. Everybody is using hand movement method only. Okay, everybody is using hand movement method only. Correct? Now, hand movement method is beneficial only when you should know which side to move. Are you getting my point? Okay, I said right hand, cash book, left hand, passbook. Now, something happened. Is the balance going up or down? That I should know, no? Are you getting my point? So now, understand this. If at all money comes in, that means you are getting money. When will you get money? Customer made payment, checks are deposited, somebody gave money, the dividend is received. So whenever money comes in, okay, what will happen? In normal balance, passbook balance will increase, cash book balance will increase. Both the balance will increase, but OD balance will decrease. OD balance will decrease. Why OD balance will decrease? OD balance means what? I already have to give bank money. So I have to give bank 500 rupees. Suddenly 200 rupees comes and falls into my account. What will happen to the balance now? It will come down to 300. If I have to pay you 300 rupees and if I give you 100 rupees, what will happen? Now I have to give you only 200 rupees anymore. Clear? But you have to understand the debit credit also. Just for in case, sometimes they will not tell. They will tell money debited to the account, credited to the account. That we should know. Okay, in passbook, money is coming in means what? Credit. In cash book, debit. Passbook, credit, cash book, debit. Even if it is OD, okay, debit credit will not change. Money goes out. Money goes out. So what will happen that time? In normal balance, what will happen? Balance will reduce. In OD balance, balance will increase. Balance will increase. Is it clear why balance will increase? In OD balance, what's happening? I already took 500 rupees from you. Now I am taking another 200 from you. So the balance will go to 700. No. Are you getting this? But when money goes out in passbook, debit, cash book, credit, passbook, debit, cash book, credit. The debit credit concept will not change. If I take money from bank, for bank what happens? Creditor is reducing. Creditor reducing means liability reducing. When liability reduces, what should we do? Debit. That is why bank is always debiting it when I take money. Clear? For me, asset is reducing. Asset reduces, what should we do? Credit. Clear? If it is OD balance for bank, I am an asset. Because I have taken money, for bank I am an asset. When I put money or when I take more money, what will happen? Asset will increase. But when I put money, what will happen? Asset will decrease. If it is OD balance, for me it is liability. So if I put money, what will happen? Liability will decrease. If I take more money, liability will increase. Can you see modern approach only is followed? Modern approach only followed. Asset increases, liability decreases. This you have to remember. Is it clear? This is one thing. Why I am telling you is hand movement method is simple. Hand movement method is simple. You take one hand as the starting point. If you take right hand as the starting point, okay, and left hand as the ending point, they will tell you starting point what it is. They will give you at least one balance. They will give you cash book balance, pass book balance. They should give you at least one. Now if they give you, imagine right hand is starting point and left hand is ending point and right hand is cash book. In this example, right hand is cash book. If cash book there is a movement, you will just reverse it. Pass book there is no movement, no. Cash book has gone up. What will you do? You will bring it down. Cash book has gone down. What will you do? You will bring it back. Clear? Because right hand starting point, if it moves, you just reverse the starting point. If ending point moves, you move the starting point. Starting point is cash book, ending point is pass book. Pass book has gone up. What will you do with the cash book? You will also increase. Pass book has gone down. What will you do with cash book? You will also decrease. Clear? But the main point what I am trying to stress over here is the increase or decrease you should understand. If it is normal balance, money coming in, increase. Money going out, decrease. If it is OD balance, money coming in, decrease. Money going out, increase. Is it clear? Yes, this is one thing. Okay, this is the basic what I wanted to discuss about BRS. One more thing is the concept of adjusted cash book. Do we have this concept called as adjusted cash book? Adjusted cash book. What is adjusted cash book? See, first of all, what is BRS? BRS means, yeah, bank reconciliation statement. I know the full form. Yes, BRS means pass book is not matching with cash book bank column. Correct? It is not matching. Now, if at all I can correct this balance and make it match, then good, no. I don't have to prepare BRS only. So adjusted cash book means what? Whatever is under your control, that you put it into the cash book. Whatever is under your control, go and do it. What is under your control? Things entered in passbook, not entered in cash book. What will you do? Put it in the cash book. Okay, enter it. Now, errors in cash book. What will you do? Our control, no. We made mistake in cash book, no. What will I do? Rectify it. This one, what will I do? Enter it. Are you getting it? But if I entered in the cash book, bank has not entered in the passbook, not under my control. Because bank did not enter, I will not remove it. I entered correctly only. So now such things I have to put into BRS only. So what I can't put into adjusted cash book will always go into BRS. Now, bank made one mistake. Will I also make the same mistake? No, that will be in BRS itself. So what you have to understand, adjusted cash book, remember this, things that are under your control. What is under your control? Cash book not entered, passbook entered, enter it. Cash book entered wrongly, rectify it, it will be done. Passbook entered wrongly, not under my control, take it to BRS. Cash book entered, passbook not entered, what can I do? BRS. Clear? Now, adjusted cash book, if they tell you in the question, do it. If they don't tell also, if you want, you can do it, but give a note. Clear? Otherwise, everything will go into BRS. Is this clear? Yes. This much we have to know about the concept of BRS. I think we can take a 10-minute break and then we will solve that question which has almost everything. Just I want to go through the question before we start. Which one? 1 minute, I'll show you. See, prepare BRS for the year ending 31st December 2021 from the following information. If starting point is balance as per cash book, balance as per passbook, OD balance as per cash book, OD balance as per passbook. Is it clear? And also adjusted cash book also we have to see. Now all four I am not doing. I will do normal balance 1, OD balance 1. Normal balance other one, it will be ulta of this only, and OD balance other one will be ulta. So that you have to do at home. You can try it. Yes, let's begin. Okay. If you're talking about balance as per cash book, you start with balance as per cash book 10,000. Okay. To save time, we are only talking about plus minus, which should be added, which should be subtracted. Okay. What are the things we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, and you have 16, 17, 18, 19, 20. 20 different adjustments are there for BRS. What I'm starting with, see, 20 adjustments are there. I'm starting with balance as per cash book. We'll do one thing. We'll take the tougher one first. Easier one we'll do later. Okay. OD balance as per cash book. We'll start with OD balance as per cash book. Normal balance, I know you are very thorough with it. We'll do OD balance as per cash book. Okay. So what you have to remember, that OD balance means if money comes, the amount reduces, and money goes, amount increases. Okay. See the first one. And we are doing it on 31st of December 2021. Okay, see the first one. On 15th December 2021, payment side of the cash book was overcast by 10,000. Overcast means what? I have put extra payment. Overcast means what? I have put extra payment. Payment side of cash book. Okay, if I am taking starting point as cash book, ending point as passbook. What has happened to the payment side of cash book? Extra. OD. In OD, when there is payment, what will happen to balance? Increase. So what should I do? Payment side we have put more. What should I do? Minus. Decrease. I hope it is clear. Okay. OD balance increase. Okay. Payment side is more. That means OD balance increases. Starting point has moved. So we will reduce it. Okay. Next. Check for 1,18,000 issued on 6th December was not taken in the bank column. Always when we see check issued, don't think that it is check issued but not presented for payment. They said check issued but not taken in the bank column. Bank column is where? Cash book or passbook? Cash book. Check issued 1,18,000. Starting point nothing, but ending point what happened? Balance has increased. So what we will do? We will also increase it, so it will be added. Are you following this? In cash book we have not put. That means in passbook we have put. Passbook, if you put the check issued means money has gone. Cash book, passbook balance has gone up because it is OD. Here also it will go. Clear? Third one. On 20th December 2021, the debit balance of 8460 on the previous day was brought forward as credit balance in the cash book. What happened? Nice error. Okay. Debit balance of 8640 in cash book has been brought forward as credit balance. Now see, cash book. Cash book. Starting point is cash book. What happens? It was debit balance. Debit balance means what? Money was there or money was not there? Money was there or not there? Money was there. Debit balance means what? Asset, no? Money was there. 8640 asset balance is there. What did they do? What did they do? They took it as credit balance. To reverse this situation, what I should do? Understand this. If I have a cash book, if I have cash book, in this 8640 should have been over here. Instead of that, 8640 is sitting over here. To rectify this, what I should do now? Into 2 I have to do. So 17,280 rupees I have to put on the debit. I have to debit the cash book. Debit the cash book means balance should be increased or decreased. Debit the cash book means what? What should I do? Balance should increase. Clear? Now tell me, how will I deal with it? Because it is OD starting point. Now they have put it on the opposite side. Okay, I should add or subtract? I should actually add, not minus. Why? 8640 was there. They removed 8640, they removed 8640 again. That's why it went into opposite direction. Now to bring it to the correct direction, what I should do? I should 2 times add it. So this will be add. Is it clear? I have to debit the cash book. Debit the cash book means add. Next. Of the total checks amounting to 12,370 drawn in the last week of December, checks aggregating to 9,360 were encashed in December. Is it one normal situation? Check which is drawn. Drawn means issued. Check issued, not presented. Can you find the difference? 12,370 minus 9,360. 3010. Correct? This much is check issued, not presented. So what happened in cash book? Did you enter in cash book? Yes. Check issued. So what happened to cash book? OD balance. Balance increases. OD balance increases. So what will you do? Decrease it. So 30 decrease it, but only 3010. Is this clear? Next. What do we have after that? Dividend of 35,000 collected by the bank and fire insurance premium of 7,900 paid by the bank were not recorded in cash book. Dividend collected by the bank. Did you enter in passbook? Did you enter in passbook? Yes, passbook it is entered, but my starting point is cash book. If you get dividend, what will happen to passbook balance? Balance will decrease because it is OD. Balance will decrease. So what will you do? You will decrease it here also. So minus for dividend, and other one is for fire insurance premium paid. So passbook balance will increase. What will you do? Cash book balance also you will increase. Add it for premium. Add it for premium. Clear? Next. Sixth one. Check issued to a creditor 1,75,000 was recorded twice in the cash book. Check issued. Once you have recorded in the cash book. So balance increased. Passbook also they recorded. Balance increased. But in cash book you have recorded again. So now passbook they didn't make the same mistake. So what will you do? You will subtract it. Subtract it. Clear? Minus 1,75,000. Once we have to reduce. Next. Bills for collection amounting to 53,000 credited by the bank, but no advice was received by Karan till 31st December. Bills for collection. That means bank collected the amount or bank paid the amount. Collected the amount. Okay. Credited by the bank. Where did the entry happen? Cash book or passbook? Passbook. What happened to passbook balance? Passbook balance decrease because it is OD. Passbook balance decrease. So what will you do? You will also decrease it. Minus. I hope it is clear. Yes. Next. A customer who received a cash discount of 3%. This is also important adjustment. Okay. On his account of 60,000 paid a check on 10th December. Cashier erroneously entered the gross amount in the bank column of the cash book. Very nice adjustment and important adjustment. What has happened? Did you receive money or did you pay money? Did you receive money or pay money? No, you received money. Customer who received cash discount. If customer is receiving cash discount, that means customer is giving me money. Correct? So now what happened? In the passbook and in the cash book, understand the difference. Actually the amount is 60,000, but I gave him discount of how much? 3%. So 60,000 minus 3%. What is the amount? 58,200. So actually the customer is giving me a check of only 58,200. In passbook it will come as 58,200 only. But in cash book what I did by mistake, instead of putting discount in the discount column, I put full amount in the bank column only. So I have put 60,000 over here. Clear? Now understand this. What is the difference between these two? 1,800. Now tell me one thing. In cash book, did you put extra 1,800 or less 1,800? Extra 1,800. So cash book balance, what will happen? It will decrease. OD. It will decrease. But passbook nothing. So what will you do? Add it back. Okay. Add it back, but you have to be very careful. You are adding back only 1,800. Is this clear? Yes. Next. Ninth one. Check amounting to 60,000 issued to creditor have not been presented for payment. Very common one. Check issued, not presented. Check issued means who has passed the entry? Cash book entry is passed. What happened to the cash book balance? OD. Cash book balance increased. So what will you do? Decrease it. Minus. Is this clear? Next. 10th one. Check paid into bank amounting to 1,10,500. Out of which check amounting to 55,000 only collected by the bank. Can you give me the difference between these two? 55,000. Okay. Is it check deposited, not cleared? Is it check deposited or check issued? See over here. Check paid into bank. That means check is issued. 55,500 check issued. Check deposited, not issued. Check deposited. See over here. Check paid into bank. Check paid out of bank means it is issued. Check paid into bank. That means check is deposited. Okay, now check deposited. Who has passed the entry? Cash book. Cash book OD. So if you deposit check, what will happen? Balance will decrease. So what you should do? You should increase it. So add 55,500. Add only 55,500. I hope it is clear. Next, 11. Rent amounting to 60,000 received by the bank and entered in the passbook but not recorded in the cash book. Rent received, not paid, received. Who has entered it? Cash book or passbook? Passbook they have entered. What will happen to passbook balance? OD. Balance will decrease. So now what will happen here? Here also it will decrease. Minus. I hope it is clear. I hope you are following this. Yes. Next. Insurance premium up to 30th June paid by the bank 2,700 not entered in the cash book. Up to 30th June. That means next year 6 months also they have made the payment. This is called as prepaid insurance. But paid no. Prepaid insurance and all we will see when we are doing final accounts. In BRS what happens? Paid no. Amount went no. Now 2,700. Passbook did it go? Did it go from passbook? Yes. Did it go from cash book? No. Passbook OD. When you make the payment, what will happen? Balance will increase. OD. Balance will increase. So what you will do? You will also increase it. So this will be plus. I hope it is clear. Now, next one. Payment side of the cash book has been undercast by 500. Payment side is undercast. Payment side we had one adjustment already, that was overcast. Overcast we had. Now undercast. Payment side of the cash book, undercast means what? You did not put one payment. Clear? Overcast means what? You put one extra payment. Here you did not put one payment. But passbook, did they put that payment? So passbook they have added OD balance. You have not put the payment. So what you will do? You will also add 500. add. Can you see the first one was overcast, opposite, minus it is. Next. 14. Bank charges of 150 shown in the passbook had not been entered in the cash book. Bank charges means what will happen to passbook balance? Balance will increase. So here also it will increase. Add. Okay, charges, expense, balance will go up. Yes. Now 15. A bill payable of 20,000 had been paid by the bank but not entered in the cash book. And bill, okay, we'll stop there. Next part is second part of the thing. Bills payable 20,000 paid by the bank, not entered in the cash book. What will happen? Who has passed the entry? Passbook entry is passed. Paid means OD balance. What will happen? It will increase. What you should do? You should also increase. So what will you do? Add 20,000. Clear? See the other one. Bills receivable of 6,000 had been discounted with the bank at a cost of 100, which had also not been recorded in the cash book. Bills discounted means what? Money came in or money went out? Money came in. Correct? So who has entered? Passbook or cash book? Passbook they have entered. So what will happen to passbook balance? Go down. Because it is OD, it will go down. So here also it should go down. But it should go down. It should go down for only 5,900. Because when you discount, you will not get the full amount. You will get only the remaining amount. So clearly they have told that 100 rupees is the discounting charges. Is this clear? Yes. 16. Check issued 10,000 entered twice in the cash book. Check is issued. Huh? Received. Sorry. Check received 10,000 entered twice in the cash book. Check received means what happens? First time. Second time we will see. First time cash book balance goes down. Passbook balance also goes down. Second time cash book balance goes down again, but passbook nothing. So what will you do? Add it back. Add it back 10,000. I hope it is clear. Next, bill of exchange for 26,200, which was discounted with the bank, returned dishonored, but no entry was made in the cash book. Bill discounted. Dishonor means what? Bank will give you money or take money? Bank will take money. If bank takes money, passbook balance will increase. OD, passbook balance will increase. Cash book nothing. So what will you do? You will also add. I hope it is clear. Yes. Bank charges entered twice in the cash book. First time, bank added. You also added. Second time, only you added. So what will you do? Minus. Next, interest allowed by the bank. Interest allowed by the bank. Allowed means what? Giving or taking? Giving to us. If they take from you, they will tell interest charged by the bank. Yeah, here it is income. If they take interest, no, they will tell interest charged by the bank. Here they are giving income, so it is interest allowed by the bank. That means bank is giving you interest. Okay, now what happens? Passbook balance decreases. Cash book nothing. So what will you do? You will also minus. Clear? Next, interest on investment 83,800 collected and credited by the bank, but the same has not been entered in the cash book. Interest collected. Again, passbook balance goes down. Cash book balance also should go down only. So minus. Clear? I think now if there is any other balance, you'll be able to handle the adjustments. Okay. Now what you have to remember, if at all you take your starting point as passbook, then whatever happens in passbook, you will reverse it. Whatever happens in cash book, you will match it. Clear? Okay, if you start with passbook, that will be the difference. Now what I want you to do is, this you understood, right? We started with OD only. Now because we have done OD, normal balance, you should be able to manage it. Now what I want to do is, this same question, what if they ask us to prepare adjusted cash book? If they ask you to prepare adjusted cash book, you should know what to put into cash book, what to not put into cash book. Now, My starting point can be normal as well as OD. If it is normal, I will write 2 balance brought down. How much is the balance? 1 lakh. Okay, I will write 2 balance brought down 1 lakh. In case it is OD, then you will write by balance brought down 1 lakh. But your entries will be same. Only starting point will be 2 balance or by balance. Now, see the first one. Payment side of the cash book was overcast. Is it under our control? Yes. So what we will do? We will correct it. Payment side is more or payment side is less? Payment side is more or less? More. So to reduce it, what should I do? Credit side is more. Payment side means credit side. Okay. So to reduce it, what I will do? To overcast of payment side 10,000. Is this clear? I put extra payment. I will remove it by putting it on the opposite side. Okay. Now, next, a check of 1,18,000 issued but not taken in the bank column. Is it under my control? Yes. It is under my control only. Not taken in bank column. Bank column means cash book. Okay. Check issued. So what will I do? What will I do? I will take it. So what I will do? By, let's say maybe creditor 1,18,000. Whom will I give check to? Creditor only 1,18,000. Clear? Two things. Directly we have done the correction in the cash book. Third one. Debit balance of 8460 on the previous day was brought forward as credit balance. So what I should do? We have done it over here 17,280. So what should I do? To rectify the error, I will put 17,280 on the debit side. Okay. To correction of balance carried, balance brought forward. Instead of putting this side, I put that side. So I will put 2 times this side to correct it. Okay, 3 things. Can you see directly in cash book only it is done? Fourth one, of the total checks amounting to 12,370, drawn checks only encashed was 9,360. Is it under my control? I already issued the check. I have passed the entry also. Bank has not passed the entry. So not under my control. If this was there, it will go directly to BRS only. Clear? Now, dividend of 35,000 collected by bank. I did not pass entry. Fire insurance premium of 7,900 paid by the bank. I did not pass the entry. So can I pass the entry? Yes. I will write 2 dividend 35,000 and I will write by insurance premium 7,900. Okay. Now, next, I think this also is under our control. Check issued to creditor was recorded twice in the cash book. Recorded twice. Is it under our control? Yes. I have put 2 times the payment. So I have to remove the payment. So what I will do? To recorded twice 1,75,000. 1,75,000. Is this clear? 2 times I put 1,75,000. So 1,75,000 I will remove. Next, bills for collection amounting to 53,000 credited by the bank, but no advice was received. Credited by the bank. So what should we do? 2 bills for collection. How much? 53,000. Yes, 53,000. Can you see what is happening over here? Bank has collected money. I did not pass the entry. I will pass the entry over. The difference is not there anymore. 8th one. Customer who received cash discount. Cashier erroneously entered the gross amount in the bank column. So what has happened? Who made the mistake? Who made the mistake? Cash book only we made the mistake? No. Did we put extra 1,800 or less 1,800? Extra 1,800. So what will I do now? I will remove 1,800 by discount 1,800. Discount entered in bank column. Discount was entered by mistake in the bank column. So I'll remove that 1,800. Is this clear? Okay. Basically, this is discount allowed. Discount allowed. Next. Where are we? Which one? Eighth one. Ninth, check amounting to 60,000 issued to creditor have not been presented for payment. Check issued, not presented for payment. What to do? Can I enter in the adjusted cash book? No, this is not under my control. It will go to BRS only. I have issued the check. I have already passed the entry. It will go to BRS. Next 10, check paid into bank of which only 55,000 is collected. I have put the check already into the bank. I have passed the entry. Not under my control. It will go to BRS itself. It cannot be put into adjusted cash book. Next, rent amounting to 60,000 received by the bank and entered in the passbook, not recorded in the cash book. Can we enter it? Yes. What will be the entry? To rent account. I am getting the rent, not paying the rent. Rent is how much? 60,000. So this is under my control only. Rent is 60,000. Is this clear? Yes. What next? Insurance premium paid by the bank, not entered in the cash book. Can we enter it? Is it under my control? Yes. So I'll write by insurance premium 2,700. 2,700. Next, payment side of the cash book is undercast. Remember, overcast we have done. Now undercast. Undercast means what? One payment I did not put. Last time I put one extra payment. Now one payment I did not put. So I'll put that payment. So I'll write by undercast of payment side. Is this clear? Next. After that, what do we have? Bank charges 150 shown in the cash book has not been entered in the cash book. So what will I do? Not entered in cash book. Should I enter it? Yes. What will I write? By bank charges. By bank charges. How much is this? 150, right? 150. Next. After that, bills payable paid by the bank, not entered. Bills receivable received by the bank. Okay, not entered. What should we do now? Bills payable paid by the bank. So I'll write by bills payable 20,000. Bills receivable 2. Bills receivable how much? Not 6,000. 5,900, because 100 rupees will be debited to discount account. Discounting charges basically. Okay, next. Check received 10,000. Entered twice in cash book. Check received, entered twice in the cash book. So what should I do? I should remove one. So I will, received means I would have debited it. So to remove it, what will I do? I'll put it on the credit side. So by 110,000 I'll put over here by double entry on receipt side. Okay, this is just a statement. You can write any statement. Just keep it logical. That's all. Next, after that, what do we have? Bill of exchange 26,200, which was discounted with the bank. Returned dishonored, but no entry in cash book. Again, it is under our control. We can pass the entry. What should be the entry? What should be the entry? What should be the entry? Debtor account debited. Debtor account debited to bank. So by debtor account, how much was the amount? 26,200. $26,200. Is it clear? Okay. Bill which is dishonored. Dishonored means what? Bank will take the money. And bank is taking the money. Who has to give me money? Debtor has to give me money. Clear? Next. Interest allowed by the bank. That means bank has given you interest. So you will write to interest. You will write to interest. Next one is also interest. That is to interest on investment. 3,000 and 83,800. 3,000, 83,800. Is this clear? These are all the things that can be made changes in the cash book itself. After this, if you would prepare BRS, no. In BRS, you would have only 1, 2, and 3 items. That's it. Rest everything is adjusted in the cash book. See, 1, 4th point, 9th point, and 10th point. Only those three items would be there in the BRS. Oh, that I missed, is it? Oh, okay. 19 and 20 done. 18. Bank charges entered twice in the cash book. So what we have to do? 2 times I have removed. So 1 time I will have to add it back. 2 bank charges, 2000. Clear? Now my question is, if at all you have adjusted cash book, remember one thing, when you are preparing BRS, you are not going to worry about this 1 lakh. What you are going to worry about, after adjusting the cash book, whatever new balance is there, this new balance you will use and then you will prepare BRS. Is it clear? That time you will get the closing balance. New balance you will use and you will prepare the BRS. Remember that. Don't do all the hard work of preparing adjusted cash book, then pick the old balance which is given in the question and do the BRS, then you'll go wrong. Are you getting my point? So why did we do all this? So that some of the difference we can correct it. What we have corrected, from there we will continue. Is it clear? I don't think there should be trouble in BRS. Okay, if they ask in the exam, it is easy. Easy 10 marks or easy 5 marks or whatever marks they ask for. Don't lose that. Yes, you can take this. Wait, both I'll keep. I started with OD balance that time, and in adjusted cash book, I started with normal balance. Yes. Let's continue. BRS is done. Now, obviously, bills of exchange, I cannot do consolidated question like this because bills of exchange, 2 different topics are there. So, what I have done for bills of exchange, I have picked one question which is normal and other question which is accommodation. One is normal, one is accommodation. In accommodation, there are 2, T and J in the books of both. One if you do, other one is mirror image. Before that, we will learn concepts. Again, it's easy. Bob, that one. 2 questions are there in the study material. One is Bob, one is Katrak. These 2 questions you have to see and go. Other questions are all straightforward. Now, let's begin. Now there are 2 people. Bills of exchange will take with example only. Okay, there are 2 people. One fellow is called as Monkey. Okay. Then there is one more person. No, we'll make it Pinky. Okay. You want Donkey, yeah. But Donkey and Monkey, what happens is you might make mistake just because of the names while passing entries. Don't. We'll keep it as Pinky only. Donkey, already there are donkeys in class. I did not look at you. Yes, Monkey and Pinky. Okay, 2 people are there. One person sold goods. Okay. Now what I will do, I will write the entry in between. I will write the transaction in between. And we will write the entries in the side. Sold goods. Let's say sale of goods 50,000. Sale of goods 50,000. Who is selling? Monkey is selling to Pinky. Clear? So in Monkey's books, what entry will pass? Pinky account debited 50,000 to sales account 50,000. Correct? What entry will you pass in Pinky's books? Purchase account debited 50,000 to Monkey account 50,000. Correct? Now, one thing you have to understand over here. This first entry is there, no? This is the cause for bills of exchange. This is the cause for bills of exchange. What is happening over here? In Monkey's books, Pinky became debtor. In Pinky's books, Monkey became creditor. Now Monkey is having some doubt over Pinky. So what Monkey is doing? Monkey is drawing a bill. Bill is drawn and accepted. Accepted by whom? Pinky. Monkey will draw the bill, Pinky will accept the bill. Clear? Whoever has made the sale, that person will draw the bill. Tell me what is drawing the bill? Drawing a nice scenery, is it? Drafting the bill. Basically, writing the bill is called as drawing the bill. Even for check, drawing the check means just writing the check. So I will draw the bill. In that I will tell who has to pay. Pinky has to pay. How much Pinky has to pay? 50,000. How much time I am giving? Let's say 3 months. How much time I am giving? 3 months. Then I will send this bill to Pinky. Pinky will sign and accept it. Then the bill will come back to me. Now it is valid. Till then there is no validity. Now tell me what should be the entry here. I will write bills receivable account debited 50,000 to. Can you see? Pinky is out of the book. Pinky is gone. Out of the book. No longer Pinky is debtor. Because Pinky was supposed to give me money. But instead of giving money, Pinky gave me something that is equivalent to money. Are you getting my point? So what will Pinky do? Pinky will pass the entry. Monkey account debited. Monkey account debited to bills payable 50,000. Okay. What did Pinky do? Pinky had a creditor. Instead of giving money, Pinky gave something that is equivalent to money. Is this clear? Are you clear with this part? Okay. Now, we focus. We are finished with the bill. Bill drawing, bill accepting. Sale of goods, purchasing goods. Now understand this. During the tenure. During the tenure means what? During the time of the bill. If I am telling 3 months, 3 months, what and all can happen? Bill is held. Bill is held. That means what did Monkey do? Monkey kept the bill in the pocket and waited for 3 months. For that what entry? No entry. For just keeping the bill in the pocket and waiting, no entry. There is no transaction only. Are you getting my point? What if the bill is discounted for 48,000? Discounting means what? Monkey will go to bank and tell, bank, listen, 3 months bill, this is, I want urgent money. I can't wait for 3 months. Okay, you give me money now. After 3 months, you will get money. Who will give you money? Pinky will give you money. Pinky will give you money. Clear? So bank will give me money. But bank is not my uncle's, no. What will bank do? Bank will remove some charges. What charge is this actually? 3 months bank has to wait, no. 3 months interest only is the discounting charges. The interest that is there for 3 months, that only is the discounting charges. So now tell me what should be the entry here. Bank account debited 48,000. Discounting charges debited 2,000. To bills receivable 50,000. Now can you see what has happened over here? Can you see what has happened? See over here. We got one debtor called as Pinky. Pinky went, we got bills receivable. Now bills receivable, we gave it to bank, we got money. Clear? Yes. Now, what will be the entry over here for bill held? Nothing. What will be the entry when bill is discounted? No entry. If I am Pinky, you have come to me and given the bill, I have signed and accepted it. After that 3 months time, don't disturb me at all. In these 3 months, you do anything with this bill. Make a boat with that bill and leave in the water also. I am not concerned. I am not going to talk to you for 3 months. Come to me after 3 months only. Is it clear? So during the tenure, whatever happens in the books of drawee, no entry. Clear? In this case, do we agree that Monkey is the drawer and Pinky is the drawee? Is this clear? Yes. Now, what else can Monkey do? No, not dishonor. Monkey can endorse the bill. Endorse the bill to donkey. Endorse the bill to donkey. What is this? Creditor. I have a creditor who is asking me money. I don't have money, but I have one bill. The same bill I will give it to the creditor and tell you take it. Clear? So now what will happen? Donkey is gone, creditor is gone, correct? So the entry will be donkey account debited 50,000 to bills receivable 50,000. Clear? Donkey account debited to bills receivable 50,000. Is this clear? Creditor is gone, bill also is gone. Liability gone, asset also gone. Okay. Now again, no entry only. No entry. You do anything with the bill. You endorse it 500 times also, no problem. But no entry in the books of drawing. Now, tenure is over, no? Tenure is over. Now, on due date. Always when they tell due date, you add 3 days and make it the maturity date. When they tell due date, 3 days grace period is there. You add 3 days grace period. You will reach the maturity date. Remember one thing, whenever you go to the maturity date, if at all this date is a national holiday, then you take the previous date. If they tell it is emergency holiday, then it will be the next day. Clear? Yes. On due date or maturity date. If bill was, wait, first of all, we have to know 2 things. What can happen on maturity date? Either they will pay or they will not pay. If they are paying, this is called as bill. It is called as bill honored. If they don't pay, that is called as bill dishonored. If bill was held, who will get the payment? I kept the bill in my pocket. Who will get the payment? Okay, I am not monkey. Okay, monkey kept the bill in the pocket. Okay, on the due date, who will get the payment? Monkey only will get the payment. So what will be the entry here? Bank account debited 50,000 to bills receivable 50,000. Is this clear? Bank account debited to bills receivable 50,000. Now what if the bill was discounted? If bill was discounted, who will make the payment? Pinky will make the payment. To whom? Bank. Who are you? Who are you? Who are you? Who are you? Okay, monkey. No entry. Why no entry? Pinky is making payment to bank. Drawer will not pass any entry in the books. Clear? What if the bill was endorsed? What if the bill was endorsed? Who is going to make the payment? Pinky. To whom? Donkey. But who are you? Monkey. Correct? So here also there is no entry. Are you getting this? Is this clear? Somebody is making the payment to somebody. You will not bother about it. Clear? In all the 3 cases, in the books of Pinky, entry will be bills payable debited to bank account. From Pinky's books, money is going. So bills payable is also gone. Money is also gone. So this will be the entry. Is this clear? I hope it is clear. Now next, what happens next? You thought about the positive side. There can be a negative side. Bill is dishonored. Now, again 3 situations. Bill held, bill discounted, and bill is endorsed. Correct? Tell me one thing. If bill is held, now understand this. Understand this. All the 3 cases, debit will be Pinky. Pinky account debited 50,000, Pinky account debited 50,000, and Pinky account debited 50,000. All the 3 cases, debit will be to Pinky only. If bill was in your pocket, now bill is gone, invalid, to bills receivable 50,000. If bill was given to bank, Bank went to Pinky. Pinky did not make the payment. Then bank will come to Monkey and take the money. Correct? So to bank account, your money went. Now see, when bank is taking the money, they are not taking 48,000. They'll take 50,000 only. They gave you 48,000, but they'll take 50,000, full amount. Now, if the bill was endorsed to whom? Donkey. Donkey went to Pinky. Pinky did not make the payment. Now Donkey will come back to Monkey. So to Donkey 50,000. Can you see what is happening over here? Creditor is back, debtor is back. Money went, debtor is back. In all the three cases, debtor is back. So whenever bill is dishonored, remember this, debit will be to drawee. Debit will always be to drawee. If bill was in your pocket, credit to bills receivable. Bill was discounted, credit to bank. If bill was endorsed, credit to endorsee. Clear? All the three cases in the books of drawee, entry will be bills payable account debited 50,000 to whom? Monkey 50,000. Is this clear? Yes. This is your rough briefing of bills of exchange. There are small concepts also again to discuss. But did you understand this? Yes, I'm just keeping it open. You can click the pictures. Wait, 1 second. This much you click. Not done, no? Done, no? Now, 1 second. There is one small confusion here. $8,460. Which one are you talking about? Oh, okay. Guys, this one 8460. I think we have made one small mistake that time. We have taken it as 8640. Can you see here? 8460 it is. So it should be 8460 into 2. 16,920. Okay, add minus will not change. What will change is your adjusted cash book. Here, this will be 17,820 of return. No, 16,920 it will be. Error of commission. Rectification of errors. Yeah, you take the corrected one. Not 8640, it is 8460. See, the one person who is there online is helping us. Yes. Yeah, now you can, I think you have taken this one. The second part. Bill honored, bill dishonored. Quickly write that also. Done. Done, no. That's it. Now again I have to write. Now, the next thing is noting charges. Noting charges. What is noting charges? Charges paid to whom? Notary public. That means one lawyer. To do what? When the bill is dishonored, somebody has to tell, no, some proof should be there that actually it is dishonored. So we go to notary public. Notary public will send one notice. Still they will not make the payment. Then notary public will note it. On the bill they will put their seal and write. It is noted that this bill is dishonored. But for doing this, they will ask us some money. They will charge some money. Okay. Noting charges. Be careful over here. Again, it depends on what is the status. If bill was held, who will pay the noting charges? If bill was held, let's say noting charges of 20 rupees. Who will pay the noting charges? Monkey only, drawer, yes. Monkey only will pay the noting charges. Correct. So the entry will be noting charges debited 20 to cash 20. Noting charges, do you agree? It is an expense. Expenses always go to P&L. But if it goes to P&L, it will be taken as my expense. It should not be my expense, no. It should be transferred to Pinky, right? So the next entry will be Pinky account debited 20 to noting charges 20. Can you see what is happening now? Pinky has to pay the unpaid amount also plus 20 rupees extra for the noting charges also. Clear? What if bill was discounted? What if bill was discounted? Who will pay the noting charges? Bank. Now what will bank do? Bank will take it from us. We will ask Pinky. So Pinky account debited to bank 20. Bank will take 20 rupees. Bank, when they take the bill amount, no, they will take the noting charges amount also. So what we will do now? Make Pinky the debtor and bank, and anyways 20 rupees has gone. So now what if bill was endorsed? If bill was endorsed, who paid the noting charges? Donkey paid the noting charges. Donkey will ask Monkey. Monkey will ask Pinky. So the entry will be Pinky account debited 20 to Donkey account 20. So what is happening over here? Pinky is a debtor for 20. Donkey is a creditor for 20. Is this clear? Now in all the three cases, in the books of Pinky, what will happen? In the books of Pinky, what will happen? No, in the books of Pinky, it will be noting charges debited 20 to whom? To whom? To Monkey only. Because if bank pays noting charges also, bank will ask Monkey, Monkey will ask Pinky. If Donkey pays the noting charges also, Donkey will ask Monkey, Monkey will ask Pinky. So ultimately, Pinky is supposed to pay the 20 rupees to Monkey itself. Is this clear? Yes. This is the concept of noting charges. Click it quickly. Now I'll tell you what and all we have remaining in bills of exchange. We have retirement of bill, renewal of bill, bills for collection. Three things are there, major things. After that, we have accommodation. That is different only. Yes. Now, listen. What is retirement of bill? Retirement of bill means what? Paying early or asking for extra time? Paying early, right? Renewal means what? Asking for extra time. Correct? Retirement means paying early. Let's say retired for rupees 49,000. Why 49,000? Imagine that I have retired the bill early. 1 month early I paid. So now I will ask for discount. This discount is called as rebate. This discount is called as rebate. Now tell me what will be the entry here? Bank account debited 49,000. Rebate account debited 1,000. 2. Bills receivable 50,000. To bills receivable 50,000. Is this clear? Bill went. What about in the other case? What about other case? Bills payable account debited 50,000 to bank account 49,000 to rebate account 1,000. So what you have to understand, for drawer, rebate is a expense. For drawee, rebate is a income. It is basically like discount allowed and discount received. Clear? Now, renewal of bill. We have to worry about one more concept called as renewal of bill. Now, in renewal of bill, what will happen? What will happen in renewal of bill situation? Old bill will be cancelled. Okay, whatever happens, old bill is dishonored only. Old bill is dishonored. and new bill is drawn. Clear? Now in renewal of bill, understand this, old bill is cancelled. Therefore, you have to pass the dishonor entry. Here also you have to pass the dishonor entry. Is this clear? Both the places you have to pass the dishonor entry. Then after that what you will do? You will draw new bill. Okay, you will draw a new bill. New bill is drawn. But the fun part is, new bill when it is drawn, there can be interest. There can be interest. I can tell that interest is 1000 rupees. Old bill we already know, no, 50,000. Interest is 1000. Now tell me one thing. Normally, I drew bill on you. You did not pay the amount on time. Now you are asking me extra time. I can do two things. No, I can tell you I will give you extra time, but that 1000 you give me today, or I will add this 1000 to the new bill. Correct? If at all I have too much trust on you, then I will tell, okay, 1000 also you give later only. Otherwise they might tell, no, pay the interest today, remaining amount you pay at the end of the tenure of the bill. Clear? So now if new bill, interest 1000 added to new bill, if it is added to new bill, what will happen that time? You will write bills receivable account debited 51,000. New bill is 51,000. Bills receivable account debited 51,000 to Pinky. Pinky will be 50,000 only, because Pinky was debtor for 50,000. See over here, dishonor entry. See the dishonor entry. Can you see we made Pinky the debtor for 50,000 only? When we made Pinky the debtor for 50,000, now you cannot credit Pinky for 51,000. So you will remove Pinky for 50,000 only, but Pinky is going to give you 1,000 extra. That is to interest 1,000. Can you see interest is credited? That means interest is income. Is this clear? Now, what about the other person? What about the other person? Pinky. No donkey. In Pinky's situation, what will happen? Monkey account debited 50,000. Interest account debited 1,000. Two bills payable 51,000. Now, I know guys, what is the problem in the exam in bills of exchange? You know, now when you are seeing drawee in all the study material questions and all the practice questions, first you are doing drawee's books, then you are doing drawer's books, then you are doing drawee's books. So when you are doing drawee's books, now what you are doing? You are looking into drawer's books entries and ulta you are going on passing the entries. Correct? But in the exam, they might directly ask drawee only. That time you cannot waste time passing everything of drawer. Are you getting my point? You need to think from drawee's angle also. Yes. Now, what if interest paid now? What if the interest is paid now? Interest is not paid later. Interest is paid now. That time what will happen? Bills receivable debited 50,000 only. Because old bill will be new bill. Interest is paid right now. So then cash account debited 1,000. You are getting 1,000 right now, no? To Pinky 50,000 to interest 1,000. Can you see the difference between the previous situation and this situation? Previous situation, you are not getting the interest, you will get the interest in future. So the interest is also added to the new bill amount. In this situation, what is happening? You are getting the interest right now. So cash account is debited. When we go to Pinky's books, you will write monkey account debited 50,000, interest account debited 1,000 to bills payable 50,000 to cash 1,000. Is this clear? Are you able to follow? I think you had not clicked picture for retirement also. So retirement and renewal, you can click a picture. Once I was having this discussion in Chennai class, okay, about Vijay. The debate was about Vijay. So, full, I mean, 90% of class is always Vijay Talapati fans only. So then I said, I also like Vijay. So they all were like, yeah. So I said, I am Vijay Sethupathi fan. Then all were like, boo. So then one guy was there in online class. They are like, sir, actually Talapati is not Vijay. Huh? So I asked who? He said, for us, Talapati is ICAI. Actually, that is true. End of the day, who will come and sit on our head? ICA only will come and sit on our head. But still, I am still Sethupathi fan because Sethupathi I feel is some different level actor only. Recently, after seeing this Maharaja movie, again it became established. But Talapati is like mass. Yes. Now, let's go further. Retirement we finished, renewal we finished. What if the insolvency situation, insolvency or bankrupt, they will tell in the end of the question, this person cannot pay anything, only 20% is collected from his estate. Okay, let's say 40% recovered. 40% is recovered from estate. In this case, what will be the situation here? We will write bank account debited 20,000. 60% I am not going to get. If I am not going to get, that is called as bad debts debited 30,000. To whom? Pinky 50,000. Because bill is already dishonored. Bill is gone, bill is dishonored. Now Pinky we are asking money, I got only 20,000. Other side if you see what will happen, Monkey account debited 50,000, to bank 20,000, to deficiency account 30,000. What is called as bad debt over here, it's called as deficiency over there because they are not having money to pay. They are having shortage to pay. This shortage is called as deficiency and it is credited. Clear? Yes. Now what next? Last thing I think we have is bills for collection. The last thing is bills for collection. Now this bill for collection is there. No, has no connection with Pinky at all. Pinky doesn't know about all this. What is this bills for collection? Bill for collection means what? I have too many bills. I don't have time to keep track of the due date and all. I will take the bill and give it to bank. Bank will follow up for all the bills, collect the money and put the money into my account. Clear? When the bill is given to bank, what should be the entry? Bills for collection account debited to bills receivable account. Bills for collection account debited to bills receivable account. What if this bill is collected? If this bill is collected, you will get the money. So the entry will be bank account debited to bills for collection. If the bill is not collected. If bill is not collected, what will happen? Bill is not collected. Then what will happen? What will happen? Bills receivable is not valid. Due date is over. So now we will write Pinky account debited to bills for collection. Bill not collected means bill is dishonored. Whenever bill is dishonored, drawee will be back. Remember this. When bill is dishonored, drawee will be back into the books. It is meant for? I didn't get you. Yeah. Personal, yes. Now see, basically what is happening is, bill is still mine only. It is there at the bank. Bank will only check the date, ask the person, get the money, put into my account. That's all. Here there is no discounting charges and all. Here what is bank going to charge? Bank charges. End of the month, end of the year, for bank providing all the service, bank will charge some charges. No, that is bank charges. That is going to be there. Is this clear? Are you able to follow this? This is the concept of bills for collection. This is the concept of insolvency also. I think all the concepts we have discussed. Now only thing is that accommodation we have to see. Click quickly. It's online, guys. Now they are like noting charges. I have not clicked pictures. Fast. Noting charges, retirement. 3, 2, 1. Done. Next. Renewal. 3, 2, 1. For them it is screenshot. No, easily they can take. Next. Insolvency, bills for collection. 3, 2, 1. Done, done, done. Okay. Now last thing. Okay, last thing is accommodation. Now, accommodation, you have to remember one thing. What is accommodation? Here, I told you very, very important. I told you this starting point. Do you remember this starting point? I told you there is a sale, there is a purchase. Because of that, the entire story started. In accommodation, there is no starting point only. Okay, I also did not sell goods to you. You also did not sell goods to me. I also want money. You also want money. So what I told you, I will draw a bill on you. You sign and give. You signed and gave. So what we have over here, let's say monkey is there and pinky is there. No sale of goods. No sale of goods. Monkey has drawn a bill. Monkey has drawn a bill. What will Pinky do? Pinky will accept the bill. Pinky will accept the bill and give it back to Monkey. Immediately, what will Monkey do? Monkey will go to bank. Monkey will go to bank and discount it. Correct? When they discount it, what will happen? Monkey will receive the money. What will Monkey do? Will share the money with Pinky. This is the process. Two people are in need of money. One person will draw the bill on another person. Okay. And that person will accept it. This person will take it to the bank, discount it, get the money, share the money. When they share the money, you have to remember on due date. On due date. On due date. Who has to pay to whom? On due date, Pinky has to pay to, Pinky has to make the payment to bank. But Pinky does not have full money, no. Pinky has only little part of the money or share of the money, no. So on due date, what will happen on due date? Remember this, on due date, Monkey will give his share or her share. Why we have to take Monkey as his? Monkey will give his or her share to Pinky. So basically what Monkey will do on due date, Monkey will return the money, Pinky will accumulate the money, and Pinky will go and pay the money to bank. Is this clear? Okay, this is the situation of accommodation. Nothing different. Normal bill of exchange only. Only thing that you have to remember is our entire problem will arise when we are talking about discounting charges. Discounting charges. Now what you have to remember over here, in what ratio amount is shared, discounting charges also shared in same ratio. In what ratio the amount is shared, discounting charges also is shared in the same ratio. Okay, amount of which bill? Ratio of first bill. Ratio of first bill. After that, we might have many bills. Now see what happens. I will draw a bill on you. You will accept it. You will give me the bill. I will take this bill and go to bank. I will discount the bill. I got money. We both shared. On the due date, who has to pay to the bank? You have to pay to the bank. That time you will ask me, give me your share. I did not have money. So what you did, you put money from your pocket and paid to the bank. Now what you will do, reversal of situation. You will draw bill on me. I will accept it and give it. You will go to your bank and get the money and share it with me. When sharing, the discounting charges will not be shared in this ratio. It will be shared in the first ratio only. Why first ratio? Second bill came because first bill was not settled properly. Are you getting my point? Second bill came because first bill was not settled properly. So what ratio the first bill is shared, in the same ratio, second bill also amount will be shared. Not amount, second bill discounting charges will be shared. Is this clear? So this is one very, very important point that we have to remember. If at all you don't miss this point, I don't think anything else is confusing. After all this, what we have to do in accommodation? Okay, right. I mean, click. Done. Yes. After all this, wait, one point is there. I'll finish that point. Last thing what we have to do. Last thing in accommodation. Last thing is prepare the ledger. Prepare the ledger of the other party. Why we are preparing the ledger? To see how much money we have to pay or how much money do we have to get. Okay, prepare the ledger of the party to find the receivable or the payable. To find the receivable or payable, you have to prepare the ledger. Is it clear? Yes. This is very, very important. Okay, right. This actually explains our entire accommodation situation. Okay, now listen, once again I'm explaining what happens in accommodation situation. Monkey has drawn a bill on Pinky. Pinky has accepted the bill and given to Monkey. Monkey has taken the bill and gone to bank. Bank and discounted the bill. Bank gave them money. They shared the money. On due date, who has to pay to the bank? Pinky has to pay to the bank and Monkey has to return the share to Pinky on due date. Clear? Discounting charges, if I have 1, 2, 3, 4, 5, 6, 7 bills also in this chain. First bill, in what ratio we shared the amount? Same ratio we will share the discounting charges forever. End of this accommodation situation, what we are supposed to do is, after the accommodation situation ends, remember one thing very clearly. What we are going to do is, we are going to prepare the ledger of the party. If you are doing in the books of Monkey, then we will prepare Pinky's ledger. If you are doing in the books of Pinky, we will prepare Monkey's ledger. When we prepare the ledger, we will get to know whether we have to pay or not. If it is credit balance, that means we have to pay. If it is debit balance, that means we have to get. Is this clear? This much is the concept of bill of exchange. This much is the concept of bill of exchange. What we will do is, I have picked two problems. One is normal, one is accommodation. We will do the accommodation first, then we'll go to the normal question. Clear? We'll take up this one problem, bills of exchange, accommodation problem, and we'll try to cover entire spectrum. Okay, everything is covered in the books of T, in the books of J. Clear? When we do this, our bills of exchange also will get revised and accommodation also will get to know what we have to do. First I am doing in the books of T. Okay, in the books of T. First thing. Clear? Now, see this question. T draws on J a bill of exchange for 1,80,000 on 1st April 2022 for 3 months. J accepts the bill and sends it to T. Clear? So who are you in this case right now? Who are you? T. In the books of T, we are passing the journal entry. So you are T. So who is drawing the bill? T is drawing the bill. So for you, it is bills receivable or bills payable? Bills receivable. So you will write bills receivable, write the dates also. 1/4/2021. Bills receivable account debited 1,80,000 to J's account 1,80,000. To J's account 1,80,000. Clear? Bill is drawn and accepted. Now what happens after that? Who gets it discounted with his banker for 1,72,800. How much did we get? 1,72,800. So 1/4/2021 you will write bank account debited 1,72,800. Is there some discounting charges? Yes. Discounting charges account debited 7,200 to bills receivable account 1,80,000. Gone. Bill is gone. Amount is in. Now, what is happening over here? T immediately remits 57,600 to J. T is the person we are talking about. T will send 57,600 to J. Now understand this. We got 172,800. Correct? We have two parties over here. We have T and we have J. How much is T sending? 57,600. T is sending 57,600. That means what is the remaining amount? Find the difference. 172,800 minus 57,600. 1,200,000. Do you agree that the amount is shared in the ratio of 2:1? Amount is shared in the ratio of 2:1. That means T, you are T in this case. T kept 2/3 of the money and gave 1/3 of the money. Now, if you notice, 1,80,000 minus 1,72,800 is basically 7,200 is discounting charges. This discounting charges also have to be shared in the ratio of 2:1 only. So 7,200 in the ratio of 2:1 will be 4,800 and 2,400. Is this clear? 4,800 and 2,400. Is it clear? So we have to share the money like this. So now we will get to know what is the entry to be passed on 1/4/2021. I am sending money. Correct? When I am sending money, who is the person I have to debit? J. J's account will be debited 57,600 plus 2,400. Why 2,400? His share of money, his share of discount. So total amount debited will be 60,000 to what? Bank account 57,600. You are paying only 57,600 to discounting charges 2,400. Can you see over here? Already 7,200 is debited. When 2,400 is credited, what will remain is 4,800. That is T share only. So you have debited the entire amount, removed the share of the other person. So what will remain is only your share. Is this clear till here? Okay. Now what happens? On the due date, T being unable to remit the amount due. On the due date, T. You are only T, no? You are not able to pay the money. Who has to pay the money on due date? J has to pay the money to bank. They didn't tell that J is not paying. They told T is not paying. Okay, accepts a bill for 2,52,000. Now what is happening? On due date, I don't have money to give him my share. 2/3 of the share was with me. I did not give. So what will happen now? Due date, 3 months bill it was, right? 4/7/2021. 4/7/2021. What is happening now? I am accepting a bill. If I am accepting a bill, for me it is bills payable. So the entry will be J's account debited to bills payable account. And this bill is for how much? 2,52,000. Are you following this till here? Is it clear till here? Yes. Now what is happening? See over here, which is discounted by J from his banker for 2,40,660. Who is discounting the bill? Who are you? T. Should you pass any entry? No. J is discounting with the bank, so you are not going to pass any entry. Clear? J sends 40,440 to D. To T. Now you have to understand very, very clearly. This new bill, 2,52,000 minus what is the amount that they have discounted for? 2,40,660. So 2,40,660, 11,340 is the discounting charges. In this bill, I am getting only some 40,000 rupees. In this 2,52,000 bill, I am getting only 40,000 rupees. But still this 11,340 will be shared between T and J in the ratio of 2:1 only. This was the important thing I told you. First bill, remember, amount was shared in 2:1. So anymore, if I have 100 bills also, discounting charges will be shared in this ratio itself. Can you give me the amounts? 7,560 and 3,000. This is the ratio in which we are going to share the discounting charges. How much money is he sending me? J sends 40,440. 40,440 is sent. Correct? Tell me what should be the entry. J is sending 40,440. 4,7,2021. Tell me what should be the entry. Will I get money? Will I get money? Yes. Cash or bank account debited 40,440. My charge of discounting charges, my share of discounting charges is also there. So what I will do? Discounting charges debited 7,560 to J's account 48,000. Is this clear? So what I did, I got my share of money. I am going to take my share of charge also, and it will be credited to J. Now, before the maturity of the bill, T becomes bankrupt. Now see the gammat here. First bill, I was the drawer. Okay, I was the drawer. I discounted. So they made the payment. Second bill, I am the drawee. That is discounted. So I don't make the payment. That also they only make the payment. Are you getting my point? Both the bills payment is made by J only. Why? First bill, T is the drawer. J is the drawee. Correct? T has discounted the bill with the bank. So who has to make the payment? J made the payment. Second bill, T is the drawee. J is the drawer. J is the drawer. Correct? Who has discounted the bill with the bank? J. So who has to make the payment? T. T did not make. So who took the money from whom? Bank took the money from. So can you see? Both the cases J only made the payment. Now, before the maturity of the bill, T becomes bankrupt. His estate paying only 50 paise in a rupee. If T is going to become bankrupt, what we have to do? 7/10/2021. 3 months bill, no, this also. This bills payable. Can you see this bills payable which I have accepted? That is dishonored. When it is dishonored, what entry should I pass? Bills payable debited 2,52,000 to J's account 2,52,000. Is this clear? Are you following this? Okay. Now what happens? Finally, I have to see one entry will be there on 7/10/2021. I have to see how much to pay. To see how much to pay, I have to prepare J's account. I have to prepare J's account. Without that, I will not be able to calculate this. Now, how I will prepare J's account is, I have passed journal entries. No. See my first journal entry. Is there J in that? Debit or credit? Credit. So I will write over here by bills receivable 1,80,000. Clear? See my second journal entry. Is there J in that? No. Third journal entry. Is there J in that? Yes. J's account is debited. So what we will write over here? To bank 57,600 to discounting charges 2,400. Clear? The next journal entry, do we have J in that? Yes, J's account is debited to bills payable. So you will write to bills payable 2,52,000. The next journal entry, do we have J in that? Yes. So we are getting money, right? So we'll write by bank 40,440 by discounting charges 7,560. Clear? Next, what happens? The next entry, do we have J in that? Do we have J there? Yes. What is happening to J? Credited by bills payable 2,52,000. Now you have to find the balance. Find the balance. If there is credit balance, that means amount has to be paid. If there is debit balance, that means amount has to be received. What's the amount? 1,68,000. Credit balance or debit balance? Credit balance. That means we have to pay. Which side is more? Credit side is more. That means we have to pay. Correct? That means the balance will be over here, 1,68,000. Now, what will be the entry for this 1,68,000? How much can I pay? 100% or 50%? We can pay only 50%, right? Can you see over here? Becomes insolvent, estate paying only 50 paise in a rupee. So now the entry will be J's account debited 1,68,000 to bank account 84,000 to not bad debt, deficiency 84,000. For me, why bad debt? I am not paying half the amount. Good only, good debt for me. Are you getting my point? Okay, so it is called as deficiency. Is this clear? So here if you are writing, you will write to deficiency 84,000 to bank 84,000. Now did you understand why we are preparing this ledger? Without preparing this ledger, I will not be able to pass this last entry. That is why I told accommodation situation and you have to prepare ledger. When you prepare ledger only you will get to know whether you have to pay money or whether you have to get money. If it is having credit balance, that means you have to pay money. If it is having debit balance, that means you have to get money. Is this clear? Yes, this is in the books of T. You can, I think, journal entries and that working, you can click a picture. Then even J's ledger, you can click a picture. Oh. Wait. Let them click. Done now? Oh. Now J's ledger, you can click a picture. Done now? Yes. Now this is in the books of T. In the books of J, what will happen? Some extra entries will be there. Okay, you have to be little careful. In the books of J. Now you are going to think that you are J. Now understand this in this case. Okay, if I am going to not getting erased, oh, no problem. T draws a bill on J. T draws on J bill of exchange for 1,80,000 on 1st April 2022. What will be the entry here? 1st April 2022. What will be the entry? T account debited 1,80,000 to bills payable 1,80,000. Clear? Now, next what is happening? Who gets it discounted? T gets it discounted. No entry. Because T is getting it discounted, no entry. T immediately remits 57,600. T is sending money to us. So what should be the entry for that? So you'll pass the entry, bank account debited 57,600. Discounting charges debited 2,400. Remember we calculated that time 2,400 to T's account 60,000. Basically it's just going to be a mirror image. Okay. After that what happens? On the due date, T is unable to remit the amount. If T is unable to remit the amount also, I have to make the payment. No, I am J here. So 4/7/2022, what will happen? I'll make the payment. Bills payable account debited 1,80,000 to bank account 1,80,000. This entry was not there in that fellow's books. Clear? Next, what is going to happen? Now I am going to draw a bill on T. What is the bill? 2,52,000. Correct? 4/7/2022. You are going to write bills receivable debited 2,52,000 to T's account 2,52,000. Then on 4/7/2022, what's going to happen next? Are you getting money? Yes. Are you discounting it for 240,660? So your entry will be bank account debited 2,40,660, discounting charges debited how much? We had that amount no there. 11,340. 11,340 to what? Bills receivable 2,52,000. Bills receivable went. Is this clear? Now what is going to happen? I am going to send some money. 4/7/2022. Can you see I am going to send 40,440. So what should be the entry for sending the money? I'll pass the entry. T's account debited, not 40,440, 48,000. Okay, because 40,440 plus 7,560. To what? Yes, to bank 40,440. To what? Discounting charges 7,560. I hope it is clear. Okay. Next, what happens on due date? 7/10/2022. Okay. Who is not able to pay? T is not able to pay. Bill is discounted by me. It is dishonored. What will bank do? Bank will take the money, no? So what will be the entry now? T's account debited 2,52,000 to bank account 2,52,000. This is what I was telling you that time. First bill also I only made the payment because I was the drawee. Second bill I made the payment because drawee dishonored the bill. Clear? Okay. Now what happens finally? 7/10/2022. Now what we wrote that time over there, no, that 1,68,000. If you prepare ledger, that 1,68,000 will be on the other side. So here what will happen now? Bank account debited 84,000. Bad debts debited 84,000 to whom? T. T's account 1,68,000. If you prepare T's ledger now, it will be exactly opposite of what was there that time. Because if that fellow is telling I have to pay money, this fellow has to tell that I have to get money. Clear? Yes. This is your solution. Done, no? Not done. Okay. Now we have this normal question which I have kept. Okay. Now see over here. If the story starts from the beginning, then it is very simple. You will tell sale of goods, you know the entry, bill is drawn, you know the entry, bill is discounted, you know the entry, bill is dishonored, you will pass the entry, then new bill, you will pass the entry. But what kind of questions in bill of exchange are problem is these kind of questions. Where story is not starting from beginning, direct to the point. See this, journalize the following in the books of Dawn. So who are you in this question? You are Dawn. Can you see in the span of 1 hour from donkey, you became Dawn now? Correct, no? 1 hour back you were donkey in that example. Now you are Don. Sit like a Don now. Yes. Journal entries in the books of Don. Now what I want you to do is, want you to think over here. In these kind of questions, what happens is you have to think exactly. It becomes a language game. More than concept. Concept obviously you should know. It becomes a language game. See the first one. Bob informs Don. Who are you? Don. You are Don. Bob informs Don that Ray's acceptance for 3,000 has been dishonored. And noting charges are 40. Second part is there. But now, you have to understand over here. Who are you again? Don. Yes. You are Don. Who is the other person? Bob. Who is the other person? Ray. Now, understand this. What happened? Bob informs Don that Ray's acceptance, okay, for 3,000 has been dishonored and noting charges 40. Do you agree? For Ray it is bills payable. For Ray it is bills payable. But if it is bills payable, why Bob is informing? Because in this bill, Don is bills receivable. It was given to Ray. Ray has accepted it and Don has endorsed it. After endorsing, Bob is waiting for the money. Ray did not pay. So what happened? Bob has informed Don that Ray's acceptance is dishonored. And noting charges is how much? 40. Noting charges is how much? 40. How much is the bill over here? 3,000. Noting charges 40. Bill dishonored, bill endorsed, and now it is dishonored. What should be the entry? I am in the books of Don. Who has to pay me money? Who has to pay me money? Ray has to pay me money. Ray's account debited 3,040. Whom I have to pay money? Bob. To Bob's account 3,040. Ray's account debited 3,040 to Bob's account 3,040. Is this clear? This is the first entry. Okay, you have to understand the situation. If at all this situation was there in a big question where bill is drawn, accepted, endorsed and dishonored, then you will not have problem. Now the problem is directly going to the point is the problem. Okay, now after this, Bob accepts 1,000 rupees cash. Do you have to pay money to Bob or do you have to get money from Bob? You have to pay money to Bob or get money from Bob. You have to pay money. See over here, Bob is creditor. Now, see over here. Bob accepts 1,000 rupees cash. Bob told, okay, 1,000 rupees you give me cash. And balance at bill at 3 months at an interest rate of 10%. Okay. So now, tell me one thing. Is it bills receivable or bills payable? Bills payable. So now the entry will be Bob's account debited 3,040. Do you agree with this? Bob's account is debited for 3,040. To what? First you will pay some money, no? Cash or bank account 1,000 rupees. To bills payable account you are going to pay. How much? You are going to pay 2,040 plus there is also interest. Interest is 2,040 into 12% into 3 divided by 12. How much is it? Percentage is not 12. Huh? Oh, sorry. Percentage is 10%. 10%, yes. Percentage is 10% here. How much is it? 51 rupees. Is it correct? So 2040 plus 51 becomes 2091. Correct? That extra 51 that we are agreeing to pay, it is expense, right? Interest account debited 51. Did you get this entry? Okay, again I am explaining to you. Bob, you have to pay 3040. Bob's account is debited for 3040. What are you paying now? Only 1,000 rupees. So Bob's account is credited for 1,000 rupees. Clear? Remaining amount you are going to pay after 3 months. So for 3 months there is interest. Interest is not paid now. It is part of the new bill. So 2040 into 10% into 3 by 12 will be 51 rupees. You are paying 51 rupees extra. That is expense for you. So interest account is debited and new bill will become 2091. Is this clear? This is for Bob. Now you have to get money from Ray, no? You have to get money from Ray. What is happening over here? Don accepts from Ray his acceptance at 2 months plus interest at the rate of 12%. So what we are doing with Ray? We are telling Ray, okay, new bill. 2 months time I am giving. Interest, are you going to give the interest now? No, interest also is part of the new bill only. So now the entry will be bills receivable account debited. Bills receivable account debited. This will be 3040 plus 3040 into 12% into 2 by 12. Can you see what I am doing? I am going to pay 10% interest. Okay, but I will charge 12% interest. Yes, what is the value? 61. So can we take it as 3101? 3101. 2 what? You have to tell me. Bills receivable account debited. 2 what? 2 what? I am not paying anything today. Why bank? 2 what? 2 what? 2 Ray guys. Ray. To Ray 3040 and then 2 interest account 61 rupees. Did you get this? Now this first situation only will revise your entire bills of exchange. Just one situation of this question will revise your entire bills of exchange. See what is happening over here. Okay, again I am explaining to you. Bob informs Don. Bob informed Don that Ray's acceptance is dishonored. That means Ray is having bills payable, Don is having bills receivable. Because he endorsed it to Bob, Bob is making the information, giving the information. Is it clear? Okay. Now once we know that, what next? Bob is telling, Bob is telling, you pay me 1000 rupees cash now and for remaining money, I will give you 3 months time. 3 months time if I am giving you, I will charge you interest. So interest is expense. Okay, Bob is gone. Interest you are paying. So interest is expense. Okay, cash goes and new bill is there with interest. Now Ray is there. No, I am asking Ray pay money. Ray is telling I don't have money. Give me 2 more months time. If I have to give you 2 more months time, you have to accept one new bill. So that bill becomes bills receivable. But that bills receivable is along with the 2 months interest at the rate of 12%. If I am getting extra, that is interest for me. Interest account is credited. Ray's account is also credited because Ray is gone. Clear? When there was a dishonor, Bob became creditor, Ray became debtor. I accepted a bill, so Bob went. Ray gave me a bill, so Ray went. Is this clear? Are you following this entire scenario? Any doubt with this? No. Next. 2. Any doubt with the first one? Okay. See the second one. James. Are you James? No. Who are you? Don. You are Don. Correct? James owes Don 3,200. What does it mean? James has to pay us. We are only Don. No. James has to pay us 3,200. He sends Don's own acceptance in favor of Ralph for 3,160 in full settlement. Totally twisted. Life only is twisted after taking CA. Correct? No? Yes. Who are you? Don. Who is the other guy? James. Who is the other guy? Ralph. 3 people are there. Now understand this. Okay. James owes Don 3,200. That means James has to give you 3,200. Okay. James has to give you 3,200. Owes 3,200. No bills receivable, no bills payable. But what did James do? Instead of giving 3,200, sends Don's own acceptance. Don has accepted in favor of Ralph 3,160. That means, okay, understand the drawing. That means Don is having one bills payable. Ralph is having one bills receivable. This bills receivable, which Ralph has drawn on Don and Don has accepted and given. What did Ralph do? Ralph has endorsed it to James. And what did James do? Gave it back to Don. Did you understand this? Are you getting this? No. Okay. We will remove all the arrows. We'll start from here. Do you understand this much? James owes Don 3,200. That means James has to give money 3,200. Clear? Now, what did James do? They said James gave Don's own acceptance. Acceptance means bills payable. Acceptance in favor of Ralph. That means Ralph is having the bills receivable. The bills receivable which was with Ralph. How can James give it to you? Only if Ralph has endorsed it to James. Ralph has endorsed it to James. Maybe James had to get some money from Ralph. So Ralph has endorsed the bill. So what did James do now? James has to give money to Don. James has endorsed that bill to Don. James has endorsed the bill to Don. So what happened to Don? The autograph which he signed and gave, no, it came back to him only. That autograph came back to him itself. Are you getting my point? That for this now, what will be the entry? What will be the entry? Bills payable came back to me. So I don't have to pay anybody. If I have to pay anybody, it is me only. So bills payable account debited 3160. Clear? 3160. Can you see it is in full settlement? They said in full settlement to James. How much James had to give me? 3,200. Where he had to give me 3,200, he gave me a bill of 3,160. So do you agree that the remaining is discount allowed debited 40? Clear? Okay. This you have to revise. When you see, this is the toughest question from your study material according to me. If after this the second position is that Katrak question. There is one question, Katrak, I think question number 4 or something. That Katrak, illustration 4 or something. That Katrak question, what happened, in the exam, they have asked the same question. Instead of Katrak, they made it Karthik. Same question they have asked in the exam. Okay, so that you have illustrations, you can revise this. This Bob is even more trickier than Katrak. That's why I picked this one. Clear? Are you getting this? Again, I'm explaining. If you have not gotten it, understand it. James had to give Don money. How much money? 3,200. What did James give? James gave Don's acceptance. That means Don is having bills payable. Acceptance in favor of whom? Ralph. How did it go to James? Because Ralph has endorsed it. Ralph has endorsed. If I don't endorse the bill, how will bill come to your pocket? Okay, Ralph has endorsed it. What did James do? James endorsed it back to Don only. But bill is for how much? 3,160. James had to give how much? 3,200. That means 40 rupees is discount allowed. 40 rupees is discount allowed. Is this clear? Are you able to follow this? Yes. Now, third one. Did you get it? Yes. Third one. Don meets his acceptance in favor of Singh for 4,500 by endorsing John's acceptance for 4,450 in full settlement. First we will understand who are the people. Then we will think about everything else. You are Don. Who is the other person? Singh. Who is the other person? John. Correct? Now, Don meets his acceptance in favor of Singh for 4,500. Don's acceptance, that means Don has what? Bills receivable or bills payable? Bills payable, yes. Don has bills payable. Singh has bills receivable. This is how much? 4,500. Okay. How did he meet this? By endorsing John's acceptance of 4,450. John's acceptance. That means John has what? Bills payable. John has bills payable. Okay. John has bills payable and Don has bills receivable. I have one bills receivable. I have one bills payable. I have to pay the bills payable. So what did I do? I endorsed this bills receivable. So what should be the entry? Bills payable is gone. How much is the bills payable? 4,500. Bills receivable is also gone. How much is the bills receivable? 4,400 and did we get the right? Yeah, 4,450. So you'll write 4,450. Now tell me one thing. When I had to pay 4,500, I paid only 4,450. That means for me it is discount received 50 rupees. Are you following this? Is this clear? Understand this again. Okay. Don meets his acceptance, they said. That means Don has bills receivable. Don has bills payable. Singh has bills receivable. How much is the amount? 4,500. How did he meet this acceptance? We can meet the acceptance by giving money also. But I am not giving money. What I am doing? I am giving John's acceptance. That means John has bills payable. I have bills receivable. But amount is not same. In Katrak's question, amount is same. Okay, 4450. So what happens? Bills payable went 4,500. Bills receivable went 4,450. That means 50 rupees is discount received for me. Is this clear? Any doubt with this? Yes. The last one in this bills of exchange question. Now see this. Raise acceptance in favor of Don. Raise acceptance in favor of Don. Retired 1 month before due date. Do you remember Ray? Ray was there today only. Where? In the first one. Do you remember Ray? Ray's acceptance is retired 1 month before due date. Interest taken at the rate of 6% per annum. Now you have to go back and check where was Ray in our life. The ray of hope in our life. Okay, where was that? It was here. Yes. End of the day, we have to become full of philosophy. Yes. Can you find Ray? Over here. Do you see that Ray gave you a bill of 3,101? Can you see 3,101? Ray gave you a bill. This bill is retired means paid early or paid late? Paid early. Renewal means paid late. Retired means paid early. So now what will happen? Are you getting money? Yes. Bank account debited. But are you getting full amount? No. Because they are paying early. There is also something called as rebate. Rebate account debited. That bill was 3,101, right? Let's just check again. Yeah, 3,101. How much is the interest rate now for paying early? 6%. Into 6% into what? No, it is 1 divided by 12. You know why? Because he has retired the bill 1 month before due date. You paid 1 month early, I will give you 1 month's discount. So into 1 divided by 12. I think even the system is feeling tired. Yes. Into 1 divided by 12. How much? 1/6. Okay. 1/6. Clear? That means how much you will get? 3,101 minus 16. 3,085. 2 what? 2 what? 2 what? Bills receivable 3,101. Not Ray. Not Ray. Ray is already gone. See over here. When Ray gave you the bill, Ray already went out of your books. Now Ray is making the payment. That time bill is also going out of your books. Is this clear? This is the fourth one. This is your mega question of bills of exchange. For this one, huh? 4 marks. That's it. This is only for 4 marks. Actually, if you should be happy if bills of exchange 12 mark question comes. Because nothing, starting from the starting point, going till the ending point, easy. Okay, but if they ask these kind of questions, no, even if it is for 4 marks, let's say they ask it for 6 marks. Still, it will take you a lot of time. It's like a lot of time means mental energy is gone. You have to think who is Don, who are you? Suddenly you will forget who are you only in the middle of the question. Yes, you can click the picture for the first one. Can I go to the second one? Wait, we'll see if we can, second and third both we can put. Yes, fourth one. Clear? Yes. First one, no? Yes. With that, we are done with bills of exchange. Actually, according to our target, we had to even finish depreciation, no? But no, it was not possible for us to finish depreciation today. So we'll wind up today. So 3 things we have finished today: rectification of errors, bills of exchange, and BRS. What you can do is, okay, you can go back home, revise these 3 concepts once again. If you have any doubts, tomorrow when you're coming, you can ask me. Okay, guys, let's begin. Partnership. Let's start with partnership. Small chapter, right? Yes, very small chapter. When it will start and when it will end, we will not know only. Okay, now we'll focus on partnership. First, concepts. First, we will focus on concepts. After that, we'll go into problems. See, problems, I have picked few problems. See, easy problems, obviously, we'll do during regular. I have picked only the irritating problems. And all these problems we have to finish today. Obviously, partnership, solving one problem only will take a lot of time. So what we will do is, we will discuss each problem. I'll keep the solution also and we will discuss. But we should not skip partnership at any cost, because we know the weightage, possible weightage. Possible weightages, we don't know. 20 marks, 25 marks, 30 marks if they want also, they can ask partnership. Because already partnership was lengthy, one extra unit got added now, dissolution. So from there also they can ask marks. Now, we'll start from starting of partnership. Okay, full concepts we'll try to discuss at once. Okay, now, when we're talking about partnership, what is the meaning of partnership and all you know? What is partnership? 2 or more people coming together for the purpose of earning profit, with the motive of earning profit. Now, there are certain things which you have to remember. 1, okay, if not mentioned in partnership deed, then there are certain points that you have to remember. What is that? Profit sharing ratio will be equal. No interest on capital. Next, no interest on drawings. No remuneration to partners. Correct? Then interest on loans of partners. Maximum is 6%. These are the things that we need to know if there is no mention of partnership deed. If there is no if it is not mentioned in the partnership deed, these are the points we are going to pick. Clear? Which we have to remember. Then, one more thing you have to remember. If no adequate profit, if there is no adequate profit, then what happens? Interest on capital will be in capital ratio. If there is no adequate profit, then interest on capital will be in capital ratio. Clear? I hope you know this. Okay, that means if I have 30,000, I have 30,000 profit. but I have to give interest on capital. All the partners total interest on capital is 40,000. What I will do? I don't have 40,000. So what 30,000 is there, that only will be distributed in capital ratio, not in profit sharing ratio. Profit sharing ratio is when you're distributing profit. Here you're distributing the money as interest on capital. So it has to be in capital ratio. Is this clear? This is one thing that you have to remember. Then I'm doing the basics. First unit basically. We are discussing everything of first unit. Then what we need to remember when we are talking about capital. Okay, we have two types. What is that? One is fixed capital and the other one is fluctuating capital. Fixed capital and fluctuating capital. Fixed capital means what? All the transactions cannot be put into capital account because capital has to be fixed. So in this case, what you will do? In the capital account, you will have capital introduced plus you will have capital withdrawn. Not drawings, capital withdrawn. What is the difference between capital withdrawn and drawings? Drawings is using the money for personal purpose. Basically, every partner knows end of the year he has to get his share of profit, but he cannot wait till end of the year because he has expense every month. So what he will do, he will take money from the business for his personal expense and this will be adjusted with his share of profit at the end of the year. Basically, it will be adjusted in his capital account. Correct? Capital withdrawn means not like that. What is capital withdrawn? I have put money, I have taken that money only outside. Okay, that is capital withdrawn. So in capital account, what you will have? Only capital introduced and capital withdrawn. Then all other transactions. Where will it go? All other transactions. It will be in partners current account. It will be in partners current account. Is it clear? Okay. If you are not able to write also fine, just absorb everything. Quickly we'll revise entire partnership. Not only introduction. Introduction, goodwill, admission, retirement, death and dissolution in one shot. Then only we'll go to problems. Clear? Fluctuating capital means what? As the name suggests, capital is fluctuating. That means all transactions in partners capital account. In fluctuating capital method, can we have current account? Can we have current account? Yes. Can we have current account? Yes. They said fluctuating. No. If at all I decide, I am the partner, I am having the partnership firm, we are deciding that few transactions will put in capital account, few transactions will put in current account. Can we have current account? Yes. It's our choice. Clear? Because can we see there are some questions which are fluctuating capital only, but at the end of the question they have told make the capital proportionate, excess or shortfall will be adjusted in partner's current account. All the transactions we have put in capital account, only one thing we are putting in current account. So in fluctuating capital you still have the option, if you want to have current account you can have current account, but in fixed capital there is no other option. You have to have current account because capital has to remain fixed. Is this clear? This is depending on the question. What they have asked, you have to observe that. Now, after this, you have interest on capital. Interest on capital. How will you calculate the interest on capital? Capital that is outstanding. Capital outstanding into interest rate into months divided by 12. You have to see when did they introduce the capital. Introduce in the middle of the year, give interest only from that day. Took the capital in the middle of the year, give interest till that day. Are you getting my point? Okay. Capital introduced. If capital is introduced, interest from that day. Clear? You have just put the capital from today, you will get the interest. Capital withdrawn, then interest will be till that day. Are you getting this? Capital introduced, interest will be from that day. Capital withdrawn, interest will be till that day. Clear? That is your interest on capital. Clear? What about interest on drawings? Interest on drawings. Now interest on drawings till that day or from that day? Till that day or from that day? From that day, yes. So this will be from the date of drawings till when? Till when? End of the year. From the date of drawings till the end of the year. That will be the interest, okay, on drawings. Now, if at all we have drawings understand this, same amount every month first. Same amount every month first. That means every month you have to take same amount as drawings and you have to take also on first of every month. Then what you will do? You will use the formula total drawings into rate into 6.5 divided by 12. Shortcut it is. Otherwise what you have to do? You have to calculate interest 12 times. You don't want to use shortcut, no problem. You have to calculate interest 12 times. Why? First month, second month, third month, 4 months, 12 months you have to calculate interest. Instead of that, you can use the shortcut. Clear? Next, what if it is same amount every month 15th? Then what will you do? You will write total drawings into rate into 6 divided by 12. Is this clear? Yes. What about the third one? Same amount every month end. Same amount every month end. Then what will happen? Total drawings into rate into 5.5 divided by 12. Is this clear? Yes. So in this, if you have to use any of this formula, you have to have same amount of drawings, every month same thing, and every month same date. Okay. What if they give you in the question only total drawings is given, no date? What will you do that time? That time it will be total drawings into rate into 6 divided by 12. Into 6 divided by 12. Is it clear? Okay. This is your topic of drawings. Interest on drawings. Clear? Next, after this, we have one thing called as P&L appropriation account. P&L appropriation account. Clear? P&L appropriation account, from where the profit will come? From P&L. So we'll write by net profit brought down. Okay, basically from P&L account. Is it clear? Then what will happen? From here, where will it go? It will go to partners capital account or current account. From here, it will go to partners capital account or current account. If it is fixed capital, we can't put it to capital account. No, it has to go to current account only. Okay, what and all will go to partners capital account or current account? Salary will go. Commission will go. Interest on capital will go. Interest on capital will go. Reserves will not go to partners capital account. Reserves will go to reserves. Okay, so then profit share also will go to partners capital account. If you are creating reserves, in some question they will tell 1/10 you create reserves. That time what will happen? To reserves. It will go to reserves. It will not go to partners capital account or partners current account. Clear? Interest on drawings by partners capital account or current account. Under that you can write interest on drawings. Clear? I hope you are getting this. Remember this. if you are putting salary, if you are putting interest on capital, if you are putting profit share, all this, it has to be removed from profit and it has to be given to partner. Given to partner means you have to put it into his capital account or you have to put into the current account. If you are taking money as interest on drawings, then you have to take from their capital account or current account. That's why there it is debited and here it is credited. Clear? Here I have one very important note. Drawings not entered. Drawings will not be entered in P&L appropriation account. Clear? Drawings will not be entered in P&L appropriation account. What is the entry for drawings? Drawings account debited to cash or drawings account debited to goods. Correct? Drawings entry is that. After that, what is the entry for drawings? After that, drawings entry will be partners capital account or current account debited to drawings. Is this clear? This one you have to remember this much. Okay. After this, you have one point or one discussion in the first unit. We are still in the first unit. That is basics. Okay. Now, first unit, what is the other point that we have to remember? Minimum guaranteed profit. Minimum guaranteed profit. What is this minimum guaranteed profit? One partner is there who will get fixed amount. Now, very important when you are solving such questions, what you have to remember is who has given the guarantee. Who has given the guarantee? If guarantee is given by firm, guarantee is given by the firm. That means the partnership firm only has agreed that we will give him first. So in that case, what you will do? First, give to the guaranteed partner. First, you give it to the guaranteed partner. Then what you will do? Balance profit, share among remaining partners. Balance profit shared among remaining partners. This should be the procedure. If guarantee is given by the firm, first what you do, give that particular person, give him that money. Remaining money others share. Clear? And this guaranteed profit concept will appear only when we have shortage. If you have extra, then there is no question of guarantee. If there is extra profit, everybody will distribute in profit sharing ratio only. Clear? If guarantee is given by partner, then what you will do? Then in this case, first you distribute the profit. Distribute profit to all partners. Distribute profit to all partners. Then what you will do? You will see, is there a shortage? Just the shortage you will take from that partner and put it over here. Clear? Remove the shortage from which partner? Partner who gave the guarantee. And what you will do? Give it to guaranteed partner. Is it clear? So, if firm is giving, what you will do? If firm is giving, first you will give it to the guaranteed partner, remaining profit share. If partner is giving, what you will do? Distribute to all the partners. Then you see, is there shortage for this guaranteed partner? Okay. Who has given the guarantee? One partner. Take from here, put it over here. Who has given the guarantee? The two partners in some other ratio. Then take it from them in that ratio and give it to this person. Is this clear? This is the concept of minimum guaranteed profit. Clear? Now, this is our first topic. Now our next topic is goodwill. First we will discuss all the concepts, okay? Then we will discuss problem. At least some 10-11 problems are there. 10-11 problems are there which we have to discuss, and not the easy ones. The tricky ones only we have taken. So we will cover all the concepts again in the problems. So now goodwill. What do you know about goodwill? Reputation of the business, that, this, yes. But from examination point of view, the most important point in partnership. The most important point in partnership. Because if you are in admission also, there is goodwill calculation. Retirement, goodwill calculation. Death, goodwill calculation. Dissolution, there is obviously no goodwill. Because of no goodwill only, we are doing dissolution. If we had goodwill, we would continue the partnership firm. Okay, so goodwill is very, very important. So what you have to understand about goodwill, two things. What we have to understand about goodwill, two things. One is computation of goodwill. One is computation of goodwill. What is the other one? Distribution of goodwill. One is computation of goodwill. Another one is distribution of goodwill. Distribution of goodwill, what will happen? Who will give to whom? Always same rule. Always same rule. Who will give to whom? Gaining partner. Gaining partner will give it to sacrificing partner. Gaining partner will give it to sacrificing partner. In what ratio? Is it profit sharing ratio or anything like that? No. You calculate sacrifice ratio. How much they are sacrificing, that much they have to get. Is it clear? How much they are gaining, that much they have to give. So which formula you are going to use? Old profit sharing ratio minus new profit sharing ratio. Old profit sharing ratio minus new profit sharing ratio. When you calculate this for any partner, if you get positive number, that means it is sacrifice. If you get negative number, that means it is gain. Clear? Just do it. Old ratio minus new ratio. In the fractions, if you get negative number means gain. That partner is gaining. If you get positive number, that means that partner is sacrificing. Whoever is gaining will give it to the partner who is sacrificing. Clear? Yes. Computation. First, it can be given in question only. In question only it can be given. But in question, what can be given? Total goodwill. In question, what will be given? Total goodwill. Don't sit and distribute that, because that is the total goodwill of the firm. Entire firm's goodwill is that amount. So what you will do, take total goodwill and distribute only the share. Do the distribution of only the share. Who is sacrificing how much? Only that much you distribute. Don't take full goodwill. If that goodwill of the firm is 1,80,000, don't take it from new partner everything. Is this clear? New partner will enjoy only one small share of that goodwill. Clear? Next, if it is not given, what methods do we have? Average profit. Average profit method, what will we do? Goodwill is equal to average profit into number of years of purchase. Number of years of purchase. Obviously, number of years of purchase will be given in the question. Average profit we have to calculate. How to calculate? Total profit divided by number of years. This is number of years of purchase. This is past years. That means past year you are taking as the base and calculating the goodwill for future. Here, past year you are taking as the base and calculating goodwill for future. In this goodwill calculation, you will see in the questions which we are going to discuss, there are certain things which will have to be doing adjustment. Profit has to be adjusted before calculating goodwill. That means in the past year, if there is some abnormal item, that abnormal item you have to remove. Clear? Then we have to calculate the goodwill. We will discuss that when we go into problems. Okay, average profit. After average profit, what do we have? Super profit. Super profit, what is the formula? Goodwill is equal to super profit into number of years of purchase. Clear? Super profit, how to calculate? Average profit minus normal profit. Normal profit we just discussed. Average profit we just discussed how to calculate. How to calculate normal profit? Capital employed into normal rate of return. Capital employed into normal rate of return. Capital employed also will be given in the question. Normal rate of return also will be given in the question. Capital employed, if it is not given to you directly, what you will do? 3 partners are there, total all the partners capital, that is the capital employed. Is this clear? So this is your super profit method. What is the next method we have? Capitalization method. Capitalization method. How to calculate under capitalization method goodwill? Normal value of business. Normal value of business minus capital employed. Normal value of business minus capital employed. Normal value of business, how will you calculate? Average profit divided by NRR into 100. That time we will get normal value of business. Obviously, capital employed is given in the question itself. Clear? This is your super profit method. Annuity method is also there, but they usually don't ask annuity method. So we can ignore it as of now. Okay, these are the 3 important methods for goodwill calculation. 90% of the time, if the problem is huge, then goodwill will be given. Otherwise, goodwill might be the problem. Are you getting my point? If problem is tricky, goodwill will be given. If goodwill is not given, that means problem is not tricky. Because you have to calculate goodwill. Clear? Yes. This much you have to remember. Then, okay, anything else in goodwill? One more thing. That is called as hidden goodwill. How will you calculate hidden goodwill? How will you calculate? You will keep new partner's capital as base. New partner's capital as base. That means if new partner is bringing 50,000 capital and new partner's share is 1/5, keep that as the base and calculate how much is the total capital. So 50,000 is for 1/5. How much is total capital? 2,50,000. Okay. Keep new partner's capital as base and compute total capital. Clear? Then what you're going to do after that? Next, check the existing capital. Check the existing capital. Existing capital, don't make the mistake. This is not excluding, it is including the new partner. When I'm telling existing capital, new partner's capital also you have to include. Then you have to see the difference. Now if you get difference, no. Okay, if I take this as A and if I take this as B, then A minus B will be your goodwill. Will be your goodwill. And again, it is the goodwill of the firm, not goodwill of new partner, goodwill of the firm. In that you have to see the share of the sacrificing partner, share of the gaining partner. That is regular feature. You have to do that. Okay, hidden goodwill, keep new partner's capital as base and compute the total goodwill. Then what you will do? See the existing goodwill. Existing goodwill, do not make the mistake, including the new partner. Don't remove this one because this fellow's capital only you took as base. So including the new partner, you are going to calculate existing goodwill. Then you will find the difference. I mean existing capital. Difference will be goodwill. This is hidden goodwill concept. Clear? Yes. This is your goodwill calculation. This is your goodwill calculation. So now you have to remember one thing. If I am going into admission now, if we are going into admission, let's focus on the obvious things now. When there is admission, what we have to do first thing? First thing what we have to do? Revaluation. Okay. Revaluation. Very, very important point. Every time it will be there. In admission it can be there. Retirement it is there. Death also it is there. Okay. Revaluation. What we will do in revaluation? If asset value is increasing. If asset value is increasing, what will be your entry? Asset account debited to revaluation account. Clear? If asset value is decreasing, then revaluation account debited to asset account. Clear? If liability value is increasing, revaluation account debited to liability account. If liability value is decreasing, then liability account debited to revaluation account. Very, very common thing. Revaluation, almost every question it is there. Okay, you have to do it. Now, Revaluation is done before the new partner is joining in admission. Okay, now what happens after this? If there is profit, revaluation profit, if there is profit, what will you do? Share it. Okay, you will pass the entry revaluation account debited to partner's capital or current account, depending on the question. If it is fluctuating capital, okay. If it is fixed capital, you have to put this revaluation profit also to current account. Clear this thing. This thing will be in which ratio? Old profit sharing ratio. Old profit sharing ratio. Is this clear? Next, what we are going to do, in case it is loss, if it is loss, partner's capital or current account debited to revaluation account. Clear? This also will be in old profit sharing ratio. Is this clear? Now, this is the regular revaluation which always happens. Okay. Now, liability increase, liability decrease. One trick one I'll ask. If liability is unrecorded, what will happen? That means you have to record the liability. Liability unrecorded is like liability increase only. Create the liability, liability will increase. Okay, that is one thing. Now, here only there is one more point. What is that? Memorandum revaluation account. This they will not tell in the question directly. How will they tell in the question? How will they tell in the question? First, they will tell us full points about revaluation. They will tell this asset will increase, this asset will decrease. All those points they will tell. After telling all those points, then they will tell partners decided that assets and liabilities will be shown at book value. It is like giving all the food on the plate and telling no food for you. Correct? No. 4 or 5 points of revaluation, everything they are going to print. Then they are going to tell partners decided that the assets and liabilities are going to be shown at book value. Moment you see this combination, that means you should remember that it should be memorandum revaluation. What does it mean? First, revaluation points are given. Then they are telling asset and liability should be at book value. So you should remember that revaluation has to be done under memorandum revaluation system. So here what you will do? What you will do over here? First, do the revaluation. Okay, do the revaluation. Then what you do? Share the profit or loss among old partners in old profit sharing ratio. Okay. Then what you will do? Reverse the revaluation. Reverse the revaluation. Whatever revaluation is done, do ulta of that. Reverse the revaluation. Now share the profit or loss in among all partners in new profit sharing ratio. Is this clear? So first time if you had profit, that profit is shared among all old partners in old profit sharing ratio. When you reverse it, obviously you will have loss. Now this loss will be shared among all the partners in new profit sharing ratio. This is the concept of memorandum revaluation. Again, I am telling you, it might not be told directly to you. You should remember that when you see the question. Is this clear? Next, after the revaluation point of admission. Next, we are talking about reserves. What is reserves? It is there in the question. In the question, in existing balance sheet. In existing balance sheet. So what happens? Who should get this? Old partners. So what will be the entry? Reserves account debited to partners capital account or current account depending on the situation. Okay, but remember only old partners in old profit sharing ratio. Clear? Old profit belongs to old partners. They will share it and then they will call the new partner inside. Clear? Yes. This is about reserves. So what you have to do before admission, 2 things compulsory. Revaluation and then check for reserves. If these 2 things are sorted, then you can call the new partner. When you are calling new partner admission. New partner admission. That time what you will do? First thing, new partner will bring money, no? Yes. New partner brings money. Entry will be bank account debited to partner's capital account. Obviously, this is new partner only. We are talking about new partner only. Okay, bank account debited to partner's capital account, new partner itself. Now, when we are talking about new partner, understand this. This amount can be capital plus goodwill. Capital plus goodwill, because sometimes partner will bring capital money also, goodwill money also, or it will be only capital. I hope it's clear. Either the new partner, see, new partner cannot be new partner without bringing capital. So capital compulsory. Along with capital, sometimes new partner will bring the goodwill money also. If the new partner doesn't bring goodwill money, only capital money will be there. Is this clear? Now what happens after that? After that, what happens? He brought money. Next, what happens? Goodwill has to be distributed. Goodwill distribution. Okay, goodwill distribution. How will we do it? Gaining partners capital or current account debited to sacrificing partners capital or current account. Is this clear? Now, understand this. Understand this. If the new partner does not bring money for goodwill also, still we'll take it from his capital account. Are you getting my point? New partner brought money for goodwill, okay, that only we will distribute. New partner did not bring money for goodwill, but new partner brought money for capital. From that capital we'll take and we'll distribute the goodwill. Goodwill distribution has to happen. There is no exception for that. Goodwill distribution has to happen because somebody will be sacrificing, somebody will be gaining. How can it be possible that nobody is sacrificing? 3 partners are there. 1 partner comes. 3 dosas are there. 3 people are eating. Now 4 people have to eat 3 dosas. Somebody will sacrifice. Are you getting my point? Sacrificing will be there. Now tell me one thing. This sacrificing ratio situation, if admission is not there, retirement is not there, death is not there, still there can be sacrificing. How? Profit sharing ratio is changed. Before profit sharing ratio is 1:1:1. Now profit sharing ratio is 5:3:2. Somebody is sacrificing, somebody is gaining. That time also goodwill distribution will happen. Is this clear? Yes. So this is one thing you have to remember about new partner admission. Now after that what? In admission, what else can you see? Revaluation, reserves, goodwill distribution, money coming in, everything we have done. What next? Partners capital. Partners capital account you have to prepare. Yes, that's why I gave the journal entries. Partners capital account we have to prepare. What is the very important thing after that? The very important thing is capital proportionate. Every time it's not there, but some questions it is there. They will tell, keep new partners capital as the base and make the capital proportionate. Or they will tell, take the total capital of the firm should be 5 lakhs and capital should be in profit sharing ratio. So what you will do that time? If there are partners, okay, let's say partner A, B and C are there. What you should do? You should calculate the required capital. You should calculate the required capital. And let's say required capital is A. Then you should calculate the existing capital. You should calculate the existing capital. Existing capital, how will you calculate? Not the one given in the question. Not the one given in the question. After doing all this circus, no? What is the balancing figure in capital account? That one. Clear? Existing capital means not the capital which is given at the starting of the question. Starting of the question was something. After that you put reserve share. After that revaluation, profit or loss. Goodwill distribution. All that has happened. Correct? Final amount what is there? No balancing figure in capital account. That will be the existing capital. If you take this as B. If you take this as B. Now you have to remember one thing. In this case. You have to remember one thing. If A is greater than B. If A is greater than B, that means required capital is more, existing capital is less. That means it is deficit. That means it is deficit. That time what will be the entry? Deficit means you have to bring money. You have to bring money. That time the entry will be bank account debited to partners capital account. Clear? Some question, 1 or 2 questions are there in the entire institute study material or database where they will tell you adjust this in current account. That is what you will do. No bank account. You will write partners current account to partners capital account. Clear? If B is greater than A, B is greater than A means what? Existing capital is more, required capital is less. That means it is surplus. If there is surplus, what we will tell? We will tell them to take the money. That time the entry will be partners capital account debited to bank account. Is this clear? This is making capital proportionate. All questions it is not there, but some questions it might be there. You should remember this. Okay, this is our discussion on admission. Now we will focus on retirement. Do you agree that 90% of the things are same? When we go from admission to retirement, 90% of things are same. There is no extra. Clear? Now when we are going into retirement, first point, revaluation. Again we have to do. Again I will not tell you the entries. We have discussed entries are same. But what we have to remember, profit or loss shared between all partners. All partners means even the partner who is going to go. Clear? Next, after revaluation, reserves. Reserves also share among all partners. All partners. That means old profit sharing ratio. Clear? After this, then what we have to do? Goodwill. Here nobody is bringing money. Okay, somebody is going away. When somebody is going away, what we have to do? Remember again, goodwill distribution. Goodwill distribution. The concept is same. Gaining partner will give it to sacrificing partner. Now, we have a problem, okay? In the exams or anywhere, students, they come to a conclusion. You know what is the conclusion? Admission means new partner is gaining, old partners are sacrificing. Retirement means partner who is going is sacrificing, remaining partners are gaining. Not necessary. Don't come to that conclusion. Calculate old profit sharing ratio minus new profit sharing ratio. There are questions in admission also. In retirement also. In admission, there are questions where the old partner is also sacrificing. In the retirement questions, there are questions where old partner is also gaining. One of the old partner is gaining, or sometimes there are questions where old partner, no sacrifice, no gain. When you calculate, you're getting 0. Clear? So do not come to the conclusion based on admission or retirement. Always calculate old profit sharing ratio minus new profit sharing ratio. If you get positive answer, that means it is sacrifice. If you get negative answer, that means it is gain. Clear? Yes, this much was there even in admission, right? What else? Anything new? Yes, this thing is called as JLP, Joint Life Policy. That means a policy is taken on the life of all the partners jointly. If there is a joint life policy, remember. Okay, remember, in retirement, I will not get the policy amount. What will I get? Only surrender value. Okay. Surrender value will be received. In retirement, I will not get the policy amount. I will get only the surrender value. Now here you have to be very careful. Okay, here you have to be very careful. Now, what you have to do, joint life policy, you have to check. Is there a balance? Is there a balance in balance sheet? That means joint life policy is already there in the balance sheet. That time what you have to do? Surrender value minus balance sheet value. Surrender value minus balance sheet value. This will be the profit, or it can be loss also. If balance sheet value is 20,000, surrender value is 25,000, that means 5,000 profit. Share among the partners. Surrender value is 20,000, balance sheet value is 25,000. That means it is loss. Correct? Profit or loss, share among all partners in profit sharing ratio. Which profit sharing ratio? Old. Is this clear? Are you following this? There are questions. No, JLP is already there in the balance sheet. That means already asset is created. So now what you will do? Only the difference you will take it as profit. Now, no JLP in balance sheet. No JLP in balance sheet. That means whatever you get is full profit only. Whatever you get is profit. That means amount received will be shared among partners. Amount received will be shared among the partners in profit sharing ratio. Is it clear, this joint life policy thing? Joint life policy can also be there. Separate life policy can also be there. Separate life policy. Don't worry. There can be a joint life policy on the life of XYZ. There can be a separate life policy on the life of X, on the life of Y, on the life of Z. What will happen in retirement? What will happen in retirement? We will surrender joint life policy also. We will surrender all the separate life policies also. Everything will be surrendered. Why? Because premium is paid by the firm. They are not paying premium from their pocket. Premium is paid by the firm. Is this point clear about joint life policy? Yes. Now, after this, what we have to do? What we have to do? Retiring partner is going, right? Close retiring partner. Close retiring partner's capital account. How will you close? Either you pay the money. If you are not going to pay, it is going to be retiring partner's loan account. Clear? Either you have to pay the money right now, or you have to pay, it will be considered as retiring partner's loan account also. There can also be situation where they will tell 50% will be settled now, 50% will be transferred to loan. That can also happen. There can also be situation, okay, I think I have included this in the problems which we are going to discuss today. There can also be a situation where they'll tell retiring partner's capital balance will be transferred to his son, who is going to get admitted into partnership. Such situation can also be there. Is it clear? Yes. Any doubt with this till now? This is about retirement. Revaluation, reserves, goodwill distribution, JLP, everything will be same. First three will be same. JLP is a new topic. Now when we are going into next unit, what is that? Death. When we are going into death, one thing I have missed over here. We can also have capital proportionate. Capital proportionate point can be there again. Again, they can tell you after the retiring partner goes, make the capital proportionate. How to make it proportionate? They will only tell in the question. Clear? Proportionate means usually it should be in their profit sharing ratio. The word they use proportionate means capital should be in their profit sharing ratio. Clear? Now, death of a partner. What and all we have to remember? Revaluation. Revaluation, yes. Reserves. Reserves distribution, yes. Goodwill distribution, yes. Three things. Joint life policy, yes. But joint life policy this time, what we will receive? Not the surrender value, full policy amount. Full policy amount will be received. How to treat it? Same thing. How to treat it? Same thing. Amount received you see in the balance sheet. If there is a value difference, you share. If it is not there in the balance sheet, everything you share. Clear? Now, joint life policy. What about separate life policy? Separate life policy, you have to be careful. What you have to be careful? Separate life policy of partner who died. What will you receive? You will receive policy amount. Policy amount to be shared. Policy amount to be shared. Don't think that if one partner has died, whatever money comes will go to that partner. No, it will still be shared by all the partners only. Clear? Next, one more thing that you have to remember, SLP of partner who is alive. SLP of partner who is alive. What we will do? Surrender value to be shared. Clear? Joint life policy, there is no confusion because it is on the joint life of all the partners. One partner dies also, you will get the full amount, you will share it. SLP, if you have XYZ, X did not die, surrender value will get share it. Y did not die, surrender value will get share it. Z died, surrender value will not get, policy amount only will get share it. Is this clear? This is one thing that we have to remember. Next, what extra point is there? Extra point is profit share till the date of death. Profit share we have to give till the date of death. This is one extra point which we have to calculate. How to calculate this profit share? That will be given in the question. I cannot give you a formula for that because it is varying depending on the question. Some questions they will tell keep last year's profit as the base and give profit share till the date of death. Some questions they will tell keep average profit as the base of last 3 years and give profit share till the date of death. So you have to see the question, but you have to calculate profit share till the date of death. Some question can also be there that they might tell it is agreed that even though partner died in the middle of the year or any time during the year, we will give profit share till the end of the year. Is this clear? Such question also can be there. Now what is the extra thing over here? Executor's account. Executor's account, again same thing, you have to pay it or it will become a loan. Either you have to pay it or it will become a loan. Now understand this, what and all has to be given to the executor? What and all has to be given to the executor? Understand this, capital balance, correct? Which partner died? That partner's capital balance. Then reserve share, correct? Reserve share. Then revaluation share. It can be positive or it can be negative also because if it is loss. Then after that JLP share. After that SLP share. After that Goodwill share. This person will get Goodwill. No, this person will be sacrificing partner only. Partner who died will be sacrificing partner. So Goodwill share will also be there. After that profit share till the date of death. Till date of death. Then after that this can be loss also. If there is loss till the date of death, then you have to cut the money. Clear? Then what about drawings? Before dying, the person has already taken some money. That has to be subtracted. Interest on drawings. If at all anything is mentioned about interest on drawings, that also has to be subtracted. Is this clear? Then what happens? Then what happens? Interest on capital also we have to give. Salary, if there is anything, that also we have to give. Is this clear? Salary or commission? Yes. Salary or commission, if it is there, we have to give. So these are the things that we have to give to the executor. That partner who died. The partner who died, his capital share, reserve share, revaluation profit share, goodwill share, JLP share, SLP share, profit share till the date of death, interest on capital, interest on drawings, take it, drawings, take it. Is this clear? All these things you have to give. This will be the value. This is the value. Clear? Usually in death of a partner, they will focus on calculating the executor's account. Okay, because other things are already tested in admission and retirement. They will ask you calculate what is the amount payable to the executor. Okay, this will be the situation. Yes, after this, we have the new introduction, dissolution. Dissolution. Okay, dissolution, we have two parts. What are the two parts? Simple dissolution, another is piecemeal. Piecemeal, you know, maximum loss method, higher relative capital method. Two things are there in this. Okay, first we will focus on what? First we will focus on dissolution. Okay, dissolution. Now understand this in dissolution. Before I start dissolution, two persons are there, you have to remember them. Garner versus Murray. Garner versus Murray rule. What is this Garner versus Murray rule? What is this Garner versus Murray rule? Two jobless people went to court. Okay, that time court gave one judgment. Now we are following that judgment. In that judgment, what was told was insolvent insolvent partners loss, okay, will be borne by other solvent partners in what ratio? Other solvent partners in what ratio? In capital ratio. Insolvent partners loss will be borne by other partners in capital ratio. So what we have to remember over here, if a partner is insolvent, that is not enough for Garner versus Murray. Imagine I am insolvent, but I don't have to give you any money. You have to give me money. Then is there any problem? No, but I am insolvent and I have to give you money. That time there is problem. Are you getting my point? So insolvent partners loss means partners capital account has debit balance. Partners capital account has debit balance. If there is debit balance, it will be shared by whom? Other solvent partners in the capital ratio. That debit balance will be made zero and it will be shared by other partners in capital ratio. But they might tell that the partner is insolvent and is able to bring 25 paise in a rupee. 25 paise in a rupee means 25% he will give, 75% he will not give. That you follow Garner versus Murray. Is this clear? Follow Garner versus Murray. This is the concept of Garner versus Murray. Now we can go into dissolution. Okay, in dissolution, understand what is step 1. Dissolution, we have to remember one thing. First thing is one balance sheet will be given. We have to empty that balance sheet. We have to empty that balance sheet. Okay, how to empty that balance sheet? Transfer assets and liabilities. Assets and liabilities to realization account. At what value? At book value. At what value? Book value. Everything will be transferred at book value. What should be the entry here? What should be the entry? Asset you have to remove. So the entry will be realization account debited to asset account and then liability account debited to realization account. Is this clear? This is the thing that you have to remember. First thing. First you empty the balance sheet. Then if there are any reserves, what will you do? Transfer to partners capital account in profit sharing ratio. Here there is no old ratio, new ratio, one ratio only. Clear? Transfer to partners capital account. Okay, tell me one thing. Is there anything like, what do you say, goodwill here? Any goodwill? No. Goodwill is what? When one person is sacrificing and one person is gaining. Here the firm only is coming to an end. There is no concept of goodwill. Clear? Realization account, you have to open, transfer all the assets and liabilities. Now, when we are writing assets and liabilities, very important, except cash or bank. This you don't transfer. This you keep separate. This will be given to partner at the end. This will be given to partner at the end. Next, what we have to do after this? Asset taken by partner. If there is an asset taken over by partner, then what will be the entry? Partner's capital account debited to asset. No, because asset is sitting in realization account. Realization account at what value? Not the book value, at the agreed value. At the agreed value. Clear? Not the book value, at the agreed value. Book value is 10,000. Partner told, I will take it. Let's adjust only 5,000. They'll adjust only 5,000. Clear? Next, if there is any liability paid by partner, what will be the entry that time? Realization account debited to partner's capital account. At what value? At the value that is paid. Whatever they have paid, that value. Clear? Loan is 5,000. Partner has paid 4,000. Will you put 4,000 to partner's capital account? No, you will put only 5,000. Sorry. Loan is 5,000. He has paid 4,000. Will you put 5,000 to partner's capital account? No, you will put only 4,000. Okay, next. What next after this? assets are sold. Assets are sold. What will be the entry that time? Bank account debited to realization account. Then liabilities are settled. That time what will be the entry? Realization account debited to bank account. Clear? Next, after that, what about realization expense? Realization expense. They can tell realization expense amounted to 3,000 rupees. That time you will pass the entry realization account debited to bank account. Clear? After doing all this, what will you do? Close the realization account. Profit or loss will go to partners capital account in their profit sharing ratio. In their profit sharing ratio. But here there is a very, very important point that we have to remember. Here we have to remember one very important point. If it is loss, what entry will you pass usually if it is loss? What entry will you pass? You will pass the entry partners capital account debited to realization account. Partners capital account debited to realization account. You will pass the entry. And next entry, you will pass the entry bank account debited to realization account. That is all solvent partners will bring their share of loss. All solvent partners will bring their share of loss. If you see any realization question where there is Garner versus Moreno, on the debit side you will see loss is debited. Then on the credit side you will find one entry by bank. Except that insolvent partner, all the other people will bring money. Clear? This you have to do. They will not tell, you have to do. When there is dissolution, realization loss, first you pass the entry partners capital account debited to realization. Okay, everybody has some share of loss. What will they do now? They should bring money. But who can bring money? Only if they are solvent. Insolvent person you leave and the other people will bring money. So the entry will be bank account debited. Bank account debited to realization. No. Bank account debited to partners capital account. Clear? Yes. They will bring money so that it will become equal. Now, what next after this? What next after this? What next? Apply Garner versus Murray. Apply Garner versus Murray. Okay, close the partner's capital account of insolvent partner. Close the partner's capital account of insolvent partner. Insolvent partner you close first. Then you will think about everything else. Is this clear? Now what will you do? Insolvent partner gone. Who is remaining? Only solvent partners. Now, bank there is some balance, right? Bank there is some balance. This balance will not be distributed in profit sharing ratio or sacrificing ratio. What you will do when there is balance in the bank? Okay, you have to check each partner's capital account. If partner's capital account has one partner's capital account has debit balance. If he has debit balance means what? He has to give money or we have to give money? He has to give money. No. If there is debit balance, then you will pass the entry. Okay, for this debit balance, you will pass the entry bank account debited partner's capital account. Clear? Then you have to check if partner's capital account, if at all the partner has credit balance. If he has credit balance means what? We have to give him. So the entry will be partner's capital account debited to bank account. Partner's capital account debited to bank account. Is this clear? Okay, very, very important. End step. This is the last step of dissolution. Always you will check each partner's capital account. Debit balance, okay. Give money. Credit balance, okay. We will give money. Is this clear? With that, the dissolution will come to an end. When you do this last step, no, all the ledgers will be empty. All the ledgers empty means balances are empty. If there is no balance, there is no balance sheet. If there is no balance sheet, there is no company. No partnership firm only. Is this clear? That is the last closure steps. Now, what do you have to do after that? Prepare? That we are going to prepare anyways. Usually realization account, partners capital account and bank account. 3 things we are going to do automatically. Okay. Now I'm telling, after we finish dissolution, the next thing is piecemeal. Piecemeal distribution. What is this piecemeal distribution? Can you eat one meal fully? If they give you one thali, full thali, can you eat it? Can you open like cartoon and all? They will open their mouth, put the full food like this, it will go inside. Can we do like that in real life also? No, right? So you have to eat the meal piece by piece. So tell me one thing, if there is dissolution, will you get all the money at once? You will get little by little. Today you will sell 2 assets. Tomorrow you will sell 1 asset. After that you will sell 3 assets. So when you get the money, how to distribute? That is piecemeal distribution. Okay. When you get money, first pay outsiders' liabilities. Outsiders' liability. That means basically what? Creditors, or you might have bank loan. Clear? You might have creditors and you might have bank loan. Clear? Next, what after that? After that you pay insiders' liability. Insiders' liability means what? Partner's loan. Partner's wife's loan is there. That is outsiders' liability or insiders' liability? That is outsiders' liability only. That you will pay first. Partner's loan is there. That is insiders' liability. That you will pay next. Okay. After this only, then you will think which method to follow. After this only, you will think which method to follow. That means maximum loss method, higher relative capital method is not applicable when you are paying outsider. Can you tell outsider, wait, I am following maximum loss method. I will not give you your money now. I will give you tomorrow. Can we do that? No. If money is there, he will be sitting at your door only. Clear? He will take it and go. Doesn't care about which method you are following. So pay all the outsiders. Now money is remaining, right? How to give it to partner? You will follow 2 methods. First method is maximum loss method. In maximum loss method, what we are going to do? Every installment is treated as last installment. Every installment is treated as last installment. Imagine I have to pay partner 50,000, 50,000, 50,000 and I got 5,000 rupees today. That means this is the last installment. If this is the last installment, what will happen? Remaining everything is lost, no, for the partner. So every installment is treated as last installment. So calculate maximum loss. Maximum loss will be amount payable to partner. Amount payable to partners minus amount available. Maximum loss will be amount payable to partner minus amount available. This will be the maximum loss. Now what will you do with this maximum loss? Distribute to partners. Distribute to partners in profit sharing ratio. Till death of a partner, all the answers was coming. Now suddenly piecemeal distribution, everybody is silent. Why? Did not study that, skipped it, huh? Okay. Distribute to partners in profit sharing ratio. Clear? After that, you will get the amount paid. How much is the amount paid? I will tell you. Balance of partner minus share of loss. Just now what we distributed, share of loss. Remaining amount is amount paid to partner. Every time you get installment, this procedure has to be repeated. You got one installment, maximum loss. Calculate the maximum loss, distribute to all the partners. After distributing, then you will get remaining amount. What is the remaining amount? Amount that was supposed to be paid minus loss. That time remaining amount is the amount that is paid. Then you continue to the next step. Clear? This is for maximum loss. What about the next one? What about next one? What is the next one? Higher relative capital. Higher relative capital, what we have to do? We have to be little careful. Okay, we have to be little careful. In maximum loss method, inside the distribution sheet only, no, calculation is happening. You already started the statement of distribution. Inside that only calculation is happening. But higher relative capital method, first you do the calculation, then you come here. Clear? Here what you have to remember, first step, divide the capital by profit sharing ratio. Divide the capital by the profit sharing ratio. That time you will get one resultant figure. Resultant figure you will get when you divide. Whatever resultant figure you get, keeping the partner's capital as base. Which partner's capital as base? Who has least resultant figure. Who has least resultant figure, keep that partner's capital as base and calculate, compute required capital. Compute required capital. Then what you will do? Existing capital minus required, that is the next step. Compute required capital. Then what will you do with required capital? Required capital will be distributed in profit sharing ratio. Distribute the required capital in profit sharing ratio. Now, existing capital minus required capital. If you do this, that time you will get the higher relative capital method. Higher relative capital. Now, if there are three partners, two people are having higher relative capital, entire step has to be repeated to see who is the last person. Entire step has to be repeated to see who is the last person. Okay. So what you are going to do? Divide the capital by profit sharing ratio. You will get one resultant figure. See who has the less resultant figure. Don't take the resultant figure. Take that person's capital as the base and calculate the required capital. Once you calculate required capital, distribute that required capital in profit sharing ratio. Then existing capital minus required capital, you will get the HRC. If two people are having HRC, repeat the step because we want to see one person. So whenever you get money, who has higher relative capital, give that person. Then when you give all the higher relative capital, then after that whatever money comes, it will be distributed in profit sharing ratio. Is this clear? This is your partnership. This is your partnership, guys. Only little is there. Huh? We'll do photo shoot. Oh, never ending. Okay, little by little I will keep. 3, 2, 1, done. Done now. Yes, partners capital. Done. Next. 3, 2, 1, done. Next, interest on capital. Wait. Can we keep all drawings also together? No, it's okay. Interest on capital, we'll keep this. Done. Next, interest on drawings. This we can keep together. Interest on drawings. Done. Yes. P&L appropriation. P&L appropriation is one topic, so you can click that together. Done. Yes. Minimum guaranteed profit. Wait. Minimum guaranteed profit. Yes. Okay. Goodwill. Yes, goodwill. We'll keep this much. Done. Yes. Super profit and capitalization. Done. Yes. Hidden goodwill. Yes. Now we talk about admission. Admission, this much, revaluation part. Memorandum revaluation. Next, reserves and new partners admission. Done. Capital proportionate. Done. Retirement. Wait. Yeah, retirement. Done. Death. Done. Executor's account. Dissolution. Done. Piecemeal distribution. Wait, I'll see if we can fit everything in one. Yes, this you can click. One shot. Yes, with that we are done with partnership. This was revision of partnership, all the concepts at once. Okay, all the concepts we have revised at once. Now what we are going to do is, see, we are going to start solving questions from question number 8 onwards. From question number 8 onwards, we have till question number 23. Oh, only little. But obviously, I am not going to solve. I will keep every solution open and then we will discuss the key areas. Question number 8. Please show executor's account, goodwill and piecemeal. Piecemeal. 3, 2, 1, done. What is the other thing? Executor's account and goodwill. Executor's account. 3, 2, 1, done. Okay, so what I have done is every tricky question of partnership I have picked. Simple questions, obviously you would have solved by now. Okay, every tricky question. We'll start with question number 8 over here from my material. This is partnership intro unit, SM practice questions. Okay, so intro unit, it is practice questions. So we'll have to go to the practice questions. Yes, let's begin. Okay, question number 8, full focus. Question number 8, there is this question, SM practice question it is. Okay, introduction, most questions are simple, but there are some complicated questions at the end. So look at this question, weak, able and lazy are in partnership sharing profits and losses in the ratio of 2:1:1. We know the profit sharing ratio. It is agreed that interest on capital will be allowed at the rate of 10% per annum. Interest on drawings will be charged at the rate of 8% per annum. No interest will be charged or allowed on current account. That means in current account, if there is balance, on that there is no interest. But on capital account, the balance fixed capital, we are going to give interest. And if you take some drawings, on that we are going to charge interest. The following are the particulars of capital and drawings account of partner. Can you see weak, able, lazy? They have given the capital 75, 40, 30. Current account is also there. Two people are having credit balance. One person is having debit balance in the current account. But on current account, there is no interest. Okay, drawings is also given of the three partners. Now, draft accounts of 2022. Now, this information they gave for which year? 1/1/2022. Can you see 1/1/2022? Starting of the year, they had given the information. Draft accounts of 2022 showed a net profit of 60,000. We have profit of 60,000. Can we distribute that? Check. Before taking into account interest on capital and drawings and subject to the following rectification of errors. Oh. Did I tell you yesterday how rectification can come anywhere in your life? Okay, they said this 60,000 is before interest on capital, before interest on drawings, and also before rectification. See over here, life insurance premium of week amounting to 750 paid by the firm on 30th June has been charged to miscellaneous expenditure. It is actually drawings, right? It is life insurance premium of week. Correct. So it should be taken as drawings. So what will happen to the drawings which is already there of week? 750 will get added to that. And miscellaneous expenditure we have taken. When we remove it from expense, what will happen to profit? Profit will increase. So 750 will be added to profit also. Is this clear? One more thing. Repairs of machinery amounted to 10,000 has been debited to plant account and depreciation thereon is 20%. Repairs of machinery amounted to 10,000 debited to plant account. What happened now? Instead of putting it into machinery repairs, you have put it into plant account. So when you remove it from plant, okay, when you remove it from plant, profit will, what will happen to profit? Profit will reduce because you will take it as repairs. Because you will take it as repairs, profit will reduce. And one more thing what you have to remember, depreciation. Before it was in machinery, so they had charged depreciation. Now you will reverse the depreciation, so profit will increase because of reversal of depreciation. Is this clear till here? Next, traveling expense of 3,000 of able for a pleasure trip. That means personal only. Correct? If it was written business trip, then it should go from books. Okay, to UK, paid by the firm on 30th June has been debited to traveling expenses. So you will remove from traveling expenses. That time what will happen to profit? It will increase. And this 3,000 should be taken as drawings of able. Able is the second person. So this fellow's drawings will also increase. Is this clear? Are you clear with this thing? So these rectifications will impact your profit and it will also impact your drawings. Because we have to calculate interest on drawings, that also will get impacted. Can you see the link of all the three things? Yes. You are required to prepare P&L appropriation account, current account of partners, weak, able and lazy. Clear? Now, have a look at it. First we will see the workings. See the adjusted profit. 60,000 was already given, no? Profit. Can you see life insurance premium? 750 will get added. Life insurance premium. It was charged to miscellaneous expense. When you remove from expense, what will happen? Profit will increase. Then, can you see this 3,000 also? It was put to traveling expense. When you remove again, profit will increase. So now the profit is 63,750. Clear? Repairs of machinery, that profit has to decrease. Okay, so 10,000 profit will decrease. Okay, and depreciation charge 2,000. What they have done? 10,000, 2,000 net effect they have given. Did I tell you that depreciation will increase the profit? Either you have to add 10,000 and then you have to remove 2,000. Okay, I mean you have to subtract 10,000 and you have to add 2,000. So what they have done, net effect only 8,000 is given over here. Net effect 8,000 is given over here. Is it clear? So basically what is happening? Repair is removed, but repair is not removed for 10,000. Repair is removed only for 8,000 because 2,000 we have to add, no depreciation. Depreciation we have to add back. So finally you are getting profit of 55,750. This is after rectification. So can you see this 55,750 is there in your P&L appropriation to start with? Is this clear? This is after rectification. Now, other things are still pending. Interest on drawings. Can you see I told you 750 will get added. Now the new drawing is 15,750. Can you see 3,000 got added? Drawings is 3,000. This is still 10,000 only. There is no alteration in that. Clear? Interest is 8% per annum, 6 months. Why 6 months? Why 6 months? Remember the basic. No date is mentioned for drawings. So you'll always do 6 by 12. Drawings into rate into 6 by 12. So you're getting the drawings. What will happen to drawings? Drawings will be debited to partner's capital account or current account. And can you see here in the P&L appropriation account, we are putting the drawings. Is this clear? Any doubt with this? No. After that, partner's current account we have to do. Okay, before partner's current account, see over here. Interest on capital is there. For interest on capital, there is no confusion. No, capital is already given. 75,000, 40,000, 30,000. Capital is given. Correct. Interest on capital percentage was 10%. So directly you will take 7,500, 4,000 and 3,000. Direct amounts. Clear? You get the interest on capital. Remaining profit, whatever is there, will be distributed to partners in their profit sharing ratio. This is distributed in the profit sharing ratio. No problem. So main thing what you have to remember in this question, when you do the rectification, drawings changes. Because drawings changes, interest on drawings will be on the changed number. And because you do the rectification, profit also changes. If you remove from expense, profit will increase. If you put it to expense, profit will decrease. Clear? After that, they have asked partners current account. This was the balance. Can you see? I told you that time two people have credit balance. One person has debit balance. Starting point. Clear? P&L appropriation. This is the interest on capital which we have put. Okay. This is the profit share which is coming from the P&L appropriation. Now, drawings. Can you see? Two drawings. Drawings has to be removed. No. 15,000, 10,000, 10,000. 15, that was the given number which was given in the question. Extra 750, extra 3,000. Extra 750 and extra 3,000. Clear? Drawings. Drawings is either debited to partner's capital account or it is debited to partner's current account. In this question, it is fixed capital. So it is debited to partner's current account. Is this clear? Then what we are going to do? See, interest on drawings also debited. Finally, this is just the balance carried down. One person is having debit balance. So debit balance will be by balance carried down. Credit balance will be to balance carried down. This is the question. Okay. This is the question. If they are asking from intro chapter or intro unit, this can be the one. Because other than this, all are simple there. Okay. This can be the one. Other than that, from intro unit, before this, they have asked one question once in the exam. That is that minimum guaranteed profit question is asked in the exam. Okay. A and B equally, only A. Given by the firm, guarantee given by the firm, that can be asked. Okay. Is this clear with this? Anybody has any doubt with this question? Okay. Next. Let's go to question number 9. Intro again. This is also from intro. Ram, Rahim and Karim. Where is that question? Is this the question? Where are they? Wait, this is also from intro, no? SM practice question, yeah. Yeah, this is the question. This is also one more important question that we have to discuss. Very important, this is. We will not see the solution. First, we'll discuss it. Okay, see this. Another intro question which can be asked in the exam. Ram and Rahim are in partnership, sharing profits and losses in the ratio of 3:2. Okay, no problem. As Ram, on account of his advancing years means what? Ram is growing old. Okay, feels he cannot work as hard as before. The chief clerk of the firm, Ratan, is admitted as partner with effect from 1st January. Who we are taking into partnership? Ratan. New partner is Ratan now. Okay, and becomes entitled to 1/10 share of the net profits and nothing else. We are giving him 1/10 share in the profit. The mutual ratio between Ram and Rahim remain unaltered. Between Ram and Rahim, what ratio was there? It has to be still 3:2 only. Before becoming a partner, Ratan was getting salary of 500 per month. 500 per month, he was getting salary of 6,000 then. Okay, together with commission of 4% on the net profits after deducting salary and commission. 4% on net profit also that person was getting. But we have seen this in final accounts, so this kind of adjustment. Commission on net profit after charging commission. So you have to do 4 by 104. Okay. It is provided in the partnership deed that the share of Ratan's profits as a partner in excess of the amount to which he would have been entitled if he had continued as chief clerk should be taken from Ram's share of profit. What is it? What are they telling? Before Ratan was clerk. When Ratan was clerk, he was getting something. Now he is partner. Now because he is partner, he will get profit share. If he is getting extra compared to before, that will be taken from Ram. If he is getting extra compared to before, that will be taken from Ram. The net profit for the year ended that 31st December 2022 is 1,10,000. Show the distribution. First, you have to understand one thing. Out of 1,10,000, if you remove Ratan's salary, what will be left is 1,04,000. What will be left is 1,04,000. Correct? Out of 1,04,000, if you do 4 by 104, this will be 4,000. That means, do you agree before Ratan was getting 10,000? Before Ratan was getting 10,000. Clear? After giving Ratan, what will be the profit? 1 lakh. What will be the profit? 1 lakh. Now if you check 1 lakh, it is shared between Ram and Rahim in the ratio of 3:2. That means Ram will get 60 and Rahim will get 40. This was the situation before. This was the situation before. Now if Ratan is not the clerk, then Ratan will not we will not get the salary, no. If Ratan is not the clerk, this salary is not there and this commission is also not there. So what will be our profit now? Our profit will be 1,10,000. 1,10,000. What is Ratan's share? 1 by 10 they said. So 1 by 10 means Ratan has to get 11,000. Ratan was getting before 10,000. Ratan is getting now 11,000. So what we will do? We will remove that 1,000 from Ram. So Ram will get 59,000 so that Ratan can get 11,000. Did you understand or no? Is it clear? So what they told, Ratan, whatever extra is there compared to before, Ratan has to get from Ram's share. So before our profit was 1,10,000. 6,000 is the salary of Ratan as a clerk. We remove that, it is left with 1,04,000. Commission is after, commission percentage was 4%. 4% after charging. So 4 by 104 when we do, we'll get 4,000. So now you have 1 lakh left. You have 1 lakh left. That was shared by Ram and Rahim because they were the partners. Now the profit will not be 1 lakh, it will be 1,10,000. Why 1,10,000? You don't have to pay salary to Ratan, you don't have to pay commission to Ratan. So 1,10,000, if you multiply into 10%, 1 by 10, you'll get 11,000. How will you give 11,000 to Ratan now? You will take 1,000 from Ram. So now the profit share will be 59,000 for Ram, 40,000 for Rahim, and 11,000 for Ratan. Is this clear? This is the new profit or profit distribution after Ratan. What did they ask? Show the distribution of net profit amongst the partners. Okay, let's check. Can you see this? 6,000 salary, 4,000 commission, total is 10,000. Now what is the share? 11,000. What is extra? Excess chargeable to Ram? 1,000. P&L appropriation only they have prepared. Can you see 1,10,000 profit we have now? 59,000 for Ram, 40,000 for Rahim and 11,000 for Ratan. Is this clear? Okay, this also one question which can be asked in the exam. That is from intro. Intro 2 questions I have picked which are tricky. Okay, now question number 10. Partnership. Goodwill. Any doubt with the intro questions? Any doubt with the intro questions? No, right? So we can eliminate the intro. Intro is done. Now we'll go into Goodwill. Okay, Goodwill. See this question. Question number 10. Again, this is from SM illustration. Not even from practical questions. It is from the illustration. Okay. Don't remember the question number. 11. Huh? Illustration what? This one. CU, AU and something. Now, see this. Okay, see this. Focus. One more. Goodwill. Only Goodwill calculation, but it's tricky. It's not simple also. CU and AU were in partnership sharing profits and losses in the ratio 5:3. Okay. This is the old profit sharing ratio. On 1st April, they decided to admit AG the partnership on the following terms. AG is the new partner. AG will bring 2 lakh as capital for 1/4 share. AG will get 1 by 4. That means remaining 3 by 4 will be shared by CU and AU. Clear? New profit sharing ratio will be 2:1:1 among CU, AU and AG. They have only given the new profit sharing ratio also. You don't have to worry about new profit sharing ratio. It's given 2:1:1. CU was entitled to salary of 2,000 per month. Who is CU? Old partner. 2,000 per month. It was revised to 3,000 per month from 1st October. 1st October. Earlier it was 2,000 per month, then it is revised to 3,000 per month. Interest on capital is paid at the rate of 8%. Capital on 31st of March 2022 where CU 4 lakh, AU 3 lakh, which had remained unchanged since last 4 years. Why are they telling last 4 years capital has not changed? That means when you are calculating interest on capital, don't worry. Forever it was same capital. You calculate on this capital only. Goodwill was to be valued at 3 years purchase. 3 years purchase of average adjusted weighted average profit. Average adjusted weighted average profit. Weighted average profit means what? We have to give weightage. Highest weightage will be given to the most recent year. 1, 2, 3, 4 you have to give weightage and you have to calculate, but directly no weighted average. Average adjusted weighted average profit of the past 4 years. The profits for the previous 4 years before charging interest on capital and salary to CU was like this. This is the profit. Clear? Okay. The movie has just started. These profits were subject to following rectification. Can you see rectification can trouble you anywhere and everywhere? These profits were subject to following rectification. Okay. Now see. A machine costing 40,000 purchased on 1st October 2020 was wrongly charged to revenue. This machinery was depreciated at 20% per annum on WDV method. What is happening? We don't know. What is happening? They, instead of taking machinery, they have taken it as revenue. I mean, they have charged to revenue. Charged to revenue means what? They have taken it as expense. Now, if you correct it, what will happen to profit? Profit will increase. Profit will increase. But profit, when it increases, you have to remember, you have to start charging depreciation. Remember one rectification in the previous question? There what happened? By mistake, they took it as machinery. So when we remove the machinery, we will remove the depreciation. In this question, they did not take the machine. So when they take the machine, they have to charge depreciation. Is this clear? Yes. I think we can deal with it one by one. See over here. Machinery to be capitalized. Can you see 40,000 is added? 2020-21, 40,000 is added. Machinery. Now see how much is the machinery. Machinery, the fun part is 1st October. 1st October. Now when you are charging depreciation also, first year what you will do? 40,000 into 10% into 6 by 12. Are you getting my point? So when you are doing that, first year's depreciation is 4,000. Can you see here? Less depreciation. Depreciation is removed, 4,000. Okay. But next year what will happen? Next year's depreciation will be 36,000 into 10%. And no, how much is, sorry, 20%. This also is 20%. 20%. So this will become 7,200. Can you see two depreciations are removed? Machinery is not there. Okay, machinery was taken as something else. Okay, it was taken as expense, error of principle. So now what you will do, when you take it as machinery, expense will go. If expense goes, profit is added. But if you take machinery, you have to start charging depreciation. So you will take depreciation of year 1, 6 months only. Next year's depreciation, full year. WDV method. Is that adjustment clear? Okay. Now, after that what happens? Stock on 31st March 2020 was overvalued. 1 year, if closing stock is more, profit will also be more. So when we remove that closing stock, profit will also go down. But this profit will be the this stock will be the opening stock of next year. When opening stock is increasing, profit is decreasing. When we remove this opening stock, profit will increase. Are you getting this? So now see this. 1 year profit is decreasing. Another year profit is increasing. Are you getting my point? Closing stock was more. So you remove the closing stock. Now profit will go down. Opening stock was more. Now you remove the opening stock. Now profit will go up. But on different years. Opening stock information they didn't give. You should only know that 1 year's closing stock is next year's opening stock. Okay. Is these two adjustments clear? Okay. Now, there was a loss by fire amounting to 10,000 in the year 2018-19, which was not considered in trading account but correctly debited in the P&L account. Loss by fire is there. It is an abnormal item. Abnormal item we will not consider when we are calculating goodwill because it will not happen in future. Goodwill means what? We will keep the past as the base. Using the past as the base, we will predict the future reputation. In the past, if there is a loss by fire, in future again I am not planning to put fire, no. Are you getting my point? So in future, this will not be there. So you have to remove this loss. If you remove this loss, what will happen to profit? Profit will increase. Can you see 10,000 in 1819? Profit is added. Is this clear? Yes. Next, debtors on 31st March 2022 included bad debt of 5,800. Okay, bad debt is there in the debtor. That means bad debt we have to remove. Bad debt is there in the debtor. That means we have to remove. If you remove bad debt, what will happen to profit? It will go down. Remember the entry, bad debt account debited to debtor. Bad debt is an expense. Expense will be debited to P&L. So, see over here, 5,800 removed from profits. Is this clear, these rectifications? Now what we have to remember, interest on capital we have to remove and salary we have to remove. Interest on capital 4 lakh plus 3 lakh, 7 lakhs. 7 lakh into 8%. How much is the interest on capital? 56,000. Correct? Can you see every year 56,000, 56,000, 56,000, 56,000 is removed from profits? Okay. But salary when we are taking, there is salary of only one partner, CU. CU's salary is how much? 2,000. Now, be careful. Here it is 24 and 24, no problem. But in the third year, what happened? After half year, on 1st October, we have changed the salary. So, this will be 2,000 into 6 months. Then the salary will be 3,000 into 6 months. 2,000 into 6 months. Till October, it is 2,000. After that, the salary has become 3,000. So, now here it is 30,000. Is this clear? When you go to the last year, full year it is 3,000 only. So 3,000 into 12 months, it is 36,000. Is this clear? Yes. This is your thing. When you do all that, you will get this adjusted profit. Give the weightage 1, 2, 3, 4. When you give weightage, you will get the product. You will get the weighted average profit. Weighted average profit is 180. They said 3 years purchase. 3 years purchase means goodwill will be 5,40,000. Who is the new partner? New partner is AG. AG's share is 1 by 4. 1 by 4 when you multiply, you'll get 1,35,000. 1,35,000. Okay, this will be distributed in what ratio? This will be distributed in what ratio? Sacrificing ratio. Sacrificing ratio, what they have done? See, they have calculated sacrificing ratio and they got sacrificing ratio as 1:1. Is this clear? Because it is 1:1, what will happen? 67,500, 67,500. Is this clear? Do you remember what we had discussed when we were talking about goodwill? Gaining partner will give to sacrificing partner. Gaining partner is who over here? See, they have written directly bank account debited to partner's capital. Actually, it is who is the gaining partner? AG. AG is capital account debited to CU to AU. Because first you will pass the entry bank account debited to AG's capital account. First you will put the money, then you will distribute the money. Is this clear? This is one of the questions of goodwill which you have to know. Any doubt with this? Anybody has any doubt? Okay. Again, you have to be very careful with this calculation. Here what can trouble you, I'll tell you. Interest on capital shouldn't be a problem. Interest on capital every year it is 56, 56, 56. Salary you have to be careful. Salary they have specifically told it is revised to 3,000 from 1st October. So from 1st October, new salary will be applicable. Clear? Then you have to worry about the rectification. Rectification, closing stock, they have put more. You reduce the closing stock, profit will reduce. This year's closing stock is next year's opening stock. So opening stock, when you reduce, profit will increase. That is one thing. Bad debt is not put. When you put bad debt, what will happen? If you put bad debt, that time the profit will decrease. So these are the things. Machinery was not recorded. It was taken as expense. When you remove expense, what will happen to profit? Profit will increase. But when you take machinery, what will happen? You have to start charging depreciation. Clear? This is the adjustment which you have to remember. Clear? That is it with this question. Next, goodwill. One more question of goodwill. SM practice question. Why is clever and dull? Why is clever and dull? Question number 1 from practice. Yes, only one practice question is there in goodwill unit, and that is the one which we have to worry about. Okay, ready? Let's start. Why is clever and dull were trading in partnership sharing profits and losses in the ratio 4:3:3? That means their profit sharing ratio is given. The accounts of the firm are made up to 31st December. Just now we did one question in that we were following financial year, but here we are following calendar year. So till 31st December. Partnership provided these things. On the death of a partner, goodwill was to be valued at 3 years purchase. Number of years of purchase is 3. Okay, of average profits of the 3 years up to the date of death. You have to calculate average profit up to the date of death. Okay, after deducting interest at the rate of 8% on capital employed and a fair remuneration of each partner. That means we have to give some fair remuneration to each partner. The profits are assumed to be earned evenly throughout the year. That means wherever you require to do 3 by 12, 6 by 12 if you want to do, you do it. Because evenly they have earned the profit. On 30th June, Weiss died and it was agreed on his death to adjust goodwill in the capital accounts without showing any amount of goodwill in the balance sheet. Anyways, we don't show goodwill in the balance sheet, no. Always goodwill adjustment is in partner's capital account only. Okay. It was agreed for the purpose of valuation of goodwill that fair remuneration for work done by partner would be taken as 15,000 per annum. Okay. And that the capital employed would be 1,56,000. Why they gave this 1,56,000? Because 1,56,000 into 8% will be the interest. How much? 12,480 will be the interest on capital and 15,000 is the remuneration, but that is for one partner. We have how many partners? 3 partners. So 15,000 into 3, 45,000 will be the fair remuneration. Clear? These two things you have to remember. Clever and dull were to continue the partnership profits and losses equally after the death of Weiss. They will continue the business. Following were the amounts of profits before charging interest on capital employed. These are the profits. 4 years they are given. 19, 20, 21, 22. Clear? You are required to compute the value of goodwill and show the adjustment thereof in the books of the firm. Is it clear? Now what you are supposed to do? What are you supposed to do? You are supposed to calculate value of goodwill. But they said goodwill under which method? Goodwill 3 years purchase of average profit up to the date of death. Up to the date of death. When did this person die? 30th June 2022. That means 2022, I need only half year profit. 2021, I need full year profit. 2020, I need full year profit. 2019, I need only half year profit. Can you see that time? Half plus full plus half. This will give me 3 years. Are you getting my point? 30th June. So you have to calculate till 30th June. So what happens? Till 30th June is half year profit. Last year full year. Before that full year. 2019 only half year profit. Is it? Which one? Because this person actually died on 30th June. No, 30th June 2022. They said 3 years till the date of death. So basically it is from 1st July 2019 to 30th June 2022. This is the 3 years. 1920, 2021, 21, 22. But from 1st July, why? We have to calculate profit till the date of death. 3 years till the date of death. Here the profits are given calendar year. We don't want that. So 2019 only from July I want. 2022 only till June I want. Are you getting my point? So that is why I told half there, half year will make 1 and middle 2 years will make 2. Clear? Those are the profits. You can see over here. Can you see? 2019 half year profit. 2020 half year profit. Will give you 1 year that time. 2020 half year profit. 2021 half year profit. Will give you 1 more year. 2021 half year profit. 2022 half year profit. Will give you 1 more year. Are you getting my point? 19 half plus 20 half. 1 year done. 20 half plus 21 half. 1 more year done. 21 half plus 22 half. 1 more year done. Now you have 3 years. When you total this, you can calculate average. You will get average profit. But this average profit is before interest, before remuneration. Average profit which we calculated is before interest, before remuneration. So what we will do, we will remove the interest and remuneration. Was that the same number which we had written over there? Yeah, 12,480 and 45,000. 12,480 is 8% and 45,000 is 15,000 into 3 partners. That time you will get profit of 13,320. How many years purchase they said? 3 years purchase. When you multiply that, you will get the goodwill. You will get the goodwill. Who died? Only one partner died. Weiss. What is Weiss share? 4 by 10. So what happens over here? 4 by 10, you will calculate 15,980. Y's share of goodwill. Y is died, we have to give Y's share of goodwill. See the adjustment entry. Again, you have to calculate sacrificing ratio. I told you, without that, you are not doing anything. Sacrificing ratio, when you calculated, Y's went. You have only these two people. So it became 1:1. The gain ratio is 1:1. So can you see who is getting? Y's is getting. Who is giving? These two. Is this clear? Again, the concept is same. Gaining partners capital account will be debited to sacrificing partners capital account. Is it clear? Two bouncer questions. If at all from goodwill, they are asking these two only. Because other questions are simple. They'll tell average profit method. Apply the formula, you'll get the goodwill. Okay. That is about that. Now we move into admission. So goodwill I am deleting, done, no? Now, 12th question, admission of a partner. SM, practice questions. Somehow I like this practice questions because practice question only will have all the twist and turn. And practice question is what you are trying to skip also. Because illustration questions are simple. Practice questions only with little tricky. And exam, many times we have seen directly from practice question, they're picking and putting it. Okay, now, small question, okay, don't worry. Small question, starts here and ends here only. Yes, now see this. We'll find, where is that Gopal and Govind? Practice question 2, Yes, that is the question. No, practice question 2. Okay. Now we'll start. Hello. Yes. Gopal and Govind are partners sharing profits and losses in the ratio of 60:40. Basically 3:2. Simply one big number they gave, 3:2. The firm's balance sheet as on 31st of March 2022 is as follows. Can you see the balance sheet? Capital account of Gopal, Govind is given, two partners only. Long-term loan, current liability, there is no reserve. Because there is no reserve, nothing to distribute. Okay, assets are there, fixed asset, investment, current asset and long-term loans and advances. This is loan given. This is loan taken. Both are there. Clear? Next. Due to financial difficulties, they have decided to admit Guru. One new partner is being admitted. Admission, no. As a partner in the firm from 1/4/2022 on the following terms. Guru will be paid 40% of the profit. Whatever profit is there, 40% will go to Guru. Can I take this as 2/5? 40% is nothing but 2/5. Earlier, these two were already sharing in the ratio of 3:2. 2/5 gone. Guru will bring in cash, 1 lakh as capital. 1 lakh specifically they said as capital. Clear? It is agreed that goodwill of the firm will be valued at 2 years purchase of 3 years normal average profit of the firm, and Guru will bring in cash his share of goodwill. They are telling Guru will bring capital also, Guru will bring goodwill also. But Guru does not know what is the goodwill amount. You calculate and tell Guru what is the goodwill amount, then Guru will give his share. Clear? Yes. It was also decided that the partner will not withdraw their share of goodwill. If I give the share of goodwill, partner can withdraw. No, they are telling no, partner is not withdrawing. If partner is not withdrawing the share of goodwill, where will this be? In the partner's capital account only. Clear? Nor will the goodwill appear in the books of accounts. Now, profit of the previous 3 years are given. For the year ended 31st March, profit 20,000 includes insurance claim received. Oh. Can you see abnormal item? Includes insurance claim received 40,000. Here it is 20,000 after getting insurance. That means if you remove that, here there will be a loss of 20,000. After getting insurance claim, it is 20,000. If you remove that 40,000 income, it will become loss of 20,000 because it's abnormal item. We are going to remove it. Clear? Here there is loss of 80,000. Includes voluntary retirement compensation of 1,10,000. That means after paying that, we have a loss. Before paying that, we have a profit. Clear? Here, after receiving it, we have a profit. Before receiving it, we have a loss. Here, after paying this voluntary retirement compensation to the employees, we have a loss. Before paying that, we have a profit. Abnormal item, so we are removing both of them. Okay, profit of 1,05,000 includes profit of 25,000 on sale of asset. That means before that, we have a profit of 80,000. Is this clear? Profit adjustment you have to do before doing goodwill adjustment. It was decided to revalue the assets as follows. Revaluation account. Fixed asset, it is becoming 4 lakh. Investment is becoming 0. Current asset 1 lakh 80, loans 1 lakh. Okay. Now, the new profit sharing ratio after admission of Guru is 35:25:40. Why are they doing this? So basically what we can take? 7:5:8. 7:5:8. Past journal entries on admission. They didn't ask you anything. See this. In fact, whatever is possible in life, everything they have asked in this question. Journal entries on admission. Show goodwill calculation. Okay. Prepare revaluation account. Okay. Partners capital account. Okay. Balance sheet after admission. Okay. What is remaining? Are you getting my point? Goodwill calculation is also not simple. Now, we have discussed. Let's have a look at it. See. I told you it is loss 20,000, profit 30,000 and profit 80,000. Okay, after removing all the adjustments. Now you calculate average profit, you will get average profit of 30. Is there any interest on capital in this question? No. Salary to partner in this question? No. Those two things are not there. Only abnormal items we have to remove. Now you get average profit of 30,000. 2 years purchase they had told, so goodwill is 60,000. This is goodwill of the firm. Goodwill of the firm. We want what? Only the new partner share. New partner share is what? 40%. 40% of 60,000 will be 24,000. This is goodwill. He will bring 24,000. So the new partner will bring 1 lakh for capital plus 24,000 for goodwill. So total amount that the new partner will bring is 1,24,000. Is this clear? Yes. Now, goodwill will be shared by Guru in the sacrificing ratio. Sacrificing ratio you have to calculate. They got the sacrificing ratio as 5:3. Whatever sacrificing ratio you get, in that ratio only these people will share. When they share, what will happen? 15 and 9, 24,000. 24,000 will be shared between Gopal and Govin in the ratio 5:3. Old ratio minus new ratio. Gopal and Govin. Yeah, Gopal and Govin in the ratio 5:3. Okay, who is the person? Guru. Guru brought 24,000. It is shared between these two people. How will you get this 5:3? Old ratio minus new ratio. What is old ratio? It is given in the question. 3:2. What is new ratio? 7:5:8. Clear? Yes. Now, journal entries. See the journal entries. First, the partner is bringing money. Bank account debited to Guru's capital account. 1,24,000. We have discussed this 1,24,000. Clear? Guru's capital account to Gopal to go in. 24,000 went. What remained now? Only 1 lakh remained. That is the capital. Only that has to remain. Okay, revaluation. Now, revaluation we have not done. Okay, fixed assets. See over here. It is 3 lakhs. It is becoming 4 lakh. That means 1 lakh profit. 1 lakh profit. See investment. 50,000. It is becoming 0. That means 50,000 loss. Asset value going down means loss. Current asset 2 lakh. It is becoming 1 lakh 80. That means 20,000 loss. Clear? Loans and advances, it was 1 lakh. It is remaining 1 lakh only. Loan given. How can you revalue that? That means your money will go. Clear? So net effect, if you see, your revaluation profit is 30,000. Your revaluation profit is 30,000 and that has to be shared. Okay. See, they have done revaluation account debited to investment and current account, current assets and fixed assets to revaluation. Can you see revaluation profit of 30,000? Shared between the partners in their old ratio of 5:3. Sorry, not 5:3. What was that? 3:2. 60:40 it was 3:2. Is this clear? This is it. Revaluation account they have asked to prepare. Just now what you did in journal entry, that only you are posting no to revaluation account. That is again shared over here. Capital account, simply they have done Guru's capital account separately, Govin's capital account separately and all. You can do tabular form. You know how to do that. Okay. So see over here, balance was already there. What is this 15,000? By bank, what is this 15,000? Guru's share of goodwill. See over here. Goodwill share 15 and 9. Directly they are putting bank account debited to this thing. Okay, revaluation profit. That is it. Same thing for the other partner also. For new partner, what is it? 1 lakh, 1 lakh. This is actually wrong. This is actually wrong. You know why? Because in the journal entries, when you have already written bank account debited to Guru's capital account 124, how can you show 1 lakh over here? You should show 124 only. So actually this should look like this. You will write over here by bank 1,24,000. Then you will write two partners capital account. The other two partners 24,000 will get distributed. Then the two balance carried down should be 1 lakh. Are you getting my point? Okay. In the journal entries they have given something else, but the ledger posting is gone wrong. So your ledger will look like this. Now balance sheet, you see. What is there in balance sheet? Fixed asset, new value. Current asset, new value. But new value of current asset was 1,80,000. Here they are showing 3,04,000. Why 3,04,000? Because we got 1,24,000 money. That money will get added to current assets. Clear? Loans and advance, same old value. Investment you can't find because it became 0. Clear? Long-term loan, same value. Current liability, same value because there was no revaluation. And then whatever balance carried down you got in the partner's capital account will come to the balance sheet. And with that, the balance sheet has to tally. There is no other option. Balance sheet has to tally. Is this clear? See, new profit sharing ratio 5:3. Sacrificing ratio 5:3. They have calculated. Bank account they have prepared just for your understanding. See, can you see over here? Why I was telling you that was wrong. Here they told in bank account to Guru's capital account 124. That means in Guru's capital account there should be 124. No, not 1 lakh. No. That is why this is wrong. Is this clear? That is your goodwill. That is your admission. Admission, one nice question. Is this clear? Any doubt? No. Now, partnership. Admission, one December 21 question is there. These questions what we are discussing, that only you have to go home and practice. Okay. Almost all the things that is required for admission is covered in these questions only. Now, what I want to do is, admission is done. Let's get rid of it. Okay. Now, next thing is retirement. But before retirement, there is a December 21 question of admission. Yes, A and B are partners. This is the question. For that, we have the solution. Everything is simple. Why I kept that is because small twists are there, which are new, which we have to discuss. It was a 10-mark question. In the exam, it was asked for 10 marks. Okay, look at the question. A and B are partners. A and B are partners sharing profits and losses in the ratio of 3/4 and 1/4. Simply they give this to irritate you in the exam. Directly there only write 3:1. So that problem is solved. It is not causing you irritation. Okay, following is the balance sheet of A and B. Balance sheet is given. Can you see capital of A, capital of B? Creditor is also there. Okay, reserve is also there. Reserve has to be shared in the ratio of 3:1. Reserve has to be shared in the ratio of 3:1. 60,000, so it will become 45,000 and 15,000. Clear? Then you have cash in hand, cash at bank, sundry debtors, stock, bills receivable, land and building, office furniture. Everything is there. Why everything is there? To give you more work in revaluation. So many assets, they have put revaluation also will be there. Okay, they agreed to take C into the partnership on 1st April 2021. On the following terms. Who is the partner who is coming? C. What is the terms? We will see. Goodwill is to be valued at 2 lakhs. Okay, C is unable to bring cash for his share of goodwill. So what we will do? Whether he brings money or not, we will still take from his capital account. Let him bring money, let him not bring money, no problem. We will take from his capital account. So it was decided that due credit for goodwill is to be given to A and B for their sacrifice in favor of C. Through C's current account. Through C's current account. Oh, are you getting my point? Usually we would have passed the entry, no? C's capital account debited to A to B. Now we have to pass the entry. C's current account debited to A to B. Clear? Okay. C pays 1,40,000 as his capital for 1/5 share in the future profit. 1/5 share. anywhere in this whole story, did they tell you what is the goodwill? Yes, that is 2 lakhs. That is 2 lakhs. Now, if 2 lakh is the goodwill, 2 lakh into 1 by 5 is 40,000. What is 40,000? C share of goodwill. This will be shared between A and B. In what ratio? Sacrificing ratio. Sacrificing ratio, not 3:1. Sacrificing ratio. It will be 3:1 only in this case. I will give you one small clue. Whenever you have admission questions, no? If old ratio, for example, old ratio, now here it is 3:1. And they told you that new partner is admitted for 1/5 share. That time what you will do? 4 by 5, you will share in the ratio of 3:1 only. Now, sacrificing ratio automatically will be 3:1 only. Clear? But if new ratio is given in the question, then you don't go to do any circus, calculate the sacrificing ratio. Clear? Here it will be 3:1. Yes, you're right. Now, see over here. Stock and furniture to be reduced by 10%. That means revaluation, profit or loss? Loss. Provision of 5% for doubtful debts to be created. Loss. This also will create loss. This also will create loss. So both will be debited to revaluation account. Land and building to be appreciated by 20%. That will create profit. So revaluation account, credit. Capital account of the partner to be readjusted on the basis of their profit sharing arrangement, and any excess or deficiency is to be transferred to their current account. Capital proportionate and not bringing money or taking money. Adjust in current account. Prepare revaluation account and partner's capital account. 10 marks. Balance sheet is not there because it's for 10 marks. If it is 15 mark question, balance sheet also will be there. If it is lengthy paper, for 10 mark only balance sheet also will be there. If they make it lengthy paper, for 10 marks, there is balance sheet also. Are you getting my point? It's all depending on their mood. Now, focus. Revaluation I am not discussing. Okay, you know what to do. We have discussed land and building increase. Other things are going to create loss. Loss will be shared in the ratio of 3:1. Can you see over here? Profit. Profit will be shared in the ratio of 3:1. Revaluation account, there is no confusion. Now, partner's capital account, you have to pay very close attention. Can you see balance brought down? From where I am getting this? From the balance sheet. General reserve distribution 45 and 15. Remember 60,000 was the general reserve. Okay. Now revaluation profit is also distributed. These three things straightforward. Now bank account 1,40,000. How do we know it is 1,40,000? They have told in the question itself that 1,40,000 is the bank. Now can you see goodwill share in the ratio of 3:1? It is given to A and B. But it is not taken from C in the capital account because it is from C's current account. Usually goodwill distribution, what you will do? Here you can see the debit, here you can see the credit. But here you can't see the debit because debit is to the partner's current account, not to the capital account. But here these people are getting into their capital account, but it is taken from C's current account. Is this clear? Okay. Now after that what we have? After that, it is only about making capital proportionate. Capital proportionate, understand. What is C's share? 1,40,000. What is C's goodwill? 1,40,000. What is C's share actually? 1 by 5. So if 1,40,000 is 1 by 5, how much is 1? 1,40,000 into 5. Is it 7 lakhs? 7 lakhs is the capital. So that means 7 lakhs should be in the ratio of 3:1:1. New profit sharing ratio will be 3:1:1. Correct? So now when you calculate, this will be 1,40,000, this will be 1,40,000, and this will be 4,20,000. This is the required capital. You have to calculate what is the existing capital. Existing capital not in the question. You have to see the balancing figure in the partner's capital account. So if you check the partner's capital account over here, can you see? When you check the balancing figure before this, see capital is 420, 140, 140. Before this, whatever capital is there, that will, did they do the calculation? No, they didn't do it. Okay, do one thing, take your calculator quickly. Take your calculator, take for A, 2,85,000 on the credit side, 2,85,000 plus 45,000 general reserve, plus 15,750 revaluation, plus 30,000 goodwill share, Goodwill share. That's it. How much is it? 3,75,750. How much we require for A? 4,20,000. When you do that, you will get this 44,250. A has to bring, but not money from current account. From current account. For B, you do the same thing. 1,55,000 was the existing goodwill. 15,000 was the general reserve share. 5,250 was the revaluation profit share. And 10,000 is the goodwill share. 1,85,250. How much we require? 1,40,000. That means 45,250 excess. Remove it, put it to current account. Is this clear? This is the important thing. That is capital proportionate. What you have to remember, very important thing. This same question can appear in your exam, and instead of telling current account, they can just tell make capital proportionate. That time, instead of to current account, it will be to bank. And here instead of current account, it can be by bank. That can be the modification. Is this clear? Other than this, there is nothing in this question. That capital proportionate point only is very, very important point. And very important, very unique point. Goodwill distribution is happening from C's current account. Usually from C's capital account only it will be taken. Is it clear? Any doubt? Yes. We can get rid of that also. That was the 13th question. Now we'll go into 14th question. Retirement. Why I chose this question is because in this question, there is retirement as well as admission. Retirement as well as admission. Do well. Seeing the question only, we feel like doing bad. Do well, do well, do well. Illustration 5. Okay. Now, question is little tricky. Why little tricky? Retirement and admission is happening in the same question. Okay. Now, focus. Do well LLP. Limited liability partnership. With partners A, B and C are sharing profits and losses in the ratio of 10:6:4. 10:6:4 can also be taken as 5:3:2. No problem. Balance sheet of the firm as at 31st March 2022 is as under. They have given the balance sheet. Can you see what is happening? ABC capital. Reserves. So we have to distribute reserves. In which ratio? 10:6:4 or 5:3:2. Long-term debt, bank overdraft, trade payable. Okay. Asset side, what we have? Lot of assets. Lot of assets. But do we have JLP? No. So if JLP is not there in the balance sheet, and if you get anything from JLP, everything will be distributed. Luckily, there is nothing in the balance sheet as JLP. If you get 1 rupee also, that 1 rupee will be distributed in the ratio of profits. Now, because it is retirement, if you are getting anything from JLP, that will be the surrender value. You cannot get the policy amount. Clear? Yes. It was mutually agreed that Mr. B will retire. Okay. From partnership, and in his place, Mr. D will be admitted as partner with effect from 1st April 2022. Okay. There is also one question similar where they have told the partner will retire and his son will be admitted. His son will be admitted. I think previous question only. JLM. What is the question? KLM. Okay, that is simpler than this. When son is admitted, what happens? There is nothing to calculate goodwill and all. Why? This fellow's entire thing will go to this fellow. So, one person is sacrificing, one person is gaining. Other two are remaining same. Here what is happening? B and D are not connected. They are different people. So, here the calculation is little more. We are, let's say A, B, C are there. Okay, C retires and then D will come. So what will happen? Whatever is there in C's capital account, they will tell half you transfer or full you transfer. Half if you transfer, half will be taken as loan or half has to be paid. Now what is happening? C is going, so C is sacrificing. D is coming, D is gaining. A and B are going to remain same. They're like father is going, son is coming. We are not bothered about anything. Is this clear? So, but here it is not like that. Here no father son. You don't create the relationship. Okay, here they didn't tell anything. For this purpose, the following adjustments are to be made. Following means only 3 points. Okay, now Goodwill is to be valued at 1 lakh. But the same will not appear as an asset in the books of the reconstituted firm. Even if they don't tell us, we will never put goodwill into the balance sheet. So goodwill is valued at 1 lakh. Direct goodwill value is given, but this is the goodwill value of the firm. It is the goodwill value of the firm. You will have to see who is retiring, who is sacrificing. We have to calculate and give as per sacrificing ratio. Now, building and plant and machinery are to be depreciated by 5 and 20%. Investments are to be taken over by the retiring partner at 15,000. Very, very important. This depreciated by 5%, 20%, you will know. Revaluation account debited, you will put it to the respective assets. But see, investment is taken by the retiring partner. At what value? 15,000. But right now investment is not 15,000. It is 12,000. It is 12,000. They are taking it at 15,000. Appreciation. So first what you should do? First you should revalue it to 15,000. That means 3,000 you have to put in revaluation account as profit. Then you can give it. Are you getting this? Yes. Provision for 20% is to be made on trade receivable to cover the doubtful debts. Debtors are already sitting over here. Trade receivable, on that calculate 20% and create provision for doubtful debt. That is not a problem. In the reconstituted firm, new firm, total capital will be 2 lakhs, which will be contributed by A, C and D in the new profit sharing ratio of 2:2:1. So we have A, we have C, we have D. Okay, we have A, C and D. So it will be 80,000 and 40,000. 2:2:1. 80, 80 and 40, A, C and D. So what you have to do? This is the required capital. Later you have to check the balancing figure. What is the existing capital? Then you will get the difference, surplus or deficit. Here they did not tell that it should go to partner's current account. Either you will bring money or you will take money. Simple. Clear? Surplus funds, if any, is used for repaying bank overdraft. After doing all this, if you have money in the bank, use that money to pay the bank OD. Clear? Amount due to retiring partner shall be transferred to his loan account. That means extra money which I have, I will use it to pay my bank OD, but I will not give my retiring partner. Retiring partner I'll give only in the future because it is transferred to loan account. Is this clear? Prepare. Revaluation account, partner's capital account, bank account, balance sheet. Only that much. Okay. Now, first we'll get it out of the way. Revaluation. See, I told you, investment, 15 minus 12, 3,000 you have to put to revaluation account. Then building, plant and machinery provision, all regular items. Okay. We are having a loss. Loss is transferred to partner's capital account. Now the partners, do they have to bring money? Remember we discussed one point, loss on revaluation. That was not loss on revaluation, that was loss on realization. In dissolution only, if realization loss is there, that time partners, solvent partners will bring money. Here nothing, you will just transfer to partner's capital account because business will continue. Now, A's capital account, they are doing separate. Okay, you do it columnar so that everything happens at once only. A's capital account, you see over here, this is balance. This is the reserve share, shouldn't be any problem. Now C and D's capital account, that means there is goodwill distribution. How much was the goodwill of the firm? Goodwill of the firm was 1 lakh. Goodwill of the firm was 1 lakh. So goodwill calculation, I think they would have shown somewhere at least. Yeah. Now what has happened over here? Thing is, little confusion. What you will face is to calculate the sacrificing ratio. See the question. What is the old ratio? 10:6:4. What is the new ratio? 2:2:1. Correct? So you have A, B, C, D. A's old ratio is what? 10:6:4. You can make it as 5:3:2 also. 5/10, 3/10 and 2/10. What is it for D? 0. What is the new ratio? 2:2:1. For A it is going to be 2/5. For B it is going to be 0 because B is gone. And C it is going to be 2/5. D is going to be 1/5. When you are doing this, understand this. LCM will be 10. Okay. 5 minus 4 is equal to 1/10. You got positive number. That means what? Sacrifice. Here it is 3/10. That means again it is sacrifice. Here you got what? 10. So it will be 2 minus 4 minus 2/10. That means it is gain. Here you got what? Minus 1/5, which is nothing but minus 2/10. This will also be gain. So 2 people are gaining 2 by 10, 2 by 10. 2 people are sacrificing 1 by 10, 3 by 10. So sacrifice between these two guys is 1:3. Here it is 2:2. Is this clear? So now what will happen? Understand this. Okay, here the goodwill calculation can be little tricky. 1 lakh, no. 1 lakh is a goodwill, no. This person has to get 10,000. This person has to get 30,000. This person will give 20,000 and this person will give 20,000. Is this clear? Are you following this? Based on the ratios I'm telling. Okay, this person will give 10,000, this person will give 30,000. This person will not give, sorry. This person will get 10,000 and 30,000. These two will get. These two will take. Sorry, these two will give. Okay, because it is gaining, no. These two will give. So what happens now? Who is sacrificing? That person has to get to know. It should be credited in their capital account 10,000. This person also, it should be credited in their capital account 30,000. Here these two, it should be debited and debited. Now if you go to the solution, see over here. A's capital account 10,000. They are getting goodwill. B's capital account 30,000. He is getting goodwill. C's capital account, he is giving 20,000. D's capital account, he is giving 20,000. Can you see that entry? So 2 people who are sacrificing, they are getting. 2 people who are gaining, they are giving. So if you are giving, it will be removed from your capital account. If you are getting, it will be put into your capital account. Clear? Now, that one investment is taken by the partner, no? Retiring partner. What is the entry for that? Partner's capital account debited to investment. Can you see over here in D's capital account? Who took that? B, sorry. B took it. Can you see 2 investment 15,000? That is also sorted. Other than that, see, this is the balancing figure. How we are getting that balancing figure? This and this revaluation loss. When you do that, 80,000 should be there. You are getting some other number. That means this person is bringing money. This person is bringing money. Are you following this? In B's account, if you see, balance brought down, reserves. Balance brought down and reserves. And this goodwill share. And revaluation loss when you remove, investment when you remove, you are getting everything transferred to B's loan. Here there is no reconstitution and all. This person is retiring. Clear? C's capital account, what is happening? Again, C is also having shortage. That person is bringing 78,160. You have to check the balancing figure and you will put the amount. D's capital account, you see, he is giving 20 and he should have balance of 40. That means he should bring 60,000. His capital should be 40,000. He has to give 20,000 as share of goodwill. That means how much he has to bring? 60,000. Is this clear? Now, whatever people are bringing, no, everything will be there in the bank account. And whatever money we have, no, we are utilizing for what? To pay bank OD. Can you see bank OD is gone? Buy bank overdraft, 44,000. Remaining everything will be balance carried on, which will go to balance sheet. Straight away 1,04,500. Where is that? 1,04,560 over here. Can you see in balance sheet? Rest of the assets and all, you don't have to worry, because after revaluation, what value is there? That value only will be there. And capital, can you see new capital 80, 80, 40 reconstituted capital? Clear? That should be it. B's loan is their new thing. Don't forget that. B's loan, we didn't pay B. We just transferred his money, everything to loan account. Yes. Are you getting this? Yes. That should be it. That was your, what do you say? Retirement. One small question. Okay, retirement, small question. So what was the key area in this? In this key area is to calculate the sacrificing ratio and doing the goodwill adjustment. After doing goodwill adjustment, you have to see what is the surplus or deficit. Because you are doing reconstitution of capitals, you have to do surplus or deficit calculation. That should be it. Retirement, we have one more question. Question number 15. No break. We'll finish retirement and take a break. Then death and dissolution we have to do, and then we will go. Oh, retirement we have 2 questions. Oh, we have retirement 3 questions. Death we have 2 questions. I know those 2 questions. 2 big questions are there in death. Then dissolution we have 1 question, and then piecemeal 2 questions we have. With that we'll be done with class. Yes, we'll do one question of retirement and take a break. One question of retirement we'll do and we'll take like 5 minutes or 10 minutes break and then we'll continue. Yes, partnership retirement SM practice question. Ram, Rahul and Rohit. What is the practice question number? 1 now. Yes, Ram, Rahul and Rohit. 3 people are there. Yes. Let's focus. See, most of the things are simple. 1 or 2 twisted points will be there. That we have to focus properly. Okay. 31st March 2022, the balance sheet of Ram, Rahul and Rohit sharing profits and losses in the proportion of capital stood as follows. Proportion of capital, that means their profit sharing ratio is 3:2:1. Okay. No reserves in the balance sheet, so no reserve distribution. Assets are there, normal assets that might get revalued also. On 31st March, Ram desired to retire from the firm and remaining partners decided to carry on. He said bye-bye, we said bye-bye. Okay, it was agreed to revalue the assets and liabilities on that day on the following basis. Okay, now, how many points are there for revaluation? That many points are simple. Correct? No. Land and building appreciated. Machinery depreciated. Closing stock valued at 80,000. Provision for bad debts created. 4 points fully revaluation. Old credit balance of sundry creditors 10,000 written off. 5 points are all revaluation till now. Now, joint life policy of the partners surrendered and cash obtained 60,000. This is not revaluation. Okay. In the balance sheet, search and tell me, do you have joint life policy? No. That means 60,000 fully profit. It should be distributed to partners. Okay. Goodwill of the entire firm is valued at 1,80,000. They only calculated goodwill and told you what is the goodwill also. 1,80,000. And Ram's share of goodwill be adjusted in the accounts of Rahul and Rohit, who share future profits equally. Future profits are equally. So old profit sharing ratio is 3:2:1. New profit sharing ratio is 1:1. That means you have to calculate the sacrificing ratio and see what is the sacrifice and gain. Okay, then only you can do the goodwill. The total capital of the firm is to be the same as before retirement. Capital should be same as before. How much was the capital? 6 lakhs. So now what will happen? 6 lakhs will be the same in the ratio 1:1. That means 3 lakh and 3 lakh. 3 lakh and 3 lakh. This is the required capital. You have to calculate the existing capital. Difference you have to bring or you have to take. Now see this. Amount due to Ram be settled at 50% on retirement and balance 50% within 1 year. Loan account. 50% you will pay, 50% will be transferred to loan account. Prepare revaluation account. Okay, that is not a problem. Capital account of partner, we will prepare that. Rahul and Rohit. Okay, loan account of Ram. Cash account, balance sheet of Rahul and Rohit. Okay, nothing is troublesome. Only the capital proportionate you have to focus. JLP you have to focus. 2 things because of which I have chosen this problem. One is JLP, other one is capital proportionate. Revaluation account, you see. Land, sundry creditors, all these things, they have put the JLP over here only. You, instead of putting here, you can put directly to partner's capital account also. You know why? If you put 60,000 over here, it will get distributed to partners only. Are you getting my point? And guess what? If you didn't put this 60,000, there is no revaluation profit or loss. See, 60 and 10, 70, 40, 20, 10, 70. There is no revaluation profit or loss. Because they put the 60 over here, it is getting distributed to partner and 60,000 is the distribution. So if you don't put it here, directly you can put it in partner's capital account only as by bank. Sorry, not by bank, by JLP. By JLP you can directly put, effect is same. Are you getting this? Yes. See the partner's capital account. Only Rahul and Rohit they have asked you to prepare. Remaining is not there. Okay. Ram is having loan account only directly. Opening balance, no reserves. This is the revaluation. Remaining revaluation, where will it go? 30,000 will go to whom? It will go to Ram, no? Only 20 and 10 came over here. This is the capital adjustment. This is the capital adjustment. This is to Ram's capital. What is this? Goodwill. Goodwill. Remember in the question, how much was the goodwill? 1,80,000. What is Ram's share? Ram's share is 3:2:1. So 1,80,000 into 3 by 6. That means Ram's share is 90,000. That will be given by other two partners, no? In their sacrificing ratio. Gain ratio. Gain ratio came to 1:2. That is why it is 30,000 and 60,000. You have to calculate gain ratio. I'm not calculating that. Old ratio minus new ratio, you will get it. Okay, this is the situation for this. Now this you have to calculate. Now see Ram's loan account. What happened to Ram's loan account? How did they get 2,10,000? Half will remain, half will go. So half will remain, half will go. Now one thing I wanted to check. See Ram's account. How much is it? 3 lakhs. That means 3 lakh was there. Okay. What was Ram's share of JLP? 30,000. Ram's share of JLP was 30,000. What is Ram's share of goodwill? Just now we calculated. 90,000. Total amount of Ram is 4,20,000. In that 50% is paid. So 2,10,000 is still there. That is why in Ram's account, can you see loan account is showing 2,10,000? Loan account half is paid, half is remaining. Is it clear? Yes. Cash and bank account you can see 2,10,000 what you have paid is gone from bank. Opening balance. You got 60,000 from JLP. That is the 60,000 over here. And these two partners are bringing money to make their capital proportionate. Capital proportionate point we have seen 2 times already. You have to see the balancing figure. You have to see how much is required. Difference amount you have to bring. Clear? Balance sheet, I don't think there is any problem. See, new capital, I told you 3 lakh will be. Remaining things and all after revaluation only. So you will get this thing. Gaining ratio also they have calculated. Total goodwill 90,000. We had calculated that. Okay. Ram's capital account, can you see? 30, 60, 420, 420, 210 went, 210 remained. This is what we had discussed that time. Okay. Simple. It is simple question. What you need to focus in this question is only on JLP is one new point and then capital proportionate. Is this clear? Yes. Now, some questions are there, capital proportionate, where we have to make one partner's capital as base. Here we are not making any partner's capital as base. Before the capital was 6 lakhs, capital is shared by 3 partners. Now they told capital should still be 6 lakh in the new ratio, 1:1. Clear? Yes, that is your 15th question. Now you have 16th question, one more from practice only. Everyone is battery out because of partnership. Very important, man. 20 marks is not a joke. 20 marks if you get it right. And you know what is the best part? They also know once again. They also know that people are skipping partnership. So they will give easy question from partnership. If you notice in the last 3-4 attempts, most of the partnership questions are easy only. One death of a partner question is there, which is difficult. Okay, but that also was there in practice questions. Okay, let's begin. When will you start depreciation? First we'll finish partnership. Yes. We'll go to question number 16. Question number 16 of partnership. Okay. Now, most of the things which is there in partnership, we have already covered. So, the real twist or new twist which we are seeing, that only we will discuss. Clear? ABC were in partnership sharing profits and losses in the ratio of 3:2:1. The balance sheet of the firm as on 31st, I think there is a typo here, 31st March to 2022. 31st February, no, because in February there is no 31st. Okay, 31st March to 2022 was as under. You can see the capital, there is no reserve, sundry creditors and 4 assets are also there. Now, A on account of ill health gave notice that he wished to retire from the firm. A retirement agreement was therefore entered into as on 31st March 2022, the terms of which were as follows. Who is retiring? A is retiring. Okay. The profit and loss account of for the year ended 31st March 2022, which showed a net profit of 42,000, was to be reopened. Profit and loss has to be reopened means what? Bring the profit back to P&L. From where? Partners capital account. This is there in one study material, regular question. Why this question I have chosen is because 3-4 different questions with different adjustments, they have merged into one question here. Okay, reopened means what? You have to bring the profit back. B was to be credited with 6,000 as bonus. We have to give 6,000 to B as bonus, which had devolved upon him during the year. The profit sharing basis was to be revised, and the revised ratio is 2:3:1. 2:3:1 from 1st April. What is the profit sharing ratio actually? 3:2:1. But this is only for information. What is the profit sharing ratio now? 2:3:1. So you will bring the profit back in 3:2:1 and distribute the profit again in 2:3:1. Is this clear? Bring the profit back in the ratio, give the bonus, remaining profit distribute in the correct ratio. Is this clear? We can sort that problem out. Question number 2, right? Oh, they have asked journal entries. Yes. See the journal entries over here. First, you are bringing the profit to P&L adjustment. Can you see 42,000? This is in the ratio of 3:2:1. Partners capital account is debited. Why? You are removing from capital account and putting it back to P&L. Then what you are doing? You are giving bonus to one partner. Who is that one partner? B. So P&L adjustment to B's capital account. You are giving bonus. So out of 42,000, if you give 6,000 bonus, you will be left with only 36,000. But this 36,000 will not be in the ratio of 3:2:1. It will be in the corrected ratio. Corrected ratio is 2:3:1. This will be in the ratio of 2:3:1. Can you see 12,000, 18,000, 6,000? 2:3:1. This was the first adjustment. Till here sorted. So this is there in one study material illustration question. Okay, bring the profit back in old ratio. Give the bonus. Then give the profit in the corrected ratio. Is this clear? Now, after that, what did they tell? Goodwill was to be valued at 2 years purchase of simple average profit of the last 5 years. Simple average profit. Profit for the years are given. 5 years profit they have given. Simple average profit they told. Anywhere did they tell you about any rectification? No rectification. Did they tell you about any interest on capital? No interest on capital. So what you will do? 15 plus 23 plus 25 plus 35 plus 42. The whole thing divided by 5 years. What is the average profit? 28,000. This is the goodwill. So after dividing, right? Yes. This is the average profit. How many years purchase? 2 years. So 28,000 into 2 will become 56,000. This is the goodwill of the firm. Goodwill of the firm. What is A share in this? A share is 2/6. Here. We have to see the ratio 2:3:1, not the old one. 2/6. Can you give me the value? 18,667. We'll check what is the situation. Can you see over here? Where is the goodwill? See goodwill entry. A, B's capital account debited, C's capital account debited to A's capital account. Obviously, this will be in sacrificing ratio. You have to calculate sacrificing ratio. Clear? Now, after that, fixtures are to be revalued at 39,800. Provision of 2% was to be made for doubtful debt. Remaining assets will be at book value. Remaining assets to be taken at book value. Not all the assets remaining at book value. So fixtures at 39,800. What is the value of fixtures now? 30,000. That means 9,800 is the profit. How much is the provision? 2%. What is the sundry debtors? 90,000. 2% will be 1,800. That means can you see net profit of 8,000? Net profit of revaluation is 8,000. See what they have done. Everything they have stuffed into one entry only. Fixtures account debited 9,800. Provision for doubtful debts 1,800. A's capital, B's capital, C's capital. This is in the ratio of 2:3:1. Can you see 2:3:1 over here? In the exam, don't do this circus. In the exam, what you do? Pass multiple entries. What you will do? Fixtures account debited to revaluation account. Revaluation account debited to provision for doubtful debt. Then revaluation account debited to partners capital. Don't do all this. This they are doing only in the study material. They are not doing in the suggested answers. Clear? Don't go follow this in the exam, because in suggested answer they will do nicely. Then they will not give the marks. Okay, this is sorted. Now, see over here after that. Amount payable to A shall be paid by B. Amount payable to A shall be paid by B. So now, what is the amount you have to pay to A? 1,50,000 is there, correct? Take 1,50,000 in your calculator. Did we pay anything for A? We removed 21,000 here. So 1,50,000 minus 21,000, correct? Then what we did? We gave 12,000 here plus 12,000. Then what we did? We gave 2,667 plus 2,667. 1,43,667. Then what we did? There is one goodwill share also. 18,667. 18,667. 1,62,334. Can you see over here? Clear? When it is journal entries, getting the balance is little difficult because you have to see journal entries. If it is partners capital account, you will just calculate balancing figure. You will get the balance. 1,62,000. Who is giving? They told B is giving. So can you see A's capital account is debited and it is transferred to B's capital account. Clear? That is it. Now see over here. This much we have finished. Amount payable was done. Now B and C agreed as between themselves to continue the business sharing profits and losses in the ratio of 3:1. New ratio is 3:1. Because of this new ratio only you will get the sacrificing ratio. So old ratio is 2:3:1 and new ratio is 3:1. You have to calculate based on this. And decided to retain the fixture at book value. Fixture we had increased, will continue at that value only. And increase the provision for doubtful debt to 6%. How much was the provision for doubtful debt? 2%. 90,000 into 2% we have already calculated. Now they are increasing it to 6%. So what we will do? 90,000 into 4%. Why 4%? 2% is already done. 4% we have to create. That will be basically how much? 3,600. This will be a loss. Correct? If you are increasing, it will be a loss. Loss will be borne by whom? It will be borne by the continuing partner in the ratio of 3:1. You can see this entry now. B's capital account debited, C's capital account debited to provision for doubtful debt. Can you see this is there in the ratio of 3:1 only? Are you following this? Okay. After that, nothing. You are required to pass journal entries and prepare balance sheet and all. Balance sheet you should not have any problem. This should be it. Partners capital account, they have asked whatever is there in the journal entry. Here you are doing the posting. Whatever is there in the journal entry which we just discussed, we are doing the posting. Cash account, balance sheet, I think you should be able to manage. Goodwill we have just calculated that time. Sacrificing ratio, I know you have to calculate in every question. There is no other option. This is your retirement question. Simple. Only thing is too many things. I will tell you exactly what is the new thing in this. New thing is this 6%. How you can make mistake? Take 6%. That is one mistake. Take 4%, but don't know what to do. What is the entry for that? If you do provision for doubtful debt, it's a loss. Loss will be shared by partners. Which partners? Only B and C, because after A goes, they are doing this. Is this clear? That is one very important thing that you have to remember. I don't think other than that there is any problem. This is one now. This is one problem. This is one problem. Bring the profit back in the ratio 3:2:1. Give the bonus. Then distribute the profit in the ratio 2:3:1. Is this clear? Yes, that should be it, guys. One more retirement question is there. December 23 exams. 10 marks. This was asked for 10 marks. After this, I think we are going into death only. Now, what we will do? Retirement, no issues, no? From the material of retirement, any issues are there? No. So, can we delete this? Yes. Done, done, or done. Now, what next we have to focus on? Exam question, December 23. I think it is there over here. What is the name of the partners? XYZ. We'll search. I think somewhere at the end it was, no? See, PQR in partnership sharing profits and losses. Can you see one 5-mark question was already there in that exam? Yeah, here it is. XYZ sharing profits and losses. 10 marks. Revaluation account, partners capital account, balance sheet. Little things they have asked. Okay, 10-mark question. See, 10 plus 5, 15 was the weightage before. But in new scheme, the weightage is gone all different only. 20, 22, 25, we don't know. Because just I told you yesterday. 25 marks, company accounts, 22 marks, partnership. 47 marks, only 2 chapters it was covered in the previous exam. One 15-mark question, one 10-mark question, company accounts. One 10-mark question, one 12-mark question, partnership. 47 marks. If you study these 2 chapters, 47 marks. NPO was there again. Incomplete records was there again. Yeah. Can you see so many things? Module 2 is like heavyweight. Okay. Now, we'll go into 17th question. 17th question. X, Y, and Z were partners sharing profits and losses in the ratio 5:3:2. No problem till now. Clear? Balance sheet is given. Can you see general reserves? That means this has to be distributed in the ratio of 5:3:2. Is that correct? Yes. Now, assets. Can you see JLP in the balance sheet? No. Yes, sir. No. Yes. Y retired from the business on 1st April on the following terms. Whatever revaluation points are there, those are simple. To appreciate building by 20%, depreciate machinery. No problem there. Provision for doubtful debts to be created. No problem there. Goodwill of the firm is valued at 1,60,000 and goodwill is not to be raised in the books of accounts. New profit sharing ratio is given. Who is the partner who is retiring? Y. So 1,60,000 into what is Y's share? Y's share was 3/10, right? 5:3:2. Y's share was 3/10. 48,000 is Y's share of goodwill. This will be given by X and Z in their sacrificing ratio. You have to calculate what is the sacrificing ratio. Okay, you have to calculate sacrificing ratio. In that you will give it. Entire sum payable to Y should be brought by X and Z. For this point only this question is there. For this point only we are discussing this question in the marathon. See, should be brought by X and Z in such a way to make their capital according to new profit sharing ratio. Balance of Y to be paid immediately. How much to bring? How to bring? Nothing. They told bring. They told bring. Can you see? Again I am focusing on this point. Entire sum payable to Y should be brought by X and Z. In such a way, they didn't tell bring it in capital ratio. In such a way to make their capital proportionate. Oh, are you getting my point? Okay, now you see over here. How much is Y? 2,55,000. Plus what we are giving him? His goodwill share of 48,000. His goodwill share of 48,000. Clear? Then general reserve is 25,000. 25,000 means what is his share in that? 5:3:2. 3/10. So that is going to be 7,500. This is the revaluation profit share. Correct? I mean, sorry. General reserve share. Apart from that, revaluation profit. That we have to check. That there is no problem at all. Can you see? One building is getting appreciated. Depreciation on machinery. Provision for doubtful debt. Y's share is 900. Y's share is 900. So that means that 900 also has to be given, right? 900 revaluation profit. Till there is no issue at all. Okay. Now if you notice Y's capital account. Sorry. Can you notice Y's capital account? Only Y you notice. See 2,55,000, 20,000 and 28,000. This is the 48,000 goodwill. Two people are giving it. 900 is revaluation. Reserve share is 7,500. Can you see that is it? 3,11,400 only. 3,11,400. Are we transferring it to loan account? No, entire amount is paid. We are not transferring anything to loan account. Entire amount is paid. Clear? Now, how to pay? That is the question. How to pay is the question. Now, do you remember once upon a time, we had one formula called as asset is equal to liabilities plus capital. Clear? Asset is equal to liabilities plus capital. You have to calculate assets. You have to calculate liabilities. That time you will get the capital. That capital should be proportionate. That is your required capital. Then you will see the balancing figure. That will be your existing capital. Can you see? Here balancing figure is there. Existing capital of these two guys. Required capital you have to calculate. How will you calculate that? Okay, they have, let's see if they have shown the calculation. No, they have not shown the calculation. They have directly given the answer. Now we have to show the calculation. Okay, I will show you the calculation. Now listen. Listen. Building, is there any revaluation? Just tell me that. Building, how much? 20% more. So can I take the new building value as 2,40,000? Clear? Machinery, is there any depreciation? Yes, 5%. So 3,50,000 minus 5% you do directly. 3,32,500. Correct? Debtors, is there any issue? We are creating provision for doubtful debt. So 1,95,000 minus 10% provision will be 1,75,500. Clear? Now, stock, any change? No. 1,05,000. 1,05,000. What about bank? What about bank? What about bank balance? I think in the study material, there is a similar question where they have told the bank balance should be maintained at 50,000 or something like that. Okay. If you notice this question, and when we go to balance sheet, bank is still having 25. That means that 25 we are not going to remove. Why we are not going to remove? See over here. Entire sum. This is the king here in this question. Entire sum payable to Y should be brought by X and Z. That means from the existing bank balance, 1 rupee we are not removing. Is this clear? So bank balance will remain at 25,000 only. Clear? General reserve is gone. Sundry creditor, no change, 30,000. Can you total this and minus this? 2,40,000 plus 3,32,500 plus 1,75,500 plus 1,05,000 plus 25,000 minus 30,000. Did you get 8,48,000? Do you agree that that should be the capital? 8,48,000. It should be in what ratio? It should be in the ratio of 5:3. Can you calculate 5:3? 5,30,000, 3,18,000. Did you understand how we calculated this? Now, check. They have not shown the calculation, okay, in the suggested answers. So you have to understand directly. 8,48,000 into 5 by 8, 8,48,000 into 3 by 8. Is this clear? Now, understand this. So your capital will be 5,30,000 and 3,18,000. How to find out how much money to bring, how much money to take? That you have to calculate the balancing figure. Clear? All the things that you have put, when you calculate the balancing figure, you will get to know that this person has to bring 1,11,000, this person has to bring 2,04,000. Is this clear? Are you following this? Any doubt with this? Anybody has any doubt? This is the king. We have seen 3 types till now. 3 types. What is the first type? Keep the partner's capital as the base and calculate the capital. That is a reconstituted capital. Second type, what we have seen, they only have told the capital. Capital is 3 lakh. It should be in profit sharing ratio. What is the third type we have seen? Old capital was 6 lakh. They told future also capital should be 6 lakh only. So it became 3 lakh, 3 lakh. This is the fourth type. They just told money should be brought. How much? Nothing. Capital should be proportionate. So we go back into the basics of accounting. Asset is equal to liabilities plus capital. Asset we know. Liability we know. Balancing figure will be capital. That will be in proportionate ratio. Okay, when we get the required capital, difference will be the amount that is being brought or amount that is being taken. Is this clear? 10 mark question. Looks simple, but last one is a bouncer. Not a bouncer, it is there in study material. It is there in study material. Okay, nothing like new. Yes, I think that should be done. That should be it. Okay. Now, what we will do is, I don't think we have enough time to finish death and dissolution. So what we will do is, we'll do dissolution today, death we will see tomorrow. Okay, two problems are there. See, ultimate problems, okay, these two. Death of a partner, this part, there's practice question. And then there is one death of a partner, 20 mark question, which is asked in June 2023. Both are deadly questions, which we will do tomorrow. So tomorrow when we start, we will do death, then we'll go to depreciation, and then we'll move into company accounts. Tomorrow directly we'll go into company accounts. Okay. Tomorrow is day 3, so we should try to go into company accounts. Then we have so many things, NPO, all those things. Final accounts. Final accounts and incomplete records, in that I think they can ask only one.
Yes, sir.
You know why? Because in incomplete records also, you are doing trading P&L balance sheet. In final accounts also, you are doing trading P&L balance sheet. But in incomplete records, you are doing trading P&L balance sheet after doing the completion. So that means they will ask directly incomplete records only. From final accounts, if they ask, they might ask manufacturing account. We don't know. Don't have to worry too much. Death of a partner tomorrow. ICA, we don't know. Yes, we are not doing any prediction with ICAI. Even IPL match, if we want, we can do prediction and we can do some betting. But ICA prediction of question paper, we are not going to do. IPL match, 2 options, win or lose. 56 matches are there. If you simply close your eyes and bet, close your eyes and predict also, at least some 20-25 you will get it correct. Okay. But ICA, no. What you think that it will come, that only will not come. Okay. So simple. See, I am telling you one thing. You are paying course fees. For what? Getting all the study material, everything to study that. Do that. You are paying exam fees. For what? Going and writing the exam. Do that. Clear? Setting the exam paper. Somebody else is getting money for that. They will do. You don't worry. Correcting the answer paper. Somebody else will get money for that. They will do. You don't worry. Why I am telling is because students have this problem. They will tell, I will get 17 accounts, I will get 50 in this, I will get 40 in that, I will get 40 in this, 200. Okay, done. Are you correcting the paper? No. So don't do that prediction only. Then students also will tell, last time they asked this for 10 marks, this time for 5 marks, this time they will ask it for 10 marks. Are you setting the paper? No. Then you don't do that. What you are doing, do that. Enough. For that there are people. Okay, yes. Now, dissolution. I think the practice question, no? Yes, 20th. Practice question number. Did I miss something? What is the question number? 3rd. What is the question here? Amit Sumit Kumar. Yes. Thank you. 3rd one. 3rd one is what we are going to focus on now. Okay, listen. 20. Dissolution. First part of dissolution. Then second part is piecemeal. First part is dissolution. Okay. Depreciation we will do tomorrow. These guys, I don't know why he is worried about depreciation. Yes, Amit, Sumit and Kumar are partners sharing profits and losses in the ratio of 2:1. Clear? Dissolution, simple dissolution. First job, what I told you, emptying the balance sheet. First we have to empty the balance sheet. The partners decided to dissolve the partnership on 31st March 2020 when the balance sheet was as under. You will read anything after this only when you finish emptying the balance sheet. After this, whatever is printed, you will read only after you finish emptying the balance sheet. Clear? Now see, land and building, plant and machinery, furniture, investment. All this should go to realization account. Can you see? Land and building, plant and machinery, furniture, investment. So here if you credit, there if you debit, it will become 0. Okay. Now, book debt when you are putting, you have to be very careful. Book debt is not 54,000. Book debt is 60,000. Provision is 6,000. So, how will you show that? Here it will be 60,000. Here it will be 6,000. Is this clear? Only for presentation, I am bringing it this side and showing. Actually, it is 2 different items only. Okay. Next, after that you see stock 36,000. Did we put stock over here? Yes. Gone. 36,000 gone. Bank you are not going to put. Why? Bank you have to keep separate. So bank balance is one thing. 13,500 you will keep it separate. Clear? Capital withdrawn. That means one partner is having debit balance in the capital account. So if you look at the capital account of partners, can you see 32,400 debit balance? Clear? Other partners you see, they are having credit balance only. So there is 55,200, 55,200. Is this sorted? These two things. I am only emptying the balance sheet. I am not seeing the adjustment also. I am only emptying the balance sheet first. Now, reserves are there. Reserves will be shared in what ratio? This 2:2:1 ratio. So what we will do? See over here, buy reserves. Clear? That is also gone. That is also gone. Next what? Kumar's loan. What we will do? Who is Kumar? Partner only, no? Put it to Kumar's capital account. So see over here, Kumar, 15,000. That is also gone from the balance sheet. Now, next thing is loan from D. Who is D? We don't know. That means this has to go to realization account. See the realization account, loan from D. Clear? Then trade creditor, bills payable, outstanding salary. All this will go to realization account. Trade creditor, bills payable, outstanding salary. Now the balance sheet which is given in the question, do you agree that it is absolutely gone? Whatever is there in the balance sheet, it is there only in three ledgers now. What is the three ledger? Realization account, bank account and partners capital account. Realization account, partners capital account and bank account. After this, when we are reading the question, whatever adjustments are there, it should be between these three only. If in my entire books of accounts, I have only three ledgers, any journal entry I pass, it should be between these three ledgers only. Are you getting my point? Okay, now we will see the effect of that. Realization expense amounted to 18,000, of which 3,000 was borne by Amit. Realization expenses how much? 18,000. Out of that, how much Amit is bearing? 3,000. That means, see over here, realization account debited to bank account is 15,000. Remaining 3,000 is to Amit. 15,000 went from bank, 3,000 went from Amit's pocket. So we have to give Amit, no, because Amit paid will not sit quietly. Okay, so what will happen over here? See over here. In bank account, can you see? Oh, they have done clubbing of everything. In bank account, we have 15,000. Is this 15,000? We know what that 15,000 is. And see in Amit's account. Can you see 3,000? Whatever is ticked, that is the one which we have already addressed. Clear? Now, creditor agreed to take furniture of book value 12,000 at 10,800. Creditor told, I will take the furniture. How much is the value of the furniture? 12,000. But I am going to adjust only 10,800. You know what is the entry for this? No entry. No entry. Why? Creditor is also in realization account. Furniture is also in realization account. If you are passing entry, you should pass entry within the realization account. Is this clear? That is why for this, there is no entry. But the rest of the creditors were paid off at a discount of 6.25%. How much is my creditor? 30,000. Out of that, how much is paid? No, only 10,800. 10,800. Creditor agreed to take furniture. Value of furniture is 12,000. If you go to a shop and told, if you tell them no, exchange, I will give my furniture, exchange. In my books, furniture is showing 50,000. But the shop guy will do his own valuation. Shop guy is telling this I am paying only 3,000 rupees. Clear? Possible? Same way, creditor agreed to take over the furniture of book value. Furniture book value is 12,000. But take over at to what value? 10,800. Add to what value? 10,800. So 30,000 minus 10,800, you will get 19,200. 19,200. How much is the percentage discount? 6.25%. Remove 6.25%. 18,000 is paid to creditor. Do you agree? 18,000 is paid to creditor. What should be the entry? Realization account debited to. Where is our creditor? To bank. Can we find 18,000 anywhere? Oh, okay. Sorry. Here. Creditor account. Okay. Realization account debited to bank. Did we understand how to get this 18,000? Entry simple. Realization account debited to bank. This 18,000 in bank also we will find. Can you see this 18,000 here? Yes. Bank, they have put the total. That's why I am marking the items. Is it clear how we calculated the creditor? Okay. Now have a look at this. Other assets realized as follows. Furniture remaining taken over by Kumar at 90% of the book value. How much is my furniture? 25,500. Out of that, 12,000 went. Are you getting my point? What they took was their value. But from my books, what is the furniture that went? 12,000 went. So 13,500 is the remaining furniture. It is taken by partner at what value? 90%. Can you calculate 90% of this? 150. Who took? Partner took. What should be the entry? Partner's capital account debited to realization account. Partner's capital account debited to realization account. 12,150. Can you see over here? 12,150. Kumar's capital account debited to realization account 12,150. Is this clear? Now understand this. Furniture what went from your books is 12,000. But what they agreed value was 10,800. So creditor 10,800 minus. But furniture only 12,000 minus. This is the trick, very important. I think I'm losing my voice. Next, let's continue. Stock realized 120% of book value. What is the stock value here? 36,000. 36,000 into 120%. 43,200. Are we getting 43,200 rupees? Yes. What is the entry? Bank account debited to realization. 43,200. Can you see this over here? Here also bank they have put the total. Okay. They have put total only in the bank. Did you get this 43,200? How we are getting? Yes. Next. Book debts. 12,000 of the debts proved bad. Okay, bad debt gone. Forget it. Remaining were fully realized. What is the book debt now? We are not going to take 54. One more mistake what we can make. Book debt is 60,000. Out of 60,000 what we are going to do? 12,000 we are going to remove. 48,000 fully realized. Entry. Bank account debited to realization account. So, can you see over here? Bank account debited to realization. Debtors 48. Okay, bank account it will be added. Now, next. What next? Land and building realized 165. Luckily, one number at least they gave directly. So, what is the entry? Bank account debited to realization account. 1,65,000. Can you see these three amounts? Total is 2,56,200. That is there in the bank account as 2,56,200. They put the total. That's it. Okay. Next. Investment taken over by Amit at 15% discount. How much is the investment value? 15,000. 15,000 minus 15%. 12,750. Who is taking? Amit. What is the entry? Amit's capital account debited to realization account. Can you see 12,750 in Amit's capital account? And that is there in realization account also 12,750. Clear? Once we empty the balance sheet, can you see all the entries are happening between three ledgers only? Yes. Next, after that, for half of his loan, D accepted plant and machinery and 7,500 cash. Remaining amount was paid at a discount of 10%. Oh. What is loan of D? 120. 120 is the loan. In that 60,000 is one half, 60,000 is another half. For this 60,000, first half, he is going to take plant and machinery. Plant and machinery is 45,000. For this, no entry. For this, there is no entry. Why? Asset is also there in realization, liability also realization. But I am also going to pay 7,500 cash. For this, we have to pass entry, no? Because cash is outside the realization account. So you have to pass entry realization account debited to cash. Okay. This 60,000 what? Other 60,000 what we are going to do? It is going to be paid off at a discount of 10%. So minus 10% if you do, 54,000. This 54,000 I'm going to pay and this 7,500 I'm going to pay. So total 61,500 I'm going to pay. Is this clear? Look at the solution. D is loan 61,500. 61,500. And that is there here also in bank account. See here they have shown separately, okay? 54,000, 7,500. Did you understand how we calculated that? Yes. Okay. First half we are taking plant. Okay, take the plant, no entry because plant and loan both are in realization. But you are taking cash. Cash is outside realization. So realization to cash. Then again you are taking cash. How much? After 10% discount. So total is 61,500. Any doubt with this? Okay. Next, what happens? Bills payable were due on an average basis of 1 month after 31st March, but they were paid immediately on 31st March at 6% discount. Now in bills of exchange, you know, right? Whenever you pay early, you get rebate. That is why you are paying 1 month early now. So you are getting rebate for 1 month. How much is the bills payable? 12,000. 12,000 into, what is the percentage of rebate? 6% into 1 by 12. How much you are getting? 12,000 into 6% into 1 by 12. 60 rupees rebate. That means 11,940 rupees I am going to pay. Correct? Yes. 11,940 bills payable. And it is there in the bank also. 11,940. Is this clear? Okay. Now, after that, one more thing is there. Last. Outstanding salary, yeah, because trade creditor loan from D is gone, paid, trade creditor is paid, bills payable is paid, one outstanding salary is there, no, that we have to pay. Outstanding salary, they didn't tell discount, nothing, full 7,500 we have to pay. Can you see the 7,500 over here? Realization account debited to bank account, and in this bank, this one number 7,500 was missing, that is also there. So now total they have put over here. Is this clear? After we do this, can you see? In the realization, all the numbers we have discussed, all the numbers. What is remaining? Profit or loss. Profit or loss is transferred to partners capital account. They got some profit. They have transferred it to partners capital account in their profit sharing ratio. I think the profit sharing ratio was 2:2:1. First line of the question. 2:2:1. So that you can see over here, 9,000 this everything. So partners capital account also, all the things are discussed. Here also all the things are discussed. What is remaining? Only this one to be discussed. This one how to discuss? I told whatever money is there in the bank. See, this is the balance. This is the amount we have discussed. This is also discussed. So now what happens? Only thing is money is remaining. How to worry about the money? How to calculate the money that is remaining? Any partner has credit balance. We have to give them money. Any partner has debit balance. We have to take money from them. Can you see over here? Amit and Sumit. Sorry. Amit and Sumit, they are having credit balance. That's why they are taking 79,314 and 89,064, which is there in the bank account also. So Kumar is there. No, Kumar is having debit balance. So he is bringing 12,618. 12,618. Clear? Nobody is insolvent. If somebody was insolvent, Garner versus Moore would come. Nobody is insolvent. So everybody is bringing money. Not everybody. Kumar is bringing money. Others are taking money. That's all. Is this clear? So if they ask you simple question from dissolution, this can be the one, or if not this, many adjustments of this can be asked. Basically every possible thing is covered in this question. See, they have shown the calculation for bills payable, for D's loan, trade creditor, furniture taken over. That's it. Okay, that is one mega question of dissolution. Next, we have one more dissolution question. I don't think we have time. Okay, I think that should be enough. It will become what do you say? Over digestion. It will become. Okay, and I feel if I talk for 15 more minutes, I'll lose my voice only. So we have to preserve it for tomorrow. So tomorrow, whatever left over in partnership, we'll finish it off. Dissolution. This one question is there, and then we have piecemeal and death of a partner. 2 questions are there. We'll finish partnership. If at all we have, we'll see, depending on the situation, either we'll go to depreciation or we'll go to company accounts. Because company accounts is one more heavyweight, we'll go to company accounts only. Okay, depreciation we can do later also. Yes, that's it for the day, guys. Okay, let's continue with the Partnership. Dissolution. We have finished one question yesterday. We'll continue with the dissolution part. Question number 21. This is also a practice question. Yesterday we saw one practice question, so we will see the other practice question today from dissolution. This is thin, fat and short. Okay. Now, thin, short and fat, wherein partnership sharing profits and losses in the ratio of 2:2:1. What is this 2:2:1? This is the old profit sharing ratio. Okay. On 30th September 2022, their balance sheets was as follows. So you have the liabilities, you have the current account also, but can you see FAT is having debit balance? FAT is having debit balance. That's why it is showing under negative over here. It's showing negative. Creditors, bank OD, then premises, fixtures, plant, stock and debtors. Okay. Thin decides to retire on 30th September 2022. What is this? Question is actually dissolution, but they have spoken about retirement. When they have given the balance sheet, they have given the balance sheet on 30th September and they're telling on that day Thin is deciding to retire. And FAT appears to be short of private assets. That means FAT does not have any other private money. There is no asset at all. Short decides that he does not wish to take over Thin's share of partnership. So all three partners decided to dissolve the partnership with effect from 30th September 2022. Totally unimportant paragraph. Simply they told story that one person is retiring, other person is not interested, one more person does not have any money. Finally, basically what's happening, all are retiring. I mean, all are dissolving the firm. It then transpires that FAT has no private assets whatsoever. They already told once, right, FAT appears to have shortage of private assets. Now they are telling FAT has no money at all. If at all there is loss, others have to bear it. Clear? The premises are sold for 60,000. Plant for 1,07,500, fixtures, all this they have told. The bank overdraft is discharged also, they have told. You are required to write up the following ledgers: realization, partners capital account and partners current account also. Partners current account, partners capital account, automatically you will need bank account also. You have to check if there is bank. There is no balance here, that means they are using bank OD. Clear? So first thing what you are going to do, empty the balance sheet. Our first job is empty the balance sheet. See, premises, fixtures, plant, stock and debtors. All this should be transferred to the realization account. Premises, plant, fixtures, stock and debtors. Everything is transferred to realization account at book value. At book value only you are going to transfer that. Then only it becomes zero. Clear? After that, sundry creditors you are going to transfer. Can you see sundry creditors over here? That's it. Then where will bank go? See, bank OD will have the opening balance. By balance brought down because it is the liability. Clear? So bank OD is also transferred. Then what do we have? After bank OD, we have current account. But current account, be careful. Two are having credit balance. One is having debit balance. Two are having credit balance and one is having debit balance. Can you see over here? Partners current account. Two are having credit balance. One is having debit balance. This is your starting point. And capital account, obviously all are having credit balance. So with this, do we agree? With this, do we agree that the entire balance sheet is empty? We don't have to look into balance sheet only. Now, what are the ledgers we have here? Partners capital account, partners current account, realization account, and bank OD. Bank OD. 4 ledgers are there. Whatever we are going to do anymore, it has to be between these 4 ledgers only. Clear? Now, see the first thing. The premises is sold for 60,000. So what should be the entry? Bank account should be debited to realization account. Can you see 60,000 in the realization account? And you should also find this in the bank account. Bank account, okay, they are giving the total. So we'll see the total later. Next, after that, plant is sold for 1,07,500. So plant 1,07,500. Can you find that here? Bank account debited to realization account. Next, after that, the fixtures realize 20,000 and stock is acquired by another firm at a book value less 5%. Fixtures realize 20,000. So look at the fixture value. Directly 20,000 we are getting. Clear? And stock, what did they tell? At a discount of 5%. See the stock, 43,200. Take 43,200 minus 5%. 41,040. See this 41,040 in the realization account. Clear? Yes. After that, they have also told debtors realize 45,900. You will find debtors also. So the total amount that we have received is 274,440. This total is there in the realization, in the bank account, 274,440. Clear? So one by one, all the assets are sold and you are getting money. Yes, getting fast. Next, after that, what do we have? Realization expenses amounted to 4,500. Bank overdraft is discharged. That means you are paying the bank OD. Creditors are also paid in full. So what will happen over here? See over here, realization account. You are paying the creditor, you are paying that expense. Two things are gone. Creditor and expense you have paid. That will be there here. 84,650 and 4,500. Two things are gone. Clear? With this, actually, if you look, the question is done. Question is done. Whatever they have asked in the question, done. Sunday creditors we are paying, bank OD automatically will get adjusted when money comes. Clear? Now what we have to see, you are required to write up the following ledgers using Ghana versus Murray. That means one person is obviously insolvent. Who is insolvent here? FAT is insolvent. Clear? Now what you will do, obviously when you finish this, first step is closing the realization. Can you see realization? All the things we know from where the amounts have come. One by one, everything we have marked. Clear? Realization, we have a loss. It will be in the ratio of 2:2:1 because their profit sharing ratio is 2:2:1. Now this realization you see over here, it is going to come to the partner's capital account. Oh, sorry, partner's current account. Now what they are doing, partner's current account. I told you yesterday when we were discussing dissolution, if at all realization loss is there, solvent partners will bring money immediately. Can you see solvent partners, thin and short, they brought money. They brought money and put it into partner's capital account. Are you getting my point? Here actually it doesn't matter. Partner's capital, partner's current. Ultimately everything will become zero only. Okay. This is the situation. This was a realization loss. Two partners are solvent, thin and short. So thin and short will bring money to make their realization loss nil. Clear? For their realization loss, they are bringing money. After that, what are you going to do? Realization account closed. See, everything we have discussed in this. What we are doing, whatever is there in the current account, the balance we are just going to transfer to the capital account. Because we want to close. Basically, we want to close. 2916 transferred over here. 21608 transferred over here. This person has credit balance. So that is transferred over here. This is clear. Current account is closed by transferring to capital account. Finally, what is our job? To close capital account. But we can't close capital account directly. What we are supposed to do first is, we have to send the partner who is insolvent. One partner is insolvent. No, FAT is insolvent. Can you see FAT's capital account? 20,000 is there over here. But 21,608 is there over here. That means 1,608 is the deficiency. Who will bear that loss? They might tell questions where they might tell 25 paise in a rupee is brought by FAT. Here they told FAT's private assets, nothing is there. So full 1,608 will be borne by whom? Solvent partners in what ratio? Capital ratio. Capital ratio of 8:5. Calculate 1,608 into 8 by 13. Can you see you are getting 990? Other person is 680. Can you see it is shared in capital ratio? Why capital ratio? Because of Ghana versus Murray. Not because of any other reason. Ghana versus Murray. Clear? Once you are doing that, FAT is gone. Who is remaining? Thin and short. Thin and short, what you are going to do? Check the capital account. Whoever has credit balance, you have to pay them money. If they have debit balance, you have to take money from them. Both are having credit balance only because see 80-50 is there over here. Both are having credit balance. So both are going to take the money and this is the amount that is going from here. Clear? And see here, thin's capital account, short's capital account. This is the realization loss which we had discussed that time. Entire thing is done. Here they have even given a note that it is in the ratio of 8:5. Ghana versus Murray. Clear? So Ghana versus Murray, important tip I will tell you. Procedure is same. What is the procedure? First empty the balance sheet. All the assets and liabilities transfer to realization account. Partners current account balance, put it into partners current account. Reserves distributed. Partners capital account, also put it into partners capital account. Then after that bank account, you keep it in bank only. Then what you are going to do? When you sell, pass the entry. When you pay, you pass the entry. After doing everything that is given in the question, first you close realization account. If it is having profit, no problem, distribute the profit. If it is having loss, transfer the loss and solvent partners will bring money for that loss. Clear? After that, what you are going to do, you have to close partner's capital account, but because of insolvency, one partner is gone. So which partner is insolvent, close that person's capital account first. If there is any shortage, it will be borne by other partners in capital ratio. After that, what you are going to do, balancing figure. If it is credit balance, pay the money. If it is debit balance, take the money. That time capital account also will be closed. Bank account also will be closed. Is this clear? This should be the procedure that you are going to follow. That was our question on dissolution. Okay. So dissolution, two questions we have seen. One is without insolvency, one is with insolvency. If insolvency is there, the adjustments are limited. If insolvency is not there, like yesterday's last question, every item you have to do the calculation. Clear? Yes. Question number 22. Partnership piecemeal illustration. Okay. What I have done is one question for higher relative capital I have picked and one more question for maximum loss. So we will do higher relative capital first. It should be what? Question number, illustration number 8, I think, no? Yes. Is it the question? Yes. Now, higher relative capital. Now understand the question. A partnership firm was dissolved on 30th June. What is piecemeal distribution? We have discussed yesterday. What is piecemeal distribution? Money is coming part by part. How to distribute that? How to distribute that to outsiders? I don't care. Outsiders you have to pay. No method for them. First you pay them. But when you come to insiders, you have to follow maximum loss or higher relative capital. Now, 30th June. The balance sheet on that date of dissolution was as follows. See what is there. Capital ABC, loan account of B, sundry creditors. Then if you see the asset side, you have assets and then you have cash. Is this clear? Loan account of B, is it outsider or insider? This is insider only. B is one of the partner and sundry creditor is outsider. Clear? Now assets were realized in installment and the payments were made on the proportionate capital basis. Proportionate capital basis means higher relative capital method. Okay. Creditors were paid 29,000 in full settlement of their account. Creditors actually how much you are supposed to pay? 30,000, but we are paying only 29,000 to creditor. Okay. Expenses of realization were estimated to be 5,400, but the actual amount spent was 4,000. So here what happens when they tell that estimate is 5,400, from your first installment you are going to take 5,400 and keep it in the side. But actual expense was only 4,000. This amount was paid on 15th September. The last installment you can see is 15th September. So what you will do in the last installment, that remaining money will be coming into the installment. I kept 5,400, but I required only 4,000. So 1,400 remained. No, that also will be used for distribution. Clear? Draw up a statement distributing cash, which was realized as follows. 5th July, 30th August and 15th September. 3 are there. But the partners shared profits and losses in the ratio of 2:2:1. Okay, here, very, very important. First, you need this. I told you yesterday. First step is what? Divide the capital by the profit sharing ratio. When you divide, see 76 divided by 2, you will get 38. 48 by 2, you will get 24. 36 by 1, you will get 36. You will get the resultant figure. See which person has the resultant figure which is least. Who is having least? Partner B. Resultant figure is 24,000. Keep 48,000 as the base and calculate total capital. 48,000 is for 2 by 5 share for B. Correct? So how much is 1? When you calculate the total capital, you will get the total capital. Okay, just do that. 48,000 into 5 by 2. 1,20,000. Now 1,20,000 is actually the capital. This is distributed in the ratio of 2:2:1. That time you are getting 48, 48 and 24. Clear? That is the way you are going to distribute. Keep the resultant figure. Whoever got the least resultant figure, keep that person's capital as the base and calculate the total capital. Once you calculate total capital, distribute it in the profit sharing ratio. You got 48, 48, 48. This is the required capital. What is the existing capital that we already know? Can you see 76 is there? We require only 48. That means 28 is excess capital. 48 is there, 48 is there. 48 is required, 48 is there. Nothing, no excess capital. 36 is there, we require only 24, 12,000 is excess capital. Actually, this is higher relative capital, but there are two partners now. If I get money which is less, in these two, who is getting first? That I have to know. Okay, so not dependent on this, you have to calculate and see. Again, you have to repeat the steps. What we did, one person is eliminated, B is gone. So now keep two partners. 2:1 is the ratio between those two partners. 2:1 was total, no? Out of that 2 here and 1 here. Okay, so 2:1 is the ratio. Divide this, you are getting 14,000 here. Divide this, you are getting 12,000 here. Who is having least figure? C is having least figure. Keep his capital as the base. 12,000 for 1/3 share. Why 1/3? Only two partners are there. How much is 1? You will get 36,000. Now that 36,000 you have to distribute in the ratio of 2:1. 24,000 for this person, 12,000 for this person. 12 minus 12, nothing is higher. But here if you see, 28,000 minus 24,000, 4,000 is excess. So when you get money, first you have to pay 4,000 to this guy. When you get money, first 4,000 should go to A. Clear? Out of this 28,000, if you pay 4,000, how much will remain? 24,000 will remain. Then you have to give 24,000 and 12,000 to A and C in the ratio of 2:1. When you do that, everybody you will distribute in the ratio of 2:2:1. Are you getting this? Again, I'm explaining, just listen. Okay. See over here. Higher capital was 28,000 and 12,000. In those two, when you calculated, it is 4,000 and 0. So when you get money, first you have to give 4,000 to A. If you give 4,000 to A, out of the higher capital of 28,000, 24,000 will remain. Then you have to give to A and C 24,000 and 12,000 in the ratio of 2:1. When you finish paying all this higher capital, after that, even if 1 rupee comes, it has to be distributed in the ratio of 2:2:1 to all the partners. Are you getting my point? So that is why, see, if you notice, what is the logic of higher capital? A, B and C. Correct? A, B and C. 2:2:1 is their profit sharing ratio. But can you see, A is getting 2/5. He has put 76,000 capital. B is also getting 2/5, but he has put only 48,000 capital. C is getting 1/5. He has put 36,000 capital. So these people, when you compare to their profit sharing ratio, they have put extra money. So give that extra money first, then you give it to everybody. That is the logic of higher relative capital method. Is this clear? Now what you will do? You have to prepare distribution of cash sheet. This is the distribution. What we are going to do over here, see, balance. All the balance from the given balance sheet we have taken. You have to pay creditor, B's loan, everything. Clear? Cash balance. What is this cash balance? Before we sell the asset, I already have money, no, 10,800. But can I use the 10,800? No. Why? They told over here, keep 5,400 aside for realization expense. So if you look at that part, 10,800 minus 5,400, you have only 5,400 left. That you see whom we paid first. We didn't pay B's loan because B's loan is also liability only, but it's an insider's liability. Creditor is an outsider. First you pay outsider. That time you have these balances remaining. Are you following this? Now, see your first installment. You got 25,200. 25,200. What will you do? What will you do? You will pay 23,600. You will not pay 24,600. Why? Creditor is settled at 29,000, not 30,000. See the question. Creditor is settled at, see over here. Creditor is settled at 29,000. So what you will do? You will pay 1,000 less and that 1,000 is discount. Okay, it will be transferred to realization account. We know all how to close. We know. So 1,000 is discount. After you pay this guy, then what money comes? You see, you have paid this fellow. That is B's loan. After you pay outsider's liability, after that when money comes, pay the insider's liability. So after you pay this, we are at this stage. Okay, this is the stage. 8,400 and this is the amount that is payable. Now you see, next time how much money you got? Next time you got 60,000. Correct? When you get 60,000, what is the first thing you are going to do? First you are going to pay the loan. First you are going to pay the loan. Then they have put full amount over here only. They have showed total, everything. How? See the distribution sheet. First you are paying creditor. Then you are giving 4,000 to A. Then you are giving 24,000 and 12,000 to B. After that, what money is there? That is shared in the ratio of 2:2:1. Are you getting this? When you got that second installment, first you will pay creditor. Creditor is done. Which creditor is this? This is basically B's loan. This is basically B's loan. B's loan is paid. After that, you see, first you are giving to A because A had higher relative capital. Then you are giving to A and C 2:1. That is their higher relative capital. After that, nobody is having higher relative capital. All are equal now. That you distribute in the ratio of profits, profit sharing ratio. Clear? And this total is already taken over here. Total is taken. Where is it? Here. Can you see 8,400, 32,640, 4,640, 14,340. Now you see the balance. When you pay higher capital, balance should be in profit sharing ratio, because whoever had higher capital, we paid them. Now you see the balance. It is in the ratio of 2:2:1. Because everybody's extra balance is paid. Now all are in the ratio of their profits only, 2:2:1. Then third installment, you have to be careful. 80,000 you got, but you can't distribute 80,000 out of 5,400 which I kept aside over here. Okay, 4,000 only was utilized. So you still have 1,400 remaining. That 1,400 and this 80,000 together 81,400 we are going to distribute. See, 81,400 distributed in the ratio of 2:2:1. After giving that, still there is some amount remaining. This is called as loss of partners. After giving that, still there is some amount remaining for the partners. That is their partners' loss. Is this clear? So did you understand what we are supposed to do? First, you are supposed to find higher relative capital and keep it in the side. Then you will know whom to give first, whom to give second, and whom to give third. Once you know that, when money comes, just distribute in this order only. Two things which are very critical, which you have to remember. One, this 5,400. They said estimated to be 5,400. So first time when I have money from this, remove 5,400. Then, but out of 5,400, I did not spend everything. I spent only 4,000. So last installment, that remaining money, 1,400, add it to the last installment and then distribute it. Is this clear? Any doubt with this? That is your higher relative capital method. Next, we'll go into maximum loss. This is the next one, maximum loss method. Okay. Now, in maximum loss, we had written the theory, or we had discussed the theory yesterday. Every installment is considered as last installment. And what you have to do, every installment when you get, you have to calculate maximum loss. Whatever maximum loss you calculate, you have to distribute to the partners. After distributing the loss, what is remaining, that is the amount paid. Clear? Here, there is no outer calculation. Inside the distribution sheet only, we will do the calculations. Now, what is the question number 7, no? Yeah, 7. Okay, now understand this. Following is the balance sheet of ABC. When they decided to dissolve the partnership, creditors you have, A's loan you have. Tell me one thing, is this outsider? Is this outsider creditor? Creditor is outsider, no? Yes. A's loan, insider. A's loan is insider because A is partner over here. Then ABC. Sundry assets, cash already 500 rupees I have. Now see over here. Assets realized the following installment. That means 1, 2, 3, 4, 5. 5 installments are there. Can you see one number 1 here written? They are telling, actually that is over here. Expenses of realization were expected to be 500. That means I have to keep 500 in the side. But ultimately amounted to 400 only. That means 100 rupees remained. That 100 rupees they are trying to tell that it is already added over here. Can you see it is 20,100? That is that 100 rupees which is added. In the previous question, we had to add it. Here they have put this one point and they have given it as note. That means 100 rupees is added. Show how the each stage amount will be distributed. Profit sharing ratio is 2:2:1. First, tell me one thing. I have 500 rupees, but can I use this 500 rupees? No. I have to keep this 500 rupees in the side for realization expense. Then how much I will get? 1,000 rupees. First installment I am getting 1,000 rupees. Whom will I give? Where is it? Okay. they have shown, what do you say, together. Amount after taking into account cash balance and amount set aside. Can you see realization? We got 1,000 rupees. Realization means amount received. Amount received 1,000. Full amount is given to creditor. Because outsider first preference. Then insider. Second amount, see how much you got. 3,000 you got. 3,000. What will you do with the 3,000? See the creditor balance. Creditor balance is how much? 2,000. Creditor balance is 2,000. First installment you have given 1,000. So second installment you will give one more 1,000. That time creditor will become 0. After that remaining money, whom will you give? You will give A's loan. Correct? You will give A's loan. Can you see? 1,000 is given to creditor and 2,000 is given to A's loan. Third time, see how much money I got. 3,900. Out of A's loan, 5,000, you have paid only 2,000. So still 3,000 is remaining in A's loan. So what you will do out of this 3,900, pay A's loan. Then 900 will be remaining. That you have to think what to do. Clear? Okay, have a look at it. Yeah. See over here. 3,000 is given and 900 will remain. 900 will be distributed to partners. How to distribute that? That you have to check. See, you have 900 rupees. How to distribute? Every installment, listen, every installment is treated as last installment. If I am having 900 rupees, I am thinking that what if this is the last installment? So if I have to pay 42,000, how 42,000? 3 partners total. If I have to pay 3 partners total, 42,000. Now what will happen? I have only 900 rupees. That means 41,100 is my loss. Maximum loss. Maximum loss is what? Amount that is available. That you will remove from what? Amount that is payable. Amount payable is 42,000. Amount available is only 900 rupees. So 41,100 will be distributed in the profit sharing ratio. When you do that, can you see one person is getting negative? 2 persons are getting positive. Remember, negative has to be borne by whom? Partners who are having capital in capital ratio. Correct? This negative is distributed to others. 1,440 negative is distributed to others. 960 and 480. How did we get 960 and 480? Because 18 and 9 is their capital. 18 and 9 means 2:1 is their capital. Clear? When you do that, finally, can you see this person is left with 600, this person is left with 300. This is the distribution. When you distribute that, if you total this, it's 900 rupees. Can you understand how we are getting this? Yes. That is the first distribution. Second distribution, after that what we are getting? This is done, this is done, this is done. Next I got 6,000 rupees. Every installment I will consider it as the last installment and calculate maximum loss. I got 6,000 rupees. Now see what I am doing. 41,100. Out of that, if I remove 6,000, I will be left with 35,100. This is my maximum loss. This maximum loss I will distribute in their profit sharing ratio. Maximum loss is 35,000. I will distribute in the profit sharing ratio. After distributing the maximum loss, I am left with 960, 3360, 1680. That is my 6,000. How it is going to get distributed. Clear? Next time what is happening? Next time I am getting 20,100. So now I have 35,100 to pay. Out of 35,100, if 20,100 is gone, I have 15,000 of maximum loss. That loss is distributed. 15,000 is distributed, 6,000, 6,000 and 3,000. When you do that, you will get 8040, 8040 and 4020. This is what? This is the distribution. So what you have to do, can you see 3 times we have seen this. Every time you get money, you have to calculate maximum loss. Maximum loss is what? Amount payable minus amount available. Amount payable minus amount available, if you do, you will get the maximum loss. Distribute the loss in the profit sharing ratio. If somebody has negative capital has to be distributed in capital ratio. That time you will get one resultant figure. That is the amount that is paid. Second time also we got maximum loss of 35,100. We distributed in profit sharing ratio. Resultant figure is amount paid. Third time also we got maximum loss of 15,000 distributed. That time you will get the amount that is paid. Clear? This is maximum loss method. Both are very, very simple. Actually, maximum loss and higher relative capital is the easiest part of partnership. We have seen from starting of partnership. No, this is the easiest part of partnership. Okay. Even the intro question also is trickier than this. Remember the intro question yesterday. In that rectification again, then distributing profit. Okay. This is the easiest part. So do not skip it at any cost. Last exam, they have asked this piecemeal distribution. Never know. This time also they can ask this in the exam. Okay, that is it with the, I think dissolution is done. After dissolution, we are actually leaving one thing. No, we have not done one thing yesterday. That is death. Death of a partner. Partnership death practice question. Peter, Paul and Prince. With death of a partner will be done with partnership. What is the examination question? Peter. Second question. No, Peter, Paul and Prince. Now, very important question. These two questions also which we have picked from death of a partner, very important. One is practice question which is little tricky. Other one is June 23 which is 20 mark question. June 23 which is a 20 mark question. And all the questions they give balance sheet. In this question they give trial balance. Lot of twists are there in this question. We have to discuss this. Clear? First we'll finish the practice question. Peter, Paul and Prince were partners sharing profits and losses in the ratio of 2:1:1. 2:1:1. Clear? It was provided in the partnership deed that in the event of retirement or death of a partner, he or his legal representatives would be paid the following. Okay, what are you going to pay the partner if the partner dies? Not the partner, sorry. What will you pay the partner's legal representative if the partner dies? See the first thing. Balance in the capital account. Obviously, whatever capital account balance is there, that you have to pay. His share of goodwill of the firm valued at 2 years purchase. 2 years purchase of normal average profit after charging interest on fixed capital. We have done this goodwill calculation yesterday also. Okay, you have to do 2 years purchase, but goodwill calculation when you are doing, you should calculate the average after removing interest on capital for the last 3 years to 31st December preceding the retirement or death. Remember, we had one goodwill calculation question where they told you calculate goodwill 3 years average up to the date of death. That's why we took half year. Here what did they told? Take calculation of 3 years, let them die whenever they want, but we will calculate 31st December previous year. It makes the calculation easy. It was half year because that person died exactly middle of the year. Imagine that person would die on 25th of February or something like that. It would be very irritating to calculate the profits. So here they told till 31st December of previous year you calculate. His share of profits from the beginning of the accounting year to the date of retirement or death, which shall be taken on proportionate basis of profits of the previous year, has increased by 25%. What did they tell over here? You have to give profit share till the date of death, no? When you have to give profit share till the date of death, they said this year this person died in the middle. We don't know the profit of this year. So take last year's profit as base, increase that profit by 25% because maybe we are on an upward trend. Then you give the profit to this person. Is this clear? Profit share till the date of death. Then they said interest on fixed capital 10%, though payable to the partners, will not be payable in the year of death or retirement. Normally interest on capital is 10%. But if the person dies in that year or if the person retires in that year, we are not giving interest on capital. Is this clear? How we are giving profit share till the date of death, but interest on capital we are not giving till the date of death. That year that interest is skipped for the partner who retires and for the partner who died. Clear? All the assets are to be revalued on the date of retirement or death and the profit losses debited or credited to capital account in profit sharing ratio. We know, right? Revaluation we have been doing too many times. Peter died on 30th September. 30th September 2022. Clear? Books of accounts are closed on calendar basis. That means 31st of December. From 1st January to 31st December. We know that. Okay. Balance in the fixed capital account on 1st January 2022 where Peter rupees 10,000, Paul 5,000 and Prince. Can you see the balance in the capital account? This capital will be useful for us for what? For calculating interest on capital. This capital is important to calculate interest on capital. And who is the partner who died? Peter died. So Peter's capital of 10,000 that we have to give to the executor. Balance in the current account as on 1st January where Peter 20,000, Paul 10,000 and Prince 7,000. That balance also of Peter 20,000 that also has to be given to the executor. So capital account balance we have to give, current account balance also we have to give. Then drawings of Peter till 30th September was 10,000. He has taken money. So what should happen? This should be subtracted. Drawing should be removed from whatever we are supposed to pay him. Then profits for the year before charging interest on capital for the calendar year 19, 20 and 21 is given. Last 3 years, they have given the profit. Before interest on capital, they have given the profit. So we have to remove the interest on capital when we are calculating goodwill. Clear? The profit includes the following abnormal items. Oh, this one thing was pending. Profit includes the following abnormal items also. See this. Profit on sale of asset. What should we do? Minus, minus, minus. Correct? Insurance claim received. What should we do? Add. Why? Both are profit, right? Why are we adding one? Why are we subtracting one? This is also minus, no? Abnormal profit, abnormal profit. Just because they give two things in the question. Don't think that one will be added, one will be subtracted. Are you getting my point? Both are abnormal profits. So both will be subtracted only. Is it clear? Now, this is for goodwill calculation. Story is just beginning. Still there is so much. The firm has taken out joint life policy 1 lakh. Did somebody die? Yes. So will you get full 1 lakh? Yes. Who will share it? All the partners. Okay. Besides, the partners have severally insured their lives for 50,000 each. That means there is one JLP of 1 lakh. This I will get 1 lakh. There is also SLP of 50,000, 50,000 and 50,000. 3 SLPs are there. 50, 50 and 50. Now have a look at this. The premium in respect thereof being charged to the profit and loss account. That means premium is paid by the firm. They are telling you premium is paid by the firm. Surrender value of the policies are 30% of the face value. Now understand this. Will I get full 1 lakh or will I get surrender value? Joint life policy, I'll get full 1 lakh. But what about separate life policy? First one I will get full 50,000 because it is on the life of Peter. Other two I will get only 30%. That means I'll get 15,000 and 15,000. That means total amount that I'm going to get from the policy is 1,80,000. Total amount is 1,80,000. This will be distributed between the partners. Partners profit sharing ratio they have given somewhere, no? 2:1:1. That means Peter will get half of everything. Peter will get half of everything. 1,80,000. Is this clear? 1,80,000? Yes. Now see. On 30th June, the firm received notice from the insurance company that insurance premium in respect of the fire policy had been undercharged to the extent of 6,000 in the year 2021, and the firm has to pay it immediately. What happened? One more rectification came. 2021 fire insurance policy, we did not pay 6,000. It was undercharged. So what we should do? We should charge that 6,000. So two things you have to remember. When you are calculating goodwill also, you have to remove 6,000. And this is an entry which is not passed. When you pass the entry, what will happen? Partners capital, you have to put the 6,000 effect. Why? Loss will be distributed. It's an expense. Expense when you record, what will happen to the partners capital? The loss will be distributed to partners. Okay. Revaluation of assets indicates an upward revaluation to the extent of 20,000. What will you do with revaluation? It will also be distributed to the partners in the ratio of 2:1:1. Now, prepare an account showing the amount due to Peter's legal representatives along with necessary workings. Clear? These are the things only. Only these many things are there. Now, total summary is there over here. We will see one by one. First, you see this profit part. Because goodwill calculation, you have to see the profit. This is the profit that is given already in the question. Can you see interest on capital 2,000, 2,000, 2,000? Why 2,000, 2,000, 2,000? Capital is 10,000, 5,000 and 5,000. Total capital is 20,000 and interest on capital is 10%. Peter, Paul and the other person, total capital is 10, 5, 5. So total capital is 20,000. 20,000, 10% will be 2,000, 2,000, 2,000. Is this clear? Now, understand this. Abnormal item. See, profit on sale also they are subtracting. Insurance claim also they are subtracting. Both are abnormal profit. So we are subtracting it. And then see, insurance premium undercharged. Removing that also. We did not charge it. So we have to charge it now. That time you will get the profit. Take the average. When you get the average, total profit, when you get the average, number of years of purchase was given as 2. So your goodwill is 2,14,000. Out of 2,14,000, Peter's share, sorry, who is the first person? Peter only. Peter, Paul and Prince. Okay, Peter's share is 2 by 4. 2 is to 1 is to 1. Can you see Peter is getting 1,07,000 goodwill share? Is this clear how goodwill share is calculated for Peter? Okay. Now, Peter's share of profit, you see. Profit, what did they tell? Don't look at that. What did they tell for profit? What did they tell for profit? They said profit we have to calculate based on last year's profit, and we have to give an increase. Increase of how much? 25% increase. Can you see over here? Based on last year's profit, we'll give 25% increase. Now see this. Where did it go? Yeah. Last year's profit is 1,50,000. This is given in the question only. 1,50,000. Over here. Can you see? 1,50,000. Last year's profit 1,50,000. But that is before interest. That also you have to remember. Before interest. So what you will do? First you remove this insurance premium. Remember insurance premium we had not passed the entry only. Remove the insurance premium, you get 144. Now what you are going to give? 25% extra. Add the 25%, you will get 180 now. When you get 180, what you will do? Less interest on capital. Less interest on capital. Why is it 1,000? Why is it 1,000? 2021. See when this person died. Very important. This person died on 30th September 2022. We are calculating profit for which year? Last year's profit we are keeping as the base, and we are calculating profit for this year. Here the interest on capital is not 2,000, it's only 1,000, because Peters is not there, no. Peter is not supposed to get interest in the year of death. Interest is not there in the year of death or year of retirement, they said. So we are calculating interest only for the other two, 5,000, 5,000. On this, when you calculate 10%, you will get 1,000 interest. When you remove that 1,000 interest, you will get 1,79,000. This is the total year's estimated profit. Peter was not alive for the entire year. Peter died on 30th September. So this will be multiplied into 9 by 12. 9 by 12 you will get 9 months profit. 9 months profit fully you will not give to Peter. You will give Peter only 2 by 4. Peter's share. This is Peter's share of profit. Is this clear? Okay. What you have to understand? Profit. First you remove that item. Rectification you do first. Once you do the rectification, add the 25% extra. That is this year's estimated profit. From this year's estimated profit, remove the interest on capital. But when you are removing interest on capital, remember you have to remove only for the other two partners, because Peter is not entitled to get any interest this year. So when you remove that, you will get 1,79,000. That is the estimated profit. That is the estimated profit for the full year. Till September only we need. Calculate till September. That is for the full, all the three partners. Calculate Peter's share, you will get Peter's share. This is Peter's share of profit. Is this clear? Now, profit on revaluation. Directly they have given, no, 20,000 is the revaluation. 10,000 is Peter's share. 2 by 4. Clear? Peter's share in insurance. Insurance premium undercharge. See, 6,000. And in that, Peter has to bear this loss of 3,000. 6,000 insurance premium, we have not passed the entry. Expense was not recorded. When you record the expense, Peter will have to bear 3,000 in that. Okay, see the life policy. I think we had calculated and kept 1,80,000 that time. 90,000 is Peter's share. 90,000 is Peter's share. Clear? Now, Peter's capital account. See, 10,000 is there already. Another 10,000 is revaluation profit. Just now we saw 20,000 half revaluation profit. This 20,000 will go to executor. 20,000 will be transferred to executor. See the current account. 20,000 was already there. Given balance is given. See, share of goodwill. We have seen how it is calculated. Share of profit. Share of joint life policy. Okay. Two are there. One is joint life policy. One is separate life policy. Clear? Then drawings has to be subtracted. Insurance premium not recorded is a loss now. That has to be subtracted. Are you getting my point? After that, whatever is there, everything is transferred to executors. Now, if you see the first part of the question, can you see? From Peter's capital account, from Peter's current account. This is the amount that is payable to executor. Is this clear? So, what you have to be careful? Goodwill calculation is the major bouncer. Goodwill calculation is the major bouncer, and Peter's share of profit is also the major bouncer. Is it clear? Interest on capital, here you have to be careful, but executor is not getting. When you are calculating profit, you have to remove interest on capital only for other two partners, because Peter is not entitled to interest. Is this clear? Yes. That should be it. That is one of the bumper questions of death. Death of a partner. One more is this one. This is crazy. Okay. Now, death, other than that, I don't think we have to discuss anything. So I am eliminating it from our things to do. Yes. Okay. Yes, death of a partner. This question in the examination was at least 3.5 pages or 3 pages. See over here. It is starting over here and ending over here. Started in India and ended in Pakistan. 20 mark question. Okay, we have to discuss this. Okay. Have a look at this. Partnership death. June 2023 question. Examination. Okay, very, very important because of lot of different calculation, different types of calculations. Almost everything is there in this. A, B and C were trading in partnership, sharing profits and losses in the ratio of 4:3:3. The ratio is 4:3:3, that we know. Balance in the books of the firm is given, subject to final adjustment. That means some adjustments are pending. See what they have given. Trial balance, not balance sheet. Trial balance is given. Very important. Which year? 31st December 2022. These dates will become important as we go further. Now, see this capital. 3 years capital is given. 3 partners capital is given. 3 partners current account is also given, but current accounts are all having debit balance. Land and building, furniture, stock, debtors, bank, profit for the year. Which year profit is this? 2022 profit, but before charging interest. Clear. Creditors is also given. That is a trial balance. Now, this profit we have to use for our calculations as we go further. Goodwill may be recorded separately instead of through revaluation account. We anyways calculate goodwill separately only and adjust it in partner's capital account. C died on 30th June. We are following calendar year. C died exactly in the middle of the year. The partnership deed provided that interest was credited on capital account of partners at the rate of 12% per annum on the balance at the beginning of the year. Interest is given at what rate? 12%. On which balance? Which is there at the starting of the year. Whatever capital balance is there, 12% interest. Clear? But on the death of a partner, see what they have told. Goodwill was to be valued at 3 years purchase. Goodwill was to be valued at 3 years purchase of average annual profits of 3 years up to the date of death. Did we have this adjustment already in one of the goodwill practice questions? So nothing is coming from anywhere outside. They are merging many questions and making one tricky questions. Up to the date of death, person died on 30th June, up to the date of death. So what we have to do? Half year, half year, half year, half year, half year, half year. That we have to do. Clear? After deducting interest on capital employed at 10% per annum. What is this? What on earth is this? Normally, interest rate is 12% per annum. But for goodwill calculation, when you are going to check, it is going to be 10% per annum. For goodwill calculation, when you remove the interest, it is 10% per annum. But when you are actually giving interest, it is 12% per annum. Can you see this? 2 interest on capitals are there. On the death of a partner, goodwill was to be valued like this. When you are doing goodwill calculation, interest rate will be 10% per annum and fair remuneration for each partner. So remember, this was there in that question. When you are doing goodwill calculation, you have to remove interest. Then you have to remove remuneration also. Here also they told you have to remove remuneration. How much remuneration? They did not tell. They said fair remuneration. Somewhere in the question below, they will tell you what the remuneration is also. Now, fixed assets are to be valued by an independent valuer and all the assets and liabilities are to be taken over at book value. Everything at book value, only fixed assets you are going to revalue. Clear? Whenever necessary, profit or loss should be apportioned on time basis. That means you can take 6/12, 3/12 wherever required. Profit for 3 years before charging interest. Partner's interest was given. 3 years, 2019, 2020, 2021. But this person died in 2022. So what we need? 2019 half. This year's full year's profit we need. This year's full year's profit we need. And 2022 half. This calculation we have done in one of the questions. Independent valuation on the date was given. Land and building, furniture and fixture. Land and building, what was the value? Land and building 1,80,000. That means value is increasing. Revaluation profit 45,000. Plant and machinery, what is the value? Furniture 33,750. but it is becoming 22,500. 11,250 is going to be the loss. So net what we will have, 33,750 is our revaluation profit. One is revaluation profit, other one is revaluation loss. Is this clear? Now, for valuation of goodwill, again they came back to the valuation of goodwill point. Fair remuneration for each partner should be 56,250. Remember, they told you have to remove remuneration also. 56,250 per partner is the remuneration. Is this clear? And the capital employed in the business would be taken at 5,85,000. Actual capital is what? Different. This is the capital. But for goodwill calculation, when you are calculating interest on capital, calculate on this capital, and interest is not 12%, it is 10% for goodwill calculation. Is this clear? For goodwill calculation, 10%. For goodwill calculation, this is the capital. For goodwill calculation, this is the remuneration. Is this clear? Three things that you have to remember. It was agreed between the partners that goodwill was not to be shown as an asset in the firm. We anyways don't show it. We just give it from gaining partner to sacrificing partner. Irrelevant point. Therefore, adjustment for partners, goodwill should be made in capital account. We always do it in capital account only. So that is also resolved. Amount due to C's estate was to remain as loan with the firm carrying interest rate of 12% per annum. Finally, C is the partner who died, right? We are not paying the partner now. We are transferring it to C's executor's loan account and 12% interest will be paid. When did C die? 30th June. This is also very important. When did C die? 30th June 2022. When are we doing the calculation? 31st of December 2022. Is this clear? That means 6 months interest is already there. We have to calculate 6 months interest. Are you following this? C died on 30th June 2022. We are doing the calculation on 31st of December 2022. So, on 30th of June 2022, whatever was payable to C's executor, you have to calculate that. And then you have to calculate 6 months interest on that. That is not paid. That will be the interest outstanding. Is this clear? Yes. A and B should share profits equally. After the debt of C, it's going to be 1:1. Depreciation on revised value of asset would be ignored. Okay, that means asset you are going to revalue. Why did they tell you, no? Because asset is getting revalued on 30th June. Now, if you tell 6 months depreciation also you have to calculate, again extra work. That they said, don't worry, not there. You are required, oh not me, you are required to do partners capital account and current account and balance sheet of the firm on 31st December. Working should form, you can, why did they tell this nearest rupee? That means don't keep paise and all, just round it off to the nearest rupee. Ultimate question? Okay. We'll see what they have done. Partners capital account, partners capital, current account. See, 2 entries, that's it in partners capital account, current account. Only calculation is going to take a lot of time. First, we'll address the calculation of goodwill. Did we discuss this? 2019 half, 2020, 2021, 2022 half. Did I tell you that? Why? Because they said average profit till the date of death. Now you got this capital profit divided by 3, you will get the average profit. But remember, this average profit was before interest. Now you have to calculate interest. Interest how much? 10%. Normally how much? But for goodwill calculation, 10% of 5,85,000. That is why you are getting 58,500. When you remove that, you will get the profit. But you also have to remove remuneration. 56,250 remuneration given, but that is per partner. Multiply into 3, you will get the total remuneration. Your average profit is only 38,250. How many years purchase they had said? 3 years purchase. Multiply into 3, you will get the goodwill. You will get goodwill. But what you need? C share. C is the person who is there, no? So 4:3:3 was the profit sharing ratio. 4:3:3. So C share is 3/10. When you multiply, you will get 34,425. 34,425. Is that clear? C share of goodwill. Now, understand this. Already partners capital account balance is there. Already partners current account balance is there. Partners capital account, partners current account. Clear? Now, goodwill distribution, who has to get? C has to get 34,425. Who has to give? Other partners have to give. In which ratio? Sacrificing ratio. That you already know how to calculate. We have done it in many questions. So this is the entry. A's capital account debited, B's capital account debited to C's capital account 34,425. Is this clear? There are many more bounces in this question, but this one, did you get it? Yes. Now, goodwill distribution is done. Now see, gaining ratio they have calculated. You know how to calculate that. That I am not discussing. Journal entry also they have given for goodwill. Okay. Now, interest on capital. Go back to the partner's current account. See the partner's current account. Interest on capital we have to give. Interest on capital. Now, understand this. Interest on capital when we are calculating, it is not 10%. It is not 10%. 10% was only for goodwill calculation. Now what will happen? 2,25,000 into 12%. 1,12,500 into 12%. 1,35,000 into 12% into 6 by 12. When did this person die? I forgot. 30th June. 6 by 12. So if you notice, 1,35,000 into 12%, okay, divided by 2. Can you see everybody is getting full year? C is getting half year interest. You can cross check. Others you check. 225 into 12%. Are you getting 27,000? Yes. And this person also will get full year. But only C will get half year interest because C has died on 30th June. Is it clear? Interest on capital calculation. Profit or loss calculation we have to do. Revaluation profit. Revaluation profit I think we had calculated and kept, no? How much was that? 33,750. It will be shared in what ratio? 4:3:3. Can you see? 4:3:3. This is 33,750. 13,500, 10,125, 10,125. Is this clear? Revaluation also simple point. No problem there. This profit or loss is one of the major point that we will discuss. Is this clear? Now, after that, if you notice, other than profit or loss, there is nothing. See, capital account, what is happening? We already saw goodwill adjustment is happening in capital account. Then whatever is there in this thing, no? C's current account, it will be transferred to capital account. From there, it will be transferred to executor's account. Now, only calculation that is remaining over here is the major profit calculation. Very, very important profit calculation. Understand this, from where it is starting. In the trial balance, can you see already profit is given? 234. This is the profit before interest. Before interest, that is the profit. Correct? Now, understand this. That they have split into two halves. Why they have split into two halves? First half A, B, C. Second half only A and B. First half A, B, C. Three partners are there. Second half only A and B. That is why two halves the calculation is done. Is this clear? Yes, no. 2,34,000 is the profit. That is for the full year of 2022. 2022 till 30th of June, even C was there. But till end of the year, both were there, A and B. So they have divided into two. Now see, interest on capital, 6 months interest. 2,25,000 into 6%. Why they are doing 6%? Because 12% is for the full year, half year it is 6%. So 6%. Can you see both are getting under both the halves? These are also getting under both the halves. But this person is getting only one half. Here there is no interest. Here there is no interest. Is this clear? Now, very, very important. Okay, very, very important. What we have to do is, this profit is there, no, first half. In first half, no other calculation. After doing this, 1,17,000, remove this interest. Whatever profit is there, it should be shared between A, B and C. It should be shared between A, B and C. After you share that between A, B and C, you will get the situation over here. See, working note number 3 is there for profit only. Working note number 3. Why we have to finish first half first? Because only when we close the first half, that time we will get to know what is C's balance. What is C's balance? The C's balance, whatever is there, it is transferred to the capital account, and this final balance, what is there, it is transferred to executor's account. All this is happening on 30th of June. Is this clear? Are you able to follow? First, we have to close the first half. First half, whatever profit is there, that we have to give to all the partners. See what is C's balance, transfer it to capital account, close the capital account of C, transfer 162.45 to the executor's account. Why we are doing that is because when we are calculating second half, this is the interest on executor's loan. Second half, when we are calculating, we have to give interest on loan to executor. So we have to calculate that after removing this, what profit is there, it will be shared by the partners 1:1. One person is getting one rupee more because of rounding off. Is this clear? Did you understand the reason why we have done this into two halves? One, interest on capital for C will be only in the first half. Two, on C's executor's loan balance, we have to calculate interest for the second half, 6%. Why 6%? 12% into 6 by 12 will be 6%. Clear? That is why 6%. After that, what profit is there? It's shared between the partners. Clear? This is the profit calculation. First, you divide into two halves. Remove the interest on capital because profit is before charging interest. When you remove the interest on capital, you can close the first half, distribute first half profit to A, B, C. Then you will get the final balance of C's executor. That is on 30th June. 6 months interest is still pending. So calculate 6 months interest. Put that into the second year's P&L. Distribute remaining profit between the two partners. Is this clear? This is the major calculation in this. Question is big, but major calculation is goodwill and profit share. Now, where you can make mistake is when you are calculating goodwill, 10% interest. Interest on capital 10% for goodwill calculation. On which capital? 5,85,000. But when you are calculating profit, whatever respective capitals are there on that 6%. 6% means on that 12%, half year it is 6%. Clear? That when you put over here, you will get the profits. After that, nothing. Balance carried down for two partners. Balance carried down for partners current account. Balance carried down for partners capital account for two partners. These two balances, where will it go? Directly it will go to balance sheet. Directly it will go to balance sheet, the balances. Apart from that, what is extra in the balance sheet? Land and building got revalued. Furniture got revalued. Other assets are like that only. Bank 1 rupee we have not paid to anybody. Same balance will be there. Clear? C's executor 162.45. On that 6 months interest pending, liability, outstanding interest. Creditor, no change. That will be your balance sheet. Is this clear? This is one of the major questions of death of a partner. Without doing this, you should not go. All the adjustments that can be twisted is there. They might not give again for 20 marks, but what they can do, one portion of this, they can ask for 8 marks. One portion of this can be asked for 4 marks also. Is this clear? Yes. This is it with the death of a partner, and with that we are done with partnership also. With this we are done with the partnership. No other partnership question anymore. Yes, let's begin with company accounts. Company accounts. First part, issue, forfeiture and reissue. I think spelling is wrong. Issue, forfeiture and reissue. These are the things. First topic. I'll tell you what are the topics we are going to discuss in one stretch. Issue, forfeiture, reissue, debenture issue, redemption of preference shares, bonus shares, redemption of debentures. These 5 topics only. Last time it came for 25 marks. Yes, issue, forfeiture and reissue. We'll discuss this. Now, what we have to remember, one thing, shares is issued at par or it is issued at premium. At discount, it is prohibited. Share issue at discount is prohibited. Clear? What is the exception? Only in case of Sweat equity shares. Sweat equity shares you can issue at discount, and sweat equity shares is not there in your syllabus, so you don't have to worry about anything. Clear? Share can be issued at par, it can be issued at premium. This is the major thing that we have to remember. Now, what we have to remember apart from that, when we are issuing normal basic entries, first, what is the entry for application? Bank account debited. Correct? To share application account. Is this correct? Then what is the next thing? Share application account debited to equity share capital account if there is premium to securities premium account. If there is premium. And if there is premium also, if they tell you that premium is collected at application stage. If premium is collected at application stage, you will pass this entry. Clear? Then what happens? Next thing is allotment. In allotment, what you should remember? First entry, equity share, allotment account debited. 2. Equity share, capital account. 2. Securities premium account. Again, if there is premium. Is it clear? This is the first entry for allotment. What is the next entry? Bank account debited to equity share allotment account. Clear? Equity share allotment account. Allotment or call entry will be same. Again, I am not going to explain that. Call will be same. What will be the entry for call? Equity share call, first call, second call, final call, whatever call. Account debited to equity share capital. If there is premium, to securities premium. Then bank account debited to equity share call. Clear? This is about share issue. What can go wrong? What can go wrong? First thing, under subscription. What can go wrong? Under subscription. What is under subscription? Minimum is how much? 90%. Minimum is 90%. If it does not happen, what should we do? If not met, what should we do? We should refund the application money. We should refund the application money. Under subscription, remember, if you minimum is 90%, if you go below 90%, what happens? You should refund the application money. What is the entry for application money refund? Equity share application account debited to bank account. Equity share application account debited to bank account. When you get money, what did you do? Bank account debited to equity share application. If you are refunding, what will you do? Equity share application to bank. Clear? This is the concept of under subscription. Next, what you have to remember? Over subscription. Over subscription. Very, very important. Over subscription. What you have to remember about over subscription now? Over subscription means what? We got more than what we asked. Over subscription, you can do one thing, that is reject and refund the excess applications. Reject and refund the excess application. I wanted 10,000 applications. I got 30,000 applications. 20,000 applications I will reject and I will refund. Only for 10,000 applications I will issue the shares. Correct? What is the other thing you can do? Pro rata allotment. What is pro rata allotment? You have to issue the shares in the ratio. You will try to satisfy everybody, but you cannot satisfy everybody by what they asked. You will give them how much shares you can give. That's it. So if I issue 10,000 applications and I got 30,000 applications, what I will do? I will issue shares in the ratio 1 share for every 3 applications. 1 for every 3. This ratio will be given in the question. Clear? Pro rata allotment, very, very important thing you have to remember. What is this? Excess application amount. Excess application amount. You can adjust it with adjust it with allotment. Excess application amount, you can adjust it with allotment. Do not adjust with call. Very important. If you have extra amount, adjust it with allotment. Okay, that means, therefore, what you have to remember, excess after adjusting the allotment, you have to refund. Excess after adjusting the allotment money has to be refunded. There is no other option. So if you're doing pro rata allotment, whatever applications extra you got, that money you can do adjustment. Adjustment with what? Allotment money. Because anyways, allotment money that person has to pay. Call money can be after 1 year, 2 years also. So do not adjust with call money. Extra if you have, even after adjusting allotment money, refund it. Then what you're going to do? When you make the call, that person has to give the call amount. Until you make the call, there is no requirement of that person to pay anything. Now, after pro rata, what can be the third one? Partly reject and partly reject and partly pro rata. This is the another thing that we have to remember in oversubscription. Okay, reject and refund excess applications, pro rata allotment you're going to do, and partly reject and partly pro rata. Clear? Now, one more thing that you have to remember. What is calls in arrears? What is calls in arrears? What is calls in arrears? Amount that is unpaid after the call is made. We have asked the shareholder to pay the money. That shareholder has not paid the money. This is called as calls in arrears. Okay. Now, what is calls in advance? What is calls in advance? Amount which is not called but it is paid. That means amount is paid early. Is this clear? If it is calls in arrears, can we have interest? How much is the maximum? 10%. In this interest, maximum is 12%. Clear? If the person pays early, we have to give them 12% interest. If the person is paying late, we can charge them 10% interest. This is calls in arrears and calls in advance. Okay, what is the entry usually for interest on calls in arrears? You will pass the entry equity share holder account debited, because shareholder has to give you money, to interest on calls in arrears. Interest on calls in arrears. When you get the money, what will be the entry? Bank account debited to equity share holder account. Clear? Calls in advance. What is the situation? We have to pay here. So here it will be interest on calls in advance debited to equity share holder. Then what is the next entry? Equity shareholder debited to bank. This one you have to remember. Okay, equity shareholder debited to bank. Then what next after this? After this, what is it? All good things are over. Now it is about forfeiture. What is forfeiture? Forfeiture means cancellation. Cancellation of shares. Why? For non-payment. Cancellation of shares for non-payment of call or allotment, anything. Whatever amount is paid, asked. This is forfeiture. Now, forfeiture, you have to remember multiple things here when you are calculating forfeiture entries. Okay. Shares were issued at par. Shares were issued at par. You have to remember this. What if the share was issued at par? How will you do the forfeiture? Shares are issued at par. So what will you do now? Equity share capital account debited. How much? Amount called up. Correct. Not the face value. Sometimes 10 rupees is the face value. Full 10 rupees is called up. Sometimes 4 rupees is only called and you didn't pay the allotment money, immediately cancelled. So amount called up. Amount called up. Equity share capital account debited. 2. Share forfeiture account. To share forfeiture account. How much? This is the amount paid. Amount paid. Okay, sorry. We will take it as amount received so that you will not get confused. Amount received. Amount paid by the shareholder. For us, it is amount received. Can there be a situation that 1 rupee is also not paid by the shareholder? No, because at least application money they will pay. No. If they don't pay 1 rupee, they will not be in this story only. Clear? Something they have to pay to be part of the story. Then after that, when I ask they are not paying the money, that becomes forfeiture. Share forfeiture account. 2. What happens after that? To equity share allotment or call or calls in arrears. They will tell in the question itself. Calls in arrears account is opened. Calls in arrears account is not opened. If calls in arrears account is not opened, allotment amount is not paid, to equity share allotment. Call amount is not paid, to equity share call. If calls in arrears is opened, whatever amount is not paid, everything will be credited to calls in arrears because from there it is already transferred to calls in arrears. Is this clear? This is when shares are issued at par. Now, next thing that you have to remember. What if we are doing forfeiture where shares are issued at premium? Shares are issued at premium. Here what we have to remember is, you have to see two things. Shares were issued at premium, yes. Here you have to see two things. One is, premium amount is received. Premium amount is not received. Correct? You have to see these two things. Is the premium amount received or premium amount is not received? If premium amount is received, then what you have to do? Ignore securities premium. If premium amount is not received, securities premium has to be reversed. Securities premium reversed. Now see how it will be done. Here, if premium amount is received, already the amount is sitting in securities premium. No. Why you are going to remove from there and put it to share forfeiture? Let it be there in securities premium only. Okay, so the entry will be equity share capital account debited. This is the called up amount. 2. Share forfeiture. This is the amount received, paid by the shareholder, received. 2. Share allotment or call or calls in arrears. This is depending on the situation. Clear? Now, what about over here? Equity share capital account debited. This is for the called up amount. Securities premium account is also debited because premium amount is not received. So remove it from there. Securities premium is debited. 2. Share forfeiture account. This is what? Amount received. Then 2. Share allotment or call or calls in arrears. This is the situation. For when shares are issued at premium, you have to see whether the premium amount is received or not received. If it is received, then good. Let it be there only. Don't touch the securities premium. If premium amount is not received, then securities premium has to be reversed. Next, after forfeiture, what can we do? We can do reissue. After forfeiture, we have to do reissue. Okay, Is it compulsory that we have to do reissue? No, it is optional. Company can resolve that forfeited shares are not going to be reissued. Cancelled, that's it, forever cancelled. We are not going to reissue. That is also possible. Clear? When you are reissuing, you will have the entry bank account debited. Bank account debited. This is the reissue price. This is the reissue price. Clear? Then what happens? Share forfeiture account debited. This is loss. Loss on reissue. Loss on reissue means what? Face value minus reissue price. Face value minus reissue price. If you have a loss. 2. Equity share capital account. This will always be face value. 2. Securities premium account. This will be reissue price minus face value. Are you getting this? So understand this very important thing. You will have either this or you will have this. You cannot have both. Either the share will be reissued at less than face value or it will be reissued at more than face value. If it is reissued at less than face value, don't think that the share is reissued at discount. No discount. Because one share, one person has paid 3 rupees. Next person will pay 7 rupees. Same share it is. So there is no share issue of discount at discount over here. Is this clear? This is one very important thing that you have to remember. Then after that, very, very important. Here students make mistake. What you have to remember, shares forfeited and reissued any balance in share forfeiture transfer to capital reserve. Any balance in share forfeiture transfer to capital reserve. Is this clear? This is one very, very important thing that you have to remember. Okay, very, very important. Share forfeiture and reissue. Remember this. Any balance in share forfeiture transfer to capital reserve. Any balance in share forfeiture transfer to capital reserve. But when you will transfer? Only when the shares are forfeited and reissued. We have some questions in the study material where they will tell that Ram shares are forfeited, Sham shares are forfeited. When you are reissuing, they are telling all of Ram shares are reissued, but Sham shares still some part is remaining. If it is not reissued, then that amount you cannot transfer to capital reserve. It has to remain in share forfeiture only. This is one very important thing. If you are passing entry is not a big deal. Share forfeiture account debited to capital reserve. Share forfeiture account debited to capital reserve. This is one thing that you have to remember. Is this clear? Now what next? What next? This is it. With share issue. This is share issue, forfeiture and reissue. One small part is there. Share issued for consideration other than cash. You are buying land, you can issue shares. You can buy land and issue shares. Buy plant and machinery and issue shares. Okay. Now when we are going into debentures. Debentures earlier, the weightage was only around 4 marks. But with new scheme, weightage is huge. You know why? They can ask debenture issue and forfeiture in the same question. Not forfeiture. Debenture issue and redemption in the same question. So now you cannot ignore the issue part. Before you could have ignored, but now you can't do debentures. Debentures, one thing you have to remember, it is debt instrument. Debenture is a debt instrument, correct? So now what you have to understand, when debentures are issued, when debenture issue is happening, multiple things are there. It can be issued at par, it can be issued at premium, it can be issued at discount. Debenture is not share, no, debenture is a debt instrument. It's like a loan, company is borrowing loan. So here it can be issued at discount also. Now, but whatever happens, one thing you have to remember, debenture, whether it is issued at par, premium or discount, you also have to see whether it is redeemable at par, premium or discount. Whether it is redeemable at par, premium or discount. Is this clear? Whether it is redeemable at par, premium or discount. Here what you have to remember, if I issue at premium, then what will be the entry? What will be the entry? Extra amount is there. Debentures account, just like share capital, it should have only face value. Extra amount, credit to securities premium. This is the extra amount, credit to securities premium. Clear? Issued at premium. What should be credited? Excess over the face value. Excess over the face value has to be credited to securities premium. If it is issued at discount, what we should do? Debit to discount or loss on issue of debentures. What should be debited? Amount which is less than face value. Amount that is less than face value. This is one thing. Then if it is redeemable, at premium, that means in future we are going to redeem it or we are going to pay higher. Already we have agreed to this. If it is redeemable at premium, what you have to remember is you have to add two things to your issue entry. What you have to add to your issue entry? We have to add loss on issue of debentures debited to premium on redemption of debentures. Loss on issue of debentures to premium on redemption of debentures. This is one thing that you have to add. Add to what? The debenture issue entry. If it is issued in parts, at allotment stage you will pass this entry. At allotment stage. What if it is redeemable at discount? If it is redeemable at discount, ignore. Redeemable at discount, ignore. What you are going to ignore? Only the discount part. Issue, you will pass the entry. Okay, understand this. Today we are issuing it at premium. We are getting extra profit, extra money, that will be recorded. Today we are issuing it at lower value. Today issued at discount, recorded. Future I have to pay more money. Conservatism concept. Future I know I have to pay more money. I will add these two things into your entry. That is loss on issue of debentures debited to premium on redemption of debentures. Redeemable at discount, you will ignore it. Is this clear? You will ignore it. This is the important part you have to remember about issue of debentures. Now, one more thing that you have to remember. Debentures are issued as collateral security. Debentures are issued as collateral security. That means you have given debenture as a security for borrowing loan. So in that case, what will happen? Two effects. You can give it two ways, two types. One, no entry at all. Just mention a note. Just mention a note. Second method is what? You are going to pass the entry. You are going to pass the entry. What is the entry? Debenture suspense account debited to whatever percentage of debentures account. Debenture suspense account debited to debentures account. Debenture issue also is like share issue only. Entry will be bank account debited to debenture application to debenture, then debenture allotment to debenture, then bank to debenture allotment. It can go just like share issue. Clear? This is if debentures are issued as collateral security. Clear? These are the two major things that are there in debenture issue which you have to remember. Issue, what to do, and if it is issued at collateral security. Is this clear? Now, next part. Redemption. of preference shares. Redemption of preference shares. Next three topics what we are going to discuss now. It is very, very simple. Okay. Redemption of preference shares, you see, what is redemption of preference share? Paying the money back to preference shareholder. Paying the money back to preference shareholder is called as redemption of preference share. Here you have to remember one major note before we start the question. What is that major note? Only fully paid up shares are going to be redeemed. Only fully paid up shares are going to be redeemed. So in the question, if we have partly paid up shares, in the redemption question, if you have partly paid up shares, what you will do, first thing that you are going to do is make the final call, and then collect the amount. Make the final call and collect the amount. When you do this, it is now fully paid up. Are you getting my point? This might be the hidden information which they might not tell you directly in the question. What you have to remember, only fully paid up shares are redeemed. So in question, partly paid up shares, if it is there, make the final call. Collect the amount. Then you make it fully paid up. Make the final call, collect the amount, then you make it fully paid up. Okay, after that you go into redemption. When you are going into redemption, first you have the due entry. First thing is the due entry. What is the due entry? What are you redeeming? Preference shares, right? So preference shares, if you are redeeming, that means you are paying the money back. If you are paying the money back, preference shares have to go, right? So the entry will be preference share capital account debited. Whatever percentage which is given in the question, preference share capital account debited. If you are going to be, this is at face value. Clear? If you are going to pay extra, that is called as preference share redemption at premium. Can we do the redemption at premium? Yes. Can we do the redemption at discount? No. Redemption at premium. So what will happen? Extra amount that you are paying, premium on redemption of preference shares debited. This is the loss, right? Loss is debited. 2. Whom should I give the money? Preference share holders account. Preference share holders account. Clear? If it is redeemed at par, this loss will not be there. Okay. After the due entry, the next thing is payment entry. Payment entry. Payment entry, what to do? How to pass the entry? Preference share holders account debited to bank account. Preference share holders account debited to bank account. Now this premium is there, no? Premium. It is a loss, right? What we will do? Next entry will be transfer of premium. Transfer of premium. You will pass the entry P&L account debited to premium on redemption of preference shares. Premium on redemption of preference shares. Is this clear? Okay, this is the concept of transfer of premium. Finally, you have CRR. Capital Redemption Reserve. Capital Redemption Reserve, whenever there is redemption of preference share, you might have to create CRR. How much CRR to create? You have to understand. How much CRR to create? You have to remember this. Face value of preference shares that are redeemed. Face value of preference shares that are redeemed minus face value of equity shares issued for the purpose of redemption. For the purpose of redemption. Here, if you get any difference, this is the CRR that you have to create. Clear? What is the logic behind this? Understand this. You have your share capital, no? In share capital, you have equity share capital, preference share capital. They have some value. Clear? This value, if it goes down, that you will replace with one reserve called as CRR. Okay. For CRR, from where will you take money? You will take it from free reserves. What is free reserves? General reserve and P&L. General reserve and P&L, not securities premium. General reserve and P&L. From here you will take money and you will put it to CRR. And CRR can be used only for one reason. That is for issuing bonus shares. CRR can be used only for one reason, that is for issuing bonus shares. So from here you took and put the money. Why did you take it from here and you put the money over here? Now see, I'll give you numbers for you to understand. Imagine I have equity share capital 100, preference share capital 50. Now what happens? If this 50 goes, share capital reduces. So you will take 50 from there, 50 from free reserves, and you will put it to CRR. You will put it to CRR. CRR can be used for only one reason, that is for issuing bonus shares. If you issue bonus shares, CRR will go and equity share capital will become 150 again. Can you see share capital will come back to its normal? This is the reason why we have to know. But in case, if at all my preference share capital went, but when preference share capital is redeemed, I have issued equity share capital, it has become 120. Can you see what is the difference now? Only 30. This 30 you will create CRR. Is this clear? That is why you just use this formula. Face value. Don't take anything else. Preference share might be redeemed at premium also, no problem. But face value of preference shares redeemed minus face value of equity shares issued. Equity shares might be issued at premium also. But face value of equity shares issued for the purpose of redemption, find the difference, you will get the amount that is called as CRR. That is the CRR to be created. How to pass the journal entry for CRR creation? How to pass the journal entry for CRR creation? What will you do? General reserve account debited or P&L account debited to CRR account. General reserve account debited, P&L account debited to CRR account. This is how you are going to create CRR. Is this clear? This is one thing that you have to remember. Next, after this, what you have? Preference share redemption. That's it. Preference share redemption. Okay. Next, you have bonus issue. We have bonus issue. What will happen in bonus issue? What is bonus issue, by the way? Shares issued to existing shareholders. Shares issued to existing shareholders for no consideration. Shares issued to existing shareholders 100% correct. But is it for a consideration? No, it is issued for free. This is called as bonus issue. When we are having bonus issue, what we have to remember? Again, the important note. Only for fully paid up. Only for fully paid up shares. Only for fully paid up shares. You can issue bonus shares. Now you have two things over here. One is issue of bonus shares. Issue of bonus shares. Bonus share issue means what? Is the shareholder giving me even 1 rupee? Nothing. Shareholder is giving nothing. What we are going to do? We are going to take from our profit and we are going to convert that profit into share and give it to the shareholder. Profit anyways belongs to shareholder only, no? Instead of giving profit only, we are giving them extra shares. So what will be the due entry? Due entry will be CRR account debited. CRR account debited. Why? CRR can be used only for one reason, for issuing bonus share. When you get the opportunity, use it. Then securities premium account debited. Securities premium has only 5 uses. In 5 uses, one of the uses is for issuing bonus share. So use securities premium over here. After that also, if you require money, remove it from general reserve or from P&L. To what? Bonus to equity share holders account. This is the due entry. Next is what? Issue entry. Issue. What should be the issue entry? Bonus to equity shareholders debited to equity share capital account. No bank, no money is involved. We are issuing shares for free. How can there be bank? Okay, bonus to equity shareholders account debited to equity share capital account. This is the entry for issue of bonus shares. One more thing that can happen over here, that is bonus call. What is bonus call? Converting partly paid up shares into fully paid up. Converting partly paid up shares into fully paid up. By taking money from shareholder? No, we are not taking any money from shareholder. That is why it is called as bonus call. So what we have to do? First we have to make the final call. What is the final call? Equity share final call account debited to equity share capital account. We are making the final call. Once we make the final call, what next? We have to pass the due. We have to take the money. So what we will do? General reserve or P&L account debited to bonus to equity share holders. Here we can't use CRR. Here we can't use securities premium. Why? CRR can be used only for issuing bonus shares. For bonus call we can't use. Securities premium also only for issue of bonus shares. For bonus call we can't use. To bonus to equity shareholders. Next, what we are going to do? When these two things are done, then we are going to adjust these two things. What we will do is bonus to equity shareholders debited to equity share final call. Basically, I am like asking for the final call amount, taking the profit and keeping it aside. Then the profit is adjusted with the final call amount and telling the shareholder, you don't have to pay anything. Is this clear? This is the entry for bonus call. And this is our topic of bonus. Here we also have a thing called as right issue. What is right issue? Shares issued to existing shareholders. Shares issued to existing shareholders. This was the same thing as bonus, right? But this is for a consideration. This is not for free. This is for consideration. If you are issuing right shares, doesn't matter. Entry is same. Bank account debited to equity share capital. Are you issuing it at higher than face value? Bank account debited to equity share capital to securities premium. Is it clear? Now the last thing, that is redemption of debentures. This is the last unit in company accounts which is there. Okay, after this we'll take a break. Now redemption of debentures we'll discuss. Now redemption of debentures, you have to understand certain topics are there which are new. Okay, certain things they have mentioned. One is called as DRR. What is DRR? Debenture redemption reserve. Debenture redemption reserve. Here there is a rule. First you have to understand applicable to whom? Applicable to unlisted company only. For listed company, this DRR concept is not applicable. It is only for unlisted company. In unlisted company also, not applicable to banking company, not applicable to NBFC, not applicable to AFC, not applicable to HFC. AFI not. Sorry, not AFC, it is AIFI. AIFI. And here HFC. What is all this? Banking company we know. NBFC is non-banking financial companies. AIFI is All India Financial Institution. And HFC is Housing Finance Corporation. In the question only they will tell you this is a company which is unlisted company. Other than this they will tell. Other than this. Why? If it is this, DRR is not applicable. That is why they are telling other than this. So applicable to unlisted company which is other than this. Clear? Now what is the DRR rule? Minimum 10% of debentures should be in DRR. Should be in DRR. That means 10% of whatever debenture is there, 10% you have to take aside and keep it in DRR, Debenture Redemption Reserve. How to create this DRR? How to create DRR? P&L account debited to DRR. They might not tell in the question, but you have to check. First thing in the question you have to see is this only. First thing you have to see in the question is this. Is the DRR 10%? If it is not 10%, you have to make it 10% and then proceed further. Clear? That is one thing about DR. Now, one more thing is after redemption. After redemption, then you don't need DRR, no? After redemption, do you need DRR? No. That time what will you do? DRR account debited to general reserve account. DRR account debited to general reserve account. Is this clear? First, what you are going to do? Take money and put it into DRR. After redemption, DRR is not required. You are going to reverse it. Same way, we have one more topic that is called as DRR investment. DRR investment is one more topic. This also applicability same as DRR. Applicability same as DRR. Applicable to unlisted companies, and it is not in unlisted companies. It's not applicable to AIFI, bank, non-banking financial company, banking company, and HFC. Clear? DRR investment, you know what is the rule? Minimum 15% of debentures maturing during the year must be invested. Must be invested. Minimum 15%. So usually this also you have to check at the starting. Is the DRR investment 15%? If it is not 15%, you have to make it 15%. Okay, how will you do it? Make it 15%. How will you create? You will invest money. Investing money, what is the entry? DRR investment debited to bank account. DRR investment account debited to bank account. Clear? This is one thing that you have to remember. Now, understand the redemption part. Now we go into the redemption part. Redemption part, very, very important. First thing, what you will do? I want to redeem the debentures. What will you do first thing? I will sell my investments, no. Now I will sell the investment, DRR investment. Why I kept? So that when I am redeeming the debenture, money will be there. So first thing, sell the DRR investment. Sell the DRR investment. When you are selling DRR investment, entry will be bank account debited to DRR investment. In case you have profit or loss, should be transferred to P&L. Profit or loss on sale, if it is there, it should be transferred to P&L. When I sell the DRR investment, tell me one thing. Don't you think that we have to pay, we will get interest also? Some 2 months, 3 months, 5 months, 6 months, whatever, interest will be pending. So, interest on DRR investment. Interest on DRR investment. What is the entry? Bank account debited. I am getting the interest, no? Bank account debited to interest on DRR investment. Bank account debited to interest on DRR investment. Interest is 100% an income. Because it is income, what will happen? Interest on DRR investment debited to P&L. Interest on DRR investment account debited to P&L. Is this clear till here? Okay. Now what we will do? Due entry. Due entry. I have to pay the debenture holders. No. If I have to pay the debenture holder, what will happen? Debentures account debited. I might pay more. That time, premium on redemption of debentures debited. To whom? Debenture holders account. Same entry was there for redemption of preference share also. Preference share capital, premium on redemption to preference shareholders. Here it is to debenture holders. Next, what is the payment entry? Payment entry, debenture holders account debited to what? Bank account. Debenture holders account debited to bank account. This is one more thing. Now what you have to remember? Premium on redemption of debentures. What will you do? P&L account debited to premium on redemption. Clear? Next, after this payment entry, when you are paying, one more thing you have to remember, debenture interest might be pending. Debenture interest might be pending. So what will you do? You'll pay the debenture interest also. Debenture interest account debited to debenture holders, or directly you can write debenture interest account debited to bank, and then you will pass the entry P&L account debited to debenture interest. Is this clear? This is the concept of debenture redemption. One more thing that can happen, that is debentures can be converted into shares. Debentures can be converted into shares. Is it clear? Now, that is it with the concepts. We don't have anything else to do. Concept wise, this is it. I'm going to keep all the concepts of company accounts open. You can click the pictures if you require. Oh, so much we have written. Now we are going to solve problems after this. Okay, we'll discuss the problems. Company accounts. 3, 2, 1. We're taking video. Redemption of preference shares. Okay, let's begin. Now, see over here what I have done for share issue and forfeiture. Picked some examination questions. June 2023, 15 marks. November 2022, 15 marks. May 2022, 15 marks. December 2021, 15 marks. December 2023, 15 marks. Only. When we solve each of these questions, no, literally the share issue and forfeiture full topic will get revised. Literally everything is covered in these 5 examination questions. Okay, now what we will do is, first question, we are going to pick this one. Okay, June 2023. Now, let's see where that question is in the paper so that we can start directly. Heavy weightage, share issue forfeiture, heavy weightage. Yeah, here it is. And very important is this calculation. See, this question is about pro rata allotment. This is about pro rata allotment. Pro rata allotment, what you know, more than the journal entries, the table. If you get the pro rata table calculation correct, then journal entry is just going to be fill in the blanks. Clear? BP Limited issued a prospectus inviting applications for 1,20,000 equity shares at 10 each at a premium of 2 per share, payable as follows. Clear? Now, 10 rupee is the face value, 2 rupees is the premium. That means total price is 12. Clear? How many we wanted? 1,20,000 equity shares. Now see, on application 3, allotment 5, first and final call 4. Where is the premium? At which stage is the premium? Allotment stage. Applications were received for 3,60,000. Can you see 3 times we got? Applications for 80,000 shares were rejected and money refunded. So can we understand that this is partly rejection and partly pro rata? Okay. Shares allotted to the remaining applicants as follows. See category 1 and category 2. Category 1, what we did? 1,60,000 applications. We gave 80,000 shares. That means, do you agree that we are giving shares? 1 share for every 2? 1 share for every 2? Yes. And here 1,20,000 applications. We are giving 40,000. That means 1 share for every 3. Okay. Now if you notice, 160 plus 120 is 280. 280 plus 80,000 over here is the 3,60,000 applications which I got. 3,60,000 applications. Clear? Excess money received with applications are adjusted with the sum due towards allotment and balance amount returned to the applicants. I already told you, excess amount can be adjusted with allotment, but it should not be adjusted with call. All calls were duly received except the final call by shareholder belonging to category 1 who has applied for 680 shares. One person who has not paid the final call amount. His shares were forfeited. These shares are reissued at 13 per share, fully paid up. Before we go to forfeiture reissue, first you have to understand this table. Okay, look at the things that are there. Number of shares applied, number of shares allotted, amount received on application, amount required on application, amount adjusted on allotment, refund, amount due on allotment, and amount received on allotment. This is what you have to understand very, very clearly. I will talk about every item. First category is 80,000. 80,000 is the amount applications received. Shares allotted is 0 for them. We are not issuing any shares to them. So 80,000 into 3 rupees per application, 2,40,000 is received. But what is required? 0. Application amount required is 0. So if we require 0, are we going to adjust anything with allotment? No. Full amount will be refunded. Full amount will be refunded. Is this clear? No allotment, nothing. Second situation you see. Application received is 1,60,000. But what is the allotment we are going to do? 80,000. So application amount received is how much? This is going to be 1,60,000 into 3. 1,60,000 into 3, 4,80,000 I got. But 80,000 into 3, 2,40,000 is what I require. 1,60,000 applications into 3 rupees, 4,80,000 I got. But what I need, 80,000 applications into 3 rupees, 2,40,000 I need. That means extra what? Amount adjusted, 2,40,000. Extra is how much? 2,40,000. What you will do? Check. How much is required for allotment? 80,000 shares. Allotment is 5 rupees. I need 4 lakh. I need 4 lakh. How much I have extra here? 240. I will adjust 240. Remaining 160 I will collect from them later. Is this clear? Remaining 160 I will collect from them later. See the last category. 120 I got applications. But I require only 40,000. So 120 into 3. 3,60,000 rupees I have received on application. But what I require? 40,000 into 3. 1,20,000 only I require. Extra how much I have now? 3,60,000 minus 1,20,000. 2,40,000 I have extra. These two things, extra is 2,40,000. Now you have to check how much is required for allotment. 40,000 shares into 5 rupees. I require 2 lakh for allotment. I require 2 lakh for allotment. How much I have extra? 240. So full 2 lakh I will adjust. Extra 40,000 I will refund. Did you get this? Extra 40,000 which is there, I have to refund. There is no other option. So again I am explaining this. 1,20,000 applications I got. 40,000 shares I need. 1,20,000 applications means I got at the rate of 3 rupees. I got 3,60,000 rupees. How much I need? 40,000 shares into 3 rupees. 1,20,000 I need. So extra how much I got? 2,40,000 I got. Now what I can do? I can adjust with allotment. Now how many shares I am issuing in category 3 there? I am issuing only 40,000 shares. 40,000 allotment money is 5. That means I require 2 lakhs. I have extra 240. I require 2 lakhs. 2 lakh I will adjust. I will refund the remaining 40,000 rupees. Is this clear? Now this is your situation of table. Now everything that you require is there in this table. First thing what you are going to do, past journal entries, right? See the first journal entry. Bank account debited to equity share application. Bank account debited to equity share application. It is there in the table. It is there in the table. Actually, if you check 3,60,000 into 3. 3,60,000 into 3. Why? Because I got 3,60,000 applications. Clear? Next, equity share application account debited to equity share capital. How much I require for equity share capital? 1,20,000 into 3. 1,20,000 shares, 3 rupees. It will be transferred to share capital. How much I am adjusting with allotment? That is there in that table. See over here. How much I am adjusting with allotment? 4,40,000. Amount adjusted with allotment. 4,40,000 I am adjusting. Can you see 4,40,000 over here? Balance amount I have to refund? No. How much I have to refund? That is also in my table. 2,80,000. First full rejection 240, then last extra more than allotment I had 40,000 rupees, that is 2,80,000, that is going to be refunded. Is this clear, the second entry? Otherwise you have to do too many calculations here only in second entry. If you have the table, it becomes easy. Again listen, application amount received is 10,80,000. How many shares I am going to issue? 1,20,000. So 1,20,000 into 3, 3,60,000 I will transfer to share capital. 4,40,000 from the table I am adjusting for allotment. So that will be 2 equity share allotment account. Remaining I am going to refund. So that will be 2 bank account. Clear? Next entry is allotment due entry. Allotment due entry 1,20,000 into 5. Equity share allotment account debited. 2 equity share capital 1,20,000 into 3. 2 securities premium 1,20,000 into 2. Is this clear? Are you following how this entry is framed? Equity share allotment to equity share capital to securities premium. Now do you agree that you have to get 6 lakh rupees over here? But do you agree out of 6 lakh you already got 4,40,000 over here? That means you have to get only 1,60,000 anymore. That 1,60,000 is here, bank account debited to equity share allotment. Are you following this? Is this clear? Next, final call. There is a problem. Where is the problem? In the receipt stage. Somebody has defaulted. So see this. Equity share final call account debited to equity share capital. What is the final call amount? Final call amount is 4 rupees. So 1,20,000 into 4 rupees, 4,80,000. You are making the call. No problem with the call. Clear? Now, bank account debited. Who did not pay? Here there is a small twist in the question. What mistake you can make? Who has applied for 680? So you will think that, oh, one guy is there who is having 680 shares, did not pay the money. No. One guy is there who has applied for 680 shares, who was in category 1. That means 680 into 1 by 2. That means he got only 340 shares. Because he got only 340 shares, he has not paid the money for 340 shares on final call. Are you getting my point? Usually there are questions where they are telling, Mr. X, holder of 300 shares, has not paid. Holder of 300 shares. Here what did they tell? Category 1 who has applied for 680 shares. See category 1, whoever applied for 160 got 80. So he has applied for 680. He got only 340 shares. Now 340 shares he has defaulted. So now see over here, calls in arrears is basically 340 into 4. 340 into 4, you will get 1360. Is this clear? 2 equity share first and final call, that is gone. Are you clear with this first calls in arrears point? Yes. Now what happens? Forfeiture. How many shares are forfeited? 340 shares are forfeited. So 340 into 10. Equity share capital. Face value. Fully called up? No. Fully called up. Calls in arrears. What did he pay? Application? Yes. Allotment? Yes. Call he did not pay. Securities premium is there in this question. Securities premium, is it received? Is it received? Yes. Why? Because premium is at allotment stage. So it is received. If it is received, securities premium is ignored. So here calls in arrears is basically, share forfeiture is 340 into 3 rupees application plus 3 rupees allotment. 2 rupees premium, leave it. Okay, and this is 340 into 4 rupees. He has not paid. Are you getting the breakup of how that entry is passed? Premium is received, premium is in securities premium, ignore. Don't even bother about it. Clear? Now, reissue. Bank account debited. What is the price at which we are reissuing? 13 rupees. So, bank account debited 340 into 13. Clear? 2 equity share capital 340 into 10. Face value only. Extra amount will go to premium. 340 into 3. Is this clear? This is the situation. Now, when I forfeited, I had a profit. When I reissued, there is no loss on reissue. That means full amount, whatever is there, will be transferred to capital reserve. Is this clear? If at all, I would reissue this at 9 rupees. Then, when forfeiting, I got 6 rupees profit. When reissuing, I have 1 rupee loss. That means 5 rupees per share, 5 into 340. This would have been transferred to capital reserve. Is this clear? But in this question, this problem is not there because they have reissued at a premium. Is it clear? Yes? Yes. Any doubt with this one? So pro rata and pro rata shares, if they are forfeited and reissued, what happens? This is covered in this question. Clear? Done, no? No doubt, right? Let's eliminate it. Elimination chamber match. Okay, next question. 15 marks. Next question, 15 marks. November 2022. Okay. Listen. Next. Shh. Now, question number 23. This is from November 2022, 15 marks. Here also there are some concepts which will get covered of share issue and forfeiture. PQR Limited issued 2 lakh equity shares of 10 each, payable as 3 per share on application, 5 per share including premium on allotment, and 4 per share on call. Clear? 3 rupees application, 5 rupees allotment, and 4 rupees on call. All these shares are subscribed. No under subscription, no over subscription. Everything is subscribed. Clear? Okay. Money due on all shares was fully received except from J. Everybody has paid the money except from J, holding 5,000 shares, who failed to pay the allotment and call money, and K, holding 10,000 shares, who failed to pay the call money. 2 people are there. One person did not pay the allotment money and call money. One person did not pay only the call money. All these 15,000 shares, everything were forfeited. Out of the forfeited shares, 10,000 shares including whole of J shares. How many shares did J have? 5,000. How many shares did K have? 10,000. 15,000 shares are forfeited, but we are reissuing only 10,000. Reissuing 10,000, fully 5,000 of J, and from K 5,000. Is this clear? Okay. Where subsequently reissued to Mr. L as fully paid up at a discount of 1 rupee per share. That means it is issued at 9 rupees. Pass necessary journal entries in the books of PQR. Also prepare balance sheet and notes to accounts of the company. Okay. Now understand this. Shh. How many shares? 2 lakh. Application, no problem. Application, no problem. Can you see? Bank account debited to equity share application. 2 lakh shares into 3 rupees. Sorted. Then equity share application to equity share capital, again 2 lakh shares into 3 rupees. There is no problem with the application stage. Allotment, we are going to make the call. But when we are going to make the call, you have to be very, very clear. Allotment is 5 rupees. But out of that 3 rupees is for face value. 2 rupees is for premium. Equity share allotment 2 lakh into 5. To equity share capital 2 lakh into 3. To securities premium 2 lakh into 2. Is this clear? Yes. Any problem till there? Till calling there is no problem. Now there is a problem. What is the problem? J will not pay. J will not pay. See over here. Bank account debited. See, they have given both alternatives in the suggested answer. What is that? One, by opening calls in arrears. Another, without opening calls in arrears. See, bank account debited. How many shares? J had how many shares? 5,000 shares. That means 1,95,000 into 5. Everybody made the payment. 1,95,000 into 5 will be 9,75,000. If you are opening calls in arrears, here calls in arrears will be debited for 25,000. What is this 25,000? J's shares are 5,000. 5,000 into 5. J did not make the payment. Is this clear? Now, what is the next stage? Now, J did not make the payment, but we did not forfeit now. We waited. We made the call also. Then we forfeited. Clear? Now, next stage you see. Equity share call account. What we are doing? We are asking money from all 2 lakh. Here it is not 195 into 4. It is 2 lakh into 4. Because even J we are asking money again. You didn't pay allotment, no problem. I am asking you call money now. Okay, 2 lakh into 4. Now, here you have to be careful. Who will pay? J did not pay allotment. J will not pay call also. K has not paid the call now. So, out of 2 lakh, we have only 1,85,000 shares. 5,000 went J shares, 10,000 went K shares. 1,85,000 into 4. Clear? If we are having calls and arrears, then we will do 15,000 into 4, which will get transferred into calls and arrears. Is it clear till here? Okay, forfeiture we have to go into now. Now see what happens in forfeiture. We are cancelling all the shares, no? See, 15,000 into 10, face value, fully called up. Securities premium you see, 5,000 into 2. Why 5,000 into 2? J's shares, securities premium, not received. That is why we are doing the reversal. K's shares, securities premium is received. That's why we are not going to touch securities premium. Is this part clear? Both alternatives in one question only they have tested. J, 5,000 shares, did not pay allotment money, did not pay call money, did not pay allotment money. That's why securities premium also did not pay. That is why it is reversed. 5,000 into 2. K did not pay call money. That means allotment money is paid. That means premium is also paid. So we are not going to touch the premium. Clear? This is the situation. Equity share capital account debited, securities premium account debited. 2. Equity share allotment. If you do calls in arrears, this will be calls in arrears. Okay. 5,000 into 5. Only J did not pay allotment. So 5,000 into 5. But call 15,000 into 4. J and K both are there. Clear? Forfeited shares. How we are going to get this forfeited shares? J you see. J has paid what? Only application. Application is 3 rupees. That is 15,000. K has paid what? K has paid what? Application and allotment. 10,000 into 6. 60,000. Why I am telling 6? 3 rupees application. 3 rupees allotment. Premium you are not considering. Allotment is 5 rupees. In that 2 rupees is premium. Clear? 3 plus 3, 6. So 60 plus 15, 75,000 is over here. Share forfeiture. Is this clear, this entry? Okay. Now, see if at all we opened calls in arrears, see they are showing that part also. If you open calls in arrears, you are going to pass the entry like this. How this is 85,000? These two together. These two together. Okay, reissue. We are reissuing it at what price? 1 rupee discount. That means we are reissuing it at 9 rupees. So bank account debited. How many shares we are reissuing? 10,000. 10,000 into 9. 90 rupees. Forfeited shares. 10,000 into 1. Okay. 10,000 into 10. Is this clear? Now, forfeited shares, how you are going to calculate this part? How we are going to calculate this part? J shares. Okay, J shares. 5,000, right? How much profit I did on cancellation? 3 rupees, right? Because this person has paid only 3 rupees. See, J has paid 3 rupees. That is the profit for me. So 3 minus 1. 1 rupee loss on reissue. So what will happen now? 5,000 into 2, 10,000. K shares 10,000. But everything is not reissued. Only 5,000 is reissued. K shares, see over here. When we cancelled, how much profit I made? 6 rupees. So 6 minus 1. 25,000. Total 35. That is the entry. Can you see forfeited shares to capital reserve? You have to calculate every share and see. You cannot tell total. You cannot do. Why? Because everything is not reissued. What is the major rule I told you? Shares which are forfeited and reissued, only that will be transferred to capital reserve. Clear? Yes. Yes. Now they have asked balance sheet. Okay. This you have to calculate. How will you calculate? Share capital. Wherever share capital is credited, add. Wherever share capital is debited, minus. Clear? Reserves and surplus. What is there in reserves and surplus? Only securities premium. Wherever securities premium is credited, add. Wherever securities premium is debited, minus. Cash. What will you do with cash? Wherever we got money, bank account is there, that will be added. Clear? We did not pay money to anybody. Everywhere we got money only, this will be added over here. Okay, even in fact they have shown the calculation also in detail. You can have a look at it. See, amount transferred to capital reserve, what calculation we have done? It is there. See, 3 minus 1, 6 minus 5. Yes. Is this clear? Any doubt with this? Anybody has any doubt? So what got tested over here? Share forfeited. Shares which are issued at premium. Premium received, forfeited. Premium not received, forfeited. Both are tested in this question. That is it. Done. Now, next question. Okay, next question. Okay, next question. See what's happening in this question. 24. This is also for 15 marks. For 15 marks, we'll see. Yes, we have it ready. Okay, now listen, focus. A Limited issued 20,000 equity shares of 10 each at a premium of 10%. That means 1 rupee is the premium. Premium of 10%, so 1 rupee is the premium. Payable 2 rupees on application. Okay, 4 rupees on allotment including premium. That means allotment, what we have to remember? It is 3 plus 1. Clear? 2 rupees on first call and balance on final call. Balance on final call problem, we will sort it now only. Application is how much? 2 rupees. Allotment is how much? 3 plus 1 is equal to 4 rupees. So what is the first call? 2 rupees. 3 plus 2 plus 2, 7 rupees done. That means final call will be 3 rupees. 2 rupees application. Allotment 3 plus 1. We are going to see only the 3 because face value. First call 2 rupees. Balance final call means final call is 3 rupees. Is this clear? Yes. All the shares were fully subscribed. So that means in this question, under subscription is not there. Over subscription is also not there. Mr. M, who held 2,000 shares, paid full remaining amount on first call itself. When you have first call itself, Mr. M has paid full. That means it is calls in advance. Calls in advance. Final call which was made 4 months after first call. Why did they tell you this? Because he has paid 4 months early. That means 4 months interest. Was fully paid except a shareholder having 200 shares and one another shareholder having 100 shares. 2 people, say 1 person, first call stage only he has paid even the final call money. 2 people, they have not paid the final call money. Clear? They paid their due amount after 3 months and 4 months respectively. They paid, no forfeiture. They paid 3 months later, 4 months later. So what will happen? 3 months interest, 4 months interest. Along with the interest on calls in arrears. Company also paid interest on calls in advance to M. The company maintains calls in arrears and calls in advance account. Give the journal entries. Did they tell you anywhere what is the interest rate? No. Calls in arrears will be 10%. Calls in advance will be 12%. Clear? Yes. Now, see in this question what happens is, till you reach first call. No problem. Straight question it is. Till you reach first call. So see over here, bank account debited to application, 20,000 into 2. No problem. Clear? Next, equity share application to equity share capital. 20,000 into 2, no oversubscription, no all that circus. Next, allotment, you have to be careful. Allotment, there is premium. 20,000 into 4 is equity share allotment. But what goes to share capital is 20,000 into 3. What goes to securities premium is 20,000 into 1. Is this clear? Yes. Now, when we go to allotment money, are we getting everybody is paying allotment money? Yes, see bank account debited to equity share allotment. No problem. Next, making the first call. Making the first call also there is no problem. Equity share allotment. So first call is 20,000 into 2 rupees, right? Equity share first call to equity share capital. There also there is no problem. But when we are getting the money, you have to be careful. One person has paid 2,000 shares who had no. He has paid even the entire amount. So what will happen? This will be 20,000 into 2 plus 2,000 into 3. Bank account debited 20,000 into 2. Why? Everybody paid the first call amount. 2,000 into 3. Why? One person paid final call amount also. So that's why it is 46,000 over here. Clear? Equity share first call 40,000. No problem. Calls in advance 6,000. That is nothing but 2,000 into 3. Is this clear? This entry calls in advance. Okay. Next, what happens? Final call 20,000 into 3. Final call amount. Equity share final call to equity share capital, regular entry. Now, when we go to this is one major entry over here. Major entry over here. Okay, understand this. How much money will you get? How much shares do you have? 20,000. Out of that, somebody already paid the money. They will not pay again. And two people, one person having 100, one person having 200. They are not going to pay. Can you see the question? One shareholder holding 200 shares, one other shareholder having 100 shares. Both of them did not pay the final call amount. So who is paying? 17,700 shares. You are getting the money into 3. That should be your 53,100. Are you getting my point? How the calculation is done? 20,000 shares are there. 2,000 you will not get the money because they already paid at the first call stage. 100 and 200 you are not getting the money because they are paying later. Clear? So calls in advance, calls in arrears, both you are going to minus. Then you will get to know how much people are, how many shareholders are making the payment right now. So 17,700 into 3. This is your 53,100. Is this clear? Calls in advance is a liability when it is early. Now it is time. So calls in advance will get reversed. So calls in advance account debited 6,000. Gone. Calls in arrears is an asset. Asset is getting created. 300 into 3. 900. So basically why both are getting debited, you know. Liability decreases. Debit. Asset increases. Credit. Calls in advance is a liability. Liability decreases. That's why it is debited. Calls in arrears is an asset. Asset increases. That's why debited. Both are debited. To what? Equity share final call 60,000. Is this clear? Now what happens? You have to calculate interest on calls in advance. Interest on calls in advance, you understand. How much was the calls in advance? 6,000, right? How much is the interest rate for calls in advance? 12%, right? And they told no, 4 months is the time period. 4 by 12 into 4 by 12. 240. Interest on calls in advance, expense, debited to shareholders. Remember the entry. Interest on calls in advance is an expense. Expense account is debited. To whom? Whom you have to pay the money? To shareholders. Shareholder is credited. Is this clear? Next. Shareholder account debited to bank. Payment. You are going to make the payment. Now, shareholder account debited to interest on calls in arrears. See, here you have to calculate the interest 2 times. You know why? One guy is making the payment after 3 months. Another guy is making the payment after 4 months. First guy 200 shares. So what is happening over here? Understand this. 200 shares into what is the final call amount? 3 rupees into 10% into paid after 3 months. No. So 3 divided by 12. Are you getting 15? So shareholder account debited. Why? Shareholder has to give you money. 2. Interest on calls in arrears. That means interest you have to get. Interest is an income for you. What is the entry? Bank account debited. Okay, 615. Why 615? Calls in arrears is also received. Interest is also received. Okay, bank account debited 615. This is basically 600 plus 15. 15 we have calculated here only. 600 is what? 200 shares into 3 rupees final call. Okay, 600 rupees. Is this clear? Next, what happens? One more guy is there. How many shares he has? 100 shares. So this will be 100 into 3 into 10% into 4 by 12. He is paying 4 months later. Are you getting 10 rupees? Yes. Shareholder account debited to interest on calls in arrears. Next. Bank account debited 310. How 310? 300 plus 10. Which is the 10? 10 is the interest. What is the 300? 100 shares into 3 rupees. Final call amount 300 to shareholders 10. Is this clear? This is one more important question. Interest calculation, whatever we have done there, it is there over here at the end of the solution. That should be it. Okay. What did we learn in this question? In this question, we learned calls in advance, calls in arrears, how to adjust it, and then interest calculation on that. Can you see three examination questions we saw? Three of them are three different unique questions. First one, what did we get tested on? Pro rata forfeiture reissue. Second one, forfeiture reissue. But in forfeiture reissue, shares issued at premium, premium collected. Shares issued at premium, premium not collected. Third one, no forfeiture. Calls in advance, calls in arrears, interest on calls in arrears, interest on calls in advance. Without giving date, they made you calculate. How? They told you all the time period that was required. Yes. Which one? 12th one. Huh? Now, see, I calculated interest. This one you got, no? Interest on calls in arrears. Now, they said, you have to look at the question. See, 4 months respectively, along with the interest on calls in arrears. That means they are making the payment. When they are making the payment, see, he will pay the calls in arrears amount and he will also pay the interest amount. Bank account is debited because money is coming in. Calls in arrears is gone. Clear? Shareholder, we had created due entry over here. No, shareholder made the payment. So to shareholder 15. Is this clear? Same thing gets repeated again. First, shareholder had to give us interest. So I told shareholder debtor, you have to pay me money. Now shareholder gave me. So shareholder is gone. And here bank account is debited because we got the money. And calls in arrears is also gone. Is it clear? Yes. Let's go further. Now, 24 done. Now 25. 24 done, 25. I am telling you, none of them are same. Everything is different. Everything is testing some new concept. Okay. Now, let's see what's happening in 25. Okay. Listen. Okay, 25th question. CA Foundation, again, 15 marks question only. Fashion Garments Limited invited applications for issuing 10,000 equity shares of 10 each. No premium, nothing. No premium, nothing. Clear? See what is happening. Application 1 rupee, allotment 2 rupees, first call 3 rupees and final call 4 rupees. Full 10 rupees, 10 rupees it is issued at par, not issued at premium. Still there is something new in this question. See, issue was fully subscribed. No oversubscription, no undersubscription. Ram, to whom 100 shares were allotted, failed to pay the allotment money and his shares were forfeited immediately after the allotment. Ram did not pay allotment money, did not wait till first call, final call finishing. They are only cancelled, finished. Sham, to whom 150 shares were allotted, failed to pay the first call amount. His shares were also forfeited after first call only. We didn't wait till second call. Afterwards, the second and final call was made. Mohan, to whom 50 shares were allotted, failed to pay the second and final call. His shares were also forfeited. All the shares were reissued at 9 rupees per share. Are you getting this? That is why when I wrote the entry, equity share capital debited, forfeiture entry, equity share capital debited, not face value, amount called up. Not face value, amount called up. Are you getting my point? Okay, now understand. Who are the people you have? Ram. Then you have Sham. Then you have Mohan. Clear? Ram paid how much? Only application 1 rupee. Clear? Amount paid by Ram is only application 1 rupee. Sham paid how much? Application and allotment. Paid 3 rupees. Mohan paid how much? 6 rupees. Clear? Ram has how many shares? 100 shares. Sham has how many shares? 150 shares. Mohan has how many shares? 50 shares. Are you able to get this? This information will be vital when we are passing entries. Tell me one thing. Application, any circus is there? No. Application is smooth. Correct? How many shares in total? 10,000. So what will happen here? Bank account debited equity share applicable. Application 10,000 into 1. Because application amount is 1 rupee. 10,000 into 1. Is this clear? Yes. Next. Equity share application. Equity share capital 10,000 into 1. No problem again over there also. Next. Equity share allotment to equity share capital. Any problem in allotment call? No problem. 10,000 into 2 rupees. Correct? But who is not paying now? Ram is not paying. So when you are getting the money, it's going to be 9,900 into 2 rupees. 9,900 into 2 rupees. Why? Ram is not going to pay. Can you see the calls in arrears entry? If you are passing 100 shares into 2 rupees. Calls in arrears. Clear? 9,900. Is this part clear? Any doubt with this? Ram did not pay, so calls in arrears is created. Are we going to first call? No. First we are going to cancel Ram shares. So equity share capital account debited. Can you see? 100 into 3. Why 3? Application we have called, allotment we have called. 100 into 3. What did he pay? Only application. Share forfeiture will be 100 into 1. What did he not pay? 100 into 2. Calls in arrears. You can see this entry also. Calls in arrears. If calls in arrears is comfortable, you can open calls in arrears every time there is a situation like this. Clear? Is this clear now? Now you have to remember, when you are going to first call, you do not have 10,000 shares. Already 100 shares are cancelled over here. You do not have 10,000 shares. First call, what is the amount? 3 rupees. First call, what is the amount? 3 rupees. So when you go to first call, 9,900 into 3. Can you see this? Equity share first call, account debited to equity share capital, only 9,900 because Ram shares are already cancelled and gone. Clear? Now bank account debited. Who is not paying now? Sham is not paying. He has how many shares? 150 shares. So what you will do? 9,900 minus 150 into 3 rupees. That is basically 9,750 into 3 rupees. Only they are paying 29,250. If you are opening calls in arrears, then what is going to happen? 150 into 3 will go into calls in arrears. Is it clear? Are we going into final call? No, we are going to cancel Sham shares. Sham shares, understand, we asked for application 1, we asked for allotment 2, we asked for first call 3. That means amount called up is 150 into 6. 150 into 6 is called up. What is the amount paid? Application is paid, allotment is paid. So 150 into 3 is paid. What is not paid? The first call is not paid. 150 into 3. 150 into 3. Is this clear? Are you following this? Now, what happens next? See, you can use the calls in arrears account also, so no problem. What happens next? We will make the final call, but we will make the final call only for 9,750. Ram went, Sham went. Who is remaining? Remaining people, we will make the call. 9,750. Final call amount is 4 rupees. 39,000. Equity share final call to equity share capital 39,000. Is this clear? Yes. Now when you are receiving money, who is not paying? Mohan. Mohan is having how many shares? 50 shares. That means 9,750 minus 50. Only that you will get 4 rupees. 38,800. If you are opening calls in arrears, 50 into 4. 200. Is this clear? Are you following this? Yes. Very, very important part. Now, are we cancelling Mohan shares also? Yes. Mohan share, do you agree? Everything is called application asked, he paid. Allotment asked, he paid. First call asked, he paid. Final call asked, he did not pay. Clear? So now it is going to be 50 into 10. Share forfeiture will be 50 into 6. And final call will be 50 into 4. Is this clear? How we have cancelled Ram, Sham and Mohan's shares. After this, now we are going to reissue. Now we are going to reissue. Reissue all the shares are 100 plus 150 plus 50. 100 plus 150 plus 50. That means 300 shares are reissued. At what price? 9 rupees. 300 into 9. This will become 2,700. Here is that. See. Bank account debited 2,700. 1 rupee loss, right? Share forfeiture account debited 300. To equity share capital 3000. Now share forfeiture to capital reserve. Everything you can calculate. Now you can directly see share forfeiture and you can subtract. But I will not do it like that. Why I will not do like that is, if at all they tell in the question 300 shares are forfeited, only 250 shares are reissued. Now you cannot do total game. Now here you can do total game. What is total game? Forfeiture, when cancelled, this is the share forfeiture. Reissued, this is the forfeiture loss. Difference you can take. But if at all they don't reissue all the shares, then you can't do it. So what I'm doing is, I'm doing it person by person. Who is the first person? Ram, correct? Ram, when we cancelled his share, he paid only application, 1 rupee. So 1 rupee was our profit. When we reissued, 1 rupee is the loss. So 0 into Ram had how many shares? 100 shares. 0 into 100, nothing. Nothing is remaining for Ram. Sham, when we are seeing, when we cancelled Sham shares, how much profit we made? 3 rupees. Application 1 rupee, allotment 2 rupees, 3 rupees profit we made. Minus, what is the loss we made? 1 rupee into is equal to 2 rupees net profit for us into 150 shares. That means we have 300 rupees remaining. Mohan, how much profit we made? 6 rupees. Application 1 rupee, allotment 2 rupees and call 3 rupees. 6 rupees profit we have made. Reissue we have incurred 1 rupee loss. So 5 rupees into 50 is equal to 250. Is this coming up to 550? Clear? You have to learn like that only, because suddenly they might tell only these many shares are reissued. Here what they have done? They have just added everything and subtracted this. You will get the answer. In this you will get the answer. But we have already seen one examination question where everything was not reissued. That time you cannot do total. Here you have to see individually. Is this clear? The share forfeiture reissue part? Yes, that should be it. So what did we learn different in this question? Again, this was not like the other questions. Here we learned forfeiture is happening as soon as we don't pay the money. That means every stage forfeiture is happening and reissue is happening at the end. Is it clear? Yes. That was the one. Yes. We have one more question from shares. We have one more question from shares. This is the most, December 2023 question. Yes. Now, listen. Last question of share issue, forfeiture, reissue. Okay, with that we have covered all the concepts of share issue, forfeiture, reissue. We'll see what is there in this. A Limited issued 25,000 equity shares of 10 each at a premium of 25 rupees per share. At a premium of 25 rupees per share. Okay, not 10 each, 100 each. That means total share price is 125. Payable as follows. Application 50. Allotment 50. That means allotment, it is 25 plus 25. And final call is also 25. Is this clear till here? These three things, is it sorted? Now, application was received for 29,000 shares. Application was received for 29,000 shares. Over subscription. Letter of regret. Very, very sorry. We are writing one letter and telling, very, very sorry, I cannot give you. Was issued to the applicants for 4,000 shares. Letter of regret means we are telling we cannot issue shares. Sorry. And we are giving the money back. That means what we know? No pro rata. No pro rata here. And shares were allotted to all other applicants. Now, Mr. A, the holder of 150 shares, failed to pay the allotment and call money. The shares were forfeited. That's it. That's it. After seeing the 4 questions, this is nothing actually. Are you getting my point? Now, see what we will do first. How many shares we had? 25,000 shares. Bank account debited to equity share application is not 25,000. It is 29,000. 29,000 shares. Application amount was how much? 25, right? 50 rupees. Application amount was 50 rupees. So 29,000 into 50 will be 14,50,000. Is it clear? Now, be careful. Application account debited to bank. What is this new entry here? 4,000 applications, I am refunding it. So that is 4,000 into 50. 4,000 applications, I am giving the money back. So 4,000 into 50. Is this clear till here? Remaining people I am giving the shares, no? So this will be 25,000 into 50 equity share application to equity share capital. Sorted. Any more? No 29,000. It is always going to be 25,000. Okay. Now allotment you see. 25,000 into 50 equity share allotment. But what will go to share capital? 25,000 into 25 and 25,000 into 25. Securities premium is also there. Now, did everybody pay the money? No. One person who had how much shares? 150 shares. Did not pay what? Allotment also, call also. So now what will happen over here? 25,000 minus 150 into 50 rupees. 25,000 minus 150 into 50 rupees. Is it 1240 to 500? Yes. Because 50 rupees is 150 shares is what? The person has not paid the money. Clear? Now, equity share final call. Will I remove this 150 and make the final call, or will I make final call for all? We'll make it for all. Last question we were removing because it was forfeited. Here we are going to make for all 25,000 into 25. 6,25,000. Is it clear? Did you understand the difference between the previous question and here? Last question, why we were removing it and making the call? Because already shares were forfeited. Between this entry and this entry, there was share forfeiture entry. Here it is not there. Share forfeiture will happen at the end. Clear? Yes. 25,000 into 25. Is he paying at least the final call amount? No. So what will happen? Here also 25,000 minus 150 into 50. That is the amount that we are receiving. 6,21,250. Oh, sorry, not 50. 25 into 25. Is this clear? This is the situation. Now you have to be careful about the forfeiture entry. We have to be careful about the forfeiture entry. See, they have shown the calculation. Equity share capital 150 into 100 by face value. Securities premium is there. Remember, securities premium, if it is issued as a premium, securities premium is not collected. Why not collected? Because this person did not pay the allotment money. Premium is at allotment stage and he did not pay the allotment money. If premium amount is not received, what should we do? We have to reverse the premium. Securities premium account debited 150 into 25. Clear? To what? Equity share allotment. This is going to be 150 into 50. This is equity share final call 150 into 25. Share forfeiture, forfeited shares account 150 into 25. Which is this? 150 into 50. Application amount is received. That is profit. Allotment not received. Call not received. Is this clear? Yes. Now, call scenarios they have given. We have seen many times that call scenarios can be opened. Okay. Now, are we reissuing the shares? Are we reissuing the shares? No, that is end of the story. They asked cash book. Okay, cash book also they have asked. Okay, but are we reissuing the shares? No. Here what you will make mistake, in the exam. You have the habit. We have to do forfeiture. We have to do reissue. We have to transfer to capital reserve also. Now you will take imaginary numbers and do reissue. Don't do it. They didn't tell no. They have time. It is not compulsory that reissue has to be done. They have time. Is it clear? So your journal entries will stop here only. Cash book they have asked. Now cash book what you will do? First entry, bank account debited to equity share application. Then you refunded. Equity share application to equity share capital. Equity share application to bank. After that, bank account debited to equity share allotment. Remember, you can see the entry and do the posting. See the entry, 12,42,500. Can you see? You got only that much. Next, see 24,850. Why 24,850? 150 shares we did not get the money. Then here also 24,850 into 25. Bank account debited to equity share final call. This will be the balance carried on. This is the cash book that they are asking. Only bank column. Why did they write bank column only? Because cash column, what is there? Who knows? Who knows what is there in the cash column? We are only in a position to prepare the bank column. Is it clear? Okay, this is what is there. That should be it, with share issue, forfeiture and reissue. We still have things to discuss, that is bonus issue, redemption and redemption of debentures also. Yes, I think that should be it for the day. Let's begin. Yes. Bonus issue, we'll go into bonus issue. Okay. Now, first we'll discuss the question. Yesterday we had seen the concept of bonus. Now, let's go into the practice question. Practice question 1 for bonus. Okay. Following items appear in this trial balance of Saral Limited. Saral Limited as on 31st March 2022. See what is there in the trial balance. 4,500 equity shares of 100 each. Securities premium collected in cash. Why did they tell collected in cash? Because when we are issuing bonus, remember I told CRR and I told securities premium also. Then general reserve, then P&L. This is how you are going to utilize the funds. Securities premium can be used only if it is collected in cash. Money has come in, you can utilize them. Okay, capital redemption reserve is there, general reserve is there, P&L is there. Now, the company decided to issue equity shareholders bonus shares at the rate of 1 share for every 3 shares held. How many shares we have right now? 4,500. 1 share for every 3 shares means we have to issue 1,500 bonus shares. To issue 1,500 bonus shares at the rate of 100 rupees, face value is 100 rupees. So you will need totally 1,50,000. Correct? You need 1,50,000. When you want 1,50,000, from where are you going to take the money? First preference is from CRR. So you will take 70,000 from CRR. Clear? Still you need money. What will you do? You will take from securities premium. You will take 40,000 from securities premium. Clear? 1,10,000 is done. Now what will you do? You can take from general reserve also, you can take from P&L also. No issues. Clear? That is the entry. Company decided that there should be minimum reduction of free reserves. They said minimum reduction of free reserves. Even if they don't tell, free reserves last priority only. First priority is always for CRR and securities premium. Okay. Past necessary journal entries in the books of Saral Limited. Yes. Let me just show you the solution. Whatever we discussed. See. CRR first 70,000. Securities premium next. Then they have taken from general reserve. Okay. 2 bonus to equity shareholders. This we call as the due entry. And the issue entry is bonus to equity shareholders to equity share capital. That is it. That is end of the story. Okay. Simple question. What we predicted was last time bonus will be asked for 4 months. But they ICA. Okay. I told you IPL match also we can bet. But ICA we cannot predict. What they went one step ahead. Bonus forfeiture reissue in one question. Bonus shares, then forfeiture, reissue, everything they mixed into one question. Yeah, balance sheet also. That's why you cannot skip anything in company accounts. Because in company accounts, anything can be merged with anything. Imagine partnership. You have skipped retirement and you are lucky. Admission came in the exam. Good. But final accounts not like that. They can merge any of the concepts in one question if you want. If at all, if they make up their mind in one question, for 20 marks, they can ask a question. Issue of shares. Issue of shares. Issue of debentures. Redemption of preference shares. When you redeem preference shares, you will get CRR. Then use that CRR to issue bonus shares. Then redemption of debentures. All 5 in one can be asked. Can be asked. That's why do not go to skip anything. You're taking a huge risk. The following notes pertain to Bright Limited's balance sheet. Have a look at this one. Share capital, authorized capital is given to you. 20 crore shares of 10 each. Okay. But rupees are in lakhs. Rupees in lakhs. Issued and subscribed 10 crore equity shares of 10 each, 2 crore cumulative preference shares. Now, called up and paid up. 10 crore equity shares of 10 each, 8 per share paid up, called up and paid up. Can you see there is partly paid up equity share? If there is partly paid up equity share, we cannot issue bonus. So it has to become, final call has to be made and it has to be collected. 2 crore cumulative preference shares of 10 each. Okay. Reserves and surplus, you can see CRR is a securities premium, general reserve and P&L. Now see this. On 2nd April, company made the final call. Final call we are making. So final call entry, equity share, final call to equity share capital. Then entire money was received in the month of April. No calls in arrears situation. Bank account debited to equity share final call. That is done. After that, what happens? On 1st June, company decided to issue equity shareholders bonus shares at the rate of 2 shares for every 5 shares held. How many shares are there? 10 crore. Correct? 10 crore into 2 by 5. That means 4 crore shares. 4 crore shares. What is the face value into 10? It is not going to be 400. It is going to be 4,000 because rupees in lakhs. 4,000 rupees in lakhs. Clear? This is in crores. So rupees in lakhs will be 4,000. Can you see now? 10 crore shares, 10,000. 4 crore shares, 4,000. Clear? 4,000 I need. What will I do? I will take this CRR fully. Fully I will utilize CRR. Then what will I do? 1485 I have taken. After that what will I do? Securities premium fully. 2,000 I will utilize. That makes it 3485. Still I need 515. Correct? What will I do? I will use general reserve. Enough money is there in general reserve. 515 will go from general reserve. Okay, pass journal entries for all the above transactions. Also prepare notes to accounts. I hope you got the calculation. Journal entries, it is nothing. You are just going to memorize it. See, equity share final call to equity share capital. Bank to equity share final call. Then what we are going to do? CRR. See, 515 is utilized from general reserve to bonus to equity shareholders. Then what we are going to do? Bonus to equity shareholders to equity share capital. Is this clear? Yes. Notes to account. See what they have done. Authorized capital will not change. It will remain same. Okay. 14 crore. 10 crore it was equity shares. Now see what has happened. 14 crore equity shares. How? 4 crore we have given bonus. So 14 crore equity shares becomes 14,000. Cumulative preference share. Preference share we have not touched at all. It will remain same. See in the reserves and surplus. CRR became 0. Securities premium became 0. General reserve we have removed 515. So remaining will be there in general reserve. And P&L is as it is before. We have not touched P&L at all. These are the two things that we need to remember. Okay, 2 questions. We have seen bonus. We'll see one more question of bonus and then we can proceed further. 3rd question. Okay. Following notes pertain to the balance sheet of Manoj Limited. 30,000, 12% preference shares of 100 each. 3 lakh equity shares of 10 each. Okay. You have preference shares as well as equity shares. Issued and subscribed 24,000 preference shares of 10 each. 2,70,000 equity shares of 10 each. 8 paid up. Can you see partly paid up? So without making final call and collecting the amount, you cannot go ahead with bonus only. Clear? Okay. Reserves and surplus, you have general reserve, CRR, securities premium, P&L. On 1st April, company made final call of 2 rupees on 270 shares. The call money was received by 20th April. Same type of question again. Thereafter, company decided to capitalize its reserve by way of bonus at the rate of 1 share for every 4 shares held. Now, right now, how many equity shares we have? 2,70,000. 2,70,000 into 1 by 4. What is going to be the situation? 67,500 bonus shares. 67,500 bonus shares. Now, into 10 rupees. That is making it 6,75,000. Correct? Now, how will we utilize 6,75,000? CRR first, securities premium next. After that also, if money is not enough, general reserve. Then if money is required, we'll go to P&L. But here there is one catch in this question. What is that catch in the question? See over here. In the previous question, that problem was not there. Okay, in this question, there is that problem. See, what is the authorized capital of equity shares? 3 lakh shares is the authorized capital. Right now, issued capital is 270. Correct? 270. And just now we are issuing 67,500 shares. That means it's going to become 3,37,500 shares. Can we exceed the authorized capital? No. So what has to happen here? If you write 3 lakh as the authorized capital in the solution, you will go wrong. So authorized capital also has to become 3,37,500 shares. That means you have to give a note. All necessary resolutions to increase the authorized capital is done. Okay. Now, in the previous question, that problem was not there because authorized capital was 20 crore and we were going only till 14 crore. So there is no problem. But did you understand this? Purposely they have given authorized capital is 3 lakh. Now, right now, already issued capital is 270 and 67,500. If you add, it will become 337,500. Okay. Now, let's discuss the solution. Okay. Equity share final call to equity share capital, bank to equity share final call. Regular entries. Now, securities premium CRR, general reserve, P&L. Can you see P&L was required? Last preference is for P&L. Bonus to equity share capital. That is done. Now see over here. Can you see authorized capital 337,500? If you write 3 lakh over there, you are wrong. If you write 3 lakh over there, what will happen? Authorized capital is 3 lakh, issued capital is 337,500. Completely against the law. Are you getting my point? And anywhere in the question they didn't tell hidden information. This you have to recognize and you have to do it. Clear? So 337,500 over here, 337,500 over here. That is it. See, CRR became 0, securities premium 0, general reserve 0, only P&L is there. Is it clear? Only P&L is there. This is the question from bonus issue which you have to remember. Right issue, what you are going to do? Right issue, nothing to worry. If at all shares are issued, you will pass the entry bank account debited to equity share capital to securities premium, if there is securities premium. This is the entry that you will pass. Just like any other question, you will pass the entry. But what you have to remember, they might give right issue and bonus issue in one question only. Now imagine I have 10,000 shares. 10,000 shares are there. They might first tell right issue in the ratio of 2:5. 2 shares for every 5 shares. That time what will happen? You have to issue 4,000 right shares. 4,000 right shares. Then they might tell bonus issue in the ratio of 1:7. So now when you are doing bonus issue, if you calculate 10,000 into 1/7, you are wrong. Because after right issue, the shares have become 14,000. So you will have to calculate 14,000 into 1/7. That means 2,000 bonus shares. Is this clear? This kind of variated question they can ask. First they can put bonus and then they can put right. Or first they can put right and then they can put bonus. Anything can happen. Clear? Yes. This is your unit of bonus. Next we'll go into redemption of preference shares. Redemption of preference shares also you have to be careful. We'll look at the practice questions. I think only one practice question is there, no? Okay, then we will have a look at couple of illustration questions also. After we finish the practice question, we will see the illustration questions. Yes, have a look at this. We'll discuss this and then we will go further. Okay. Books of B Limited showed the following balances on 31st December 2023. Books of B Limited, they are telling. Now see this. 30,000 equity shares of 10 each fully paid up. 18,000 preference shares of 10 each fully paid up. Equity shares also you have, preference shares also you have. 4,000 redeemable preference shares of 10 each, 8 paid up. This is bouncer in this question. Can you see? Preference shares fully paid up is also there. Preference shares partly paid up is also there. Now, undistributed reserves and surplus stood as follows. Profit and loss account we have, general reserve you have, securities premium you have, capital reserve you have. Now, for redemption, 3,000 equity shares of 10 each are issued at 10% premium. Remember CRR calculation I had told you. Face value of preference shares redeemed, correct, minus face value of equity shares issued. Issued for what purpose? Purpose of redemption. If you get a difference over here, you have to create CRR. Clear? Now, 3,000 equity shares are issued. Okay. At the same time, preference shares are redeemed on 1st January 2024 at a premium of 2 per share. We are redeeming preference shares at a premium of 2 per share. The whereabouts of the holder of 100 shares of 10 each fully paid are not known. That means when we are redeeming the preference shares, we couldn't find one person who is having 100 shares. We tried to search, we couldn't find that person. If you cannot find, what will you do? You could not make the payment to one guy who is having 100 shares. A bonus issue of equity shares was made at par, 2 shares for every 5 shares held on the date of the capital redemption reserve account, out of the capital redemption reserve account. However, equity shares issued for redemption are not eligible for bonus. Did you understand this? Did I tell you? They can tell first redemption of preference share. When you redeem preference shares, CRR will get created. CRR has only one use, bonus issue. So they might after that give bonus point in the same question. So CRR can be utilized. Clear? Now, there are certain things that you have to be very careful. See over here. They never told preference shares final call is made. They just told preference shares are redeemed. Now see over here. 18,000 preference shares fully paid up. 18,000 preference shares fully paid up. But 4,000 preference shares partly paid up. Can you redeem them? You can't redeem them. Are you getting my point? So 18,000 preference shares into what is the face value of the preference shares? 10 rupees. That means 1,80,000 is the face value of the preference shares redeemed. We are not redeeming them at face value. We are redeeming them at premium. But for CRR calculation, we are going to consider only face value. Clear? Then face value of equity shares issued. Equity shares issued, how much they told? 3,000 of 10 rupees. So 3,000 into 10 rupees, 30,000. That means 1,50,000 you have to create CRR. For CRR creation, you cannot take securities premium. You have to use general reserve or P&L. Can you see over here, general reserve has 1,80,000 and P&L has 80. So enough money that is required to create CRR is there. Clear? How much CRR we have to create? 1,50,000. After that, what they are doing? They are doing bonus issue. How many equity shares are there in the question? 30,000. They told specifically bonus issue 2 shares for every 5 shares held on the date of this. However, equity shares issued for redemption are not eligible for bonus. That means this 3,000 shares which we have issued just now, for that we are not giving bonus. We are giving bonus only to the people who were there before. Are you getting my point? If that point was not there, we have to add and then calculate bonus. They specifically put that point so that you don't add. Now 30,000 into what is the bonus they told? Bonus in the ratio of 2 shares for every 5 shares held. 2 by 5. Is it 12,000? 12,000 bonus shares. 12,000 bonus shares. 12,000 bonus shares into 10 rupees. 1,20,000 you need for bonus. Correct? You will take it from the CRR over here. Can you see 1,50,000 is CRR? Are you getting this? Actually, we don't need to discuss any other question of redemption. All the things are covered in this. Understand this. Okay, see over here. See over here. Face value of preference shares redeemed. 18,000 shares into 10. Why can't we consider the other 4,000 shares? Because they are partly paid up. Partly paid up shares, we cannot be redeeming them. Clear? So we have one fully paid up shares, one partly paid up shares. Purposely they have put this so that they want to check whether you will redeem both or only one you will pick. Only fully paid up shares can be redeemed. So 18,000 shares into 10, 1,80,000. Face value of preference shares redeemed. Face value of equity shares issued for the purpose of redemption, 3,000 into 10, 30,000. That means difference 1,50,000 you have to create CRR. To create CRR, you have general reserve and you have P&L which is sufficient. After that, they told you have to issue bonus shares. Bonus shares actually you are issuing to equity shareholders. Equity shareholders before it was 30,000. Now we issued 3,000. So total equity shares is 33,000. But in the question they said no bonus for the equity shares issued just now for the purpose of redemption. So only 30,000 into 2 by 5. 12,000 bonus shares into 10 rupees. 1,20,000 is bonus. But 1,20,000 to give bonus, we need CRR, securities premium, general reserve, P&L. We have enough CRR. We are just going to create CRR. So first CRR created will be utilized for the bonus. Is this clear? Now have a look at it. We have discussed all the things. See over here. Preference share redemption. 18,000 shares into 10. Remember the entry. Preference share capital account debited. Premium on redemption debited. 18,000 into 2. 20% premium they said. 18,000 into 2. 20% premium. 2 preference shareholders. 18,000 into 12. Is it clear? 2 preference shareholders. But payment entry you see, you have to be very careful. 18,000 minus 100 into 12. Why minus 100? One shareholder, we could not find him only. So we could pay only to 17,900 preference shareholders. Clear? Minus 100 into 12. What next? We are issuing equity shares also. Equity shares we are issuing 3,000 shares. Equity shares are issued at what price? 10% premium they say. 10% premium. So 3,000 into 11. Share capital will be 3,000 into 10. Premium will be 3,000 into 1. Clear? Securities premium entry. Now we are going to create CRR. Do you remember me showing you the calculation of CRR? 1,50,000. See 1,50,000. General reserve they took money and P&L they took money and you created CRR. Now you got CRR. What you're going to do? You're going to issue bonus shares. See over here. Capital redemption reserve to bonus to equity shareholders. Do you remember 1,20,000 bonus? The calculation, do you remember, which we just saw? 1,20,000. See, CRR to bonus to equity shareholders. Then what happens? Bonus to equity shareholders to equity share capital. That is it. Premium is a loss. Remember, premium P&L account has to be debited. See the last entry. Is it clear? This is your entry. This is your topic of preference share redemption. Okay. We have seen only one question. Let's see one more illustration question if possible. 11. Where is 11? 9. We'll see what is tricky. That one we'll pick. 9th one is important. 9th one is important. Okay. Little tricky it is. We'll go through the 9th one. See over here. Listen. Here, the CRR calculation is a bouncer, I think, in this question. CRR calculation, you have to be careful. And dates, you have to be careful. See over here. Balance sheet of XYZ Limited on 31st March 2021 includes the following. 50,000, 8% preference shares of 100 each, 70 paid up. 70 paid up. That means it is partly paid up. That means you can actually not redeem the preference shares, but they have told to make the final call. Okay. 1 lakh equity shares fully paid up, securities premium, CRR, general reserve, bank balance. Now, under the terms of their issue, preference shares are redeemable on 31st March at 5% premium. In order to finance the redemption, company makes a right issue of 50,000 shares of 100 each at 110. We are making what? We need to get money for redemption. So what we are doing? We are issuing equity shares. What equity shares we are issuing? Right shares. Right shares means what? Equity shares only, but they are issued to existing shareholders. Clear? So now what happens? 20 being payable on application. So 20 rupees is application. 35 rupees is allotment. In that 35 rupees, it is 25 plus 10 because 10 rupees is premium. Then what is happening? And balance on 1st January 2023. Balance everything on call. Clear? 45, 55. So that means it is going to be 55 rupees. Call is 55 rupees because total value of the share is 110. Is this clear? Now, issue was fully subscribed. Allotment was made on 1st March 2022. Money due on allotment was duly received by 31st March 2022. Preference shares were redeemed after fulfilling necessary conditions. Necessary conditions means what? You have to make it final. You have to make the final call and make it fully paid up. Without making it fully paid up, can we redeem the preference shares? No. One more. Section 55 of Companies Act means what? Even CRR has to be fulfilled. Remember CRR. Okay. You are asked to pass necessary journal entries. First thing, see what you are going to do. Final call. Preference share final call to preference share capital. See the number of preference shares. We had 50,000 preference shares. What is the final call amount? Into 30. 50,000 into 30. That makes it 15 lakhs. 15 lakhs. Is everybody paying the money? Yes. Bank account debited to equity share final call. That is also sorted. Now what we are doing? We are issuing shares. But when we are issuing shares, it is in parts. How many shares are we issuing? 50,000 equity shares. 50,000 equity shares. Now, one more thing is, we are doing everything on 31st March 2022. That you have to remember. Equity shares when you are issuing, you see, bank account debited to equity share application because 50,000 into 20 rupees was the application amount. Equity share application to equity share capital, regular issue entries. Then, allotment is 50,000 into 35. Share capital is 50,000 into 25. Securities premium is 50,000 into 10. Clear? That is sorted. Bank account debited to equity share allotment. That is also sorted. Now, understand this general reserve to CRR. Call entry is not passed only. You know why? Because call is happening on 1st January 2023. See over here. Balance on call on 1st January 2023. Call is not happening at all. So, how will you calculate CRR? See the CRR calculation. What is the preference share redemption? 50,000 preference shares of 100 each. So, 50,000 into 100. That makes it 50 lakhs. 50 lakhs. Clear? Now, what do you have to minus? Equity shares issued. How many equity shares we have issued? 50,000. Of what value? 100, but we didn't get 100. We didn't get 100. Till now what we got? 20 rupees on application plus 25 rupees on allotment. Why I am not taking 35 rupees on allotment? Because premium is there. What is the formula? Face value of preference shares minus face value of equity shares. Only face value we are going to consider. Clear? So 50,000 into 45. Can you give me the value? 27 lakh. 22 lakh 50,000. That means difference is 27 lakh 50,000. This is the CRR. This is the CRR. Can you see the CRR entry? General reserve account debited to CRR. You know why this question is different from all the other questions? In all the other questions, equity shares fully paid up. So directly you take full face value and calculate. Here equity shares, how much is paid up, that much only you can consider for CRR calculation. Okay. Then after that you see preference share redemption. 8% preference share capital debited 50 lakhs. Premium is there 5%. Do you remember preference shares are redeemed at 5% premium? So this is basically 50 lakhs into 5%. 2,50,000 to preference shareholders. Here we don't have a situation that somebody we are not able to pay. Everybody we are paying preference shareholder to bank. Is it clear? Finally, what we have to do? General reserve to premium on redemption. Actually, it is taken from P&L, no? But in this question, P&L is not there only. See the information. CRR, general reserve. That's it. Securities premium. So if you don't have P&L, what will we do? We'll take it from general reserve itself. General reserve and P&L are only the free reserves. No, only from free reserves you can take it. Okay, that is the question. This is why this question is little different from others. All the other question, what happens? Full equity share, face value only we are going to see. But here what is happening? Equity shares, how much is paid up, that much only we were able to see. Clear? Premium is a loss? No. Loss is usually debited to P&L. But we didn't have P&L in this question. That is why we are debited it to general reserve. If we had P&L, we would have taken from P&L. Yes. After that, do we have any other question which we have to utilize? Yes. 8. Same illustration. Illustration 10. We'll continue with the same question. Illustration 10. Now see this. With the help of the details in illustration 9 above, further assuming that the preference shareholders holding 2,000 shares fail to make the payment on final call made under section 55, you are asked to pass necessary journal entries and show the relevant extracts of the balance sheet. If they don't pay the final call, are we going to redeem those shares? No. We had how many shares? 50,000, right? 50,000 shares we had. So out of that 2,000, they are not going to pay the final call. That means how much will pay? 48,000 only will pay. Now see this again. 15, was it 50,000? Yes. 50,000 into 30 rupees. Remember the final call? 30 rupees. Call entry is same, no? But receiving entry you see. Bank account debited only 48,000 into 30. Calls in arrears 2,000 into 30. 2 preference share final call. Is it clear how the entry varied? Now what we have to remember, preference share, when we are passing the entry, are we forfeiting the shares? Are we forfeiting the shares? Yes, we are going to cancel because other people we are going to pay the money back. These people also their time is over. So we are cancelling their shares. Okay. Now see over here, preference share capital account debited 2,000 into 100. Face value. Calls in arrears account debited. What you did not get. Remaining amount goes to share forfeiture account. Yesterday we have seen forfeiture of shares. 2,000 into 70. Clear? Then what we are doing? Issuing equity shares. Issuing equity shares. That we have seen same thing. It is not changing. Again we are issuing equity shares. Now when we are calculating this CRR, one small change. That time what we did last question. We'll see the calculation of last question where we did CRR calculation. Do you remember we did 50 lakh minus 22 lakh 50. Now it is not 50 lakh. No, that is redeemed. What is redeemed? 48 lakh only is redeemed. No, because 2 lakh they have not paid. 48 lakh minus 22 lakh 50 will make it 25 lakh 50. 25 lakh 50. Can you see that small variation will be there in CRR calculation? 25 lakh 50 CRR calculation. Then preference shares when we are redeeming. When we are redeeming preference shares, you see 48,000 into 100. And this will be 48 lakh into 5%. Clear? To preference shareholders, then preference shareholders to bank. Then general reserve to premium, same thing. And then share forfeited to capital reserve. Remember, forfeiture of shares. Shares which are forfeited and not reissued will be transferred to capital reserve. That's why they've done this. One thing what you have to remember, just because 2000 shareholders did not pay the final call amount, where and all we have noticed the difference. Preference share call account same, but when we are receiving the money, there is calls in areas. This is different. Clear? Because that is different. We have to cancel the shares. That is different. Equity share issue, there is not going to be any problem. It is going to be same. But CRR calculation will change because face value of preference shares redeemed is different. Okay. Then preference share redemption due entry also will change because we are not redeeming 50,000 shares. We are redeeming only 48,000 shares. That is also different. Obviously, if that is different, payment entry also will be different. Premium entry which is transferred to general reserve, that is also different. This is one extra entry which is there. Transferred to capital reserve. Can you see that modification? I think both the questions, when you see, you will get better picture of preference share redemption. After that, one more question I want to see. One more question is there which I want to see. That is question number 8. After question number 8, we are going into redemption of debentures. Okay, question number 8 we have to see. Now, have a look at this. This question is also slightly different compared to other things. Small twist is there. Capital structure of the company consists of 20,000 equity shares of 10 each, fully paid up. 1,000 redeemable preference shares of 100 each, fully paid up. So what we have? 20,000 equity shares of 10 each. 1,000 preference shares of 100 each. Undistributed reserves and surplus stood as follows. General reserve 80,000, P&L 20,000, investment allowance reserve. Some new reserve, investment allowance reserve. But see over here, out of which 5,000 not free for distribution as dividend, total amount is 10,000. How much is the investment allowance reserve? 10,000. Out of that, what they told? 5,000 is not free for distribution as dividend. That means 5,000 they are telling is not free reserve. Free reserve means what? You can use it for anything, including giving that money as dividend. Clear? Reserve as distribution as dividend. Here they said 5,000 is not free. That means what about remaining 5,000? That is free, no? See this, understand the language. Investment allowance reserve, out of which 5,000 not free for distribution as dividend. Total amount is 10,000. That means 5,000 is free. You can utilize it if required. Securities premium is 2,000. Cash and bank amounted to 98,000. Preference shares are to be redeemed at a premium of 10%. And for the purpose of redemption, directors are empowered to make fresh issue of equity shares at par after utilizing the undistributed reserves and surplus, subject to a condition that sum of 20,000 shall be retained in the general reserve. So what did they tell? If required, only issue equity shares. If reserves are sufficient, then don't issue equity shares. Now what we have to remember, equity shares can be issued at par only. Okay, now understand this. What is the face value of preference shares redeemed? Face value of preference shares redeemed. 1,000 preference shares of 100 each, correct? 1,000 into 100, that means this is 1 lakh. 1 lakh is the face value of preference shares that is redeemed. Now what we have to remember over here, if I don't issue equity shares, if equity share issued is 0, then full 1 lakh I have to create CRR. To create CRR, what I need? I need free reserves. So what they told over here, how much you can utilize, utilize. If you can't utilize, what you have to do? You have to issue equity shares. Now CRR, to create CRR, I need general reserve. Do we have general reserve over here? General reserve is 80,000. Is that correct? General reserve is 80,000. But they only told out of 80,000, don't utilize 20,000, utilize only 60,000. Is that correct? Where do we know that? In the last line of the question. Subject to a condition that 20,000 shall be retained in the general reserve. That means general reserve fully you can't utilize. Only 20,000 you have to keep aside. So 60,000 you can utilize. Clear? Then what we have? P&L. How much we have in P&L? 20,000. Now you can make the mistake over here of taking 20,000 fully. Do we have 20,000? Yes. Can we use 20,000? No. Why? Because 10,000 is required for preference share premium. Preference shares are redeemed at a premium of 10%. Can you see this point? Correct? Preference shares, premium. That means 1 lakh into 10% will be 10,000. So minus 10,000. How much will be remaining? 10,000. So P&L has 20,000. Yes. But out of that 10,000 will go when you are paying premium on redemption of preference shares. So only 10,000 in P&L will remain. That 10,000 you can utilize for CRR creation. Is this clear? So 10,000 goes. Do we have any more money that we can utilize? Yes. Investment allowance reserve. 10,000 is there, but they told you can utilize only 5,000. So total amount that I have for CRR creation is 75,000. 75,000. But how much money I need for CRR creation? 1 lakh. That means what should I do? 25,000 I have to issue equity shares. There is no other option. This is the thing that is new in this question. Reverse calculation they are asking you to do. Preference share redemption is 1 lakh. If I had free reserve for 1 lakh, I don't need to issue equity share only. But free reserve that I have is only 75,000. So 25,000, how will I fill that? By only issuing equity shares. There is no other option. Is it clear? Now see the things. You have seen the numbers, no? Bank account debited equity share capital. 25,000. Clear? General reserve debited. P&L debited. Investment allowance reserved to CRR. Can you see P&L they have taken 10,000 only? Yes. Now see premium on redemption of preference share debited to preference shareholders. Sorry. Oh, I missed one thing here. Preference share capital debited 1 lakh. Premium debited 10,000 to preference shareholders 1 lakh 10. Preference shareholders to bank. P&L to preference share redemption. That is premium on preference share redemption. So can you see 10,000 is removed over here? Because 10,000 is required over here, we cannot use full 10,000 for full 20,000 for CRR creation. Is it clear? Okay. Yes, these are the questions which we have to remember. I think that should be it from preference share redemption. Now we'll go into debentures. Debentures is a small unit, I don't know, but a lot of confusion is there. So we will go through illustrations first. First we'll go through the illustrations, then we will go into everything else. Yeah, first question of redemption of debentures. Yesterday, do you remember we had discussed some concepts of redemption of debentures? What is it? One, 10% should be there in DRR. Second, 15% should be there in DRR investment. Two major things. Then redemption of debentures entries are similar to this thing only, preference share redemption only. Okay, debentures account debited, premium on redemption debited to debenture holders, then debenture holders to bank. CRR creation is not there in debenture redemption, only in preference share redemption. Okay, now first question. We'll go one by one. One by one. Following balance appeared in the books of the company, unlisted company other than AIFI, banking company, NBFC, HFC. Why are they telling this? Remember yesterday, DRR and DRR investment is not applicable to these companies. That's why they said unlisted company other than these companies, because they are indirectly telling you that DRR is applicable. Clear? On December 31st, 2021. 6% mortgage, 10,000 debentures of 100 each. Okay, we have 10,000 debentures of 100 each. Now, see over here. They have asked you to concern ledger accounts excluding bank transaction, they said. So now understand this. Do you already have 10,000 debentures of 100 each? Is it there already? Yes? Yes. See over here, debenture account. Debenture account, by balance brought down, 10,000 debentures of 100 each is 10 lakhs. Opening balance, clear? So what is given in the question, first you put all the information into the respective ledgers, then you'll know what to do. Okay, next, debenture redemption reserve, 50,000. Can you see 50,000 is already there? DRR, search for DRR. Where is DRR? DRR. Can you see by balance brought down 50,000? Clear? Okay. Now going back into the question. Investment in deposits with scheduled bank free from any charge of investment at 4% interest rate. This is DRR investment. DRR investment. Okay. Have a look at this. Debenture redemption reserve investment. It's an asset. So to balance brought down 1,50,000. Debentures and DRR was liability. So it was on the credit side. So by balance. Okay. Now, next. 30 31st December every year, we are supposed to get the interest they are telling. Bank balance with the company is 9 lakhs. 9 lakhs bank balance. Bank account. 2 balance brought down, 9 lakhs. Is it clear? Yes. Till now we have not started redemption. Only thing is, from the question, fill in the blanks we are doing. Now, interest on debenture has been paid up to 31st December. Till 31st December, interest on debenture is already paid. Okay, fine. If they have already paid, what entry we have to pass? Nothing. On 28th February, investments were realized at par and debentures were paid off at 101 together with interest. What has happened? Till 31st December, everything was over. But they are paying when? On 28th of February. So when they are redeeming on 28th of February, what is the points that you need to remember? 1. 2 months debenture interest we have to pay. And 2 months interest on investment we have to get. Clear? Till 31st December, everything was sorted. 2 months debenture interest we have to pay. And 2 months interest on investment we have to get. Clear? What is my debenture value here? 10 lakhs. Remember 10 lakhs? So that means 10 lakhs into 6%. See the rate here. 6% is the rate of debentures. 10 lakh into 6% into 2 by 12. How much? 10,000. That means 10,000 we have to pay interest. Debenture interest we have to pay. One more thing. See my investment. How much is my investment? 1,50,000. That also into 4%. Here we have 4% into 2 by 12. How much? 1,000 rupees. This is the interest we have to get and this is the interest we have to pay. Clear? Remember the DRR rule. What was the DRR rule? 10% should be there in DRR. My debenture is 10 lakhs. 10% is 1 lakh. But how much is my DRR? Only 50,000. So what happens? See the DRR account. By P&L. Another 50,000 we have to create. Another 50,000 we have to create. There is no other option. Clear? DRR investment, what was the rule? 15%. Do we have 15% in investments? Yes. 10 lakh into 15% is 1 lakh 50. How much investment I have? 1 lakh 50 only. Investment is as per the rule, but DRR was not as per the rule, so we had to make it. Sorry. Okay. Now what next? What next? We have to pay that interest, no? See. Where is debenture interest? See the debenture interest account. February 28th. Debenture interest account debited to bank. Can you see the 10,000 which we just calculated? And see over here, buy debenture interest in bank account. Clear? And debenture interest is an expense. Expense will be transferred to P&L. So next entry will be P&L account debited to debenture interest. Transferred to P&L because it's an expense. Okay. Next, when we are redeeming debentures, okay, we have to get interest also. I discussed this point with you. We have to get interest 1,000 rupees. See over here. Interest on debenture redemption reserve investment 1,000 rupees. Can you see? This is an expense. So it is going from back. This is an income. That is why it is coming into the bank. Clear? Two things. Is this clear? Next. What we are supposed to do next? When I am redeeming the debenture, what will I do first thing? When I have to redeem the debenture, what will I do first thing? First I will sell that investment. No. Why do I need the investment? Investment is what? DRR investment. That means investment was there specifically for redemption of debenture. So what will you do? What is the entry for redeeming the debentures? Bank account debited to investment account. If there is any profit or loss, will go to P&L. They didn't tell anything. So see over here. Bank account debited to DRR investment 1,50,000. We got the money. Clear? Now we are going to redeem. Tell me what is the entry for redemption of debentures. Debentures account debited. Premium account debited. Correct? To debenture holders. See over here. Debenture account debited to debenture holders. Premium account debited to debenture holders. Premium is a expense. So again that is also taken from P&L. Transferred to P&L. See the debenture holders account. Okay, they have not prepared only debenture holders account. If they would prepare debenture holders account, it would look like this. Debenture holders account, if they would prepare, no, it would look like this. 28th of February, buy 6% debentures, 10 lakhs. 28th of February by premium on redemption of debentures. How much was that? 10,000. Sure. 1 rupee. 1 rupee. Yes. 101 it was. 10,000. Okay. Due entry for debenture redemption. Debenture account debited. Premium debited to debenture holders. Second entry is payment. Debenture holders account debited to bank account. 10 lakh 10,000. This 10 lakh 10,000 you will find in the bank. Can you see? By debenture holders. It's there in the bank. This is ledger creation. Only difference between redemption of preference share and redemption of debenture is redemption of preference share. You have to pass journal entries for redemption. Redemption of debentures, they are asking you ledger accounts. After doing all the redemption, DRR which is required, it is not required. I told you yesterday, when it's not required, what should you do? Transfer it to general reserve. It's there. DRR account debited to general reserve. This is the question. Only thing is you're seeing that there are too many ledger accounts and you're panicking. But every ledger account you see, 1 entry, 2 entries. That's it. Every ledger account, 1 entry, 2 entries are there. So if they ask this, it is easy 8 marks in the exam. You should be happy. Don't think that 6 ledgers have to prepare. In each ledger, how much is there? 1 entry, 2 entries. Clear? Yes. Now, we'll see the next one. Now, DRR. Because see, this DRR 50,000 is already there. This 50,000 is created today. So this 50,000 was taken from some P&L in the past. Okay. So when we are transferring to general reserve because general reserve has all the year's profit remaining. DRR rule is what you know. If you have debentures, 10% should be in DRR. So today if I issue debentures, this year only I will create DRR and keep. So this year's profit I have removed to put into DRR. But debenture might be redeemed after 5 years. So last year it will be redeemed. Now if I take from first year's profit and put it back to 5th year's profit, then it will be inflated and deflated. So what they told, when you redeem, don't put it back to P&L. It is all collection of past years. So put it back to general reserve. That is the reason. Yes. We'll go to the next one. Again, this concept will get revised in this next one. Okay. Following balances appeared in the books of Paradise Limited, unlisted company other than AIFI, banking company, NBFC, HFC. Clear? See what balance they gave first. 12% debentures, 7,50,000. Go to 12% debentures. 1st April, by balance brought down, you have 7,50,000. Okay. Next, balance of DRR 25,000. Here only check. 7,50,000 into 10%. That means 75,000 should be there in DRR, no? Only 25,000 is there in DRR. So first job, what you should do? You should make it 75,000. See DRR here. By P&L 50,000. Now did you make it 75,000? Job done. 25,000 was balancing figure. Balance brought down, 50,000 you are going to create. Okay, next. DRR investment, 1,12,500 represented by 10%, 1125 secured bonds of Government of India. DRR investment is there. Go to DRR investment, see two balance brought down, 1,12,500. Sorted? Okay. Next, annual contribution to DRR was made on 31st March every year. Why are they telling 31st March every year? Because they are telling you that here we are not following calendar year, here we are following financial year. On 31st March 2022, balance at bank was 7,50,000. Can you see all this balance was given to you on 1st April? 1st April 2021, they gave you the balance of debenture, DRR and DRR investment. But bank balance they are giving you at the end of the year. Why? During the year, full year's bank transaction, do you know? No. If they give you starting of the year, will you prepare cash book for the entire year? No. That is why they gave bank balance at the end of the year only. Okay. Before receipt of interest. Bank balance before receiving interest. That means paying interest is already done. If they are told specifically before receipt of interest, paying the debenture interest is already done. Only receiving interest entry is not passed. Okay. Investments were realized at par. What does it mean? That means investment is sold at face value only. That means 1,12,500. Clear? For redemption of debentures at a premium of 10% on the same date. What is at a premium? Redemption of debentures is at a premium. Investment is realized at par for redemption of debentures at a premium. Don't get confused that investment is also sold at premium. No. Okay, you are required to prepare the following accounts: debenture account, DRR investment, bank account, and debenture holders account. bank account, what we are going to do? See, everything balance brought down was on 1st April. Can you see bank account balance brought down is on 31st March? Because end of the year balance was given 7,50,000. Clear? Now, do you remember that interest was not received? So you have to pass the entry for receiving interest. Interest you are receiving. So bank account debited to interest. See over here, interest on DRR investment 10%. And after that, what you are going to do? You are going to sell the investment. Bank account debited to DRR investment. Again, investment is also sold at par. Now what you are going to do? Just redeem the debentures. Debenture redemption. Tell me what is the due entry? Debenture account debited. Premium account debited. Premium on redemption of debentures debited to debenture holders. See over here. Debentures account debited to debenture holders. Closed. Okay. Premium ledger they have not asked you to prepare. But here you can see in the debenture holders. By debentures account. By premium on redemption of debentures account. What is the payment entry? Debenture holders account debited to bank account. See over here. Debenture holders account debited to bank account. Sorted. Debenture holders are paid off. Now what you have to do? See, that entry is there even in the bank account by debenture holders. This is the balancing figure of bank balance which is going to be carried forward. Now, remember this. DRR is not required. No, see, investment is sold. Bank entry is here. DRR is not required. No. Transfer to general reserve. Is it clear? Regular transactions. If it is asked, 8 marks, easy. Clear? Now, next. Fourth question, I think you can just have a look at it on your own. In this C, give everything is there. Past necessary journal entries they said. Okay, third, fourth, both we will see. Third and fourth we will see, and then we'll close company accounts. See the third one. See the third one. Third one is not ledger preparation or anything like that. See the third one. Something different. XYZ Limited has issued 1,012% convertible debentures of 100 each, redeemable after a period of 5 years. Okay. According to the terms and conditions of the issue, these debentures are redeemable at a premium of 5%. How are we going to redeem the debentures? 5% extra premium. Clear? The debenture holders also had the option at the time of redemption to convert 20% of their holdings into equity shares of 10 each at a price of 20 per share and balance in cash. What are they telling? If I have some debentures, no, I have the option of converting the debenture into share. But how much can I convert? Only 20% I can convert into share. Remaining 80% I have to take cash only. All my debentures I cannot convert into share. 20% of my holding I can convert it into equity shares. 80% I have to collect cash only. So if I have 100 debentures, I can convert 100 debentures into equity. I can convert 20 debentures into equity shares. Remaining I have to collect cash. Clear? Debenture holders amounting to 20,000 opted to get their debentures converted into equity shares as per terms of the issue. You are required to calculate the number of shares issued and cash paid for the redemption of 20,000 debentures. Okay, 20,000. 1 lakh is 1,000 into 100. 1 lakh is the total debenture, right? 1 lakh we are not redeeming now. We are redeeming how much? Only 20,000. If 20,000 is the value what we are redeeming, debenture redemption is happening at a premium, right? So 20,000 plus 5%, that makes it 21,000. So we have to pay 21,000. How will we pay 21,000? Will we convert everything into shares? No, they can convert only 20% into shares. And remaining 80%, they have to take cash. So 21,000 into 20% is 4,200. 80,000 means 16,800. This has to be paid in cash. 4,200 we are going to give in shares. Shares of what value? 10 rupee share, but issued at 20 rupees. So 4,200 divided by 20 rupees. That means we are going to issue how many shares? 210 shares. 210 shares. In this question, they have not asked journal entry and all, but if at all in the exam they ask journal entry, you should be prepared for that as well. Now understand this. If you are passing entry for this, you will pass the entry 12% debentures debited. 12% debentures debited. How much? 20,000. 20,000. Then you will write premium on redemption debited 1,000 to debenture holders account 21,000. Clear? This is the due entry. Now see the payment entry. How you will settle? Debenture holders account debited 21,000 to bank account 16,800 to equity share capital account 2,100 to securities premium account 2,100. We can't put full 20 rupees. Remember the rule. Face value only has to go to equity share capital. 210 shares into 10, 210 into 10 and 210 into 10. Is it clear? This is the thing that you have to remember. You cannot put more into share capital. Face value only. This will be the entry. And one more entry will get added if they ask. That is P&L account debited 1,000 rupees to premium on redemption 1,000. They have not asked journal entries. I'm just showing you the journal entries if they ask. That's it. See, they have calculated that only 210 shares. 210 shares, that only they have made the calculation. Is it clear? Yes. Next. Fourth question is the last question. Company accounts, last question. With that, we'll wind up company accounts. Company accounts is done. After that, we'll go into final accounts. Yes, have a look at this. The balance sheet of B company limited, unlisted company other than AIFA, banking company, NBFC, HFC, all this they have told. Okay, see this over here. Share capital, reserves and surplus, everything they have given, but see the question. See, authorized capital 30,000 shares, issued capital 20,000 shares. See, first thing they have asked over here is to give existing shareholders option to purchase 1 rupee 10 share for every 4 shares held. Okay, held prior to bonus distribution. This option was taken up by all the shareholders. What is this? Right shares. Exactly. This is right shares. So how much right shares we are issuing? 1 share for every 4 shares. That means 20,000 shares I have right now. Right now we have 20,000 shares. Into 1 by 4 if you do, 5,000 right shares. 5,000 right shares. Are we issuing it at face value? No. We are issuing it at premium. So 5,000 into 15 rupees it will be. Bank account debited to equity share application. Simply they are doing lengthy entry. Bank account debited to equity share application account 5,000 into 15. Then equity share application 5,000 into 15. To equity share capital 5,000 into 10. To securities premium 5,000 into 5. Sorted? Right issue is sorted? Clear. Next what they told? To issue bonus shares for every 5 shares held. First we had 20,000 shares. Now we issued 5,000 right shares. So now we have 25,000 shares. And our bonus will be 1 share for every 5 shares held. That means our bonus will be 5,000 shares. Clear? 5,000 shares into 10 rupees. Bonus amount is 50,000. I need 50,000 for bonus. Check what you have. Do you have CRR? No. Do you have securities premium? No. Securities premium we have. Why? Because just now we issued shares at securities premium. So securities premium we have 25,000. That means remaining 25,000 I have to take from P&L only. There is no general reserve also. See the bonus entry. Securities premium debited, P&L debited to bonus to equity shareholders. Then bonus to equity shareholders to equity share capital. Sorted. Then see the last thing. Repay the debentures at a premium of 3%. How much is our debentures? 1,20,000. That means 3% means it will become 3,600. What is the entry? Debenture account debited 1,20,000. Premium on redemption debited 3,600 to debenture holders. See over here. Okay, they have created DRR. No? Don't forget a DRR entry. 10% should be there in DRR. No, P&L account debited to DRR. Then investment also they have made because 15% should be there in DRR investment. Then see debenture account debited, premium account debited to debenture holders. Debenture holders account debited to bank. That is somewhere over here. Premium is removed from P&L. After redemption, you don't need DRR. Transfer to general reserve. For redemption, we are going to sell the investment also. Investment sale. Just to follow the rules, they are creating the investment, creating the DRR, then removing the investment, removing the DRR. That should be it. Okay, this is your preference share, debenture redemption. Let's leave on. Yes, that is done. This is also done. So with that, we are done with company accounts. Okay. Yes. Okay. Next chapter that we have to discuss is final accounts. Now in final accounts, what I'm going to do, you know, three things there are there, four things in fact. One is manufacturing account, another is trading account, P&L account and balance sheet. Correct? Four things are there. Now manufacturing account is only if it is a manufacturing concern. If it is not a manufacturing concern, we have only trading account, P&L account and balance sheet. Now if you're talking about manufacturing account, how does the manufacturing account look? First you have over here two opening WIP, correct? Opening work in progress. If you have opening work in progress, obviously there will be closing work in progress. That means out of our stock, understand this, out of the stock that we have, what do we have in stock? We have raw material, we have work in progress and we have finished goods, correct? Raw material and work in progress both will go to manufacturing account. Finished goods will go to trading account. But all the three closing stock will go to balance sheet. Closing stock has to go to balance sheet. But the effect of that will go into manufacturing account for raw material and work in progress. Finished goods will be there in trading account only. Clear? Now when we are talking about opening WIP, closing WIP, we did that, correct? Now see next thing, to raw material, not purchase, raw material consumed. Raw material consumed. How will we get the raw material consumed? Opening stock plus purchases. Opening stock of what? Raw material. Purchase of what? Raw material. Plus if we have freight inwards, direct expenses. Okay, some direct expenses there, that also. Minus closing stock of raw material. So did you see that opening stock and closing stock of raw material is considered in manufacturing account only? Clear? Next, after that what we have? Direct labor, direct expenses. Clear? Now what we have to remember, indirect labor is also there. Indirect labor, indirect expense, whatever is required for manufacturing. So here what I have to remember is, I am giving you some examples. Okay, lighting, power, clear, rent of factory, what? Repairs of plant and machinery, depreciation of plant and machinery, all that will go into manufacturing account. Clear? Now, what is the purpose of preparing manufacturing account? Not to find any profit, to find the cost of manufacture. Now, when we are manufacturing, sometimes what we get, we'll get some waste product. That waste product will have on market. This is called as byproduct. By sale of byproduct. Scrap is byproduct. Okay, by sale of byproduct or scrap. That will be an income. That is why it is put on the credit side. So finally, what will you do? By cost of manufacture transferred to trading account. Finished goods only. Cost of manufacture means finished goods only, transferred to trading account. This is the manufacturing account. Clear? Here we have to be very careful about certain things. What is the things I want you to be careful about? One thing is rent of factory will go to manufacturing account. Clear? But if it is there rent of office, that will go to P&L. Clear? Depreciation on plant and machinery, that will go to manufacturing account. But depreciation on, let's say, other assets, it will go to P&L. But if you have depreciation on factory building, manufacturing account. Is it clear? Okay, these are the things that you need to be careful about when you're preparing manufacturing account. Lighting and all, sometimes in the question only they will tell 2/3 of the lighting is for office, 1/3 is for factory. That time you will do the split like that only. Clear? This is one thing. Then trading account. Trading account. 2, opening stock. What opening stock is this? Finished goods. By closing stock. What closing stock is this? Finished goods. 2, manufacturing account. If you have manufacturing, then 2 manufacturing account, because from there it has to come to trading account. If you don't have, then it will be purchase. 2 purchases. If you don't have manufacturing, then directly 2 purchases. 2 direct expenses, wages, anything if you have, that will be there over here. Okay, by sales. When you are writing purchases, purchase less returns, sales less returns. Then you will get gross profit. Gross profit carried down. Carried down means where? To P&L. Clear? P&L, we can't list out everything. What happens in P&L? First thing is by gross profit brought down. Okay. 2, all the indirect expenses. All the indirect expenses, and by all the indirect income. If you have any indirect income, that will be there over here. And finally, 2, net profit carried forward to balance sheet. Carried forward to balance sheet, yeah, in balance sheet will be added to capital. If you have loss, it will be on the opposite side. This is what you have to remember about trading and P&L. What about balance sheet? You know how to prepare balance sheet by now. Okay, I am not going to teach you that. But what you have to remember in balance sheet is couple of things I'll tell you. First, fixed assets, you keep it on top. Fixed assets minus depreciation, but fixed assets will be on top. After that, you put your current assets. After that, you put your current assets. Just better presentation, that's it. Okay, when you're putting your current assets, all are regular. One you have to remember, trade receivable or debtors. You'll put the amount in the inner column minus provision for bad debts. Then the net amount you'll put it in the outer column. Clear? This is one thing you have to remember about your presentation. Now, when we are going into liabilities, if you have any loan and all, first you put the loans. Okay, after that you put your current liabilities. Creditors, outstanding and all you put later. So what we are doing here also, long-term assets are fixed assets, we are putting them on top. Short-term assets are current assets, we are putting them below. Long-term liabilities are loans, we are putting them on top. Then we are putting current liabilities. Then capital. Capital, what you have to remember? Opening capital plus any additions, additional capital minus drawings plus net profit. What you are getting? This will be your final capital. Is this clear? This is about your capital calculation, how you are going to make it. Now, next what I want you to understand is some adjustments. Some adjustments which will always be there, those things we will discuss. Now, I am telling you the adjustments in 2 ways. One, what if it is given in the trial balance? What if it is given in adjustments? Clear? Outstanding expense. It is given in trial balance only. Then what will you do? Understand one thing. If things are given in the trial balance, that means we have to have only one effect. When will anything come into the trial balance? When entry is already passed. If you pass the entry, then that balance will go to ledger. Ledger, from there it will come to trial balance. If outstanding expense is there, okay, when it's in trial balance, you have to see whether it is an income, expense, asset, liability or capital. Then you have to classify properly. If it is income or expense, you will put into trading or P&L. Asset or liability, you will put it into balance sheet. Outstanding expense, if it is there in the trial balance, what you will do? Directly you will put it to balance sheet, liability side. Balance sheet, liability side. Is this clear? But if this outstanding expense is there in adjustments, if it is there in adjustment means what? Entry is not passed. You have to pass the entry. So you should have two effects because we follow double entry system of accounting. So what is the two effects for outstanding expense? In P&L, add it to expense. Outstanding rent means you'll add that amount to rent. Outstanding salary, you'll add that amount to salary. And in balance sheet, you will show it as liability. Is this clear? Next adjustment is prepaid expense. If it is there in trial balance, what will happen? Directly balance sheet, you will show it as asset. Prepaid expense. If it is there in adjustments, what will you do? What are the two effects? P&L, you will minus it from expenses, subtract it from expenses, and in balance sheet, you will show it as asset. Prepaid expense is an asset. Is it clear? Same way, if you have income receivable, income accrued. Okay. Now, if it is there in trial balance, directly you will take it to balance sheet asset. If it is there in adjustments, then what will you do? P&L, you will add it to income, and in balance sheet, you will show it as asset. Clear? Next thing, if you have income received in advance. If income is received in advance and is given in the trial balance, what will you do? You will show it in the balance sheet as liability. But if it is given in adjustments, what will you do? P&L, you will subtract it from income. And in balance sheet, you will show it as liability. Is this clear? Yes. Next, after that, bad debts. Bad debts. Very regular one. This is also very regular one. Bad debts. If it is given in trial balance, what will you do? What will you do? Directly P&L, debit. Expense, right? Bad debt. But if it is given in adjustment, then what will you do? P&L, debit. Then what will you do? Minus from debtors also. Okay, minus from debtors. Now, provision for bad debt. Provision for that bad debt. What will you do? If it's given in trial balance, directly in balance sheet, minus from debtors. Liability, right? Provision is a liability. If it is there in the balance sheet, it should be on liability side. But for better presentation, what we will do? We'll bring it to the asset side and subtract it from debtors. But if provision for bad debt, usually they will give it in adjustment. They will tell what they will tell in adjustment also. They will tell 5% provision to be maintained or to be created. That time, what will you do that time? First, P&L debit, because entry for provision for bad debt is P&L account debited for debited to provision. So what will you do? P&L debit, and then in balance sheet you will subtract it from debtors. I better draw arrow. Balance sheet. Otherwise, people will think balance sheet minus debtors. New formula is created. Okay. Is this clear? This is about PBD. Now, when you are here, I want to give you one more note also, just for your understanding. Whatever debtors are there, okay, from that first you subtract the bad debts, then you compute the, on this you compute the provision for bad debt. Okay. Sometimes when you compute provision for bad debt, already we will have some amount. So you will create provision only for the difference. If you have extra amount, remember one rectification problem, we had extra amount. That time what will you do to the provision? We will reverse the provision. If provision is not required, we will reverse the provision. That time you will credit it to P&L. Clear? This is one thing about provision for bad debt, bad debt. Then one more thing is depreciation. If it is given in trial balance, what will you do? Directly you will debit it to P&L because it's an expense. But if depreciation is given in adjustments, then what will you do? P&L debit, and then in balance sheet minus it from assets. Fixed asset. respective asset, furniture, machinery. Now, usually it will be in adjustments only. Most of the times it will be in adjustment. Now, after that, what if there is drawings? If drawings is given in the trial balance, then what will you do? Directly balance sheet, subtract from capital. If drawings is given in adjustments, then what you have to do? Minus from capital also, minus from cash, or minus from purchase. We have to see what kind of drawings it is. If it is drawings in cash, you have to subtract from cash. If it is drawings in goods, you have to subtract from purchases. Is this clear? These are some of the common adjustments that are there. Insurance premium. Insurance premium, okay, of owner paid. This will be drawings. Insurance premium of owner paid, which will be considered as drawings. Then they also tell LIC proceeds of owner received, that will be taken as no additional capital. Why drawings? LIC proceeds of owner is received. It cannot be taken as drawings. It will be taken as additional capital. Insurance premium prepaid and all we have already done. Prepaid what to do? Okay, prepaid part we have already discussed. But sometimes they tell life insurance premium of owner paid. Paid, no. Personal expense, no. Drawings. Life insurance proceeds of owner received. Received, no. It is an income, right? I mean, money coming in, right? It should be added to his capital because it is personal amount coming in. Personal amount coming in, add to capital. Personal amount taken, that will be subtracted from capital. Yes, that should be it. That is also drawings. Or if you add over here only income tax paid, that is also taken as drawings only. Okay, all our personal expense will be considered as drawing. Oh, very important one we have not taken. What is that? Closing stock. Closing stock. It will be given in adjustments only. If it is given in, okay, it will be given in trial balance also sometimes. If it is given in trial balance, directly to balance sheet. Balance sheet asset. But if it is given in adjustments, then trading account or manufacturing account. We have to see which account is required. Trading or manufacturing account, and then directly to balance sheet again. Asset. Is this clear? Yes, that should be it. These are the concepts of final accounts. If you want to click, you can click quickly. From here we start. Done, no? 3, 2, 1. Done. Click, click. Done, no? Done. 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 Yes. You can take a break for 15 minutes. Okay, our next question discussion is about final accounts. We'll continue with final accounts. Now, final accounts, what I would suggest is keep trading account, P&L account, balance sheet open. Start reading the question and try to finish it at once. But before you go to the question, it's always better. You have to go into adjustments. You have to go into adjustments. See here, prepare trading and P&L account for the year ended 31st March 2023 and the balance sheet as on that date after making provision for the following. Few adjustments they have given 1, 2, 3, 4, 5. Clear? First, value of stock on 31st March 2022 is 4,10,000. But this includes goods returned by customer on 31st March 2023 to the value of 22,000 for which no entry has been passed in the books. What is this? 4,10,000 includes goods returned by customer for which no entry is passed by the book in the books. So stock, it is there. Stock, no problem. But 22,000, what you have to do? Sales return, right? So you have to subtract it from sales, and you also have to subtract it from debtors. Entry for sales return account debited to debtors. That 22,000 has to be done. Clear? We will sort that and then only we'll proceed. Adjustment by adjustment will finish. Now see over here. Sales will, wait, closing stock will finish. Closing stock 4,10,000 sorted, and it also has to go to the balance sheet. In balance sheet, stock in trade 4,10,000. Clear? Balance sheet 4,10,000. Now, what we have to do? 22,000 sales return. No. Go to the question and check. There is one more sales return here. 63,000. So what is our total sales return? 63,000 plus 22,000. 85,000 is the total sales return. But one is there in the trial balance, that will have one impact. What is there in the balance sheet? What is there in adjustments? It will have two impacts. Now what will you do? See the sales return. 85,000 is subtracted. Okay, say 85,000 is subtracted. Debtors will keep it pending. What is our debtors? Where is our debtors in the question? Sundry debtors, 12,90,000. So what I have to do? 12,90,000 minus 22,000. So that makes it 12,78,000. We'll keep it pending. There might be other adjustments also for debtors. Is this clear till here? Okay. 68,000. So we'll keep this pending. The rest of the things we'll do later. Now, purchase includes furniture purchased on 1/10/2022 for 30,000. We are doing calendar year or financial year over here. We are doing financial year. Correct? So furniture purchase includes furniture which is purchased on, purchases includes furniture purchase. That means error of principal. So what happens over here? This 30,000 you should take it as furniture only. Okay, so you have to minus it from purchases. See purchases minus furniture. But in balance sheet furniture, what you have to do? Add the furniture. See furniture addition 30,000. Clear? Two places, two effects. You have to remove from there. You have to add it over here. Is it clear? Yes. Next, depreciation. Building 5%. Furniture and fixtures 10%. Vehicle 20%. So what will happen? Two effects. Building. See the depreciation 45,000 and net effect will go inside. And same depreciation. Okay. The depreciation they are giving total only in the P&L. Next, vehicle also depreciation is subtracted, and furniture also depreciation is, furniture is also depreciation subtracted, but furniture calculation you see 3,21,000 was there. What is the furniture depreciation rate? Depreciation rate for furniture is 10%. 3,21,000 was there. On this 10% will make it 32,100. 30,000 furniture. Just now the rectification which we did, that was purchased on 1st October. So for that into 10% into 6/12. So 1,500. When you total these two, 33,600. That is the depreciation over here. Now 33,600, 60,000 and 45,000. The three depreciations when we total it, check what you are getting. 45,000, 60,000, 1 lakh. 1,05,000, 1,38,600. Is that your total depreciation? See the P&L. 1,38,600. Depreciation adjustment is sorted. Okay. Next, after that, sundry debtors include 35,000 due from Goku, and sundry creditors include 25,000 due to him. Tell me one thing. If I have to give you 10 rupees and you have to give me 8 rupees, will I give you 10 rupees and take 8 rupees? No, what we will do? Net I will give you 2 rupees. So here they are telling sundry debtors include 35,000 due from Goku, and sundry creditors include 25,000 due to him. So what we will do? Both the places we will remove 25,000. 25,000 is common, no? 35,000 is from Goku, 25,000 is from Goku. That means next net what? 10,000 only, no? So what we will do? 35,000 we have to remove from sundry creditors. Minus sorry, not 35,000, 25,000 we have to remove from sundry debtors. And sundry creditors, what we will do? 6,45,000 minus 25,000. This will be 6,20,000. Clear? Sundry debtors, you are going to remove 25,000. So now we are at a value of 12,43,000. Is that correct? See sundry debtors. This was the balance. Sales return we have minused. And this Goku we have minused. 12,43,000. Clear? Next. Provision for bad debts is to be maintained at 4% on sundry debtors. Now calculate 4% on this. 49,720. Correct? 49,720. Do we already have provision for bad debt in the question? That you have to check. Is there provision for bad debt? No. 49,720 is what we have to create. Correct? Now let's go into the question. See here. Provision for bad debts. 49,720. Are you able to get the calculations? Yes. This is an adjustment item. It should have two impacts. See 12,43,000. See 12,43,000. So they also have removed the sales return, removed Goku also. Clear? 12,43 minus that, you will get the figure on the outer column. But remember 49,720 should be there in P&L as well. 49,720. Are you following the double effect? Yes. Now, next. Insurance premium includes 42,000 paid towards proprietor's life insurance policy. And balance insurance charges covers 1/5/2022 to 34/2023. Now very, very important. Insurance. We have to find that insurance premium. 82,500. Now understand this. How much is insurance premium? 82,500. In that what they are telling, 42,000 is for proprietor. So 42,000 will be directly taken as drawings. It cannot go into P&L. That means remaining 40,500 is there. But they said what? 40,500 balance insurance covers the period 1/5/2022 to 34/2023. 1/5/2022 to 34/2023. That means 1 year, 1 month is going into next year. That 1 month, what we have to do? Into 1 divided by 12. 40,500 divided by 3375. This 3375 is prepaid. This 3375 is prepaid insurance. Is this clear? Now, going into the balance sheet. See over here. Prepaid insurance 3375. Is this clear? But when we show it over here, see over here, in our P&L, where is it? Insurance premium. Insurance premium, how am I getting this number? I'll show you. 40,500 minus 3375. 37,125. 37,125. Can you see that number here? 37,125. And what we have to do with the 42,000 insurance premium? It has to be subtracted from, see over here, drawings, 42,000. Are you following this? In insurance premium, there was drawing also, remove that, subtract it from capital. In insurance premium, there was prepaid. Remove that, put it into balance sheet as prepaid insurance. Are you following with all the adjustments, what we have seen till now? That is it. Those are the adjustments. Now regular items. What will you do? One by one. Bank charges. Where will it go? P&L. See bank charges in P&L. 24,000. Direct. Clear? Next. After that. Wait, where is it? Building. We have already seen it. Building minus depreciation. It is done. Capital 19,48,000. Where will it go into the balance sheet? Opening balance 19,48,000. Clear? After that, carriage outward. Carriage outward will not go to trading account. It will go to P&L account. See the P&L account. Carriage outward 30,000. Clear? Next. We have cash at bank. Cash in hand. Both will go to balance sheet. See 21,000, 39,000. Both are sorted. Okay, once the adjustments are sorted, no. Rest of the things are just fill in the blanks. Once you sort all the adjustments properly, then fill in the blanks. You have to put it into the right place. That's it. Discount allowed, discount received. One will go to the debit side of P&L, one will go to the credit side of P&L. Okay, see over here, discount allowed, discount received. Both are sorted. Now, drawings, 1,80,000. We had one drawing, that is separate. Okay, that 1,80,000 also has to come here. See over here, drawings, 1,80,000. We had one extra drawing. What is that? Life insurance premium. Okay, next, electricity charges. Where will it go? It will go to P&L. See electricity charges in P&L, 33,000. Next item we have freight on purchases. This is carriage inward. It should go to trading account. See the trading account, freight on purchases. Next you have furniture and fixtures. We have already done the adjustment for furniture and fixture. One rectification also we have done and calculated depreciation also. General office expense, it should go into P&L. General office expense, see over here, it's there in the P&L. Next, after general office expense, you have interest on loan, no modification because all adjustments we have seen. Interest on loan also directly over here, 35,000 into P&L. Next, loan, 6 lakhs. Where will it go? Directly to balance sheet as liability. See the loan over here, 6 lakhs. Okay. After that, printing and stationery, where will it go? It will go to P&L. See the P&L, printing and stationery here, 27,000. Clear? Next, purchase returns, 39,000. Where will it go? It will go to trading and it will be subtracted from purchases. See, with that, this will get sorted. Furniture we have subtracted that time for rectification of error. Okay, next, purchases. Just now we saw the purchases. Okay. Rent of go down, where will it go? It will go directly to P&L. Rent of go down, 82,500. Next, we have salaries. Where will it go? Salaries. That is also directly to P&L. First item in the P&L, 1,65,000. Next, sales, 35,50,000. Where will it go? It will go directly to trading account, 35,50,000. Subtract sales return. Remember, in this sales return, there was one rectification. We have done the rectification that time. Okay, after that, stock. Which stock is this? Opening stock. Opening stock, starting of trading account, 9,30,000. Okay, next, sundry creditors, 6,45,000. But remember, sundry creditors, we have to remove Goku. When we remove Goku, you will get 6,20,000. Go to balance sheet and check 6,20,000. See, due to Goku. What is common between me and you, that we will remove. If I have to give you 10 rupees, you have to give me 8 rupees. 8 rupees is common. 8 rupees is removed from debtor also, creditor also. 2 rupees is still there. Okay. Next, after Goku, sundry debtors. I think this we have already discussed and sorted also. So many things were there. Everything we have calculated and discussed that. Okay. Vehicles, depreciation. We have seen that. Vehicle running expense. Where will it go? It will go to P&L, 54,000. Now, closing stock, we had discussed that time. Can you see all the items which we have seen in the trading account? All are discussed. Gross profit, you know how to calculate. That I am not going to tell you. See the P&L. All the items we have seen either in the adjustment or in the trial balance. We have brought it this side. So you will get the net profit that is going to be carried forward. This net profit will where will it go? Directly over here. Can you see? Net profit is added to the capital. In capital account, I mean in the balance sheet also, every item we have discussed. All of them are sorted. So always what should be, see, they have given all the explanations, what we have done calculation, same thing they have also given. Okay. What is the main thing that I'm trying to tell you? First, look at adjustments, then you look at the trial balance. Because adjustments, you have to understand first. Then you can see item by item. Okay. This should be it. Two things done. Next. One more question we have, which we have kept from final accounts. Now, question number 7. This was asked in May 2022. Where are you? May 2022. See, 20 marks is not a joke. If they are asking for 20 marks, see this, 20 marks exam. And it is not tough. I'm telling you, when there is manufacturing account, trading account, P&L account and balance sheet, they don't have room space left to ask you more adjustments. When it is trading P&L and balance sheet, they might ask you more adjustments. But manufacturing, trading P&L, balance sheet, that itself will take time. So they can't give you too many adjustments. See this question, 20 marks. Trial balance is there. It's huge. Some 4 adjustments are there, which are absolutely simple. See the first one. Stock of finished goods at the end of the year is 3,50,000. Where will it go? It will go to trading account. See over here, trading account 3,50,000, and that balance sheet directly it will go 3,50,000. Where is the stock? Closing stock 3,50,000. Is it clear? Next, provision for doubtful debts is to be created at 5% on sundry debtors. Okay, this is a very, very important one always. Now, debtors you have to search. Where is my debtors? Can you see over here 1,40,000? 1,40,000 into 5%. 7,000 is the provision. Already provision is there 7,000. Maybe there is some other rectification which we have to do or something else. We'll keep it pending. Actually nothing, no? Yes. Provide they said nothing is there. Now if you look at the sundry debtors, 140 minus 7,000, 133. Already 7,000 is there. I don't have to create anything. Are you getting my point? If at all this provision was 6,500, then I have to create 500 provision. Now what will happen? 500 provision will go to P&L also. It will be subtracted from debtor also. But here I need 7,000 and I have 7,000. So what I will do, even though it is there in the adjustment, only one effect. Even though it is there in the adjustment, we will have only one effect. Are you getting my point? Yes. Next. Okay, that is one of the adjustments. Provide depreciation on building 3,500. Plant and machinery 10,500. What are the two effects for this? See here, 10,500 subtracted, 3,500 subtracted. And it also has to go into the P&L. So P&L, can you find the depreciation? Where is it? Depreciation on building 3,500. Where is the other depreciation? Oh, sorry. One is plant and machinery. No, one will go to manufacturing account. Correct. So can you see depreciation on machinery 10,500? Okay. Yes. One is manufacturing. We forgot that manufacturing is there only in this question. Yes. After that, accrued commission 43,750. First of all, you have to see commission is income or expense. See on the credit side, there is no commission here. Can you see anything over here? Commission? No. But do we have commission this side? Yes. Can you see commission paid 17,500? What will happen to this accrued commission? It has to go to balance sheet, no? Okay, they have taken accrued commission 43,750 as income only. Okay. See, they have given note also. If accrued commission is treated as expense, in that case, net loss will be of 3,500 will be deducted from capital account and closing capital. They have given both. And accrued commission will appear on the liability side of the balance sheet. Why they have given this note? Because in the question, it was not clear whether accrued commission is expense or income. They have taken it as income, but they have given the note in the suggested answer that if you take it as expense, then you will have a loss. Okay. Here they have taken as income. Because they have taken it as income, accrued commission, that means income receivable is an asset. It is there on the asset side of the balance sheet. And because it is taken as asset, it has come into the P&L in the credit side. If it was taken as expense, it would have come into the debit side and it would go into balance sheet as liability. Clear? Such things, such provisions are made in suggested answer because they have not given the proper language there. They didn't tell commission receivable. They said accrued commission. Accrued commission can be for expense also, income also. Is it clear? Okay, that is one thing. No, you do one of the treatments because they'll give both the alternatives there. They try to correct. If they have made one mistake like this, next time they'll try to be more clear in the question paper. So same mistake will not be there next time. Okay. Interest has accrued on investment 52,500. Here there is no confusion. Interest on investment means what? Do we have it in the income side, interest on investment anywhere? No. So interest on investment is income. So you will find over here 52,500 in P&L, income. And you should find this also in the balance sheet, asset 52,500, interest receivable. This there is no alternative. This only one thing. For this also you cannot have alternative. Are you getting my point? Here they told interest on investment. Okay, next. After that, salary outstanding 7,000. So what we should do? First we have to check whether there is salary here. Salary is 70,000. That means it has to become 77,000 salary. Salary has to become 77,000. And you should show 7,000 in the balance sheet as liability. Sorted? Yes. Next, what is the next thing? Prepaid interest is 5,250. You have to find interest paid. Can you see 24,500? 24,500 minus 5,250. That time you will get 19,250. This should be your interest. So what you will do? Go and see the calculation. See 19,250. Interest 19,250. Then what you are going to do with that asset side? You have to show prepaid interest 5,250. Is it sorted? Yes. Now what next? Oh no, adjustments are already done. Adjustments are already done. Now we will go into the items one by one. One by one we are going into the items. Okay. Now, debit side I am seeing first. Opening stock of raw material. Where will it go? It will go to manufacturing account. See manufacturing account. Okay, opening stock of raw material. They have put over here 5,25,000. They should have actually added it to raw material consumed, but they have shown it separately. Okay, there is no closing stock of raw material. That's why it is not minused over here. Okay, next you have opening stock of finished goods. Where will that go? That will go to trading account. See 2,62,500. Next, what you have? Purchase of raw material. This should go into manufacturing account. Can you see manufacturing account? 17,50,000. 17,50,000. Next, land and building. 3,50,000. Where will land and building go? It should go to balance sheet. See 3,50,000. Depreciation we have already discussed. This is the net amount. Clear? After land and building, you have loose tools. Where will loose tools go? You remember Karthik sir? 1,05,000 loose tools. It will go into balance sheet, not manufacturing account. Balance sheet is an asset. Loose tools is an asset. It will go into balance sheet. Clear? Yes. Plant and machinery 1,05,000. Where will plant and machinery go? See over here. 1,05,000 minus this. It will be over here. Is it clear? Next, investment. Where will investment go? 87,500. It will go to balance sheet. See over here. 87,500. Okay. Cash in hand, cash at bank. Both will go to balance sheet only. Over here 70,000 and 17,500. Next, furniture and fixtures. This will also go to balance sheet, all direct items. Can you see furniture and fixtures? Over here 52,500 in the gap. Okay, depreciation rate is not given for furniture and fixtures. That's why we are not calculated. Next, after that, bills receivable. Where will it go? Balance sheet again. See over here 52,500. Next, sundry debtors 1,40,000. Where will sundry debtors go? 1,40,000 minus provision 1,33,000. Provision, luckily what was required was already there. Okay. Next, drawings 70,000. Where will it go? Subtracted from capital. See over here, drawings subtracted 70,000. Okay. Then coal and fuel. Coal and fuel is a manufacturing item. So directly we will go into manufacturing 52,500. This one. Coal and fuel. Clear? Factory rent and rate. Factory rent. So where will it go? Manufacturing only 70,000. Clear? Next, general expense. This cannot go to manufacturing. It has to go to P&L. See 14,000. General expense. Where is it? Here. Lot of 14,000s are there. So you have to be careful about which one we are talking. Okay. Then advertisement. This will not go to manufacturing. It will go to P&L. Advertisement 17,500. Then sales return. What will happen to sales return? It will be subtracted from sales. See over here. Subtracted from sales. Clear? Next, bad debts. Directly we will go to P. From that time he is waiting for this bad debt. We will put it into P&L now. Yes. 14,000. Where is that bad debts? See over here. They have shown the calculation. Provision for bad debts 7,000. Add this 14,000. Again subtract. not required. Directly 14,000 you can show. Okay, directly bad debt is 14,000. Provision already we have sorted the issue. Okay, next after that what happens? Direct wages. Wages has to go to manufacturing account. Where is wages? Yeah, 2,80,000. Next, after that, power 1,05,000. Where will it go? Manufacturing account. Next, they have a discount allowed. It will go to P&L 10,500. Take it to P&L 10,500. Discount allowed. After discount allowed, you have carriage inwards. Carriage inward will go to manufacturing account because it is related to purchase. Purchase is in manufacturing account. Are you getting my point? Usually you put it to trading account because that time there is no manufacturing. That time you are purchasing finished goods. Now you are purchasing raw material. Are you getting my point? Earlier when you are doing trading, you are purchasing finished goods and selling finished goods. So when you purchase finished goods, there is carriage inward that is there in trading account. Now you are not purchasing finished goods. You are purchasing raw material. That time there is carriage that will be in manufacturing account. This raw material you are converting and you are making it finished goods on your own. Are you getting my point? See, that's why it's over here. Carriage inward is in manufacturing account. If manufacturing is not there, then carriage inward you can put into trading account. Yes. Next, carriage outward. This is always same. No, it will go to P&L only. Carriage outward in P&L 24,500. Next, commission paid. P&L 17,500. Remember the alternative. If you take commission as expense, then accrued commission will be added to this. But here they have taken it as income, so it is on the other side. Clear? Yes. Dividend paid. P&L. Logically speaking, this cannot be there. This is total bakwas. This question. Dividend paid cannot be there. Why? How can you pay dividend in sole proprietor? Dividend is paid by company. But anyways, they have taken it as expense and put it over here. If you feel logically what you should do, instead of taking it as expense, from capital minus it. Dividend is paid by whom? Owner. To owner. Subtract from capital only. Are you getting my point? But anyways, I don't think they will make this mistake again because dividend is paid only by company. Okay. Yes. Next, after that we are done. Now the credit side. Sundry creditor, where will it go? Balance sheet, 1,75,000 you have to find in the balance sheet. Next, purchase return, where will it go? It has to be subtracted from purchases in the manufacturing account. In the manufacturing account. Next, capital, where will it go? Balance sheet. Can you see the balance sheet? Opening balance of capital is 3,50,000. Yes. Bills payable. Balance sheet, liabilities side, 84,000. Next, long-term loan, 7 lakhs. Where should it go? This also will go to balance sheet, 7 lakhs. Clear? Next, provision for doubtful debt. We have already sorted that. Sales, 29,75,000. It will go into sales. Will go into trading account. Yes, 29,75,000. Remove the sales return. 29,40,000. Finally, you have bank OD. Bank OD will go to balance sheet. 80,500. Clear? Done. Finished. Now see. Everything is discussed. This is balancing figure. Cost of goods manufactured. Where will it go? Straight into trading account. Clear? Trading account, everything we have discussed. Gross profit is one thing. Gross profit, where will it go? It will go to P&L. P&L account, you see all the things we have considered. Only net profit. Net profit, where will it go? It will get added to capital. Balance sheet, everything we have seen. All the things in the balance sheet we have seen. With this, we are done with final accounts. Clear? You have to be careful when you are doing it. Adjustments, be careful. Rest of the things, it's fill in the blanks. Okay? Yes. Now, non-profit organization, meaning and all, I'm not telling you. You should know all this. I know your biggest fear in this chapter is outstanding prepaid income receivable and income received in advance. That is the biggest challenge in this. Okay, so first we will discuss that only. Now tell me one thing. Okay, tell me one thing. What is the entry for outstanding expense? Expense account debited to outstanding expense. Is this correct? Okay. What is the entry for prepaid expense? prepaid expense account debited to expense account. Is that right? You only told me this, correct? Okay. What is the entry for income receivable? It is income receivable account debited to income account. Correct? Why? Outstanding expenses, liability. Can you see outstanding expenses credited? Prepaid expenses, asset. Can you see prepaid expenses debited? Income receivable is asset. Income receivable is the asset. Somebody has to give you money. It is asset, no. Income receivable account debited, and then income received in advance. This is a liability. Correct? So now what is the entry? Income account debited to income received in advance. Income account debited to income received in advance. Is this clear? 4 things you have. Now tell me one thing. All this is this year. When we go to next year, don't you think all this will get reversed? This year is outstanding. Next year when you pay no outstanding, you'll reverse it. This year it is prepaid. Next year it is that year's expense only. This year it is receivable. Next year it will be received. It will be reversed. This year it is received in advance. Next year it is next year's income only. So it will be adjusted. This is what will happen. So what you have to understand, 2 ways to calculate. One, preparing the income ledger. Income ledger. I'll show you both methods. Whichever method you're comfortable, you take it. Okay. Another is to prepare expense ledger. Expense ledger. First, we'll focus on income. Okay. Tell me, when income is received, what is the entry? Okay. Bank account debited to income account. So, can I write over here by bank account? This is the entry for income received. Income that is received. Clear? If this year there is some income receivable, what is the entry? Just now you wrote. What is the entry for income receivable? Income receivable account debited to income account. So I am writing over here by income receivable account. Clear? This is, do you agree, receivable of current year? Correct? Now, income received in advance. Just now you told me, income received in advance. What is the entry? Income account debited to income received in advance. So you're going to write to income received in advance. Correct? This is income received in advance of current year. Correct? Current year. So what will happen to last year's? It should get reversed, no? What was the entry? Income account debited to income receivable was the entry. So last year's receivable, what will happen? It will get reversed. So you will write income account debited to income receivable account. Correct? This is for income receivable of previous year. Correct? Same way, previous year's received in advance, that also has to get reversed. Okay, because that is this year's income. What is the entry? Income account debited to income receivable. Income received in advance we have passed. So now income received in advance account debited to income account. So by income received in advance, okay, this is income received in advance of previous year. Clear? Now when you do this, usually expenses and incomes are transferred to what account at the end of the year? P&L. But here we are in NPO. So what will happen? Income will get transferred to income and expenditure account. What? Income will get transferred to income and expenditure account. This is the balancing figure. This is one way to calculate when you have outstanding, prepaid and all. Other way also I will show you. Is it clear? Is this clear? Yes. Now expenses. Understand expenses. Tell me, when you pay the expense, what is the entry? You paid the expense, what is the entry? Expense account debited to cash or bank account, correct? So to bank account, you have paid the expense. So can I tell this is the expense paid? No. It is not current year. It is expense paid. It can have any year in this. Expense paid is this is the entry, correct? Tell me, just now you told me, what is the entry for outstanding expense? Expense account debited to outstanding expense, correct? So can I tell this is outstanding of current year? Is that right? Yes. Just now you told me entry for prepaid expense. What is the entry? Prepaid expense account debited to expenses. So by prepaid expenses, correct? So here you can write this is the prepaid of current year. Same way, last year's outstanding, what we will do? We will reverse it. So what is the entry? Outstanding expense account debited to expense account. So you will write over here by outstanding expenses, that is outstanding of previous year. Same way, prepaid also you are going to reverse. Expense account debited to prepaid expense, correct? This is prepaid of previous year. Are you following this? Clear? Ultimately, what will happen after all this? What will happen? Expense will be transferred to P&L, but this is NPO. So it will get transferred to income and expenditure account by income and expenditure account balancing figure. This is a way to calculate ledger as well. You need to know the ledger as well, because they ask the ledger also sometimes. Prepare subscription account, they can ask. Okay, now see the other way around. Other way around also I'll explain to you. See, you have two things to prepare: receipt and payment account, and you have to prepare income and expenditure account. Do you agree? Receipt and payment account is nothing but cash book. Receipt and payment account is nothing but cash book. It is like cash book only. Opening balance of cash and bank will be there. Closing balance of cash and bank will be there. It is a cash book, correct? Now what you have to remember over here, because it is cash book, all receipts and payments will be there. When I tell all receipts and payments, even capital receipts, even capital payments, expenditures will be there. That means if I sell the building, that will also be there in receipt and payment. If I buy the building, that will also be there in receipt and payment. That is one thing. And related to, okay, when we have written capital, we'll write revenue also. Capital and revenue receipts, capital and revenue payments, both are there. Everything will be there. If you paid money for whatever item, it will be there in receipt and payment. If you received money from whichever source, it will be there in receipt and payment. Clear? And one more thing you have to remember, related to any year. Related to any year. Last year's, 10 years ago amount, if you receive this year also, it will be there in receipt and payment. Because it is cash book, it has to be there. Correct? So 10 years ago salary, if you are paying this year also, it will be there in receipt and payment because it is cash book. This is the feature of receipt and payment. Income and expenditure, what happens? It is like P&L only. Just now saw P&L, like P&L. So if you are talking about P&L, you have to follow accrual concept. Accrual concept will be followed. So what you have to remember over here, only revenue items. Only revenue items. And one more thing, only related to current year. Only related to current year. Is this clear? Is it clear? Yes. Did you understand the feature of both the things? Okay. Now, instead of ledger, I will show you how to do it just in calculation. Okay. If I'm talking about expense. Now, you have to understand, they might give you anything. They might give you receipt and payment and ask you to prepare income and expenditure account. They might give you income and expenditure account and ask you to prepare receipt and payment also. Clear? So if I'm talking about expense and I'm calculating the expense from receipt and payment to income and expenditure account. So if I'm preparing income and expenditure account, I have to take the amount from receipt and payment and modify it and take it to income and expenditure account. Correct? So when I'm talking about expense, understand this. Expense paid I will get from receipt and payment. I'm starting with receipt and payment. So expense paid I will get from receipt and payment. So what I will do? Simple logic. Where am I going? I am going to income and expenditure account. Correct? In income and expenditure account, what do I need? Only related to current year. Now, outstanding of previous year. What we are going to do? Add or minus? Minus. Why? Outstanding of previous year. Paid in this year. No problem. But it is last year's expense. Remove. Okay. Outstanding of current year. This year we did not pay. We did not pay this year. But still we will add it. Clear? Prepaid expense of previous year. Previous year they already paid. But it is related to this year. So you will add it. Prepaid expense of current year. You already paid it, but it is next year's expense. Minus. That time you will get the amount for income and expenditure account. Is this clear? This if you are taking the expense from income and receipt and payment to income and expenditure account. Now when we are talking about income. If you are taking the income from receipt and payment to income and expenditure account. This also you need to know. Clear? I'll add the signs also. Minus, plus, plus. Okay. Logic you have to know. Now, if I'm starting with income and expenditure account, I have income. Okay. Income received. Where will I get this income received? In my receipt and payment account. Clear? Income received I am getting in the receipt and payment account. Now what do I need to do? Last year. Okay. Income receivable of previous year. What will I do? Minus. Why? It is last year's income. Income receivable of current year. We didn't get it. But it's this year's income. Add it. Clear? Income received in advance of previous year. Last year it is already received. But it is which year's income? This year's income. Add income received in advance of current year. Which year's income it is? Next year's. So you are going to minus it. That time you will get the income and expenditure amount. Okay. Is it clear? Same thing is happening in ledger actually. Same thing is happening in ledger. Okay. Whichever is comfortable, you take that in the exam. Now do you want to change the method? Both the methods I have shown you. Now, the problem is sometimes they will give you expense. Where we have to take the expense from income and expenditure to receipt and payment. Income and expenditure is given. Receipt and payment we have to prepare. So now what happens in such cases? Expense what I have is as per income and expenditure account. Correct? That is my starting point. So what I will do now? Outstanding of previous year. Outstanding of previous year, what will I do? I will add it. Why? Last year did not pay. This year paid. So add. When we are preparing receipt and payment account, it doesn't matter. Whichever years it is, you are going to pay it. If you have paid it, you are going to take it. Outstanding of previous year means what? Last year it is not paid. So this year it is paid. Add it. Outstanding of current year means what? This year they have not paid. They will pay it in the next year. So minus. Clear? Prepaid of previous year. Prepaid of previous year means what? This year's expense, but already paid last year. minus prepaid of current year. Prepaid of current year means what? Next year's expense, but we paid this year, add. That time you will get the receipt and payment amount that we require. Is this clear? Okay. Any doubt with this? No. Next, after that, what we are going into? Income. If we have to show the income from income and expenditure account, if we are going to receipt and payment account. From income and expenditure account, if you are going to receipt and payment account, what will we do? Clear? Now you understand. Income. We are starting with income, which is given in income and expenditure account. Now, remember this, receipt and payment account will have everything. This year, previous year, current year, next year, any year, it should be there. What will have? Only if you receive it. If you have not received, nothing will be there. Clear? Now, income receivable of previous year. What will you do? Add it. Why? Last year they did not get it. This year they will get it. Income receivable of current year. What will you do? Minus. This year we did not get it. We will get it in the next year. So it will be there in next year's receipt and payment account. Income received in advance of previous year. Last year they already got it. This year we will subtract it. Income received in advance of current year. This year we got it. Next year's it is, but we got it. We will add it. That time you will get the amount that has to go to receipt and payment account. Okay, plus. Is it clear? These are the things. This is the most irritating or troublesome item that we have to remember. Okay, next, after that we have one more thing I have to tell you. We have to prepare opening balance sheet. Opening balance sheet should be prepared. Things will be given in the question, but opening balance sheet we have to prepare. Why? To find the opening capital fund. To find the opening capital fund. Today morning only when I was going through the ArivuPro app, okay, there people who have purchased recorded classes and all, they'll put their doubts in the discussion portal. Today I saw a very interesting discussion about this topic only. The discussion portal, the doubt was, they're like, one student asked, sir, we prepare opening balance sheet to find the opening capital fund. Can we ignore that and prepare closing balance sheet and take the balancing figure as capital fund and do the reverse calculation to calculate opening capital? Can we do that? We can. But why should we do? You know why? Because the solution is they are asking you to prepare closing balance sheet. Opening balance sheet is just a working note. Are you getting my point? You have to prepare the balance sheet at the end of the year properly. So what we do, opening balance sheet, we find the capital fund. Then what we will do, add the surplus to that and then reach the closing. If you get the closing balance sheet, if you take balancing figure, then you have to subtract the surplus, you will reach the opening. Are you getting my point? Okay, so you are preparing opening balance sheet and in that the balancing figure will be to find opening capital fund. Clear? Information will be given in the question to fill the number and you will get the capital fund. After that, what you have to do? You have to prepare closing balance sheet. You have to prepare closing balance sheet. You know how to prepare balance sheet. Okay. But one thing I want to tell you. Nothing is balancing figure. In closing balance sheet, every item has to be computed. Nothing you are going to take as balancing figure. Only opening balance sheet, you are finding the balancing figure and that is going to be the opening capital fund. Don't make the mistakes. I'll tell you certain mistakes which you should not do. No using the word capital. Your entire concept of NPO only will go away if you tell capital there. Capital is what? Amount invested by owner to do the business. No business. This is capital fund. Capital fund means what? Amount that is accumulated to provide service. Clear? That one thing you can't do. Another thing, when you prepare income and expenditure, by mistake don't write P&L. Profit and loss means NPO concept only is gone. And when you get the profit or loss, don't use the word profit or loss, use the word surplus or deficit. Clear? That is one thing. And another thing, there is no trading account, obviously, because there is no trading activity only. Now, that is one thing that you have to remember. Then certain things are there. Entrance fees. Entrance fees. What you should do? It should always be added to capital fund. But in question, if they tell something, then follow that. In question, if they tell something, follow that. Because sometimes in the question, what they will tell, 50% of the entrance fees to be capitalized. That means, sorry, that means remaining 50% has to be taken into income and expenditure account. Clear? Donations. We can have specific donations and we can also have general donation. If it is general donation, it will go to income and expenditure account. Specific donation will go to balance sheet. Clear? Balance sheet which side? Liability side. Now remember one thing. If they don't tell anything in the question, donation will be taken as general donation. If it is given for constructing building, they have to tell. How will I know? If they don't tell me anything, it is general donation. I can use it for anything. I will put it into income and expenditure account. Is this clear? That is one thing. Then life membership fees. This will go to balance sheet, liability side. Life membership fees, person will pay only once? No. It will go directly. But if it is annual membership fees, it will go to income and expenditure account. Is this clear? Then there is one concept called as legacy. What is legacy? Person will die. When the person dies, he will write a will that all my amount should go to the NPO, non-profit organization. Person can die only once. Correct? This will also be added to capital fund in the balance sheet. Is it clear? So these are some important things that you need to remember. Other than that, I don't think there is any confusion. Okay, this should be it. The concepts of NPO. Photo shoot. Oh, did I write so much? What is this? I feel that I'm writing little only, but so many photos. Done. Done. Income, one by one I'll keep. Income. Done. Expense. Done. Wait. Yeah, this one. You can become a fashion photographer. Full is focusing and taking the photo. Wait. I think all this you can click together, all small things. Done. That's it. Nothing is there after that. With that, we are done with the concepts of. Okay. Now, first thing. Question number. This what I'll do. All the questions that we have done, I'll compile it and give it to you. Okay. Tomorrow, I think all the questions will be there. Full PDF I'll give it to you. Practice those questions. Now, November 2023, 12-mark question was asked. See this. ABC Sports Club had the following income and expenditure account for the year ended 31st December 2022. Now, we'll first keep that ABC Sports Club 12-mark question. Where is our 12-mark question? NPO usually has a good weightage. 12 marks, 15 marks, anything can be asked. 20 marks also. Heavy weightage chapter only it is. What is it? I'm not finding it. It's here. I thought we missed this question. ABC Sports Club. Yes. ABC Sports Club had the following information. Now we'll discuss this quickly. Income and expenditure account for the year ended is given in the question only. That means what are they asking? Receipts and payments account. Additional information is also there. Okay. Cash in hand, cash at bank is also there. You are required to prepare receipt and payment account for the year ended and balance sheet also. Opening balance sheet, there is no other option. You have to prepare opening balance sheet. Why we have to prepare opening balance sheet? Because we need the capital fund. Okay, we need the capital fund. See, whatever information we require for capital fund is there over here. Everything. Government securities is asset. Subscription outstanding is asset. Subscription is income. So income, when it is outstanding, it's called income receivable. Asset. Subscription received in advance is liability. Salary unpaid is liability. Furniture is asset. Land and building, asset. Sports equipment, asset. Stock of stationery, asset. Stock of stationery is asset. Stock, you have some stationery, asset. And cash in hand is also asset. Don't forget that. So what will happen? All the assets, when you add and subtract the liabilities, you will get the opening capital. Opening capital, you have to show it as a working note. Can you see the working note over here? Government security, subscription outstanding, furniture, land and building, sports equipment, stationery stock, cash, advance subscription, that is subscription received in advance, salary outstanding. That time you got the balancing figure as 40,24,000. Is this clear? Okay. Now, rest of the things we are going to do. Now, receipt and payment, I am going to tell you one by one. We are going to sort that out. Receipt and payment, we'll keep it ready. Now, can you see this 1,08,000 opening balance of cash? That will be the balance brought down. To balance brought down, 1,08,000. Clear? Now, apart from that, we have to go into this thing. First item is what? Salary. Correct? Salary. But do we have some adjustment there? Yes. Salary outstanding is there. So 2,35,000 is my salary. Correct? Last year's outstanding, what we have to do? I am not preparing income and expenditure account. I am preparing receipt and payment account. Last year's we have to add because it will be paid this year. And this year's we have to subtract because it will be paid next year. That time you will get 2,30,000. This should be your salary. Okay, let's check. Salary is 2,30,000. They also have done the working note, but I want to do the working note. I don't want to show the number from working note also. Okay, next. After that, stationery expense. Do we have anything for that? What is that? Stock of stationery. When we have stationery and all, we are doing what? We are preparing receipt and payment account. So there we want what? Stationery purchased. In income and expenditure account, what we will show? Stationery consumed. Stationery consumed. So what is the formula actually? Stationery consumed is equal to opening stock plus purchases minus closing stock. Correct? What is the stationery purchase expense? Expense means purchase. How much is the purchase? 30,000. What is the opening stock? Oh, sorry. They have given us income and expenditure account. No, so 30,000 is not purchase. 30,000 is consumed only. Income and expenditure is given. So 30,000 is stationery consumed is equal to opening stock how much? 3,000. Closing stock 5,500. 3,000 plus purchases minus 5,500. That time your purchase will become 32,500. This purchase should go into receipt and payment account. See over here. Stationery purchase 32,500. You can't put directly. Understand this, stationery and all these items. No, in the receipt and payment account, purchase will be there because that is what you pay for. In income and expenditure, consumed will be there because that is what you have used in this year. Clear? 32,500. Next, after that, rent and taxes. Do we have any adjustment for rent and taxes? No, directly put 5,000. Sorted. Okay, insurance. Do we have any prepaid or anything? No, directly insurance will be 2,000. Okay, office expenses. Here also we don't have anything. Directly you will put office expenses 8,000. Sorted. Okay, depreciation on building, depreciation on furniture, depreciation on sports equipment. All three will not go into what? Receipt and payment because it is non-cash, but it will impact us. Yes, see over here. No, not only balance sheet. It will impact it in other places also. See the land and building. From 20 lakh it became 19 lakh 62,500. That is 37,500 depreciation. No other thing is there. See the sports equipment, from 35,000 it has become 39,000. That means what? No appreciation. CA students, no appreciation for you. Only depreciation. Yes. Sports equipment. What we have to do? What is the opening balance? 35,000. What is the closing balance? 39,000. Did they tell you what is the depreciation on sports equipment? Yes, 1,000. Correct. So depreciation will be on the credit side. After 35,000, after depreciation, it should become 34,000. But it has become 39,000. That means 5,000 is purchase. This is what you have to find. That is the missing figure that can be there. If they are giving you receipt and payment and we have to find income and expenditure account, depreciation might be the missing figure. Now 5,000 purchase. Did you get this? Now see over here. Sports equipment purchase 5,000. Can you see that? Yes. Land and building. Why didn't we prepare ledger and all? Because difference is the depreciation only. You can see it over there. Now next one is furniture. See furniture also. What is the opening balance of furniture? 20,000. Closing balance is 19,800. Depreciation is given 1,200. 20,000 minus 1,200 should become 18,800. But it is 19,800. That means 1,000 is purchase. Is this clear? See that. Furniture 1,000. These are all indirect items, not directly there. Why we won't have it in income and expenditure account? Because it is capital item. That's why in income and expenditure you won't find. But with the opening balance, closing balance information and the depreciation information, you should look if there is any missing figure. Clear? Now, excess of income over expenditure. Surplus. Where will the surplus go? Surplus will get added to capital fund. No, receipt and payment it will not come. Receipt and payment is cash book. In that profit will not be there. Okay, it will get added to capital fund. See, 63,300 is added. Receipt and payment is cash book. In that we don't find profit. Money comes, money goes. That's it. Okay, now see the other thing. Subscription. Obviously, subscription is the major calculation item, no? See over here. 2,50,000 is my subscription. Correct? See over here. Subscription outstanding. Last year's outstanding, what we are going to do? Add, because it is received this year. Correct? This year's outstanding, what we are going to do? Minus, because it is received, it will be received only next year. We are preparing receipt and payment account. Subscription received in advance last year. What you are going to do? Minus, because it is already received last year. Subscription received in advance this year. What you are going to do? Add, because it is received this year. Calculate this. 2,24,000. Correct? This should be your subscription value. 2,24,000. Is this clear? Okay. In your concept part, we have discussed what to add, what to subtract. Okay. Next. After subscription, interest, no adjustment, directly interest. Donation. I told you, when they don't tell you anything about donation, that is general donation. So directly you will put it into receipt and payment account. Okay. First of all, if it was specific donation, it would not be there in income and expenditure only. It would have been in balance sheet. From balance sheet, we would put it to receipt and payment. Okay. Now, miscellaneous receipts. No problem. Already, we will put it. Can you see? Everything in the receipt and payment we have discussed. Now, what is the balancing figure? Balance carried down. 1,81,500 is balance carried down. Balance carried down is what? Closing balance of cash and bank. This will go directly to balance sheet. 1,81,500. Clear? To prepare balance sheet, advance subscription, salary outstanding, government securities, subscription outstanding, furniture, land and building, and sports equipment, stationery stock, all that is given in this. It is given over here. Everything. What is the thing not given? Capital we have to calculate. This is coming from receipt and payment account. Is this clear? Capital we have to calculate, and receipt and payment account, closing balance is the value over here. Any doubt with this? Okay, is this clear? Yes. Now, next. We are done with this question, but in this I have also taken one more question here. See, CA Foundation, June 2023, 15 mark question. What is the name of the person? Pune Medical Society. Okay, now listen. Next question. Following is the receipt and payment account of Pune Medical Society for the year ended 31st December 2022. Now, here what they have given, receipt and payment is given. So 100% they are asking you to prepare balance sheet. Okay. Receipt and payment account is there, and end of that you see the following additional information is also provided. See the information: subscription due, subscription received in advance, regular right. Do zoom. Okay. Okay. Stock of medicine. Remember last time we had stock of stationery. Now stock of medicine. Tell me one thing. In receipt and payment account, what should be there? Purchase of medicine. In income and expenditure, what should be there? Medicine consumed. Okay. Amount due for medicine supply. Amount due for medicine supply means what? Creditor. Creditor. Okay. These two will have a small role in this question. Value of equipment, value of building. Clear? You are required to prepare income and expenditure account and balance sheet on 31st December 2022. Clear? Now, you tell me. Small question, but small twists are there in this. Now see over here. Subscription due is what? 2,500, correct? Where should it go? It should go into opening balance sheet, no? Opening balance sheet. Subscription due, 2,500. Clear? Subscription received in advance is a liability. Closing balance, liability side it is there. Then, stock of medicine, asset, 12,500. Clear? Next, amount due for medicine supply, liability 12,000, creditor basically it is. Value of equipment, value of building, both will go into the opening balance sheet. And also one more thing will go in your receipt and payment account. Opening balance of cash will go to the opening balance sheet. Missing figure is only one thing, that is capital fund, 1,99,700. Oh, investment they have not given there. But how did we find investment? Here they told to interest on investment 10%. Now very important adjustment over here. 10% if it is interest on investment, 1 lakh should be the investment, no. But my question is, how do you know it was there last year? This investment if this investment could have been purchased this year also. We are putting this investment into opening balance sheet, no. How do we know? Did you understand how we got 1 lakh? Yes. They have told 10,000 is the interest. They have told 10% is the rate. So 10,000, if it is 10%, how much is 100%? 1 lakh. Correct? Now that you got it. Investment. Now my question is, how do you know that investment is not purchased in this year? If it is purchased in this year, it won't be there in the opening balance sheet, no. Are you getting my point? Simple. If it was purchased in this year, it would have been there in the receipt and payment account. On the payment side, investment account debited to cash account, investment account debited to bank account is the entry for purchasing investment. If it is purchased this year, it would be there in the receipt and payment account in the payment side. It is not there. That means it is purchased somewhere in the past. If it is purchased somewhere in the past, it should be there in the opening balance sheet. Is this clear? Did you understand the logic behind this? Okay. This is your opening capital fund. Now, we'll go into the other things. Subscription. The most important thing is subscription. Okay. Subscription you see over here, 65,000 is given. Now you are not preparing receipt and payment. You are preparing income and expenditure account. So like P&L you have to think. Only this year's you have to take. Subscription. Last year's outstanding, 2,500. What will you do? Yes. Minus last year's. This year's outstanding, what will you do? Add 3,100. Last year received in advance. What will you do? Last year received in advance, but it is this year's. Add 1,800. This year's received in advance. What will you do? Minus 1,400. You will get one value. 66,000. Clear? Okay. Let's check. Where is our income and expenditure account? Clear? Sorted? Okay. Now, after that, donations. Where is the donation in receipt and payment account? Did they tell you anywhere that it is a specific donation? No. Put it to Income and expenditure account only 25,000 done. Next, interest on investment, income, directly put it, income, sorted, all are direct items. One major calculation is there. Other than that, I'll tell you. Charity show collection. Now, when you have such things, no, what you can do is, you can do net. You can do net. Charity show collection is 16,500. Charity show expenses 2,750. What is the net amount? 13,250. 750. You can show the net amount here. 13,750. Okay, if you have something like that, you can net it. Next, medicine supply. Important thing. Medicine supply. This is what? Purchase. Expense purchase. Correct. What we need? Consume. Now, tell me one thing. Consumed, the formula is opening stock plus purchases minus closing stock. Okay. Opening stock, I know. What is opening stock of medicine? 12,500. Closing stock is 17,250. 12,500. Purchases, I don't know. Minus 17,250. Clear? If I put the purchases over here, I'll get the consume. But 35,000 is not the purchase. 35,000 is the payment made for medicine supply. Why it is not the purchase? Because we have over here amount due for medicine supply. We have creditors over there. How will I get to know the purchase now? See this. I have to prepare one ledger of amount due for medicine. Do you agree that this is a creditor? Creditor opening balance 12,000. Creditor closing balance 16,500. Do you agree with this? Okay. Purchase I don't know. But what I know, amount paid I know. What is the entry when you make payment to creditor? Creditor account debited to cash account or bank account. So to bank 35,000. This we know. That means what is the purchase? Credit purchase. By purchase 39,500. Did you get this? Now you got the purchase. Put that into your formula. 39,500. That time you will get the consumed. 35,000. 34,750. Did you understand? If this point was not there in the question, no. Amount due for medicine supply. If that was not there, directly opening stock plus that 35,000 minus closing stock, that is only consumed. But when the creditor is there, that means everything is not paid. I don't want what is paid. I want to know what is the purchase. Remember, credit or cash, everything should be there in when you are doing the accounting. Correct? So what we did here, we don't know the purchase. So we prepared the creditor's ledger. Opening balance, closing balance. Clear? When we made the payment, creditor account debited to bank account. Balancing figure is the purchase. That purchase we will put it over here. We will get 34,750 as the medicine consumed. Is this clear? Now, 34,750 medicine consumed. Is this clear? Yes. Next. Honorarium to doctor. Any adjustment for honorarium? No. There are some questions where there is adjustment, but here it is not there. So directly honorarium to doctor 15,000. Okay. Salaries 36,000. Do we have any salary outstanding given? No. Directly you can put 36,000 then. 36,000. Next. Sundry expense. No adjustment. Direct 950. Clear. Next. Purchase of medical equipment. Purchase of medical equipment. Now you need what? You need to calculate depreciation. So see over here, medical equipment is there. What you will do? You will have to prepare a ledger. Okay, medical equipment. What is the opening balance of medical equipment? 21,500. What is the closing balance of medical equipment? 37,200. Clear? What do we know? Purchase of medical equipment, we know how much? 25,000. 9,300 is the missing figure. That is the depreciation. Now, some of the students can get this doubt over here. Now, credit side, there is missing figure. It can also be sale of equipment. No. If it is sale of equipment, it will be there in the receipt and payment account. If you sell, you'll get money, it will be there in receipt and payment account. If it is depreciation, it will not be there in receipt and payment account because it is a non-cash item. Clear? So 9,300 what we are getting over here, missing figure, that is the depreciation. It has to be there in income and expenditure account. Depreciation on equipment 9,300. Clear? What about building? This is done. Building, did we purchase? Any purchase of building is there? No. Any sale of building is there? No. So building, what we have to do? Difference between these two is depreciation only. 3,250. See the 3,250 over here. So this is your total depreciation. Clear? Now from the question, can you see we have sorted everything? Whatever is required for income and expenditure, all the items we have discussed. Okay. Whatever you are getting is surplus. If surplus is there, it will get added to capital fund. 199,700 from opening balance sheet, we have seen that also. Clear? See, less depreciation. Okay. Add purchase and then less depreciation. Okay. Rest of the things, what we have to worry? Nothing. Because all these are direct items from that table. Everything is direct item. This is not from the table. This is from receipt and payment account. Clear? This is from receipt and payment account. You can see receipt and payment account. See 13,800 closing balance. That is the 13,800 over here. Any doubt with this? No. They have shown the calculation. Whatever calculation we have done, they have also shown the calculation. Okay, that shouldn't be a problem. That is it with this question. Okay, we have two more questions to solve. Then only we will go for the day. One more 15-mark question is there. I want to discuss this. Then we will proceed further. Okay, see the next question. Okay, see the next question. Here again, what do you find? What is given in the question? Income and expenditure account of Young Boys Club. That means what are they expecting you to find? Receipt and payment account we have to prepare. Okay, income and expenditure account is there right away. See here. This account has been prepared after following adjustments. Subscription. Outstanding of last year, outstanding of this year. Everything is given in one table. Whatever you require for subscription is there in this table. Then salary outstanding at the beginning of the year and end of the year were 600 and 150 respectively. Clear? That also they have given. General expenses include insurance prepaid to the extent of 150. Insurance prepaid is there. Okay. Audit fees for 2022 is still unpaid. We are in which year? We are in 2022 only, no? They are telling 2022 audit fees is still unpaid. Current years, correct? But can you see over here in the expenditure, audit fees is there? Why is it there? If it is unpaid, why is it there? Because in income and expenditure account, if I don't pay 1 rupee also, still I have to show the expense. Is it clear? Now, during 2022, audit fees for 2021 was paid amounting to 200. 2022 we have paid 2021's audit fees. Clear? The club owned a freehold lease of ground valued at 20,000. Club had a ground which is 20,000 value. Club had sports equipment on 1st January 2022 valued at 2,600. At the end of the year after depreciation, the balance of equipment amounted to 3,600. After depreciation, balance of equipment should go down, but it is going up. That means there is one purchase which is missing figure there. In 2021, club raised a bank loan. 2021 is which year? Last year. Last year they took a loan of 5,000. This was outstanding throughout 2022. That means we did not pay 1 rupee also in that loan. Okay, on 31st December 2022, cash in hand amounted to 1,600. I'll tell you what the problem will arise. You will start preparing opening balance sheet, correct? You always start with opening balance sheet. I'll tell you from the question only, I'll tell you what the problem will be there. Opening balance sheet, can you see subscription outstanding 700? You will put it to opening balance sheet 700. Sorted? Okay, next. Subscription received in advance 550. It should be liability 550. Clear? These two will go to this year's closing balance sheet. It will not go to opening balance sheet. Okay. Salary outstanding at the beginning of the year was 600. So you'll put it to the liability side, outstanding salary 600. Okay. Next, general expense include prepaid insurance this year, that is this year's prepaid insurance. Last year it is not there. You can check the opening balance sheet. There is no prepaid or anything because this year prepaid will go to this year's balance sheet. Okay. Audit fees for 2022 is unpaid. That we are not concerned. But 2022 audit fees of 2021 is paid. If we are paying last year's audit fees this year, that means last year it was outstanding 200. Audit fees unpaid. Okay. Now, club had a land, freehold land, 20,000. Okay. So, ground you see, 20,000. Club had sports equipment at the beginning of the year, 2,600. That is also there in the opening balance sheet, 2,600. Then, club raised a bank loan of 5,000. So, that should be there. Last year they took the loan, 5,000. Clear? This amount was outstanding. On 31st March, December 2022, cash in hand amounted to 1,600. Cash in hand is this year's closing balance. So what is missing, you know? Opening balance of cash. Now if you look at the solution, you'll find it, 1580. But from where they found it? You have to prepare receipt and payment account. In receipt and payment account, the balancing figure will be the opening balance. That you have to put it over here. Then you will get this capital fund. Are you getting my point? Exact question is there in the study material. I am taking examination question, but exact question is there in the study material. So I am not taking this because we didn't get it now. Only when we prepare receipt and payment account, balancing figure will be the opening balance. Did you do one receipt and payment account today before this? We did one question of receipt and payment. In that balancing figure was closing balance because opening balance was given. This one balancing figure will be opening balance because closing balance is given. Is this clear? Yes. Now we'll start. One by one. Salaries. Can you see salary of 3,750? Do we have any outstanding? Yes. How much is, see, 3,750. What am I preparing? You tell me first. Receipt and payment or income and expenditure account? Receipt and payment. Salary is 3,750. Last year's outstanding, what should I do? Add it because it will be paid this year. This year's outstanding, see over here, 150. What will I do? Minus 150. Give me the value. 4,200 is your salary. Is that correct? We are preparing receipt and payment account. Going into our receipt and payment account. Salary. Oh, how is it 3,900? What did we miss? Salary outstanding at the beginning and end of the year is 600 and 150. What is the salary? 3,750. Last year's outstanding is 600. 3750 plus 600 minus 150. 4,200 only, no? Why is it going wrong? We'll see the working note too. Salary, income and expenditure account 3,750. Outstanding of 2021. Huh? Oh, okay. Question error. See here there is 450. Grace marks. If it is there in the exam, it will be grace marks. Don't worry. See, instead of 150, here in the question, can you see in the question there is 150 here? But in the solution, there is 450. Okay, 450. Now what we will do? We will take it as 450 only. Now, can you see this? Did you understand this? 450. So that is why they are getting a different number. Yeah, you also take 450 only. Are you getting 3,900? Yes. If at all there are errors like this, you take 150 and solve. Error is not in the question. Error is in the suggested answer. Are you getting my point? Question is correct. 150. Take 150. You'll get one number. Okay. Now we are doing 450 because we have to match the answers, not just to understand. Okay. So understand this. Hey, where is it? Yeah. Salary 3,900. Is it sorted? Yes. Next thing. After salary, what is the next one? General expenses. What did they tell for general expenses? Included insurance prepaid of 150. So 1,500 insurance prepaid. We are preparing what? Receipt and payment account. So what should we do? Add or subtract? Add the prepaid 150, you will get 1650. 1650. Here they did not make any error, no issues. Audit fees, what are we going to do? 250 is this year's. If you want the calculation, it is 250 minus 250 plus 200. Because last year's audit fees we have paid this year. This year's we didn't pay 1 rupee also. Clear? Now see, audit fees 200. Clear? Last year's. Receipt and payment account. Doesn't matter which year. If you have paid, it will be there. Didn't get the audit fees. Got it. Yes. Secretary's honorarium. Any adjustment? No. Direct amount 1000 rupees. Okay. Next, stationery and printing. Direct amount 450 rupees. Next, annual dinner expense. Do you have contribution for annual dinner? See over here, 1000 rupees. That netting effect is there. No, don't do in receipt and payment. Do only in income and expenditure account. Receipt and payment, if you see, 1500 will be here only and 1000 will be here only. Why is it? Because it is cash book. You got the contribution on one day. You did the annual dinner on some other day. Are you getting my point? That is why there is no netting effect. Income and expenditure, in the question, they didn't do the netting effect because they want you to put separately. If you are preparing income and expenditure, you can do the net effect. Clear? Yes. So this 1000 is also taken. Interest and bank charges. Do we have any outstanding for that? Nothing. We are not discussed anything about interest and bank charges. Directly you can put 150. Next. Depreciation. Ignore. But which depreciation is this? Depreciation of sports equipment. Sorry. Yeah, equipment. We don't know what equipment, but equipment. Clear? Now see over here. Equipment, we have to prepare the ledger. What is the opening balance of equipment? 1st January, it was 2,600. End of the year, it was 3,600. Depreciation they have given was 400. So 2,600. If depreciation happens, it should go down. It should become 2,200. But what is it becoming? 3,600. That means 1,400 is the missing figure over here. This is your purchase. Where will it go? Receipt and payment account, sports equipment purchase 1,400. Simple logic. By now we saw the logic simple. If we have receipt and payment account to prepare, missing figure will be purchase. If you have income and expenditure to prepare, missing figure has to be depreciation. Okay, next. After this, where did we go? Yes, depreciation done. Now other side, subscription 8,500. Now be careful. We have one table only ready for us. 8,500. Last year's outstanding. What will you do? Add it. Why we are adding? Because we are preparing receipt and payment account. Last year's received in advance. What we will do? Minus 550 because already received last year. This year's outstanding. What we will do? This year's outstanding. Minus 750. Oh, I have taken outstanding first. Okay. Minus 750. This year's received in advance. What we will do? Add 370. Can you give me the value? How much? 8,270. We are preparing receipt and payment account. Last year's outstanding we are adding because it is received this year. This year's outstanding we are removing because it will be received next year. Last year's received in advance we are removing because it is already received last year. This year's received in advance we are adding because it is received this year. Next year's, but it is received this year. 8,270 should be your subscription. Clear? Doubt? All right. Okay. After that, what do we have? Entrance fees. Entrance fees. Did they tell you anywhere that it is going to be capitalized or anything like that? Nothing. We don't have any information. 250 entrance fees. Clear? Then contribution for annual dinner we took. Annual sports meet receipts. Directly you will put 750. Can you see everything you put into the receipt and payment account? Closing balance 1,600 was given. So we put the 1,600. That time you will get the balancing figure over here. 1,580. That 1,580 only was there in the opening balance sheet. Clear? When you are doing, you will not know 1,580. You have to do that and then come here. Clear? That time you will get. Now, how can you make mistake here? You know how can you make mistake? When you will prepare opening balance sheet first, you will forget about this cash only. Balancing figure will be capital fund. Later you will prepare receipt and payment account. That time it will not tally. That time you will put opening balance, balancing figure. Now your balance sheet will not tally. Are you getting my point? Now your balance sheet will not tally. Are you getting this? So this is the trick question. Remember, cash in hand will come from receipt and payment account. If it is not given, then you have to prepare receipt and payment account and then come here. Okay. After that, from the adjustments, see, after this balance sheet preparation is not going to be a problem, because balance sheet, what you are going to do, ground is there from starting of the year 20,000. Okay, sports equipment, see, 2,600 plus additions minus depreciation 3,600. They didn't have to do all this calculation because 3,600 was given in the question only. Directly closing balance of sports equipment you can show. Subscription outstanding 750. Insurance prepaid given in the question. Cash in hand given in the question. Closing balance was given in the question. Now see this. Subscription received in advance given in that table. Audit fees outstanding. This year's audit fees not paid, they said 250. Salary outstanding, starting, ending. See, they took 450 only here also. It was 150 actually. Okay, bank loan 5,000. Last year they took the loan. They didn't pay 1 rupee this year. So 5,000 will remain. See, this is coming from opening balance sheet. And 1,500 we will get it from our income and expenditure. Here there is a surplus. Add that surplus. You are done with your balance sheet. Is this clear? Yes. I understand why this guy was like, we can do the same thing in the regular class also. Because regular class in Bangalore, I mean any regular class, around 300 pages they write. So seeing this, he is thinking, simply we wrote 300 pages in class. Like this. Here number. Yes, done. But there if I do this magic will not work. Here it is working because you have studied. Okay. There. Oh, where is the number going? Yes. This is done. Last question from NPO, which we are going to discuss. Question number 20. Okay. This is some Mumbai club. Mumbai Indians, huh? CSK fans are here. We can't talk about Mumbai Indians. RCB we can talk. RCB is like a nice team. Winning and all we don't care. We want to play for fun. Yes. Now, yeah, we'll do this. This is the last question from NPO. With that, we should finish NPO. Now, CA Foundation, May 2022, they have asked for 10 marks only. Following is a receipt and payment account. That means what? We have to prepare income and expenditure account. Okay. Now see, you are given the following additional information. Following figures are there. Okay. See over here, subscription due, amount due for printing, checks unpresented being payment for repair, interest not yet entered in the passbook, estimated value of machinery and equipment. Okay. For the year ended 31st March 2021, honorarium to the secretary is to be increased by 20,000. Groundsman is to receive a bonus of 20,000. This question is also there in study material. Okay, prepare income and expenditure account and the balance sheet. Now, listen. Now, very careful you have to be about certain things. Honorarium to secretary is to be increased, they said, by 20,000. What do we have in front of us? Receipt and payment account. See the receipt and payment account honorarium. 1920, they said. We are in which year? We are in 2021. In receipt and payment account, what you are seeing, no honorarium. It is last year's what you have paid. That means this year's 100% is pending only. And this has to go to opening balance sheet also because it is outstanding. Are you getting this? Everything is given in table, yes. Some things are not given, hidden information like this. See, honorarium to secretary 1920. That means what payment you have made, that is 1920's honorarium. So 1920's honorarium, we are in which year? 2021. That means this year's honorarium, nothing is paid. If 1920's honorarium is paid this year, in opening balance sheet, this should be shown as liability. Clear? Now, we'll go into opening balance sheet first. First we have to prepare opening balance sheet. Here nothing, missing figure and all is there. Opening balance sheet we'll prepare first. Now see over here. Subscription due. Is it asset or liability? Subscription due. Is it asset or liability? Asset. Subscription is income for us. Okay, asset. Can you see? Subscription receivable 15,000. Amount due for printing. Expense. So outstanding. Correct? Amount due for printing 10,000. Clear? Next. Checks unpresented being payment for repair. Checks unpresented. What is it? You have to pay, right? Now, can you find it anywhere? Can you find it anywhere? No. You know why you are not finding it? Because see what is the cash in hand? 20,000. Cash in hand is 20,000. Okay. Can you find the cash in hand? Yes, 20,000. Next. See the savings account 1,93,000. Can you find 1,93,000? Yes. See what is the current account? 60,000. Can you find the current account? No. Why? Check is not presented. No. So what you are doing? 60,000 is there in current account. Minus 30,000. You are taking the net figure as 30,000. If you take checks unpresented as outstanding expense, it would be on the liability side. Instead of that, they have brought into asset side and removed it from current account only. Check is an expense. No. Unpresented. So remove the balance and show the net balance. Did you understand this? That is why you didn't see it in the liability side of the balance sheet. Now, interest not yet entered in the passbook. Here it is 0. Next year's we will see later. Estimated value of equipment 80,000. Can you find that 80,000 also? Clear? Everything is there. If you miss the honorarium, you will get a wrong number. See over here. Honorarium to secretary 40,000, which we picked from there. See over here 40,000. If you don't put honorarium, you will still get balancing figure, but you will get the wrong balancing figure. Is it clear? So honorarium to secretary. So your capital fund is 2,88,000. Is this clear? Yes. That is it. Now we will go into our main thing. That is income and expenditure account preparation. Now, first thing, we will go into the left side. Bank interest 5,000. Did we have an adjustment for bank interest? Yes. Interest not yet entered in the passbook 2,000. So bank interest has to become 7,000. Where is our bank interest? Yes, here. Bank interest has to become 7,000. 5,000 is received. 2,000 is not received. Receivable. That 2,000 has to go to balance sheet also. If you go to balance sheet, interest due 2,000. Interest due 2,000. Is this clear? Yes. Now, after that, donation and subscription. Okay, we can't put directly because donation and subscription are together over here. How much is subscription? 2,50,000. Are we preparing income and expenditure account or receipt and payment? Income and expenditure account. So you have to think like P&L, right? See, last year's outstanding, what you will do? What will you do? Minus 15,000. This year's outstanding, what you will do? Plus 10,000. Other than that, we don't have anything for subscription. This will become 2,45,000. 2,45,000. 2,45,000. And that subscription outstanding should be in the balance sheet. 10,000. Both are there. Okay. Next. After that, we have the next item. Entrance fees. Anywhere they told that entrance fees should be capitalized or anything like that? No. So what we will do? Where is our balance sheet? See over here. Why? Entrance fees is always capitalized. Remember, that time we wrote, see over here, entrance fees added to capital fund. If it is there in the question, then follow that. Donation is not like that. Donation is always general donation. If they tell in the question, we will take it. Entrance fees is always capital fund. If they tell in the question, then you will follow the instruction. So only when they tell 50% capitalize, some instructions they'll give, that time you do that. Here, entrance fees, entire entrance fees is added to capital fund. Is this clear? That is why you can't find it in the income and expenditure account. Now, next one. Contribution to club night. Is there any expense of club night? Yes. Contribution 10,000, but club night expense is 38,000. That means net is 28,000 expense. So what we will do, see over here. On the expense side, you are finding 28,000. Clear? Club night. Next, sale of equipment. That we will take in income and expenditure account. Huh? No, we will not take that. What we will take? What we will take? We have to take depreciation. Do we have equipment? See over here, equipment 80,000 and 1,75,000. We'll keep it pending. You know why? That side there is purchase also. That side there is purchase also. We'll keep it pending sale of equipment. Depreciation we have to find because we are preparing income and expenditure this side. Sale of equipment I'm keeping it pending. Bar room receipts. Oh, 20,000. Bar room receipts 20,000. Do we have bar room expense? Oh, no expense. Only receipt in bar. Okay, 20,000. So what we will do? Receipts from bar 20,000. Okay. Next. After that, proceeds from club night. Do we have club night expenses? We have taken it already that time, no? Club night expenses and club night receipt we have, contribution we have added it. Proceeds from club night directly 78,000. All three you can take net figure also if you want. All three items are there, no? All three you can take net figure also, but they have taken separately, no issues. However you take, it's not a problem. Groundsman's fees, 75,000. Do you remember there was a bonus for groundmen, which we had to pay? 75,000 groundsman's fees and bonus to groundsmen 20,000. Can you see the question? Groundsman is to receive a bonus. Did he receive the bonus? Is to receive a bonus. If he had received the bonus, it would have been shown as payment in the resident payment account. He did not receive the bonus. So do you agree that this 20,000 groundsman bonus is outstanding? Yes. Now see the fun. In the balance sheet, you should find this 20,000. Where is our balance sheet? Yeah, here. Groundsman's bonus outstanding. Can you see this? Did you understand? Language plays a very important role. It is outside the receipt and payment. If they had paid the bonus, it would be inside the receipt and payment. And they told is to receive a bonus. That means still not received. Is this clear? Yes. Next. After that, see, purchase of equipment. Now we can do the calculation. Purchase of equipment. Go into the equipment. See over here. I am preparing equipment account. What is the opening balance? 80,000. What is the closing balance? 1,75,000. Purchase of equipment, they have told how much? 1,55,000. Entry will be equipment account debited to bank or cash account. 1,55,000. That time we had one sale of equipment. Sale of equipment over here 8,000. So by cash or bank account 8,000. Now what will we get? Difference you should get. There is a difference. 52,000 is what? Depreciation. Now what we will do? Go into the income and expenditure account. 52,000 depreciation. Is it clear? Yes. Next. Rent of ground. Anything outstanding in that? No, we have not spoken about anything. Rent of ground. 25,000 paid. Clear? Printing and office expenses. Did we have something related to printing? Amount due for printing. Can you see over here? Amount due for printing. How much is printing and office expenses? 30,000. So what we will do? 30,000 plus last year's outstanding. What will happen? Minus. We are preparing income and expenditure account. Last year's outstanding will be subtracted. Plus this year's outstanding will be added. Gives you 28,000. 28,000. See, this is not the 28,000. Over here. Printing and office expense 28,000. Is this clear? Now, this 8,000 where it should go? It should go into balance sheet also, no? See the balance sheet. Outstanding printing 8,000. Sorted? Clear? Yes. Next. After that, repairs to equipment. Repairs to equipment. Did you have some circus there also? Checks unpresented for payment to repair. What are you going to do?
You cannot take repair. See, here repair is also a different number. Where is our repair? See, 45,000. What are you going to do? How much is the repair? Repair to equipment is 50,000. 50,000. So what you will do? Last year's unpresented. That means last year's repair it is minus 30,000. This year's unpresented means this year's repair it is plus 25,000. Clear? You are getting 45,000. Now what will happen to 45,000? See over here. 45,000. And this year's unpresented is there, no 25,000. What we should do? Show it as liability, but it's unpresented check. So what we can do? From current account balance, we can minus it. Where is our balance sheet? See, current account was only 20,000. When we have removed that 25,000, no, we have come into bank OD situation. Is it clear? Closing balance, there was no problem because closing balance, we had money. I mean, in the opening balance sheet, we already had money. Are you getting my point? Same thing we had done in opening balance sheet also. Opening balance sheet, you see, where had we done that? Okay, they didn't show the calculation. 60,000 minus 30,000 became 30,000. Here, if you notice the receipt and payment account, closing is 20,000 in the current account. When you remove one check of 25,000, when you make a payment of 25,000, what will happen? It will go into OD balance. So now when you go into that OD balance of 5,000, is this clear? Yes. Now after that, what do you have? We are done. Savings bank has 2,04,000. Where will it go? It will go into balance sheet. Can you see 2,04,000 savings bank account? Cash has 25,000. Where will it go? It will go into balance sheet 25,000. Okay, machinery and equipment we had already calculated. It is already there over here directly 175. 175. Clear? Now you have to be careful here. Okay, see this. All this we have taken. Subscription due also we have taken. See here. Honorarium to secretary is to be increased by 20,000. Last year's honorarium was not paid. It was paid this year. But this year they are telling we are going to pay honorarium. It is going to be increased by 20,000. How much was the honorarium? 40,000. So we are going to increase it. 20,000. So our honorarium is 60,000. Did we pay a single rupee in this 60,000? No. 1 rupee also we did not pay. But no problem. We are preparing income and expenditure account. We have to take full 60,000 as honorarium. Because even 1 rupee is not paid, outstanding subscription. Clear? Outstanding subscription. Liability. Are you following this? Honorarium is an expense, not receipt. Why is it there? Even if I don't pay, P&L I will take, no. Basically, you want to see the calculation of this. Last year's honorarium is 40,000. It is there in receipt and payment account, 40,000. Last year's outstanding is 40,000. So minus. This year's outstanding is 60,000. So add. So amount is 60,000. How am I getting this 40,000? See, in receipt and payment account. 40,000. Last year's outstanding minus this year's outstanding. Even though 1 rupee is not paid, we are going to add and it's shown as expense. Logic is accrual concept. Remember accrual concept. Whether you pay or not, if the transaction is related to this year, you are going to put it in this year. Okay, next. After that, if you look at your income and expenditure account, all the items we have put, only thing is remaining this one, 17,000 we got surplus. What will happen to surplus? Surplus will get added to capital fund, 17,000. This 288 came from opening balance sheet. All the other items in the balance sheet we have discussed. This is the end of the story. Entrance fees, again I am telling you, don't put it to income and expenditure account. They didn't tell you anything. Entrance fees is always capitalized. If they tell you 50% do that, 50% do this, then you do that. Clear? Otherwise you are going to follow directly putting into capital fund only, adding it to capital fund. Yes, that is it with the NPO. Yes, let's begin day 5. Last day of marathon. Okay, now, first thing we will address today is incomplete records. Now, all the chapters that we have done till now, you have seen how we have gone about it. First, discuss the concepts. Then we have gone through problems. Okay, actually speaking, frankly speaking, in incomplete records, there is no concept. This chapter, actually there is no concept. If you have studied all the other chapters properly, then you'll be able to solve the concepts. Solve the problems of this concept. But see, actually they can ask incomplete records, any type of question, any type. But at foundation level, they have kept one little limited boundary. Within that only they are asking. Otherwise what? Can they ask something incomplete records from company accounts? Yes, they can ask. Okay, incomplete records, can it have bills of exchange, BRS, and depreciation, inventory, final accounts, NPO, everything in one question? Yes, possible. But they are not testing. That means they are not going. Okay, incomplete records. So basically what is it? What does it mean? It means that books are not completed as per double entry system of accounting. Somebody is just maintaining little records. In one paper he is writing some important information. But with that information you are supposed to prepare trading P&L and balance sheet. The main task over here is the main task over here is to prepare trading account, P&L account and balance sheet. Clear? This is the main task. Now, after that, okay, you have to remember important ledgers to be prepared. Important ledgers. See, some common ledgers, common things I can tell you, but anything can be extra also. You have to, some things are case to case basis, like redemption of preference share, bonus share, partnership also. We have studied all concepts. Questions are within the concepts, but here we are trying to cover the common things. Something extra can also be there. Now, ledgers to be prepared. First one is always we need debtors account. We always need debtors account. Okay. Now some questions, what happens, along with debtors account, you also need bills receivable account. When you have debtors account and bills receivable account, always bills receivable account you have to try to close first. Bills receivable account, you have to balance brought down. This is the opening balance, and by balance carried down. This is the closing balance. This is the closing balance. Clear? What can be there over here? Okay, things that can be there in bills receivable account, or what can impact is new bills which are drawn. If new bills are drawn, what is the entry? Bills receivable account debited to debtors account. Bills receivable account debited to debtors account. So it will have a connection to debtors account. You can write over here by bills receivable account. This is basically new bills drawn. New bills drawn. Okay, this also new bills drawn. Are you getting this? Okay, what else can happen in bills receivable account? If new bills are drawn, bills can be honored. Bills can be honored. If bills are honored, you will have what is the entry? Bank account debited to bills receivable account. So you will have over here by bank account. Clear? This is basically bills honored. Bills honored. Okay. What can happen to bills other than bills being honored? Can we endorse the bill? Yes. If you endorse the bill, what will be the entry? Creditor account debited to bills receivable. So here you can write by creditors account, and this is basically endorsed. Now when we are talking about that, can you see bills receivable has a connection to creditors account also? We can have connection to creditors account also. So here we will write to bills receivable account. This is basically bills endorsed. Are you following this? Yes. Apart from that, what can happen? Bills are honored, bills are endorsed, bills can even be discounted. For discounted, what is the entry? Bank account debited, discounting charges account debited to bills receivable. So here you can write by bank account. No, discounting charges want to come over here. Bank account debited, discounting charges account debited. Oh, both will come here. To bills receivable. Yes, you are right. By bank account, this is basically bills discounted. Then by discounting charges, this is also because of bills discounted. Are you following this? Okay. Now what else can happen? What else can happen? Till now, bills are drawn, bills can be endorsed, bills can be discounted, bills can be honored. Bills can be dishonored also. If it is dishonored, what is the entry? Debtor account again, back. Debtor account debited to bills receivable. So you can write over here by debtors account, bills dishonored. Bills dishonored. Okay, here you can write to bills receivable account. Can you see the linkage of everything? That is the most important thing here. The linkage is very, very important because you should know which ledger is getting linked to which. So if your journal entry is strong, then only you'll be able to construct the entire thing. Okay, so dishonored, then after that nothing, by balance carried down. By balance carried down. Clear? Now you saw, no? The number of things which are there in bills receivable account. Anything can go missing in the question. Anything can be missing in the question. Clear? Now here you have to notice, see, most of the transactions are between bank, debtors, creditors, but this one discounting charges is there, no? This will also go to P&L. It will be debited to P&L because discounting charges is an expense. Other than that, there is no expense or income recorded as of now. When we go to debtors account, what and all can we find? We will have opening balance, to balance brought down. We will have closing balance, by balance carried down. Correct? Then what we will have? Sale, but which sale? Only credit sale. So debtor account debited to sales account. This is basically credit sale. Clear? Credit sale. Now when we have made credit sale, what can happen? We can get money. So by bank account or cash account depending on the question. Okay. This is what? Amount received. Correct? Amount received. Next what we can have? We can have discount allowed. We can have bad debts also. And we can have sales return also. Discount, bad debts, sales return. What is the entry for discount? Discount allowed account debited to debtors. What is the entry for bad debt? Bad debt account debited to debtors. What is the entry for sales return? Sales return account debited to debtors. So by discount or bad debts or sales returns. Clear? These are the things that can commonly happen in debtors account. Common items in debtors account. Common items of bills receivable. Creditors is also there. Along with creditors, we should also remember there is bills payable account. Bills payable is a liability. So it will be by balance brought down. To balance carried down. By balance brought down and to balance carried down. What will be there in bills payable account? New bills accepted by us. New bills accepted. What is the entry for that? Creditors account debited to bills payable account. Creditors account debited to bills payable account. So here we'll have by creditors account. Okay, basically what is this? Bills accepted. Here also you can write bills accepted. Clear? What next after that? If bills are accepted, what can happen? If bills are accepted, what can happen? There is no endorsing. There is no discounting here because I am the drawee. For drawee, what? Endorsing, discounting. Endorsing, discounting will be done by drawer. Correct? So nothing. If bills are accepted, only two things can happen. Bills are honored, bills are dishonored. Bills are honored, bills are dishonored. If bills are honored, bills payable account debited to bank account. You are making the payment. Correct? This is your bills honored. If bills are dishonored, what should be the entry? Bills payable account debited to creditors account. This is your bills dishonored. Now, any of this information can be missing in the question. So, in the creditors, you will write by bills payable account. This is for your bills dishonored. Clear? Now, when we are having creditors account, what is the entry? Creditors account. First, by balance brought down. To balance carried down. To balance carried down. Now, opening balance, closing balance we know. New bills accepted we know. Bills endorsed we know. Bills dishonored we know. What else can happen in creditors account? Main thing, purchases. What purchases? Credit purchases. So, you'll write over here by purchases. Okay, very, very important. This is credit purchases. Correct? If you have credit purchases, 100% you will make payment also. So, to cash or bank account. This is amount paid. Is this clear? This is the situation. What next? These are the four common ledgers. What are the four common ledgers? Debtors, bills receivable, creditors, bills payable. Whatever I have written inside those ledgers, no. Anything can be the balancing figure. If I have a debtors account, opening balance can be missing, closing balance can be missing, credit sales can be missing, amount received can be missing, discount can be missing, bad debt can be missing, any of the item can be the missing figure. Clear? Apart from that, what are the other ledgers we have to prepare? Cash account and bank account. Okay, you know how to record cash and bank account transactions. But what can be the missing figure here? Missing figure can be cash sales. Cash sales can be the missing figure. Cash purchases can be the missing figure. Amount received from debtors can be the missing figure. And amount paid to creditors can be the missing figure. These are some of the common ones, but anything can be missing. Even amount paid, amount received from bills receivable also can be missing figure. Amount paid, payable towards bills payable also can be the missing figure. In fact, there is one question in the study material where building purchase is the missing figure. They have given, we'll see that question. I have already considered that question. We'll see that question. Okay, so these are the common items which can be there. One more thing that you have to remember, which can help you in different places of different places of incomplete records is this formula. Total sales, you should remember, is cash sales plus credit sales. Clear? Same way, total purchases is equal to cash purchases plus credit purchases. Cash purchases plus credit purchases. So one more thing what you have to remember, this total sales and total purchases, both of them will go to trading account. Both of them will go to trading account. Now, when both of them go to trading account, you have to remember one thing, this will be less returns. Don't forget to subtract the returns when you're putting into trading account. Is this clear? Next, one more thing that you have to remember. Yeah, one more thing that we have to remember is this formula. Cost of goods sold, opening stock plus purchases plus direct expenses minus closing stock. Why do we need this formula? Maybe with this formula, sometimes we will be able to find the purchases. If you get the purchases, then you can find the cash and credit purchases. So this can also be one of the route to decode something in the incomplete records. One more formula that you have to remember, cost of goods sold is equal to sales minus gross profit. Sales minus gross profit. How can we find gross profit in some other way? Sales into gross profit percentage. Sales into gross profit percentage. These are the things which can help you to decode a lot of things in incomplete records. Okay, other than that, you have to remember, you have to prepare something called as opening statement of affairs. Opening statement of affairs means what? Nothing but opening balance sheet. What is the purpose of preparing opening balance sheet? To find capital. Remember yesterday NPO? There we are preparing opening balance sheet to find the capital fund. Here to find the capital, which will be the balancing figure. Clear? After you find this, closing balance sheet we have to prepare. In that, no balancing figure. Okay, very, very important. In closing balance sheet, no balancing figure. No balancing figure. That means everything has to be computed. Everything has to be computed. You cannot have any balancing figure in closing balance sheet. Opening balance sheet you prepare, you find the missing figure. Missing figure is your, capital, and that capital you can carry forward. How will you get the closing capital? Closing capital, how will you get it? You have to remember this also. Opening capital plus additional capital less drawings plus net profit if there is loss minus net loss. This should be your balance. Is it clear? Okay, this is your closing capital. So these are some common items what we need to remember in incomplete records. Yes, I want you to write this. I mean, not write, click picture. Ready? Done. 3, 2, 1. Ready? Yes. That should be it. Okay, that is what you need to remember. Now, see the question. This was the NPO question which we had done yesterday. 43rd question. Okay, incomplete records illustration. Okay, I have picked 1, 2 and 3 questions from incomplete records, but all of them are heavyweight. Not 3 actually, 4. No, 5th one is inventory. Okay, now we'll finish incomplete records and then we will go into depreciation. Now, very important question, Mr. Anup. What is the question number there? 8. 10 now. Yeah, huge question and very good question. Okay, listen. Focus fully. Mr. Anup runs a wholesale business wherein all purchases and sales are made on credit. So important point decoded. no cash sales, and no credit purchase, cash purchases, no cash sales and no cash purchases. That one thing is sorted. All purchases and sales are made on credit. He furnishes the following closing balance. Clear? Can you see what and all is given here? 31st March 2021, 31st March 2022. Why do we need all this information? To find the opening capital. Now, first that will always be a working note. As a working note, we'll have to see the opening capital. Where is it? Here. We'll sort that out first. Easiest thing is that, finding the opening capital. Sundry debtors, bills receivable. Sundry debtors and bills receivable. Can you see over here? Both of them are there in the opening balance sheet. Next, bills payable, sundry creditors. Bills payable, sundry creditors. Both of them are there in the opening balance sheet. Okay. Next, inventory, bank and cash. Inventory, bank and cash. That time automatically you will get the capital as the balancing figure. That is your opening capital. Is this clear? That is the first thing that we need. Then after that, if you notice, what and all ledgers we need? We need a debtors ledger. We need a bills receivable ledger. We need a bills payable ledger. We need a creditors ledger. Inventory not needed. Inventory, what will happen? This is opening stock in trading account. This is closing stock. And closing stock will go to trading account also. It will go to balance sheet also. Now, bank ledger we need. Cash ledger we need. 6 ledgers we need. Okay. Now, always working note is first. Now, I'll tell you how we go about it. Now, if you start with debtors ledger, first what I will do? First thing what I will do? I'll put the opening balance. I'll put the closing balance. So, 70,000 is the opening balance. 92,000 is the closing balance. Is this clear? Next, I'll go to bills receivable. See the bills receivable. 15,000 is the opening balance. 6,000 is the closing balance. So, 15,000 opening balance and closing balance is 6,000. Next, after that, bills payable is a liability. Remember that 12,000 opening balance and 14,000 is the closing balance. Bills payable 12,000 opening balance, 14,000 closing balance. Sorted? Yes. Next thing, sundry creditors. 40,000 opening balance and 56,000 is the closing balance. 40,000, 56,000. First job is putting all the opening balances. So if you put the opening balances, what happens? It becomes easy to solve. Now, what next? You have bank and you have bank opening balance, bank closing balance. Okay. See the bank account. What they have done? They have done summary of bank account and cash account together. That means they prepared one cash book only basically. See the bank opening balance 90,000 and bank closing balance 87,000. Same way cash 5,200 and 5,300. 5,200 and 5,300. Is this clear? These many things opening balance we have put. Now one by one, what we have to do? Best way to prepare is in your material. Whenever you are solving debtors account, creditors account, bills receivable, bills payable, cash, bank, trading, P&L, balance sheet. Keep everything open. At the same time, now I am starting to read the question over here. Correct? When I am starting to read the question over here and when I finish the question over here, again I am not going to read the question. It should be entered wherever it has to be entered. It has to be entered in one place, once only. Is this clear? Now see this. Deposited to bank. After payment of shop expense, 600 per month, salary 9,200 per month and personal expense 1,400 per month, 760 to 750. What does it mean? That means they are telling after these expenses, I have deposited into the bank 7,62,750. After paying for these expenses, I have deposited so much. That means these expenses are paid in what? Cash or through bank? Cash. After paying these expenses, remaining money I have deposited. That means these expenses are paid in cash. Now, 600 per month means what? 7,200. 9,200 per month means 1 lakh 10,400. And 1,400 per month These are the expenses. Now, first where we have to enter it? First in the cash book. Okay. Now, going into the cash book. Going into our cash book. See, by shop expenses, by salary, by, what was the other one? Other one was drawings. No. Yeah, by drawings, 16,800. Now, understand this. Same time we are going to enter the other effect also. Shop expenses and salary. Where should they go? They should also go to P&L, right? See the P&L. Let's go into P&L. Shop expenses. Can you find shop expenses? Can you see salary over here? Both of them are there. Clear? Drawings will not go to P&L. Drawings will be reduced from balance sheet. Can you see the drawing 16,800 which we just did? Clear? Can you see that first thing sorted? And then in that first point, what was the one more thing that was written? Amount is deposited. How much amount is deposited? 7,62,750. When you deposit money, entry is bank account debited to cash account. Can you see bank account is debited? Cash account is credited. Is this clear? Okay. Contra entry it is. Is it clear? Yes. Next. That was the first point. Cash withdrawn from bank 1,20,000. What is the entry? Bank account debited to cash account. See over here. Bank account debited. Cash account debited to bank account. So cash account debited and here bank account is credited. Is this clear? Next. After that, cash payment to supplier. Cash payment for supplies and 25,000 for furniture also. Cash payment to supplier. What is the entry? Creditors account debited to cash account. Okay, creditors account debited. Can you see cash account 77,200? And you have to go to the creditors account. Can you see creditors account debited 77,200? And what did they tell? They also have paid for furniture purchase. Furniture purchase, see, furniture account debited to cash account. And this furniture, you will find it in the closing balance sheet. Can you see this? Closing balance sheet. At the same time, you have to do everything. Otherwise, you will miss. At the same time, you have to do all the things. Debtors, creditors, bills receivable, bills payable, cash, bank, trading, P&L, balance sheet. All the things should be open. When you enter in one place, immediately the other effects also you should keep putting it. Clear? Next. Checks collected from customer but dishonored. 5,700. What is the entry for checks collected? Checks. Bank account debited to cash account. Can you see? Collected from customer. No, bank account debited to debtors account. So bank account debited 5,700. Okay. And we have to go to the debtors account. Debtors account 5,700. When it bounces, that time debtors account debited to bank account. If you miss this entry also, ultimate effect, there won't be any effect. Because bank account debited to debtors, debtors account debited to bank. But it's better to show it. Clear? Presentation also matters. Next, bills accepted by customer. Entry. Bills accepted by customer. Bills receivable account debited to debtors account. Bills receivable account debited to debtors account. Bills receivable account debited 40,000. To debtors 40,000. Is this clear? Yes. Bills endorsed. What is the entry? Bills endorsed. Creditors account debited to bills receivable. Creditors account debited. Creditors account debited 10,000 to bills receivable 10,000. Is this clear? Next. Bill discounted 20,000. Discount is 750. What is the entry for bill discounted? Bank account debited, not 20,000, 19,250. Discounting charges debited 750 to bills receivable. Can you see in bank account you have, discounting charges you can find over here. By bank, by discount account. Clear? Immediately you have to remember this 750 will also go to P&L. Okay, see our P&L. They are put over here along with the discount. Other discount is also there. Along with that 750 is there over here. Is this clear? Yes. Next, what happens? Bills matured and duly collected. Bills matured and duly collected means what? You're getting money. Bank account debited to bills receivable account. Bank account debited, you can see over here in the cash book. 16,000, right? Bank account debited 16,000 to bills receivable account 16,000. Clear? We got the money, bills went. Next, what happens after that? Bills accepted. That means we are accepting the bills. What is the entry? Creditors account debited to bills payable. Creditors account debited 24,000 to bills payable 24,000. Are you following this? Okay. See, whatever we did just now, nothing is affecting P&L or trading. Whenever it affects, we have to put it there immediately. Okay. Paid supplier by check. That time we had paid supplier, but that was by cash. Now creditors account debited to bank account. Creditors account debited 3,20,000 and you can see in the bank account also there is 3,20,000. Clear? Next, after that, received 20,000 on maturity of one LIC policy of the proprietor. No. It is capital. Additional capital. We received, not paid. Received 20,000 on maturity of one LIC policy of the proprietor by check. So what should be the entry? Bank account debited to capital account. Bank account debited to capital. Can you find this 20,000? Yes. Now immediately we'll go to the balance sheet and it has to be added to capital. See, 20,000 added to capital. Is this clear? Next, rent received 14,000 by check for the premises owned by proprietor. This is also additional capital. Rent received which was owned by proprietor. So what will be the entry? Bank account debited to capital. You can see that 14,000 added to capital here and you have to go to bank account and you have to see the 14,000 here as well. Clear? Bank account debited to capital. Is it clear? Next, building was purchased on 30/11/2021 for opening a branch, 3,50,000. We purchased one building, 3,50,000 and some expenses were incurred on this building, details of which are not maintained. Remember, capital expenditure and revenue expenditure on small unit. When I am purchasing building, if there are expense, that expense also will be added to building only. Clear? So building was purchased. Okay, 3,50,000. Expense was spent on the building. How much we don't know. That means that will be the balancing figure. This will be the balancing figure later. We spent for building, but we don't know how much we spent. Okay, that is one thing. Electricity and telephone bills paid by cash, 18,700, due 2,200. Due means what? Outstanding. But first we will record the one which we have paid. How much we have paid? 18,700. Electricity expense account debited to cash account. Can you see 18,700 here? Now remember, electricity expense is an expense. It should go to P&L also. Go to your profit and loss account. 18,700 and 2,200 both will be there. Why? Accrual concept. Outstanding also will be added. Now this outstanding which will also be there in the balance sheet liability side. Can you see outstanding expense heading? Under that there is telephone charges, electricity and telephone charges. Clear? Is this clear? Yes. Next, other transactions they have given. See over here. Claim against the firm for damage, 1,55,000. Somebody has filed a case on us asking for a damage claim of 1,55,000 is under legal dispute. Legal expenses 17,000. Firm anticipates defeat in the suit. That means we are thinking that we are going to lose the case. So, did we pay this money? Did we pay no. Did we pay the legal expenses? No. Because see, summary of cash transactions. In that they are told all about the cash transactions. Outside that, other transactions. That means these are not cash transactions. They gave one paragraph called summary of cash transactions. In that what is paid, what is received, everything they told. This is outside that. That is payable claim. If we lose the case, we have to pay the damage. For fighting the case, I have a lawyer. I have to pay the lawyer also 17,000. So totally I have to make a provision for this. I have to pay. Outstanding, I didn't pay. Correct? So what I have to do? 1,55,000 and 17,000. I have to make a provision. Okay, where is my P&L? Can you see over here? Provision for claim for damages, 1,55,000. Two legal expenses, 17,000. Both of them I have not paid 1 rupee also. So both will go to balance sheet. Clear? Provision for claim, 1,55,000 liability. Outstanding legal expense, 17,000. This will be our total outstanding. Legal expense and telephone charges, both. Are you following this? Next. Goods returned to supplier. That means purchase return. What is the entry for purchase return? Creditors account debited to purchase return. Creditors account debited 4,200 to purchase return, returns outward. What is the impact of this returns outward? It will also go to trading account. Can you see trading account 4,200 is minus? Are you following this? Next, there only goods returned by customer. This is called as sales return entry. Sales return account debited to debtor account. Can you see in the trading account sales return? And in debtor account, can you see sales return here? 1,200? Yes. Next, after that what happens? Discount offered by supplier. What is the entry? Creditor account debited to discount received. Creditor account debited to discount received. See creditor account over here and to discount received. Discount received is an income. It should go to P&L as well. Can you see P&L 2,700? Yes. Next line. Discount offered to customer. What is the entry? Discount allowed account debited to debtor account. Discount allowed account. Can you see discount allowed 2,400 is over here? That is the total discount for us. And then where is the debtors ledger? Yeah, can you see 2,400 in the debtors ledger? Okay, yes. Next, business is carried on at a rented premises for an annual rent of 20,000, which is outstanding at the year end. We are carrying on business in one building. We have not paid the rent for the entire year, 20,000 rent. But should I take that as rent in the P&L? Yes. I didn't pay 1 rupee rent also. Should I take it as rent? Yes, accrual concept. So see over here, rent is taken 20,000 in the P&L. I didn't pay even 1 rupee. That outstanding rent has to go to balance sheet. Outstanding rent 20,000. Is this clear? Yes. Next, what happens after that? That's it. Prepare trading P&L balance sheet. Now, one by one we have to close. Correct? Now, I'll show you what problem we will face. Debtors, whatever transactions are given, we have entered. Whatever transactions. But debtor we will never close without closing bills receivable. So bills receivable, if you see, opening, closing, everything is there. When you check, no, you'll get one balancing figure on the credit side. Balancing figure, amount received is there, bills honored is there, bills discounted is there, bills endorsed is there. Correct? All three are there. What can be missing? Only bills dishonored, no. I have new bills drawn. New bills drawn, I know. Bills discounted, I know. Bills honored, I know. Bills endorsed, I know. Still there is a missing figure on the credit side. That means it is bills dishonored. See the balancing figure here. 3,000 you will get. That is bills dishonored. What is the entry for bills dishonored? Debtors account debited to bills receivable. So you will put this 3,000 and you will put that 3,000 to debtors account. Clear? Now everything you have entered in debtors account. But if you notice, you will have two missing figures in debtors account. What are the two missing figures? Sales I don't know and amount received I don't know. Sales I don't know, amount received I don't know. Sales I have to take it as balancing figure. Amount received I can get from the cash account. Are you getting the link? Amount received has to come from the cash account. Now if you look at the cash account, okay, if you look at the cash account, you cannot go to the cash account because you have to close a lot of things, sundry creditors and bills payable, because there also some cash item can be missing. So are you following this link? Okay, bills receivable I closed. When I closed bills receivable, I got bills dishonored. That impacted my debtor. In debtor, two things are missing. What are the two things missing in debtor? See, credit sales we don't know. Amount received we don't know. Amount received has to come from the cash account. But before that, we will close credit bills payable and creditors. See bills payable, opening balance, closing balance, new bills, but there is still a missing figure. What is it? That is the amount that is paid, bills which we have paid. So this is the balancing figure. So bills paid, what is the entry? Bills payable account debited to bank account. Can you see 22,000 over here in the bank account? Now that bills payable is closed, what we can close? We can close the creditors account. Creditors account, all the numbers are there. One thing is missing. See, creditors, that amount paid is not missing. Amount paid in check, amount paid in cash, everything they have told. Discount, returns outwards, then bills endorsed, bills accepted, everything information is there for creditor. Only thing that is missing is purchases. Only thing that is missing is purchases. Did we find this? This is the balancing figure. Because we got purchase, we can go to trading account and put the purchase. Is this clear? Yes. After that, what happens? Now we closed our bills receivable, creditors, bills payable, bills receivable, creditors, bills payable. Debtor is still open because two missing figures. Now we can close our cash account. Now see the cash account. Just look at the cash column. So many payments we have made. Shop expenses, salary, drawings, Sunday creditors, furniture purchase. So many payments we have made. Do you have any receipt? Only once we have withdrawn. But do we have any receipt? No. How can we get money? Only by two options. One, cash sales, or by amount received from debtors. In this question, first line only they have told there is no cash sale. That means from where can I get money? Only one route. Amount received from debtors. Can you see that is the balancing figure? Cash account debited to debtor account. This balancing figure, when I put it to debtor account, that time I will get the balancing figure which is my sales. Are you getting my point? The balancing figure in cash account will impact my debtor account. The balancing figure in bills receivable account will impact my debtor account. Then finally the balancing figure is sales. That sale what we will do, we'll put it into trading account. 959, 750. With that we are done with trading account, sales and purchases. Is this clear? Now, debtor account is closed. Did you understand what's happening? Bills receivable is closed. Bills payable is closed. Creditors is closed. Cash is closed. Bank is not closed. See bank, all the debit items we have seen from where it came. Bank, all the credit items we have seen. Remember, one thing was missing. What is that? Building purchased, we don't know how much. See, the missing figure is building only. Missing figure over here is building. Bills payable, 3,70,000. Building, 3,72,000. Do you remember that point in the question? See over here. I told you this will be the balancing figure later. Building was purchased for opening a branch and some other expenses were incurred. Building we know it is 3,50,000, but some other expense we don't know how much it is. Clear? That was a balancing figure in the bank. Now one more thing is, this is purchased on 30/11. In the exam, they can make it a little more complicated and tell depreciation rate is 10%. So then from 30/11 we have to calculate depreciation. In this question, no depreciation rates are there, so we are going to ignore it. Okay. This is about building. Did you understand how building is the balancing figure in bank account and sales is the, amount received from debtors is the balancing figure in cash account? Is this clear? Building, where will it go? It will also impact our balance sheet. Go to the balance sheet. See building, 3,72,000. 3,72,000. Clear? Now, one by one we will close. See trading account, all the information we have. Opening stock, closing stock is not there. From where will I get opening stock and closing stock? From this table. Can you see this table? Inventory, 1,10,000, 1,90,000. 1,10,000, 1,90,000. When you put that, you know, you will get gross profit. That gross profit will come to P&L. Clear? After that in P&L, all the items we have sorted. Net profit. That net profit, where will it go? It will go to balance sheet. Can you see 2,57,700? Now if you look at balance sheet, opening capital we got from opening balance sheet. So you will get the closing capital because all the other items we have entered. Can you see the only items which is not ticked in the balance sheet? See the items which are not ticked in the balance sheet. Inventory from the table, sundry debtors from the table, bills receivable from the table, cash at bank, cash in hand, all are from that table, direct input. And here bills payable and sundry creditors are also from the table. So whatever calculation based things, everything was entered. This is just copy paste into the balance sheet. Is it clear? This is your question. This is one of the ultimate questions of incomplete records which is there. Okay, covers everything, all angles it covers. You should try doing it on your own. Clear? Yes. That is one thing. Next question. From the data furnished by Mr. Manoj. Let's search Manoj. Yes, we found Manoj. Now, yes. Now, see this next question. This is also one of the big questions from the illustration. From the following data furnished by Mr. Manoj, you are required to prepare trading and P&L account for the year ended 31st March 2022 and balance sheet as at that day. All working should form part of your answer. Now, see what and all information they are given. Can you see opening, closing, opening, closing? Clear? Now, first what we will do always, we'll try to do the opening balance sheet, correct? Now see this, see the fun in this. See the fun. I will start preparing opening balance sheet, okay? I saw, creditors, 15,770. I'll go and put it here, 15,770. Sorted? Okay. Sundry expense outstanding, that is also a liability. You will put it over here, 600. Done. Next, sundry assets, that means fixed assets, 11,610. That is also put. Okay. Looks easy. Inventory, 8040. You will go and put inventory also 8040. Okay. Next, you will put cash in hand and bank. So you are like, okay, less tension. Cash and bank together it is given. 6960. Okay. Then you will come little further into the question and you will see debtor 1 question mark is there. If debtor question mark is there, then I can't complete my opening balance sheet because debtor is also missing, capital is also missing. Now how will I get the debtor? I have to prepare the debtors account. In debtors account, the balancing figure is opening balance. Last time in the debtors account, the balancing figure was cash received. Sorry, not cash received. Credit sales. So in this question, the debtors account opening balance will be missing figure. When we get that, we can enter it over here and that time we can get the capital. Is this clear? Did you understand this? Yes, no? Yes. Now, have a look at this. So we need creditors account. Outstanding expense, we don't need to prepare ledger. We need asset account. We have to analyze this later. An asset account. Okay. Can you see creditors account and debtors account and cash account, cash and bank account? 3 major ledgers. There is no bills receivable. There is no bills payable. Is it clear? Now what we will do in those ledgers always. First we will put the opening balance, right? See, combined cash and bank, no tension. Okay. Cash and bank. What has happened? Opening balance 6960, closing balance 8080. See, opening balance 6960, closing balance 8080. Clear? Debtor, creditors 15,770, 12,400. 15,770 and 12,400 opening balance, closing balance. Now debtors you see, we don't know opening balance, but we know closing balance. If you don't know both, we are in trouble. Okay, one they have given. Closing balance is 17,870. See, 17,870. This we don't know. This will be the balancing figure later. Clear? This we don't know. Next. Now what they have told. Can you see over here? Details relating to transactions in the year. That means from here whatever is printed, that is current year's transactions. We have to enter it wherever required. Clear? Cash and discount credited to debtors. Is it important now? Actually, what is the entry for cash? Cash account debited to debtors. What is the entry for discount? Discount account debited to debtors. They have given both together. We want it separate. Because debit is two separate accounts. Credit both are one ledger only. But don't worry. Somewhere down. See, discount. No, where is that? Realization from debtors paid into bank. Can you see 62,500? That means out of 64,000, If 62,500 is amount received, remaining 1,500 is discount. Are you following this? Here they told cash and discount together, but here they told amount received from debtors. So total together is 64,000. Amount received from debtors is 62,500. That means balance 1,500 is discount. Okay. Tell me what is the entry for amount received. Bank account debited to debtors. Can you see 62,500 debited to bank and debtors account 62,500. Sorted. What is the entry for discount? Discount account debited to debtors. Can you see 1,500 over here? And discount is an expense. It also has to go to P&L. Can you find discount in the P&L 1,500? Okay. Next. Sales return. What is the entry for sales return? Yes, sales return account debited to debtors. Can you see sales return in the debtors account 1,450? What is the other impact of the sales return? What is the other impact of the sales return? Trading account. Yes, it has to be reduced from trading account. Can you see minus sales? From sales they have removed sales return. Okay. Now after that, bad debts. What is the entry for bad debts? Bad debts account debited to debtors account. Bad debts account debited to debtors account. Can you see credited here? And bad debts will also go to P&L 420. Next. Sales. Cash and credit. That is not important to me. Why? I need separate. So this is my total sales. My total sales is how much? 71,810. This has to be split into cash sales and this has to be split into credit sales. So as of now, I can't get the information. So I'll keep it pending. Clear? Discount allowed by creditors. What is the entry? This basically for us it is discount received. Creditors account debited to discount received. See my creditors account. Creditors account debited to discount received 700 and discount received is an income. It will also go to P&L. Can you see P&L 700? Okay. Next. Purchase returns. What is the entry? Creditors account debited to purchase returns. Creditors account debited. Returns outward. And that has to be subtracted from our purchases also. Can you see purchase returns subtracted over here 400? Okay. Yes. Next. Additional capital paid into bank. Extra capital. What is the entry? Bank account debited to capital account. Bank account debited to capital account. See over here. Bank account debited to capital account 8,500 and this should be added to the capital in the balance sheet. Should be added to the capital in the balance sheet. Is it clear? Next, cash purchases. What is the entry? Cash purchase. Purchase account debited to cash. Purchase account debited to cash. Can you see 1030 in over here? And it should go to trading account. Can you see in trading account 1030 is added because total purchase will be there. Not only cash purchase, total purchase. Can you see 1030 is added there? Yes. Last question only, they told only credit. Here they didn't tell anything like that. Cash expenses. 9570. Correct? What is the entry? Expense account debited to cash account. 9570. But when you put it to the P&L, you have to be careful. Outstanding of last year should be subtracted. Outstanding of this year should be added. Don't forget that. The concept that we studied. 9570 minus 600 plus 330. 9,000? Is this clear? Last year's outstanding, remove. This year's outstanding, add. Then only you can put it to the P&L. Can you see 9,300 expense in the P&L? Yes. Okay, next. After that, you have paid by check for machinery purchased. 430 rupees machinery they have purchased. And for that also they have given check. Tell me, what is the entry? Machinery account debited to bank. Our bank is over here. Machinery account debited to bank. Clear? Now listen. 430 rupees you purchase machinery, right? Should I put to balance sheet? No. Why we should not put to balance sheet? Because already we have assets over here. Sundry assets. Can you see the difference between opening balance and closing balance of sundry assets? That is 430 only. 11,610, 12,040. Yesterday in NPO, we have already discussed. Here there can be missing figure. That same concept can be here also. Extra thing, something is there which is missing. What is that? Depreciation can be missing. Here there is no missing because exact difference is 430. So what I will do? 12,040 directly I will take and I'll put it to the balance sheet. 12,040 as it is given. Clear? Next. After that, household expenses drawn from bank. Drawings. What is the entry? Drawings account debited to bank account. See over here, drawings account debited to bank account. And that drawings has to be subtracted from capital. Can you see it is subtracted from capital? Yes. After that, you have cash paid into bank, cash drawn from bank. You can ignore this. You can ignore this. Okay, they have done it, but you can ignore. You know why? Because cash and bank is together, no? If cash and bank is separate, then contra entry. Cash and bank is separate together. So what is happening? See over here. 5,000, 5,000. 9240, 9240. Are you getting my point? They have passed the entry, but in case in the exam, if you miss this also, no problem. But when you have cash account, cash account, bank account, columnar, that time you can't miss it. Are you getting my point? Because cash balance is separate, bank balance is separate. Next, after that, they have also told cash in hand, 1,200. Why will we need that cash in hand? We know the total. In this, if there is 1,200 cash, remaining everything is bank. See the balance sheet. Where is the balance sheet? Yeah. Directly cash and bank together it is put. Why we need only cash? Not required because full from start to finish we have done everything together. Ending why we want separate? Not required. Okay. Next, checks issued to creditors. Checks issued to creditors. Entry. Creditors account debited to bank account. Where are your creditors? Here. Creditors account debited to bank account. 60,270. Can you see the bank account? 60,270. Is it clear? Now if you notice, nothing is there remaining. Now, from the starting, we have to close all the ledgers. Okay, we have to close debtors account, we have to close creditors account. Debtors account, if you see, opening balance is already missing, sales is also missing. So we can't get the sales like that. Okay, so now what we will do? Creditors account will close. Creditors account, how to close? Everything is there, only one missing figure, that is purchases. Where will that purchase go? It will be added to the cash purchase which we already know and our total purchase will be there. Are you getting this? Cash purchase we already entered that time. Credit purchase we found now. Purchase return we had already entered. Now the remaining amount will be your purchase in the trading account. Clear? Now, the problem is with sales. Where did it go? Yes, here. Now see, creditors are gone, done. Now, debtors, you can't close yet. Cash account, if you see, everything is there. Everything. Only one thing is missing on the debit side. That is our sales. 4,600. What sales is this? Cash sales. When we get this cash sales, you can minus from total sales and get your credit sales. Total sales we already knew. Cash sales we found now. How did we get cash sales? Balancing figure in the cash and bank account. Now you will get your credit sales. 67,210. This is your credit sales. What is entry for credit sales? Debtors account debited to sales account. Now you enter debtors account debited to sales account. Because you did this, you can also put the sales over here. Cash, credit, both are there. Sales return we have already considered. This is your total. Sales which will be in the trading account. Now what happened? Cash and bank account closed. Creditors account closed. Debtors, that one missing figure which you were looking for. Now you got it. What is that missing figure? Opening balance. When you get this opening balance, you put it over here in the opening balance sheet. When you get the opening balance sheet, that time you will get this opening balance of capital. If you get the opening balance of capital, you can enter it into the balance sheet and close the capital. Is this clear? Now, did you understand this link? Okay. Now, after that, you see trading account, whatever we wanted, everything we put. Opening inventory, closing inventory, it is given in the question only. Okay, you just enter it. You will get the gross profit. That you bring it to the P&L. P&L, all the things we have entered. Only net profit is there. That is a balancing figure. When you get net profit, put it and add it to capital. Now what happens? You will get the capital also closed. Now what is missing in the balance sheet? Inventory, closing stock given in the question. That table. Sundry debtors given in that question. Sundry creditors given in that question. Outstanding expense is also given in the question. Rest of the things we have already entered. Is it clear? This is your second question on incomplete records. Now, next we'll go further. Practice questions also. There are some bigger questions there. Mr. A runs a business. Practice question number 2. Okay. Ready? Okay. See over here. Mr. A runs a business of ready-made garments. He closes the books of accounts on 31st March. Balance sheet as on 31st March 2021 was as follows. Our one job is less. Opening balance sheet, they only give. We don't have to prepare. They only give. And in that there is capital. We will use this capital when we prepare the closing balance sheet. Other things you see, creditors. So we will have to prepare creditors ledger. Creditors ledger we have to prepare. Furniture we will have to analyze. Stock, opening stock will go to trading account. This is opening stock. Debtors ledger we have to prepare. Cash and bank are two separate items. So we have to prepare those ledgers. Now, can I enter it right now only? Creditors 82,000. Correct? Creditors 82,000. Where is it? Here. Can you see the opening balance? Okay. Furniture 40,000. I don't think they are preparing furniture account. Okay. Furniture we'll see the calculation later. Debtors 1 lakh. Debtor account we have to prepare. There is no other option. Debtor, can you see the opening balance? 1 lakh. Clear? Next. Cash in hand 28,000. Cash at bank 38,000. We need those ledgers also. Bank account 38,000. I think cash account they are not preparing. Okay, opening balance. They instead of preparing ledger, they prepared one statement. Okay, you can prepare ledger also, no issues. 28,000. Is this clear till here? Okay. Now see, this is a smaller question compared to what we have already done. Smaller question it is, but one twist is there at the end. Now, you are furnished with the following information. His sales for the year ended 31st March 2022 was 20% higher than the sales of previous year, out of which 20% was cash sale. What are they telling? They are telling this year's sale is more than last year's sale. By how much? 20%. And in that sale, 20% is cash sale. Okay. For that, first we need to know last year's sale. Sales during the year 2021, last year, is 5 lakhs. So now what happens? 5 lakhs plus 20% is basically 6 lakhs. This is this year's sales. In this, 20% is cash sales, 1,20,000, and 80% is credit sales, 4,80,000. Did you get the calculation? Last year's sale is given, add 20%, you'll get this year's sale, split it 20-80, you'll get cash sale and credit sale. What is the entry for cash sale? Cash account debited to sales account. Can you see what they have done? Cash account added over here, 1,20,000. What is the entry for credit sales? Debtors account debited to sales account. Can you see debtors account debited to sales account? So total sale is 6 lakh. Total sale is 6 lakh. Go to your trading account. Sale 6 lakhs. Sales is 6 lakhs. Okay. Now, payment for all the purchases were made by check only. That means whenever you are making payment for purchases, it is paid by check only. How much we paid, we don't know, but it is paid by check. Okay. Goods were sold for cash and credit both. Now they are telling us. We already found the cash sale, credit sale. Credit purchases, credit customers pay by check only. Okay. When I'm making payment to creditor, I'll pay by check. When I'm getting money from debtor, I will get in check. That means both will go to my bank account. Okay. Depreciation on furniture is to be charged at 10% per annum. Okay. Furniture. See over here. 40,000 is the furniture. On this, if I calculate 10%, my depreciation is 4,000. So what where should I put this 4,000? P&L. I'll put it into P&L. P&L depreciation 4,000. And it should be subtracted from the furniture when we put into balance sheet 36,000. Sorted? Yes. Next. Mr. A sent to bank the collections of the month at the last day of each month after paying salary of 2,000 to the clerk. So we are paying 2,000 per month as salary. Remember one shop expenses question was there. Here also same thing. They are telling after paying this expense, we are putting the money into bank. That means these expenses are paid in cash. Clerk salary is how much? 2,000 per month. That means 24,000. What is the entry for that? Salary account debited to cash account. Can you see? Minus salary. Minus salary 24,000. And that has to go to your P&L also. Can you see 24,000 salary over here? In P&L? Yes. Next, what happens? Office expenses 1,200. 1,200 into 12. 14,400. Huh? Yes. 14,400. What is the entry? Office expenses account debited to cash. Can you see it is subtracted from cash here? 14,400. You can prepare ledger also for cash. They have done one statement. That's all. 14,400. Put 14,400 into P&L as well. Can you see office expenses 14,400? Yes. Next. After that. Where is it? Drawings. Drawings 500 per month. What is the entry for drawings? Drawings account debited to cash account. Can you see they have subtracted drawings also 6,000 over here? Yes. And this drawings has to be subtracted from capital also 6,000. Is it clear? Yes. What next? Analysis of bank passbook. Analysis of bank passbook. That means these are bank transactions. Payment to creditor. Anyways, they told no payment to creditor will be in check only. Payment to creditor 3 lakh. What is the entry? Tell me. Creditors account debited to bank account. Creditors account debited 3 lakhs to bank account. Go into bank, you will find the 3 lakhs. Is it sorted? Yes. After that, payment of rent up to 31st March 2022. We are doing for which year? 31st March 2022 only. Payment of rent is 16,000. What is the entry? Rent account debited to bank account. Bank account, because they are giving you passbook details. Rent account debited to bank account. Where is our bank? Oh, sorry. Yeah, rent account debited to bank account 16,000. Now where will you put that rent? You will put that rent even into the P&L. Can you see 16,000 in the P&L? Yes. After that, cash deposited into bank during the year. Cash deposited into the bank. What is the entry? Bank account debited to cash. Can I ignore this time? No, because there are two different ledgers. Cash deposited into bank is bank account debited to cash account. Bank account debited, and in cash account they have subtracted 80,000. Clear? See the next one. This is done. Next, following are the balances on 31st March 2022. Closing balance they have given. What? Stock. Where will I put this stock? 1,60,000. I will put it into trading account. First I'll put it into trading account 1,60,000. Then I will also put it into balance sheet stock 1,60,000. Sorted? Yes. After that, debtors closing balance. Where will I put the debtors closing balance? I will put it into debtors account 1,20,000, and also don't forget you have to put it into balance sheet 1,20,000. Balance sheet debtors 1,20,000. Next, creditors for goods. Where will I put it? I will put it into creditors account closing balance, and also I'll put it into the balance sheet 1,46,000. Next, see this, on the evening of 31st March 2022, last day of the year, we were planning to close the books. Cashier closed us only. Cashier absconded with the available cash in the cash book. Luckily, we have deposited the money here. Luckily, I paid my salary, office expense and all in cash. Otherwise, more cash would remain over here. He would take everything and go. Clear? But with this, what we understand, because they said cashier ran away with the cash, there is no closing balance of cash. So whatever is the last amount, that is loss. So you can see over here, cash book, they were doing one calculation, no? Opening balance, cash sales, all the expenses minus, you are getting 23,600. Actually, this would be the closing balance. But no closing balance. Closing balance is his opening balance. Your closing balance became cashier's opening balance. Okay, cashier took and went. 23,600. Now what will you do with this 23,600? It is a loss for you, right? For you loss. So what will happen? In P&L you have to put this loss. 23,600 is a loss by theft or loss of cash. Is it clear? That is one thing. Apart from that, there is nothing in the question. After that, you have to close one by one. You have to close the ledgers. Creditors ledger, you see everything we know. What we don't know, purchases 3,64,000. This is the balancing figure. Where will this purchase go? It will go straight into the trading account. Clear? After that, we have our debtors. Debtors, everything we know. Sales we put already. What we don't know now, amount received. Amount received is the balancing figure. Sales we calculated, no, 20% more, 20 cash sale, 80 credit sale, all that we had done, no. Balancing figure is amount received. So what will be the entry? Bank account debited to debtor account. Bank account debited to debtor account. If you noticed, they gave us the closing balance of inventory, closing balance of debtor, closing balance of creditor, but they did not give the closing balance of bank. Closing balance of cash is not there to give you because it is gone. Okay, so closing balance of bank, they had to find 2,62,000. Balancing figure. Now this closing balance of bank, where will it go? It will go into the balance sheet, 2,62,000. Is this clear? So we are done with all the closing balances. Now after that, what we have? Trading account. Trading account opening stock is already given in the opening balance sheet. Closing stock is given outside. Okay. So only missing figure is gross profit. Where will this gross profit go? It will go into P&L. P&L, can you see we have entered all the numbers? What is the missing figure? Net profit. Where will net profit go? Net profit will go directly to the balance sheet. It will get added to capital. Opening capital we don't have to find. They have given. It's there in the opening balance sheet. That's it. Everything is done. Balance sheet, all the items we have ticked. That's it. Let's go further. One more question we have from incomplete records. Question number 46. Okay, have a look at this. Ram carried on business as a retail merchant. He has not maintained regular accounts books. However, he always maintained 10,000 in cash and deposited the balance into the bank account. Smart guy. He saw the story of the previous person, and what he did, he kept only 10,000 in cash. Everything he deposited into bank. He informs you that he sold goods at profit of 25% on sales. Goods are sold at a gross profit of 25%. Maybe this information will be required for you when you go further. Okay, we'll see that. Now see, assets and liabilities. Cash, 10,000, 10,000. Because he is maintaining only 10,000. Sundry creditors, cash at bank, sundry debtors, stock and capital. Opening capital is given. Closing capital we have to find. No problem. That we can find. Opening stock is given. Closing stock we have not given, but we have to find that. Okay. Trading account will get closing stock as the balancing figure. Now see over here, cash in hand, all that we don't need to prepare the capital because capital is already given. But do we need to prepare one ledger for creditors? Yes. Do we need to prepare ledger for bank? Yes. Do we need to prepare ledger for debtors? Yes. Do we need to prepare ledger for anything else? No. As of now, nothing. Okay. So let's start with the ledgers. See sundry debtors. Can you see 1 lakh is the balance of sundry debtors? So we'll put 1 lakh over here. Clear? Next. 40,000 is the balance of creditors. So creditor balance is 40,000. Cash and bank they have prepared together. Obviously it's a cash book. Cash book, see opening balance is 10,000. Closing balance is 10,000. Clear? See cash book opening balance 10,000. Closing balance 10,000. Clear? Now sundry creditors closing balance also we can put 90,000. Sundry creditors closing balance is 90,000 given. And sundry debtors closing balance also we can put 3,50,000. 3,50,000. Clear? But be careful over here. Bank, you see the opening balance. 50,000 credit. That means it is OD balance. See the bank. Buy balance brought down 50,000. But end of the year, bank is debit balance. So if you notice, buy balance carried down 80,000. Opening balance, buy balance carried down, brought down. Closing balance, buy balance carried down. Why both? Brought down and carried down is in the same side because what we brought down was liability. So credit balance. What is carried down is asset. That's why debit balance. Is it clear? That's why you are finding both on the same side. Basically, we have entered debit, opening balance, closing balance of everything given. See, small one it is. Analysis of his bank passbook reveals the following information. Payment to creditor, 7 lakhs. What to do? What is entry? Creditor account debited to bank. Creditor account debited 7 lakhs to bank account 7 lakhs. Next, payment for business expense 1,20,000. Business expense account debited to bank account 1,20,000. But expense is expense. It should go to P&L also. So don't forget 1,20,000 will put into P&L. Clear? Next, after that, receipts from debtors 7,50,000. Bank account debited to debtors account. Bank account debited 7,50,000 to debtors account 7,50,000. Is this clear? Yes. After that, loans 1 lakh taken on 1/10/2021 at 10% per annum. First we will take the loan. Then we will see what the date is. What is the entry for loan taking? Bank account debited to loan account. Okay. Bank account debited 1 lakh to loan account. That means this loan of 1 lakh should be there in the balance sheet. Okay, loan including interest. They have put 1,05,000. I'll show you the interest. Okay. Loan 1 lakh they have put into the balance sheet. Now see over here. They have taken the loan on what day? 110. Half year. That means 1 lakh into 10% into 6/12, 5,000. Anywhere did they tell that interest is paid? No, they didn't tell interest is paid. That is why 5,000 is added to the loan. Loan became 1,05,000. And one more thing that you have to remember, you have to show 5,000 as interest in the P&L. Clear? Basically, interest account debited to outstanding interest. Next, after that, cash deposited in the bank. What is the entry? Bank account debited to cash account. Bank account debited to cash account. Can you see bank account is debited? Cash account is credited. Clear? Next, he informs you that he paid creditors for goods 20,000 in cash. He paid creditors 20,000 in cash. Entry, creditors account debited to cash. Can you see 20,000? Can you see 20,000 under cash column? Okay. Next, they told salaries 40,000 in cash. What is the entry? Salary account debited to cash. Can you see 40,000 under cash column here? Yes. But you have to put this salary 40,000 to P&L also. 40,000. Sorted? Yes. Next, he has drawn 80,000 in cash for personal expense. Drawings account debited to cash. Can you see under the cash column, you will find 80,000 drawings, and this 80,000 has to be deducted from capital also. Okay. Next, during the year, Ram had not introduced any additional capital. Perfectly, they told 1 rupee has not put extra. Surplus cash, if any, to be taken as cash sales. That means in cash account, if you get balancing figure, no, that is your cash sales. Clear? All purchases are credit only. So in balancing figure, if you get anything in cash account, that is your cash sale. Now, look at it. Look at it. All the things we have entered in the cash account, cash, can you see all the items in cash is there? Okay. Only missing figure is sales over here, 2,40,000. This is your cash sale. Bank side, if you see, we have entered everything. Bank, there is no missing figure. Cash sale is 2,40,000. So 2,40,000, where will it go? It will get added to trading account. Can you see cash 2,40,000? Now what we can do? We can close the debtors account. When we close debtors account, everything is there. What is missing? Credit sale 10 lakhs. Where will that go? That will be entered into trading account 10 lakh, and your total is 12,40,000. Is this clear? After the debtors account, we have to close the creditors account. Everything is there. In creditors, there is no cash purchase, only credit purchase. So balancing figure 7,70,000 is your credit purchase, and it will go into purchases. Is this clear? After that, we have closed everything. Now trading account. Now see, trading account, opening stock is given. Opening stock is given 2,80,000. Okay. Purchases we have found out. Sales we have found out. Clear? Now, what is not given? Closing balances, closing stock is not given. That is balancing figure. But how did we get the gross profit? They said 25% of sales. They had given already 25% of sales. So what we will do? 12,40,000 into 25%. 3,10,000. When we get this, this will be the balancing figure. This closing stock will also go to balance sheet, 1,20,000. Is it clear? Yes. Now gross profit, what will happen? It will also come to P&L. In P&L, all other items we know. Missing figure is net profit. Net profit will also get added to capital. In capital, opening capital, how are we getting? Given in the question only. Given in the question. We are adding the profit, subtracting the drawings. You are getting this. Other than that, what is there in the balance sheet? Creditors, closing balance, given. Cash in hand, 10,000, given. Cash at bank, given. Sundry debtors also given. That should be your balance sheet. With this, we are done with incomplete records. Okay. These 4 questions, I think, covers almost all kinds of twists which are there in incomplete records. Yes. Yeah. Let's move into depreciation now. First, we need to know 2 things. I think we already know the meaning. What is depreciation and all? Reduction in the value of asset due to passage of time, wear and tear. Okay. Technological changes. All this causes depreciation. Now, when we are talking about depreciation, 2 things we need to learn. One is how to compute the depreciation. Computation. For that, we have methods. Then another thing, main thing is accounting of depreciation. For accounting, we have 2 methods. One is without creating provision for depreciation. Next one is by creating provision for depreciation. When I create provision for depreciation, what happens is, if there is a sale of asset, you have to remember that you have to prepare disposal account. Clear? This is one thing. First, what we will do, we'll go into methods. What do we have? First method, straight line method. Depreciation is equal to cost minus scrap value divided by useful life. Cost minus scrap value divided by useful life. Or if they give you the rate, sometimes depreciation is equal to cost into depreciation rate percentage, which is given. And one more thing you have to remember, depreciation is same every year. Depreciation is same every year. Is it clear? This is one thing you need to remember about SLM. After SLM, what do we have? WDV. These are the two most common methods. WDV. In WDV, how will you calculate? Depreciation is equal to, if it is first year of the asset, then you will do cost into depreciation rate. If it is second, third or fourth year after that, then it will be WDV into depreciation rate. First year there is no WDV. No, WDV is written down value. Basically, WDV is nothing but balance carried down. Balance carried down is WDV. First year you will do cost into depreciation rate, WDV into depreciation rate. After that, you have one more method. Sum of digits method. In sum of digits method, depreciation is equal to, what is the formula? Number of years remaining divided by total of digits of useful life into cost minus scrap value. Here you have to be very careful. One or two problems are there in your illustration. You can go through that. Here you have to be careful. When I am talking about number of years remaining, it is including the current year. Including current year. If I tell useful life is 5 and I am calculating for first year, number of years remaining is 5. Otherwise, when you go to last year, your number of years remaining will be 0. That means last year there is no depreciation. It should be there, no? So when you are calculating, remember, if you are in third year, then it will be third, fourth and fifth. 3 years remaining, including current year. And total of digits of useful life, basically if it is 5 years, you can do 5 plus 4 plus 3 plus 2 plus 1. But instead of that, you can do n into n plus 1 divided by 2. You can use the formula. N is useful life. N into n plus 1 divided by 2. Is it clear? That is sum of digits. After this, we have some methods which are very identical. One is machine hours method. Okay, machine hours method, what is the formula? Depreciation is equal to hours divided by total hours into cost minus scrap value. If I am talking about production units method, here what will happen? Depreciation is equal to units divided by total units into cost minus scrap value. Next, depletion method. In depletion method, what will happen? Here the depreciation is basically kgs, liters, whatever they tell, divided by total into cost minus scrap value. Into cost minus scrap value. Same kind of methods. They are there. These are the methods. Okay. Now when we are doing accounting, now the main thing is accounting. They will ask you to do accounting only, no? Okay, when we are doing accounting, we have method 1, we have method 2. What is method 1? Without provision. This is with provision. Without provision, with the provision. These are the two things. Clear? When I am talking about without provision, if I am talking without provision, with provision, we will discuss the entries. Okay? Asset purchased. Asset purchased. What will we do? We'll pass the entry asset account debited to cash or bank account. Here also it will be asset account debited to cash or bank account. Both the places entry is same. After asset is purchased, what can happen? Depreciation every year. Depreciation. Here the entry will be depreciation account debited to asset account. Here the entry will be depreciation account debited to provision for depreciation account. Provision for depreciation account. Clear? Now, at the time of sale, okay, we'll do one thing. Is this clear till here? Now the main thing is when we sell. Our main calculation is when we sell. When I'm selling, first thing that I have to do is compute depreciation till date of sale. Compute the depreciation till the date of sale. Then if it is method 1, account it like that. If it is method 2, account it like that. Okay, compute the depreciation till the date of sale. Then second thing is what? Compute WDV on date of sale. Compute WDV on date of sale. Written down value. When you calculate depreciation till the date of sale, you will get the WDV on the date of sale. No. When you remove that depreciation, now you will get the WDV on date of sale. Third thing you have to calculate is profit or loss on sale. Clear? That is basically if sale value is greater than WDV on date of sale, this is basically profit. Correct? Other way around, if sale value less than WDV, then it is loss. Is this clear? Now, to do the accounting in case of sale. Accounting. Method 1. If you are having method 1, that is no provision. No provision. Then what I will do, first entry I will pass depreciation account debited to asset account. That means I have to calculate depreciation till the date of sale. No. Depreciation account debited to asset account. Clear? Then what I will do, I will get money. No. I will pass the entry bank account debited to asset account. To asset account. Clear? Third entry, what will I do? I will get profit. If it is a profit, profit should be debited to P&L or credited to P&L. Credited to P&L. So what I will do? Asset account debited to P&L account. If it is loss, what will I do? P&L account debited to asset account. Are you following this? This is the entries when we are doing sale and it is method 1. If it is method 2, little complication is there. If you are having method 2. Method 2 is provision to be created. Correct? Method 2, provision to be created. In method 2, what we are going to do? First, depreciation. What is the entry for depreciation? Depreciation account debited to provision for depreciation. Correct? Depreciation account debited to provision for depreciation. Then what we are going to do? Before receiving money, we have to remember one thing. One thing is transfer of cost to disposal. Remove the cost of the asset and put it to disposal account. Entry will be disposal account debited to asset account. Disposal account debited to asset account. Is this clear? Then second step we have to do is transfer of provision for depreciation to disposal. So what we will do? Provision for disposal debited to, oh sorry, what is this? Provision for depreciation debited to disposal. Clear? Now, after this, what we are going to do? We are going to receive amount first. Okay, amount received. Okay, amount received, what we are going to do? Bank account debited to disposal account. Now, profit or loss. How to calculate profit or loss? Same. Sale value and WDV we have to compare. If it is a profit, then the entry will be disposal account debited to P&L. If it is a loss, the entry will be P&L account debited to disposal. P&L account debited to disposal. Is this clear? This is the situation of accounting. How we are supposed to do the accounting. Now there are some small points which we have to remember, which can be asked also. Now, one I have to tell you about this one. Revaluation. When we are doing revaluation, what I will do, I'll take one number and I will explain to you revaluation. Okay. If the asset value is 100, revalued to 120, what will be the entry that time? Asset account debited 20 to revaluation reserve 20. Clear? First time when I am revaluing upwards, if I get a profit, I will put to revaluation reserve. But now after that, after revaluing upwards, now revalued to 70. That means revalued downwards. So now what happened? Once I already revalued upwards, no. Now if I am revaluing it downwards, so what I will do? It is a loss, right? Now revaluation reserve debited 20 because only 20 is there over there. P&L account debited 30 to asset account 50. So what I am trying to tell you, first time asset is revalued upwards, put the profit to revaluation reserve. If that same asset in the subsequent years, if it is revalued downwards, that time there is a loss. When there is a loss, take that from revaluation reserve. But how much is there in revaluation reserve? That much only can be taken. Extra you need, take it from P&L. Is it clear? Now, next separate situation. Revalued to 80. Then what will be the entry? There is no revaluation reserve only. First time it is getting revalued. It is revalued to 80. That time the entry will be P&L account debited 20 to asset account 20. If this same asset in future it is revalued to 125, that time what you will do? Asset account debited 45. Correct? 2. You will not put it to revaluation reserve fully. First time you had a loss, that loss you removed from P&L. Now you have a profit. Put the profit back to P&L. How much? 20. Extra profit that you get, put it to revaluation reserve 25. Is this clear? This is one concept of revaluation that they can ask you. One more thing that you have to remember, that is change in method of depreciation. Okay, simple. It is very simple. Change in method of depreciation. One thing you do, compute WDV till date of change under old method. Imagine I am changing the method of depreciation today. Till today, calculate depreciation under old method and calculate the WDV. Now, using this WDV, any more calculate depreciation under new method. So if at all we were following straight line method, till today remove all the depreciation under straight line method, get the WDV. WDV is nothing but balance carried down. Use that balance and continue to calculate under WDV method. If you are following WDV method, remove all the depreciation and get the written down value under WDV method. After that, what you are going to do? Use that and divide it by the useful life and calculate under straight line method. Is it clear? This also they can ask. Small questions are there. Yes, that's it with the concepts of depreciation. Photo shoot. Done? Not done, no? Okay. Done? Done? Yeah, that's it. That is it with the depreciation concepts. Yes, let's start. Now, question number 5. Okay, depreciation. Bills of exchange and all we have finished. Depreciation, one question without provision, one question with provision. Now, machinery account of a factory showed a balance of 95 lakhs on 1st April. There is a balance of 95 lakhs on 1st April. See the machinery account. To balance brought down 95 lakhs. To balance brought down 95 lakhs. Sorted? Clear? Next. The books of accounts of the factory are closed on 31st March every year. That means they are following financial year concept. Depreciation is written off 10% per annum under diminishing balance method, that is WDV. Okay. On 1st September 2020, a new machine was acquired at a cost of 14 lakhs and 44,600 was incurred on the same day as installation charges for erecting the machine. That means when we purchase the machine, if we have some installation charges, that also should be added to the machine. What is the entry when we purchase the machine? Machinery account debited to bank account. See, machinery account debited to bank account, entire amount is added to the machine. Clear? Till then there is no problem. Now see, on 1st September 2020, machine which had cost 21,87,000 on 1st April 2018 was sold for 3,75,000. Okay, machine is sold. But when was the machine purchased? 2018. Okay, we are following WDV method. So first what we should do? See, machine sale. See over here. 21,87,000. You are removing the depreciation for 18-19. Then you are removing the depreciation for 19-20. When did we start our question? 1st April 2020. When is this machine sold? On 1st September 2020. That means again we have to calculate depreciation for 5 months. This is depreciation up to date of sale. This is the depreciation up to the date of sale. 73,811. What we have to do? We have to pass the entry, no? See, by depreciation 73,811. Clear depreciation till the date of sale. After that, what we will get? We'll get money. What is the entry? Bank account debited to asset account. Now what we have to calculate? See, the WDV is this. After all the depreciation, WDV is 16,97,659. We have sold for what value? 3,75,000. That means remaining everything is what? Loss. 13,22,659 is loss. Loss will be debited to P&L. So see over here, P&L account debited, loss on sale, it is credited to asset. Is it clear? So that part is done of the question. Now, did you understand what is done? Asset was purchased on 1/4/2018. So remove depreciation for all the years. Reach till here. This year's 5 months depreciation also charge. Then you will get the WDV on the date of sale. Compare it with the sale value. Difference is your profit or loss. Next, another machine which had cost 21,85,000 on 1/4/2019 was scrapped. Scrapped means what? Just thrown away. That means it is sold for zero value. That means whatever is the WDV, everything is loss only. Clear? So what we have to do, this also happened on 1st September. Have a look at this. Cost on 1/4/2019. This is the depreciation for 1920. This year, before throwing this asset, we have used this asset for 5 months. So 5 months depreciation, 81,938. That is not passed, no. Now we have to pass that depreciation, 81,938. And after removing that depreciation, you can see 18,84,000 is the WDV. We are selling it for zero value. We are selling it for zero value. That means entire amount is loss. 18,84,562. Can you see 18,84,562? Loss. Is this clear? Now what is our only job? To calculate the depreciation for remaining assets. Remaining assets we have to calculate depreciation. Now understand this. What was my opening WDV? 95 lakhs, correct? 95 lakhs. Out of that, we have to remove the sale asset and scrap asset. But it is on 1/4/2020, correct? Now have a look at this. This asset which we sold, the WDV was 1771,470. Don't take the WDV as 1697. 1697 is on the date of sale. We are seeing on the opening balance. Opening date 1771,470. 1771,470. One more asset is scrapped. What is the WDV of that? 1966,500. So remove 1966,500. Remove these two assets. You will get 57,62,030. Correct? Is that right? This is the asset. This much value of the asset was there for the entire year. For that full 10% depreciation, 576,203. Entire year depreciation. Is this clear? One thing. One more thing. We have purchased one new asset, 1444,600. So 1444,600 into 10% into how many months? 7 months, because we have purchased on 1st September. So into 7/12, that gives you 84,268.3. Make it 8 only. Add these two things. $6,60,471. Can you see 6,60,471? This is the balance depreciation. After that, you will just get balance carried on. That is the end of the story. So, only thing is you have to be very careful when you calculate depreciation. See, understand this. This is the WDV of all the assets at the starting of the year. This is the WDV of the assets sold at the starting of the year. This is the WDV of the assets scrapped at the starting of the year. When I remove that, I will get the WDV of other assets at the starting of the year. Other assets are used for the entire year. Calculate 10% depreciation. This is the new asset. Calculate 7 months depreciation. That is the depreciation. That is the end of the story. Is this clear? Yes. This is your question. Any doubt on this? Okay, they have shown the calculation of that also. What we have done. Oh, that is different question. Sorry, here. Okay. Any doubt with this? No. Next question is this question 6. This is with the provision for depreciation. With the provision for depreciation. Okay. Now, following balances appear in the books of Dheeraj Enterprises. Both are 10 mark question from the exam. Okay. Dheeraj Enterprises. Machinery account as on 1/4/2021, 12 lakhs. Machinery account balance, two balance brought down, 12 lakhs. Okay. Provision for depreciation as on 1/4/2021, by balance brought down, provision for depreciation, 4,65,000. Okay. Now, on 1st October 2021, machinery which was purchased on 1st April 2018, long back, for 2 lakhs was sold for 1,10,000. Clear? When did we do this? 1st April 2018. Okay, that means what? Sorry, when did we sell this? 1st October 2021. That means half year we have used. We have to calculate depreciation for half year. Okay. The firm has been charging depreciation at the rate of 10% per annum on WDV basis. So what we have to do? One asset is sold. See the calculation. What is the cost of that asset? 2 lakhs. When was it purchased? 1/4/2018. That means 18/19, 19/20, 20/21. 3 years depreciation we have to remove. First year depreciation is 20,000, then 18,000, then 16,000 through 200. When you remove that much, you will get the value as 1,45,800. But we have to calculate again depreciation. Depreciation for what? 6 months. Because we have used it till 1st October. That is 7,290. That time you will get the WDV as 138,410. But tell me one thing. This 20,000, this 18,000 and 16,200, already entries are passed. But this 6 months depreciation still pending. We have to pass that. See over here. Depreciation account debited to provision for depreciation. Depreciation account debited. This is the point I told you. Depreciation till the date of sale. Depreciation account debited to provision for depreciation. Okay, next. After that, see over here. Sold for 1,10,000. No. So what is the entry? Bank account debited to disposal. But before that, what did I tell you? Whenever asset is sold, this you have to transfer to disposal. This is the cost of the asset. No. You have to transfer to disposal. See the entry. Disposal account debited to asset account. 2 lakh went. See the disposal account. Disposal account debited to machinery. Then what we should do? We transferred cost. We have to transfer even the accumulated depreciation. Provision for depreciation. See, total provision for depreciation till today 61,490. That also I'll transfer. Provision for depreciation account debited to disposal account. Transferred. Clear? Sold it. Sold value 1,10,000. Bank account debited to disposal account. That time we got a loss. P&L account debited to disposal account. Closed. P&L account debited to disposal account. Closed. Is this clear? Are you following this? Now, after this, what we are going to do? One new asset is purchased. See over here. Machinery was purchased for 4,80,000. Now, what we will do? Machinery account debited to bank account. Machinery account debited to bank account. 4,80,000. Clear? This is just balance carried down. No other work here. Balance carried down. Now, only other work we have is to calculate this one. How will we calculate that? Same. Correct? How will we calculate that? Same thing. WDV method only, no? What was the opening value of the asset? 12 lakhs. What was the opening value of provision? 4,65,000. That gives us 7,35,000. This is the opening WDV. But in this, even that asset which is sold is there. Asset which is sold, we have calculated. Can you see what is the opening WDV? 1 lakh, sorry, not that one, this one. 1,45,800 minus 1,45,800. What will it give you? 5,89,200. Do you agree? This is the WDV of the assets which are not sold. Depreciation rate is 10%. So you will get 58,920. Clear? And we have also purchased one new asset, that is 4,80,000 into 10% into 6 by 12. 24,000. Now total of this is 82,920. That is the depreciation. 82,920. Is it clear? Okay. Now after that, this is just balance carried down. That is also balance carried down. That is the end of the question. Calculations are here. Okay, that is end of the question. Any doubt with this? No. Easy, depreciation is scoring. Okay. Now, one question always students are asking doubt on this question. That is why I have picked this practice question. I think you know that it's like ultimate deadly question. Now, it's all about the language there. The language is tricky. That is why it is confusing. That one practice question I want to discuss, and after that we can proceed to the next chapter. Okay. Now, see this. Very, very important question this is. This entire question, if it is not asked also, any part of this can be asked. Now, firm's plant and machinery account on 31st December 2021 and the corresponding depreciation provision broken down year by year is given. Can you see? Some asset is purchased on 2005. Cost is also 2 lakh. Provision is also 2 lakh. That means what? Fully depreciated. Asset is fully depreciated. 0. There is no value for it now. But are we using the asset? Yes. Just because asset is fully depreciated, we will not stop using the asset. If asset is in good condition, we will use it. Imagine somebody purchased Royal Enfield bike in 1990. Correct? That in 5 years, they would have fully depreciated in the books. Still they are using it. Are you getting my point? Depreciation in the books and actual usage of the asset might not have connection. It is fully used, but asset is still there. See this one which is purchased in 2011. This is also fully depreciated. But after that, whatever is purchased, all this still have values because it is not fully depreciated. Clear? And you can see total cost of the machinery is 30 lakhs and total provision for depreciation is 21 lakh 35,000. When we are solving that, we will put that. See here. To balance brought down 30 lakhs. By balance brought down 21 lakh 35,000. Okay, that much is sorted. Depreciation is at the rate of 10% per annum on cost. That means they are following straight line method. 10% on cost under straight line method means, can you tell me that useful life is roughly 10 years? Useful life is 10 years. Every year if I remove 10% of cost, in 10 years it should become 0. Okay. This is a very important paragraph which is going to determine everything. See here. It is the company's policy to assume that all purchases and sales of or disposal of plant occurred on 30th June in the relevant year for the purpose of calculating depreciation, irrespective of the precise date on which these events have occurred. What are they telling? Whichever date you have purchased the asset, we will take it as if it is purchased on 30th June and we will calculate half year depreciation. Whichever date you have sold the asset, we will take as if it is sold on 30th June and we will calculate that half year depreciation. Is it clear? Now, understand this. During 2022, the following transactions took place. Okay. Purchase of plant and machinery amounted to 15 lakhs. Okay. That is like the most simple thing over here. Okay. Plant account debited to bank account closed. Next. Plant that had been brought in 2011 for 1,70,000 was scrapped. Let's see if they have done any working note. Otherwise, I'll show you the working note. I don't think there is any working note. Okay, scrapped. So if it is scrapped, what we'll do? See the asset which is purchased in 2011, fully depreciated. So what we have to remove? Cost we have to remove and transfer it to disposal. Provision for depreciation we have to remove and transfer it to disposal. See the cost. Yes. See, by disposal account, 1,70,000 is removed from here and is transferred to disposal account. Provision for depreciation, it is transferred to disposal account. Provision for depreciation, we have removed 1,70,000 and that is also transferred to disposal account. Where is that? Over here. It is part of this 4,76,000. 1,70,000 plus other things we will add and later we should get 4,76,000. Is it clear? Okay. Is there any did we sell it for a value? No, we just scrapped it. That means zero value. WDV is also zero. Sale value is also zero. So no profit, no loss. Why WDV is zero? Because it was a fully depreciated asset. So sale value is zero. So there is no profit, no loss. Now see this one. These two things are over, done. Plant that had been bought in 2012 for 90,000 was sold for 5,000. See the plant that is bought in 2012. It is still having value, right? 50,000. Why is it having value? 50,000 means half year depreciation. Why is it having value? You see 2012. Where are we? We are in 2021. If you check, no, 2012, 13, 14, 15, 16, 17, 18, 19, 20, 21. You feel 10 years are over. But 10 years are not over because first year only half year depreciation. Because first year only half year depreciation. Now we are selling in this year. This year also half year depreciation. This year also we have to calculate half year depreciation. So understand this. Understand this. These are all gone. Correct? Okay, I'll show you the calculation. Now, we have sold it for how much? It was bought for 90,000. That means still half year depreciation is remaining. 90,000 into 10% into 6 by 12. That gives you 4,500. That means this much depreciation we have to charge. So what is the entry for that? Depreciation account debited to provision for depreciation. I think they have shown the calculation somewhere. Okay, all the calculation. They are putting everything together. That is why understanding that question becomes a mess. Okay. So depreciation account debited to provision for depreciation. Correct? Where is our provision for depreciation? See, by P&L, 2,63,000. See how they have shown this 2,63,000, this total. Here what is happening? 2005 asset, 2011 asset not there. 2012 asset, half year depreciation is there, no? In this half year depreciation, 4,500 is one asset which is sold. Asset which is not sold also, half year depreciation only remaining. Asset which is sold also, half year depreciation is remaining. Asset which is not sold also, half year depreciation is remaining. So fully we have to take 50,000 depreciation for that 2012 asset. Is it clear? Are you following this? Now what happens? 4,500. That means asset is fully depreciated now. Asset is fully depreciated. We sold for what value? We sold for 5,000. Because we sold for 5,000, full 5,000 is profit. Full 5,000 is profit. Asset is fully depreciated. Starting of the year, asset was not fully depreciated. Half year depreciation was remaining. We removed half year depreciation. Then what happens? Now asset is fully depreciated. Now what we are going to do? 5,000 is going to be the profit on sale. 5,000 is going to be the profit on sale. So what if you look at the disposal account? So the only thing is, the main problem is completely they have clubbed everything and put. That is the problem. Now I'll show you the calculation, okay? See, sale proceeds. This sale proceeds also has 5,000 and the next one 15,000. That is why it is 5,000 plus 15,000. Remember, when we sell, we'll get money. Okay, bank account debited to disposal, both together they have put 5,000 and 15,000. Okay. Now, after that, understand this. How much we have to transfer? What is the asset which is sold? Asset which is sold is 1,70,000 and 90,000. 1,70,000 over here, scrapped, 90,000 over here, and 2,40,000 over here. Two assets are sold, no? See, both they have clubbed over here and 3,30,000 is transferred. 2,40,000 and 90. This is basically 2,40,000 plus 90,000. 2,40,000 and 90 is transferred. So 3,30,000. Can you see 3,30,000 came to disposal account? Now, depreciation is what? This asset which is 90,000. Do you agree it is fully depreciated? So can you see 90,000 is removed and it is transferred to disposal account? It is part of this 90,000. Okay. Then 2,16,000. Next one. Next one was purchased for what value? 2,40,000. But It was purchased in which year? 2013. 2013 asset. 13, 14, 15, 16, 17, 18, 19, 20, 21. Not 9 years are over. 8.5 years are over. Not 9 years. First year only half year. So 8.5 years are over. Now if you are selling that asset, what we will do? If you are selling the asset 2,40,000 into 10% into 6 by 12. That means 12,000 depreciation we have to charge. If we charge 12,000 depreciation, then understand this. If you charge 12,000 depreciation, do you agree that 9 years depreciation is over? First year half, now this year half. 9 years depreciation is over. So 2,24,000 into 9 years depreciation if you take, it is actually 2,16,000. 1 year depreciation is remaining. So 2,16,000 is the total depreciation. Now see 2 lakhs, that's why 2,16,000 is transferred plus 2,16,000. Now if you total this, you will get 170 plus 96, sorry 90 plus 216. You will get the 476 total that they are showing. Is it clear? Yes. So you got what did you do? Asset which is scrapped, asset which is sold. Remove the cost, put it to disposal. Remove the provision for depreciation and put it to disposal. Is it clear? Yes. Now you see the depreciation which we just discussed, no? It is there over here. On 2,40,000, half year depreciation. Clear? And remaining, see 2013 asset, 7 lakh out of 7 lakh, 2,40,000 is gone. What is the remaining asset over there? 4,60,000. That is there for full year, no? For that full year depreciation. After that, whichever asset is there, full year depreciation, full year depreciation. See, 2020 purchased asset, 2021 asset, full year, because we have not sold anything. Full year depreciation. And 2022, we have purchased one new asset, 15 lakhs. For that, half year depreciation. Are you getting this? Again, I am explaining. 2005 asset, it is depreciated long back, no depreciation. 2011 asset, no depreciation. 2012 asset, for 9.5 years are over, so half year is remaining. Little we have sold, little we have not sold, but whatever it is, half year depreciation only, so full 50,000 depreciation, half year depreciation. 2013 asset, 8.5 years are over, so what we have sold, we'll calculate half year depreciation. What we have not sold, we'll calculate full year depreciation. What we have not sold, 2020 asset, I didn't sell anything, full year depreciation. 2021 asset, I have not sold anything, full year depreciation. 2022 asset, half year depreciation. This is the total depreciation, 2,63,000. That is why you can see 2,63,000 as depreciation over here. Is it clear? Now what remains? This is just balancing figure in the asset account. And this is just balancing figure in the provision for depreciation. Now, this we have already discussed how we got 4,76,000. Sale proceeds out 20,000. One asset is sold for 5,000. Another asset is sold for 15,000. They are showing loss on sale. Loss on sale, no. Actually, one is profit, one is loss. I'll show you how it is. First asset we sold for how much? See over here. This asset we sold for 5,000, right? This asset was fully depreciated. So this 5,000 is profit. Correct? One more asset, the value was 2,40,000 minus 2,16,000. That means 24,000 is the value of that asset. We sold it for how much? 15,000. That means 9,000 is the loss. Correct? 9,000 loss, 5,000 profit. That means net loss is 4,000. That is why they are showing the net amount here. They are showing the net amount. You can put 9,000 on one side, 5,000 on one more side, no problem at all. Clear? The problem is simple. Only thing is they have not shown the calculation. That's why it becomes complicated from where number came. Is it clear now? Yes. This is it with depreciation. Next we move into inventory. Yes, let's begin. Now, last chapter that we are going to discuss, inventories. Okay. Again, once show a short question, 4 marks, 5 marks, 10 marks. Sometimes they can ask. Okay. Now understand this. Inventory means what and all is there? Raw material, work in progress, and finished goods. Important things I'll tell you in inventory. Inventory valuation. Inventory will always be valued at cost or net realizable value, whichever is lower. How do we get net realizable value? Cost we know. How to get net realizable value? Estimated selling price minus estimated cost of conversion minus estimated selling expense. I don't think there are any problems on this, but this formula is there. How to calculate NRV. Okay. Next, after this, what methods we have? We have some important formulas. You have to remember this. Cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. One more thing. Cost of goods sold is equal to sales minus gross profit. Clear? One more thing. People get stuck in the gross profit only. Profit percentage. Remember, if I tell on cost 50%, that means on sale it is going to be 50 by 150, which is 33.33%. If I tell profit percentage on cost 25%, that means on sale it is going to be 25 by 125, which will be 20%. This you have to be careful. Okay. One more thing. P4 method we have. First in, first out. Whatever comes in will go out first. Okay. LE4 method is there. Last in, first out. Whatever comes last will go out first. Then we have average price method. Average price method. Here what we do? Total all the price divided by number of prices. Clear? That's how we calculate. What about weighted average price? Weighted average price. There is a method for weighted average price also. What is that? Total value of the products divided by total quantity. How to get the total value? Quantity into rate. Clear? Divided by quantity. That is how you calculate. I think this part is the easy part of inventory. You just have to do the table. There will be one column for purchases, issues and balance. Clear? Any method which they ask, you should be able to do it. Now, after this, the real challenge starts. What is that? Inventory. When we are talking about inventory, we have two things. One is periodic inventory system. Periodic inventory system. What is periodic inventory system? That means periodically we are going to count the inventory. Just to go count. Whatever you find, that is the closing stock. Go and count. Whatever you find on the balance sheet date, that is the closing stock. Then we have perpetual inventory system. What is perpetual inventory system? In perpetual inventory system, we will maintain every day. Every day one person will tell, okay, purchases, issues, balance. What we do know, that table, that is perpetual inventory system. That means everything we are recording over there. Now, the real challenge over here is, they will give you closing stock on 10th April. They'll give you closing stock on 10th April. And then we have to go backwards and calculate closing stock on 31st March. These are the type of questions which are challenging and can be asked in the exam, which can be little tricky also. Okay, some 4 questions are there that we are going to discuss. Other than that, there is nothing in inventory which is going to trouble you. Clear? I don't think if you want to write, you can click. Hardly anything is there in inventory chapter. Give 10 minutes break later. 3, 2, 1, start. Yes. Now, these kind of questions are the ones which are irritating. We will discuss those questions only. 47th question. Physical verification of stock in business was done on 23rd June. That means I counted the stock on 23rd June. Periodic inventory system. I counted on 23rd June. Okay, the value of stock was 48 lakhs. The following transactions took place between 23rd June and 30th June. When did I count? 23rd June. After that, they are telling transaction took place between 23rd and 30th. Determine the value of stock on 30th. I want to know what is the value of stock on 30th. I am not going backwards. I am going forward here. I am going forward. Clear? So, see over here, starting point. Value of stock on 23rd June. Can you see 48 lakhs? Yes. Next. Out of the goods sent on consignment, goods at cost worth rupees 2,40,000 were unsold. Consignment is not there in your syllabus, but still there in inventory. Consignment means what? One person sending goods to another person. I am the owner of the goods. Other person is having the goods. Other person is the agent. I am the consignor. Other person is consignee. I am sending the goods. Where is it now? In that person's go down. He is the agent. When he sells the goods, then he has to give me money. If he does not sell the goods, where are the goods? Whose go down? His go down. But who is the owner? Me. So whose closing stock it is? Mine. Are you getting my point? Goods are not in my go down. Goods I have already given to consignee. Who is the owner? Me. Where is the goods? Over there. But who is the owner? Me. So it should be taken as closing stock by me. See over here, out of the goods sent on consignment, goods at cost worth rupees 2,40,000 were unsold. It was not sold. So what we are doing, can you see over here? Unsold stock of goods sent on consignment, we have added to closing stock. From 23rd, we are going forward. We have added to closing stock. Okay, next. Purchase of 4 lakhs were made, out of which goods worth rupees 1,60,000 were delivered on 5th July. If goods are delivered on 5th July, it will not be there on 30th June. But remaining is delivered, right? So 4 lakh minus 1,60,000, 2,40,000 is delivered. That should be added to the stock. See over here. Purchase during the period 23rd June to 30th June, 2,40,000. Purchase is added to stock. Next. Sales were 13,60,000, which includes goods worth rupees 3,20,000 sent on approval. Forget about the approval part. Other sales you see. 13,60,000 minus 3,20,000 means 10,40,000. This is the sale. Sale means what happens to the goods? It goes out. But sale will be at sale value. Inventory will be at cost. Correct. So what we are going to do? 10,40,000 minus goods are sold at cost plus 25%. Cost plus 25% means 20% on sales. 10,40,000 minus 20%. 8,32,000. This we have to remove. Okay. Oh, they are showing the clubbed calculation. Now, see, which includes goods worth rupees 3,20,000 sent on approval. Goods are sent on approval. I think starting somewhere when we were doing rectification, we discussed once. Goods sent on approval. Okay. Half of these goods were returned before 30th June. If the goods are returned, that we are not going to bother because it is already there in the closing stock. Goods which are not returned, what we are going to do? That is also mine only, no? It is sitting over there, but mine only. So see over here, 13,60,000 is the total sales. 1,60,000 is removed. What is the 1,60,000? The goods which are returned. say, what is the entry for returning the goods? Remember, sale of goods on approval. When I send the goods, I'll pass the entry, debtor account debited to sales. When he returns, sales account debited to debtor. That is why sales is getting reversed. From that, you remove 20%. Gross profit, there is a problem. It's not 96,000. Okay, they have shown the calculation. Don't worry. See, actual sales is 13 lakh 60. Out of that, abnormal sale is also there. How do we know about this abnormal sale? See over here. Goods costing 2 lakh 40,000 have been sold for 1 lakh 20,000. That means goods are sold for at a loss over here. It is sold at a loss. Because if you directly calculate, you will think that 12 lakh into 20% will be 2 lakh 40,000 profit. But see over here. Okay, what is happening? 13 lakh 60, out of that abnormal sales is there 1 lakh 20. Because why abnormal sales? That 1 lakh 20, we did not get any profit. Goods costing 2 lakh 40 sold for 1 lakh 20. Okay, abnormal sales. Then we are going to return. See, return of goods on approval. So you have this much is removed from your sale. This is your normal sales. Normal sales. On normal sales, you will make normal profit 2 lakh 16,000. But on abnormal sales, you made a loss 1 lakh 20,000. Are you getting my point? Your cost was 2 lakh 40. Cost. Your sale was 1 lakh 20. That means you made 1 lakh 20,000 of loss. Remaining goods 10 lakh 80. On that you made 20% profit. That is your 2 lakh 16. So some goods when you sold you made profit. Some goods when you sold you made loss. So net you made a profit of 96,000. So sales minus profit, you will get cost of goods sold. Sales minus profit, you will get cost of goods sold. Is it clear? Do you remember that half of the goods were, returned? Half of the goods were returned. How much was that half? 1 lakh 60. Other half, what is returned we have removed from the sale. No. Other half is not returned. Where is it? Where is it? In there go down only. 1 lakh 60,000 minus 20%. 1 lakh 28,000. That is my goods only, no? See over here, cost of goods sent on approval, added to closing stock. Is it clear? Next. See this. 1 lakh 60,000 is delivered on 5th July. Delivered on 5th July means what? It is already sent. It is coming on the way. Who is the owner of these goods? Me only. Even that is added. We removed from our purchases, but still goods are mine only. Even that is also added. All that will be added to closing stock and cost of goods sold will be removed from closing stock. Finally, what remains is my stock on 30th June. Is it clear? Are you following this? Again, I am giving you explanation for why the things are there. This is on 23rd June. Unsold goods which are there with consignee, that is also mine, added to closing stock. Purchases which you made during this period, that is also mine, added to closing stock. Purchases which you made but it did not reach you, that means it is still in transit, that is also your stock, added to closing stock. Goods which were sent on approval, which are not rejected, that is also yours, added to closing stock but not sale value, the cost value. Clear? Then sales minus cost of goods sold you do, you will get, sales minus profit you do, you will get the cost of goods sold. Cost of goods sold means goods are gone. Remaining only is your closing stock. But when you are calculating your cost of goods sold, be very careful. In this there is abnormal sales and goods which are returned. Both of them you remove. When you are calculating your profit, abnormal sale you made a loss. Normal sale you made a profit. Net amount you have to see. Is this clear? This is your very, very important question. Okay. Here we are not going backwards. Here we are going forward from 23rd June to 30th June. Yes. Next question should be third one. Okay. Next question. Now see this. Again, this is one more unique and different question. The profit and loss account of Hanuman showed a net profit of 6 lakhs after considering closing stock of 3,75,000. They said we took closing stock as 3,75,000 You have done final accounts. Where do you take closing stock? In trading account. After taking closing stock of 3,75,000, when we came to the end of P&L, we have a profit of 6 lakhs. Okay, no problem. Subsequently, following information was obtained from the scrutiny of the books. I did some scrutiny. That time I got to know, oh, so many things are there which has gone wrong. Now, see those things. Purchase for the year included 15,000 paid for new electrical fittings of the shop. Error of principal. Purchase included asset. So what you should do? You should remove it from purchase. If you remove it from purchase, what will happen to profit? Profit will increase. Purchase reduces, profit increases. See over here. We start with net profit of 6 lakhs. By electrical fittings. Can you see profit and loss account is credited? Because profit is increasing. Is this clear? Next. See over here. Hanuman gave away goods valued at 40,000 as free samples, for which no entry was made in the books. Now, before we go into the solution, if you look at the solution, you'll go mad. Okay, first you have to understand this. What is the entry for free samples? What is the entry? Advertisement account, advertisement expense account debited to purchases. Correct? That means trading account, we are crediting the purchases and P&L account is debited. Are you getting my point? Imagine I have my trading account over here. Understand this, then you will be able to understand the solution. We have trading account and we have P&L account. Imagine I have purchase over here. To purchase 40,000. Okay, to purchase 40,000. And I have given this full 40,000 as free sample. What will I do? Advertisement expense account debited to purchases. Two purchases when I do, this is gone. This is gone. But advertisement expense is expense. It will come to P&L. So basically, did you understand the logic of the free sample? I am removing it from trading account because I am not trading in these goods. Trading account, it should be there only if I am going to trade in these goods. That means if I am going to sell these goods, it should be there. I am not going to trade in these goods. I have given it as free sample. So I am removing from here and I am putting it over here. So actually there is no net effect on the final profit. There is an effect on the gross profit. There is an effect on gross profit. But final profit, nothing. You remove from one place, you put it to the other place. Clear? So you see. Now if you see the solution, you will understand. See, buy samples 40,000, to advertisement 40,000. Now we can't go back to trading account. No, we are already in P&L. So in P&L only we have to give the adjustment. What? Remove from purchase, credit. Advertisement expense debit. So P&L debited. Can you see no effect on this? Did you understand this? Yes. Now after that, invoice for goods amounting to 2,50,000 have been entered on 27th March, but the goods were not included in stock. What is happening? Invoice for goods have been entered on 27th March, but goods were not included in stock. That means purchase is recorded, but stock is not recorded. So if you record closing stock, what is the entry for closing stock? Closing stock account debited to trading account. If you record closing stock, what will happen to profit? Profit will increase. 2,50,000 by stock. 2,50,000. Is it clear? Next. In March 2022, goods of 2 lakhs sold and delivered were taken in the sales for April. Goods are sold in March, taken as sale of April. Okay, that means you didn't take the sale in March. If you take the sale in March, what will happen to profit? Increase. See over here, buy sales. Are you getting my point? Closing stock missed, so profit will increase when you take the closing stock. Sales only missed, when you take the sales again profit will increase. Clear? Now, goods costing 75,000 were sent on sale or return basis at a margin of 33.33% on cost. So approval was given in April. These were taken as sales in March. Approval was given when? April. So what we should do in March? Reverse the sale and take it to closing stock. reverse the sale and we should take it to closing stock. See over here. 75,000 is the cost, correct? And profit percentage, what did they tell? 33.33% on cost. 33.33% if you calculate of 75,000 is 25,000. So 75,000 plus 25,000, that means 1 lakh is the sale value. Sale we have to reverse. Sale, when we reverse sale, what will happen to profit? Reduces. So can you see over here, 2 sales, 1 lakh, clear? And we have to take it to closing stock. When we take it to closing stock, what will happen to profit? Profit will increase, but closing stock we cannot take 1 lakh. Closing stock we have to take only 75,000 because stock is always at cost. 75,000. Is it clear? When we do all this, you will get the adjusted profit, balancing figure. This is just balancing figure, adjusted profit. Okay, they didn't ask you only to calculate profit. They also asked what is the correct value of stock now. Stock, how much was it before? See, stock was 3,75,000 at the starting. 2,50,000 we had missed and 175,000 we had missed. Can you see? This is the stock which we had missed. Stock on approval. And here 2,50,000 closing stock we had missed. So when we take both of that, you will get the correct value of stock. Is it clear? 7 lakh, which is the correct value of stock. This is one more important question which is there in inventory chapter. Okay. You have to not only inventory, you have to even think about final accounts. What is happening to the profit effect? You have to think about rectification. When you rectify, what will happen to the profit effect? Do you remember in rectification, 1 or 2 questions are there in study material where they tell you after rectifying, what is the impact on profit? That logic they are using over here now. Is it clear? Yes. Let's proceed. Okay. Let's start. Now, see this question. From the following information, ascertain the value of stock on 31st March 2022. 31st of March 2022, they are asking you to calculate the stock. Now, value of stock on 1st April 2021. What is the opening stock? 7 lakhs. Can you see value of stock is 7 lakhs? Okay. Next, purchases during the year. First of all, what did they ask you to find out? You are supposed to find the value of stock. What formula can you use? Opening stock plus purchases plus direct expenses minus closing stock only they asked you to find, no, minus cost of goods sold. Little modification in the formula. Okay. Purchases 34,60,000. Directly add 34,60,000. Done. Job done. Next, manufacturing expenses. What will you do? Add manufacturing expense also. Okay. Now, sales is 52,20,000. Sales we cannot. That is the calculation that is important here. At the time of valuing the stock on 31st March 2021, last year, what did they do? A sum of 60,000 was written off a particular item which was originally purchased for 2 lakh. Something was purchased for 2 lakh. They have removed 60,000 from that. That means right now the stock is at 1,40,000 and was sold for 1,60,000. It is sold for 1,60,000 now. But for this transaction, the gross profit earned during the year is 25%. What does it mean? Other than this transaction, everything else we have sold at gross profit of 25% on cost. That means 20% on sales. Is this clear? Now, see the calculation. Understand this. Gross profit on normal sales. What is normal sales? 52,20,000. From that you remove this 1,60,000. Normal sales. 20 by 100. Okay. You might not understand that. I'll show it over here. Now see over here. You have 52,20,000, right? 52,20,000. On this, do you agree? Sold for 1,60,000. This is by reducing price and all we have sold. This 1,60,000 is abnormal sales. Abnormal sales. What is the cost of this 1,60,000? 1,40,000. Last year we have reduced. That has gone into last year. Last year we have removed 60,000. So 1,40,000 is the cost. That means 20,000 is the profit here. 20,000 is the profit. Remaining, what is the sales? 52,20,000 minus 1,60,000. Can you give me the value? 5 lakh. 50 lakh 60,000 into what is the profit percentage? 20%. Can you calculate 20% of that? 10 lakh 12,000. Correct? Normal sales, I made 10 lakh 12,000 profit. Abnormal sales, I made 20,000 profit. That means I made 10 lakh 32,000 profit. Clear? See, 10 lakh 32,000. Remove that 10 lakh 32,000. Sales minus profit. Remember, cost of goods sold. Now, if you minus cost of goods sold, what you are getting is closing stock. What you are getting is closing stock. That is it. 3 questions. 3 are all different. All unique. Any of this can be asked in the exam. Okay, last question from inventory we have. Okay, last question from inventory and question number 50. Okay. 5 days, 50 questions. Not bad, no? 10 questions we have solved. Yes. No, not solved. We have discussed. We cannot solve. Incomplete records and all that questions what we discussed today in class, regular class will take 1 hour, 1.5 hour and all sometimes. Partnership is 1 week story. That we will not discuss. Yes. Inventories. Last question. X who was closing his books on 31st of March failed to take the actual stock which he did only on 9th April. 31st of March, he must have been busy with some other things. So he could calculate only on 9th April when it was ascertained by him to be worth 2,50,000. Okay. Value of stock on 9th April is 2,50,000. Clear? Okay. Now, ascertain the value of physical stock on 31st of March. What is the actual stock on 31st of March? That you calculate this physical stock. Okay. It was found that sales are entered in the sales book on the same day of dispatch and return inward in the returns inward as and when the goods are received back. Purchases are entered in the purchase day book once the invoice is received. Full story they have told. What is the story? Sales are entered in the sales book only when the goods are going out. Clear? Returns inward in the returns inward book when the goods are received back. Purchases are entered in the purchase book once the invoice is received. That means purchase entry I will not pass. Even though the purchase goods have reached my go down, till I receive the bill, I will not pass the entry. Did you understand this? Sales you will pass in the sales book as soon as the goods are going out of the door. Returns inward, when it comes inside the door, I will pass the entry. Purchase, goods have come and they are sitting over here. Still I will not pass the entry because they are passed only when the invoice are received. Story they have told. But what is our job? Calculating physical stock. Not what is there in your books. Physically what is there on 31st of March, that we need to calculate. Are you getting my point? Okay. It was found that sales between 31st of March and 9/4 as per sales day book are 17,200. Minus no. Goods have gone out. Now you are doing reverse calculation. So add back, not minus. Add back. If you are going forward, then you will minus. Now you are coming backward. 23rd June to 30th June, minus. 9th April to 31st March, add back. Are you getting my point? Sales means goods have gone out. Now you are bringing it back because you are doing reverse calculation. 17,200 was the sale. Okay, sale will be at sale value. You cannot take it directly. You should take it at cost. See the profit percentage, rate of gross profit is 33.33% on cost. That means 25% on sales. Okay, 25% on sale is 4,300. This is your value and you have added it. Is this clear? That time you are getting 2,62,900. Then we'll see what is happening. Now next, purchase between 31st of March and 9/4 as per purchase day book are 1,200. Out of these goods amounting to 500 were not received until after the stock was taken. Purchase, what we should do? Purchase comes in, so we have to minus, correct? See the purchase, 1,200 is there, but 500 is not received only. 500 came after 9th April. So what we have to minus? Only the 700. Are you getting my point? Again, understand the language. purchase between 31st of March and 9th April as per purchase book are 1200. That means you got the bill, you wrote the entry. You got the bill, you wrote the entry. But goods amounting to 500 were not received. You wrote the entry, that's why it is there in the purchase book. But goods came much later. Are you getting my point? So how much goods came? 1200 minus 500. Only 700 of the goods have come in. So what you are going to do? You are going to remove it because you are going to reverse calculate it. 700. Is this clear? Next, after this, goods invoiced during the month of March, but goods received only on 4th April amounted to 1000. Goods are invoiced in March, but when did it come? April. Okay. That means on 31st of March, is it there? They are telling calculate physical stock on 31st of March. Bill is received on 31st of March, but the goods came when 4th April. That means what we should do? Remove it. Are you getting my point? On 31st of March, it is not there. So we have to remove. See, simple logic. We want to know on 31st of March what goods are there. If goods are sold after this, that means on 31st of March it was there. So you are adding back. If goods are purchased after this, that means on 31st of March it was not there. So you are going to subtract. Minus 1000. That time you will get the value of physical stock. This is your last question from inventory. Is it clear? Yes. That's it. With the last thing, done with marathon. Thank you. Okay guys, so we are done with the marathon. Okay. So whatever is possible from our side, we have done it, and now it's in your hands. So what you are expected to do is go and prepare. We have few days left. It's still possible to easily clear these exams. Okay, we have already discussed all the key points, what you need to focus, where you might go wrong in the exam. All those are already discussed. So now, when you're preparing for the exam, certain things I wanted to tell you. Accounts, when we're talking about accounts, always expect a lengthy paper. Go to the exam with the mindset that paper is going to be lengthy, so that be at your top speed from minute number 1. In 15 minutes of reading time, analyze what you're going to attempt. Okay, which are the chapters you're strong in. Try attempting those at the beginning, so that remaining time you can focus on the chapters which are not that strong. Okay, your target should be to attempt 100 marks. Without attempting 100 marks, do not come out of the exam hall. Try and attempt maximum 100 marks you have to attempt. Paper expected to be lengthy. So from minute 1, be at your top speed. Okay, and one more thing, after the exam guys, I notice a lot of students coming out, talking to your friends. Don't do any of those. After the exam, go straight to the house or a PG or wherever you are residing. Go to your place and prepare for the next paper. What has happened, it's not under your control after that. Okay, whatever you do, when you come out of the exam hall and talk to your friends, whatever they tell, it's going to make you tensed only. Even if they tell it's easy, even if they tell it is tough, whatever it is, they start discussing some questions, you're just going to be more tensed, and that is going to affect your next subject. That is one thing. After you go home, don't sit and analyze, okay, here I'm going to get 5 marks, here I'm going to get 4 marks, all that, nothing. Don't do any of it. Take that paper, keep it aside. Go to your next subject, start preparing for your next subject. Maybe take a little bit of rest after you reach home, eat some good food, and then you can start preparing for your next subject. Okay, once maybe all the exams are over, if you want to analyze your papers, that time you can analyze, but between the exams, don't analyze what is already done. So yes guys, just stay focused, stay confident, take care of your health. 100% you will clear the exams. And what I would like to tell you is, after we finish after this marathon session, go and revise all the questions what we have done in the marathon. It is covering most of the concepts. 90% of the concepts are covered in the questions what we have done in the marathon. Okay, if I meet you again, I want to meet you in CA Inter classes. Thank you guys.